Side scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Welcome back. You're watching Insight. As we head into the end of the month and the quarter, rotation remains the name of the game in equities. The big winners of the tech trade, chips and memory in Japan and Korea are taking a back seat today while Hong Kong plays catch up. Let's get more with our markets reporter, Anthony Stevens. And Anthony, what are we seeing in terms of the equity rotation across the region today?
It's very similar to what we saw in the US on Friday. You're seeing chip makers down and kind of industrials and anything else that is really not pure semiconductors do quite well. So in Korea, for example, you're seeing Samsung and Hynix down, but you see some of the energy names and the battery names that will power the AI kind of transformation do really quite well. In Japan, very similarly, you have SoftBank and kind of the tech hardware names kind of weak, and the domestic consumption plays strong after very strong Japan retail sales. And that's something I want to kind of touch on. Coming into this session, we do have some fundamental drivers of the rotation. So in Japan, we have the strong retail sales. In Korea, we have anticipation that infrastructure to power AI will be the next leg of the trade. And in China, we have some innovations out of DeepSeek that point to increased efficiency of using the chips that they do have. So that's helping Chinese internet stocks rally quite sharply today. And we look to India to see if India gets some relief on the software rally from Friday in the US to see whether the NSE IT index can bounce off its kind of struggles of the recent months.
So you talk about the fundamental drivers. How about the technical drivers of this rotation?
Yeah, so outperformance of semis versus literally anything else is extremely stretched. Whether you think about on pure price perspective, volatility perspective, volume perspective, option strike perspective, any of those measures. And coming into the month end and quarter end, that becomes very important. It's also an expiry for the S&P single stock options and futures going into a long US holiday. So that sets up a little bit of a liquidity squeeze on these very highly favored trades. If people are going to rotate out of those trades into some of these laggards, which is kind of the risk management decision you normally do after a very strong first half, that becomes a much shorter time frame, and you're seeing some of these oversized moves as a result of that. We also have this kind of stress from all the semi-news flow around Apple looking for alternative sources of memory. Now, that is a fundamental headwind that is becoming technical because Apple has been a laggard for a very long time.
Worth looking at foreign funds. They've been making an exit from Korea and Taiwan in massive sizes. What's really driving this, and what are the cross-asset applications?
Yeah, so initially the Taiwan and Korea selling was relatively benign, as benign as such massive selling can be. It's because they were trimming the over-allocation to TSMC, Samsung and Hynix. But in recent days, the selling has accelerated due to those memory concerns, those really hard fundamental concerns. And the selling has accelerated. So Taiwan saw its worst selling on record last week. And both markets together now are over $100 billion year to date of foreign selling. That has left locals extremely long. So as a result, the local risk management function becomes very important to watch. And that is why Korea's kind of policy decision making in the coming weeks and months, it will be so important.
Anthony, thank you. Bloomberg Markets reporter Anthony Stevens there for us from Hong Kong. Now, Samsung Group and SK Group are poised to announce as much as $1.3 trillion of investments over the next decade as part of President Lee Jae-myung's flagship industrial strategy. Joining us now, Dan Hyler, founder and CEO of Revelstock Advisors, to discuss the global chip roadmap. Dan, good to have you with us. Put this $1.3 trillion in perspective for us. Sounds massive, but it is over 10 years.
Yeah, it is. It is indeed very, very massive. Just remember that, press releases are posturing for sure. You've got a lot of angry customers that really want more supply. So companies definitely need to go out with some big numbers. They need to be competitive. But I think it's a little bit different now insofar as you can add 10,000 wafers at a time. That doesn't mean that they aren't really committed to adding as much capacity as they can right now. They are. I mean, you have visibility on semicap out to next year. So lots of capacity coming online. I think the reason why investors would want to kind of take some profit here is, in the memory sector, it's highly correlated with CapEx. When CapEx gets, super high like this, then the market starts to discount future risk. The forward risk of excess supply would impact prices and earnings and also multiples. So you get a triple whammy in the DRAM industry. You get a triple whammy on the upside, where you have very high earnings upgrades, and then you have the PE expansion and PB expansion. On the reverse, it's really nasty on the downturn. So investors are going to be a little touch and go here, a little worried about these numbers. I think, though, the visibility on supply, though, is going to be very good the next 6 to 12 months. Whether or not we have an oversupply in late 2027, I think, is the point where that will be the point of debate within the market.
That's also the point of debate when it comes to how attractive this makes Korea, right? I mean, how does it compare when you take a look at the U.S. CHIPS Act, when you compare it to the subsidies given by China and TSMC's own expansion plans? I mean, is $1.3 trillion enough for it to be up there with the rest?
Yeah, that's a great question. I say absolutely. These are the two leaders, and then there's Micron. I think with China coming online, that's also creating another level of risk and uncertainty and concern as to how much the two Chinese players, one NAND and one DRAM player, are coming up as well. Although I think those are kind of a positive, if you will, because they're going to be relieving a lot of the bottlenecks on the consumer and mobile side of the equation. And that actually kind of takes a little pressure off the leaders that have great relationships with Apple and others, and allows them to kind of push ahead to the most advanced nodes. Like, for instance, TSMC is happy to give away some specialty technology to its ecosystem, like Vanguard and others, and then free up those very valuable fabs for the most leading-edge nodes where you have the most expensive CapEx and the most important chips made. So I see that as a dynamic as well. But no question, I think the big thing on memory, as it relates to the sector overall, which I find kind of an interesting possible change. And I always hate to say this cycle, it's different, because it's always the same. You always have too much as people chase demand and .com and everything else. But I think what the question is on AI, though, is let's say we do have some excess supply in the second half next year. It looks as though, when you add more memory, you're getting a lot of more productivity in tokens. So this was not the case with cell phones and PCs and servers, where you added X amount of memory. You didn't have that much of a bang for the buck, if you will. And with adding memory and NAND and these really diverse kind of memory solutions and creative solutions that are coming up, it's actually going to really help drive the cost of tokens down.
Right. Dan, I'm just wondering what it essentially means for Korea in that space? It will remain a memory player at its core. Will it be able to challenge TSMC, in terms of AI accelerators? Will there be any change in that sense?
Oh, great. Yeah, for sure. I would say I'm very positive on the memory. Of course, Hynix being the leader, and Samsung is a second play. I think that they'll continue to for sure be the two leaders, with Micron being the third. And remember, there's SanDisk and Kioxia on the NAND side, very competitive players, all of them. I don't see really much of a capacity share because they're all executing on technology reasonably well. Although Samsung has been slow, but they're getting better. On the foundry side, as you say, the accelerator side for Samsung in Korea, on that side, I am less positive. I think because while they are improving, TSMC is improving faster. TSMC is pulling ahead on its nodes, which means cost down performance, and U.S., as you said, the CHIPS Act Arizona is doing very well. They have digital twins now. I think that surprised a lot of skeptics that thought that TSMC is being forced to build in the U.S. No, TSMC made TSMC has been asked to build many years in the U.S. for over like 20 years. They've been asked to build. When they finally did it, they went big, and it was their conscious decision to do it. And they did the math. They figured if they could do big, 160 billion in a cluster, then it could work economically. And I think that's proving to be the case.
Speaking of clusters, Dan, we're seeing regional diversification as well. Gwangju is the area we're looking at right now. Does that make South Korea's supply chain more resilient on the back of this?
Yeah, I think are you referring to the cost down on the models and DeepSeek and others? Or?
No, in terms of the new clusters being built, because we're seeing regional diversification right now. Right, there are plans for for the fabs to be in Gwangju. Whether that helps in its supply chain resilience.
Right. So I think for China and the Guangzhou area, those are going to be smaller scale specialty fabs for sure. That's great. And also the ecosystem on semi-cap in China is coming along pretty well too. So that's relieving bottlenecks as well. And I think China does have a play here. And it is beneficiary because not everybody needs a super high-end Blackwell, server for inference. Chips out of 7 nanometer SMIC with a lot of power management chips being made in China too, and even the photonics is quite strong in networking. So China has these kind of these positions within the ecosystem to do pretty well. But just remember now, it's an arms race, and you really do want to go. The big do actually have big advantages, and that they've got the technology lead, the access to the semi-cap equipment. They have those relationships there, and the ability to ramp. Like time to market is so critical. So while there are plays across the ecosystem for the tier 2 technologies, especially in memory, Taiwan, like WinBond and Vanguard and others. TSMC, though, is really you're going to continue to see, I think, earnings upside and margin upside because of the technology leadership. But one thing that's not talked about enough is actually the implementation of AI within TSMC. Because there's an incredible amount of data in manufacturing and yields and processes, just unbelievable amount of data. The ability to optimize your equipment and your recipes using AI. Guys I talk to at TSM are just extremely happy about their execution on AI implementation within the fabs.
And Dan, you called it a tech race, just like we talk about the arms race. Might Korea's move today, that $1.3 trillion, provide the impetus for the other countries to ramp up their own investment?
Yeah, well, I used to the answer I'd give investors, I was at Merrill Lynch for 17 years on the sell side, as I said, capital is easy. Access to capital is easy. Anyone can get capital. Merrill Lynch could help you get capital. Anybody can help you get capital. It's a very difficult thing to do because it's physics. The physics are challenging. But for sure, companies are finding opportunities. It is a big ecosystem. And you have a lot of small, medium, and sized companies. But the big are going to get bigger here for sure.
Of course, we're having this conversation amidst the resurgence of that debate, right, Dan? It is looking very bubbly. Is it to you?
So yeah, I mean a bubble. Bubbly. And so our share prices look bubbly. Earnings are though mirroring a lot of that growth. If you think about the earnings growth, have actually pretty much mirrored the amount of share price appreciation. So you haven't had this kind of, in some areas, you haven't had a multiple expansion where stocks are discounting like 2028 or 2027. And I think these corrections are good because they kind of raise, they kind of cool down the market a bit until we have better visibility. The area that I was most concerned about is actually energy. I think people have talked a lot about that in the U.S., energy. And I recently did listen to some work done by a sell-side analyst, and also we've done work on this on the energy side. It looks as though they are able to build quite a bit of power in the U.S. And in fact, there could even be 30 to even, I've heard numbers as high as 50% increase in data center related energy. But the challenge that we're hearing is actually just finding enough electricians. So this kind of makes it in some way more positive, Heslinda, because if you're not able to build as much as people want, if you built as much as they want, because it's a land grab, there's going to be excess capacity. And everybody is exaggerating what they need. They're exaggerating what they need from the memory guys. Sam Altman was the biggest exaggerator, what he needs, And so...
Hello everyone, good morning to all of you. Welcome once again to this live commodity analysis. स्टार्ट करते हैं आज का सेशन. फिलहाल के लिए देखोगे इंडियन मार्केट जस्ट ओपन ही होने वाला है. कमोडिटी मार्केट की बात करें तो परसों के लेवल हैं वही चल रहे हैं. लास्ट ट्रेडिंग सेशन पे मार्केट में क्रूड ऑयल की बात करें, नीचे सपोर्ट एरिया पे था, वहीं पर ओपन हुआ था लास्ट 26 को, थोड़ा बहुत नीचे आया, सपोर्ट लिया, वहीं पर क्लोज हो गया. अभी वहीं पर ओपन हुआ है ऑलमोस्ट, तो अभी भी सपोर्ट पर ही है जब तक नीचे एक प्रॉपरली ब्रेकडाउन नहीं होता. नेचुरल गैस परसों रेजिस्टेंस पे ही ओपन हुआ था, थोड़ा देर साइडवेज गया, फिर क्लोजिंग होते होते सेलिंग आई है. देखते हैं नीचे आता है या फिर वापस ऊपर से आता है. अगर वापस रेजिस्टेंस एरिया पे गया तो वापस सेलिंग करी जा सकती है यहाँ पर. ठीक है, इंडियन मार्केट की बात करें तो जस्ट ओपन ही होने वाला है. लेट्स सी, एक बार इंडियन मार्केट को देख लेते हैं. आज एक्सपायरी तो नहीं है, कल रहेगी आपकी निफ्टी की मंथली और वीकली एक्सपायरी ऑप्शंस की, साथ ही साथ कल गोल्ड की एक्सपायरी भी है. फिलहाल निफ्टी फ्लैट ही ओपन है, कोई बहुत बड़ा गैप अप गैप डाउन नहीं है. रीबैलेंसिंग हो सकती है, क्वार्टरली सेटलमेंट होने वाला है. ठीक है, ओपन होते ही थोड़ा बहुत सेलिंग का प्रेशर निफ्टी में. और बिटकॉइन की बात करें, रिकवर किया था 60,000 के ऊपर, वापस आ चुका है करंटली. गोल्ड और सिल्वर की बात करें तो गोल्ड भी $4,000 के नीचे गया था परसों इंट्राडे में, एंड देन रिकवर्ड फ्रॉम दैट लेवल 3,980 से नाउ 4,080. थोड़ा पुल बैक आ सकता है. सिमिलरली फॉर सिल्वर इंट्राडे में $55 के आसपास गया था, नाउ $59. डॉलर इंडेक्स कंटिन्यूसली बुलिश है $101 के आसपास. बाकी देखना पड़ेगा ये $101 के ऊपर जाता है या, तो हमने बहुत पहले भी बात करी थी, याद होगा आप लोगों को, अगर ये $100 के ऊपर सस्टेन करता है तो 101 तक तो जाना ही है. यहाँ पर मार्केट के पास एक मेजर सपोर्ट था, उसका ब्रेकडाउन हो चुका है. विल नीड टू सी इट विल टेक द रिजेक्शन फ्रॉम हेयर और नॉट, क्योंकि इस महीने तो मार्केट ने ऑलमोस्ट US डॉलर ने 2.43% का मोमेंटम कर चुका है मार्केट. तो इस मंथ की क्लोजिंग कहाँ पर आती है देखना पड़ेगा. अगर क्लोजिंग कहीं 102 के ऊपर आ गई तो फिर चांसेस रहेंगे मार्केट कैन गो टुवर्ड्स $106. उस केस में गोल्ड और सिल्वर और गिर सकते हैं. यहाँ से थोड़ा बहुत अगर मार्केट में रिजेक्शन मिलता है, 102 के ऊपर क्लोजिंग नहीं आती है, तो फिर हम एक बार वापस $100 के नीचे या फिर एटलीस्ट $100 के आसपास सस्टेन होने जा सकते हैं. आज कोई डेटा तो नहीं है US मार्केट में, तो विल नीड टू सी. देयर इज नो डेटा शेड्यूल फॉर टुडे. इस वीक फ्राइडे को आई थिंक क्वार्टरली सेटलमेंट भी होगा इंडियन मार्केट में, एज वेल एज बैंक हॉलिडे भी है US में, देखना पड़ेगा 3 जुलाई को. जुलाई US में इंडिपेंडेंस डे रहता है, तो वहाँ पर आई थिंक 4 जुलाई को पड़ रहा है, बट 3 जुलाई को भी हॉलीडे है शायद, आई थिंक. 4 जुलाई को आई थिंक इंडिपेंडेंस डे है यूएस में उस दिन, लेकिन सैटरडे है तो ऑब्जर्व्ड हॉलीडे आई थिंक 3 जुलाई को ही होगा, तो बैंक हॉलीडे उस दिन रहने वाला है. फाइनेंशियल सर्विस विल बी क्लोज्ड ऑन दैट डे. मंथली क्लोजिंग पॉजिटिव आने वाली है, लग रहा है, मुझे लग रहा है आज और कल में बहुत बड़ा सेल ऑफ आएगा, चांसेस कम है. तो एक पॉजिटिव क्लोजिंग होती हुई लग रही है निफ्टी में. इस मंथ की लगभग 1.5% पॉजिटिव है अभी भी इस मंथ. लास्ट मंथ 1.5% नेगेटिव था. उससे पहले 7-8% पॉजिटिव था एंड उससे पहले 11% नेगेटिव था. तो लास्ट 4 मंथ में एक रेंज के अंदर ही है मार्केट कंटिन्यूसली. ये तो फ्लैट है फिलहाल. बाकी और इंडियन मार्केट के अलावा देखोगे एशियन मार्केट पॉजिटिव ही हैं फिलहाल आज. तो निफ्टी बैंक निफ्टी करंटली पॉजिटिव हो चुके हैं सबके सब. एक बार 15 मिनट की फर्स्ट कैंडल क्लोजिंग देखते हैं, उसके बाद विल नीड टू सी मोमेंटम हो किस साइड रहा है. फिलहाल फ्लैट है मार्केट कंटिन्यूसली. गेनर्स की बात करें अभी इंट्राडे में, अभी फर्स्ट 15 मिनट की कैंडल क्लोजिंग हुई नहीं है, फिर भी डॉक्टर रेड्डीज लेव 4% अप है. जीसी पावर 0.46% पॉजिटिव. इटर्नल जोमेटो ऑलमोस्ट 2%. नेस्ले इंडिया 1%. अपोलो हॉस्पिटल 1%. एक्सिस बैंक 0.46% अप. सेलिंग कहाँ पर आ रही है अगर देखोगे, यूनाइटेड स्पिरिट्स 2% से ज़्यादा डाउन. कोटक महिंद्रा बैंक 2% से ज़्यादा डाउन. सीमेंस एनर्जी इंडिया 2% से ज़्यादा डाउन. इंडियन ऑयल कॉरपोरेशन 1.5% से ज़्यादा डाउन. अडानी एनर्जी सॉल्यूशन 1.45% से ज़्यादा डाउन. इंडिगो इंटरग्लोब एविएशन लगभग 1% से ज़्यादा डाउन है करंटली. और अगर भी फिलहाल इंट्राडे में देखोगे सेक्टर वाइज, करंटली रबर प्रोडक्ट से रिलेटेड जो कंपनीज हैं दे आर गेनिंग टुडे. ओवरऑल 6 कंपनी है इंडिया में, ऑल 6 आर पॉजिटिव राइट नाउ. ओवरऑल सेक्टर इज 1.66% पॉजिटिव. पेपर सेक्टर पॉजिटिव है ओवरऑल. ऑटो रिटेल सेक्टर भी पॉजिटिव है 0.71. तो ये 3 सेक्टर करंटली पॉजिटिव दिखा रहे हैं, रबर प्रोडक्ट्स सेक्टर, पेपर सेक्टर एंड ऑटो रिटेल सेक्टर्स. या इंटरनेट इंटरटेनमेंट सेक्टर भी पॉजिटिव है. मेटल एंड माइनिंग सेक्टर भी पॉजिटिव है. रियल एस्टेट, इन्वेस्टमेंट ट्रस्ट, फार्मास्यूटिकल्स, लेदर सेक्टर, हेल्थ केयर सेक्टर, रियल एस्टेट सेक्टर, ई कॉमर्स, एफएमसीजी, वेस्ट मैनेजमेंट, पेंट सेक्टर, फाइनेंशियल सर्विसेज, अपीयरेंस एंड क्लोथ्स, बैंक्स, इंजीनियरिंग, सीमेंट, इलेक्ट्रिकल इक्विपमेंट, ऑल आर पॉजिटिव. सेलिंग प्रेशर कहाँ पर है सबसे ज़्यादा, किन सेक्टर्स में है अगर देखोगे, सबसे ज़्यादा सेलिंग का जो प्रेशर आ रहा है दैट इज़ ऑन एजुकेशनल सेक्टर्स की कंपनीज पे आ रहा है. 14 में से 14 नेगेटिव है, 13 पॉजिटिव है. फुटवेयर सेक्टर नेगेटिव है. डिस्ट्रीब्यूटर सेक्टर नेगेटिव है. गैस डिस्ट्रीब्यूशन, वाटर डिस्ट्रीब्यूशन, टेलीकॉम इक्विपमेंट एंड इंफ्रास्ट्रक्चर सर्विस सेक्टर नेगेटिव है. ऑयल सेक्टर नेगेटिव दिखा रहा है. शुगर सेक्टर नेगेटिव है फिलहाल. बाकी सेंसेक्स देखोगे निफ्टी 50 बैंक एक्स बैंक निफ्टी ऑल आर पॉजिटिव। टीसीएस में भी अभी भी सेलिंग प्रेशर बना हुआ है, आज भी 0.5% डाउन है। क्रूड ऑयल में थोड़ा बहुत मोमेंटम आता हुआ। परसों यूएस और ईरान ने एक दूसरे पे आई थिंक स्ट्राइक करी थी, उसके बाद yesterday we get the news today we get the news that यूएस and ईरान agree to hold strikes and meet this week, ऐसा यूएस ऑफिशियल्स ने कहा है। एक पॉजिटिव इम्पैक्ट ओवरऑल देखने के लिए मिल रहा है। क्रूड ऑयल पॉजिटिव है, देखते हैं ऊपर तक जाता है क्या, रेजिस्टेंस एरिया तक। ऊपर 75-76 डॉलर के आसपास ही एक मेजर रेजिस्टेंस है, नीड टू सी वहां तक मार्केट एक बार जाता है ट्रेड करने के लिए। बाकी निफ्टी की बात करें, सॉरी नेचुरल गैस की बात करें, लोअर एंड पे 300-302 के आसपास सपोर्ट है। जब तक अब 294 के आसपास के नीचे ब्रेकडाउन नहीं होता, नॉट एक्सपेक्टिंग वेरी बिग सेलिंग एज वेल। ये वॉलेटाइल कैंडल है, पहली डोजी लग रही है कम्प्लीटली निफ्टी में तो।
as an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Horizon's Middle East and Africa. Our top stories this morning. Diplomatic pause. Iran and the U.S. agree to stop attacks and resume talks following fresh strikes that threatened oil flows through the Strait of Hormuz. South Korea goes big. Samsung and SK Hynix prepare to announce more than $1 trillion in investments to keep up with demand for AI hardware. Plus, China turns up the heat on the EU, signaling Beijing can withstand a complete halt in trade with the bloc ahead of Commerce Minister Wang Wentao's trip to Brussels. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Happy Monday to you. And let's just see where markets are positioned to start the week. As we know, last week was quite a volatile and choppy one for markets, just given the broader AI trade and, of course, some of the concerns around spending around AI. So we saw quite a bit of choppiness going into the weekend. But right now, as you can see with U.S. equity futures pointing higher, especially given some of the announcements that we did hear about the pause in hostilities in the Middle East. Still, we will be seeing how much, though, the broader AI trade will be in focus for investors throughout the week. And we're also watching closely what will be a U.S. jobs report actually coming a bit earlier in a truncated week for Wall Street, just given the holiday on Friday. The MSCI Asia Pacific Index marginally up to start the week. We'll get more more from Winnie Xu in just a bit. But still, we're seeing a bit of a sell-off still from the broader Asia-Pacific index. Again, off the back of some of that concern around spending around AI-related names and the Kospi index very much in focus still for some of the major gauges in the region. We have Brent crude on the board there, pairing some of the gains that we saw earlier in the session up just over 0.6%, almost 0.7% there to trade at just about $72.49 a barrel. We, of course, are paying close attention to some of the tit-for-tat hostilities that we did see over the weekend in the Middle East. We are going to be digging into more of where things stand, though. But right now, it's looking like a bit of stability right now. When we will just finish off with the U.S. 10-year yield up just a basis point there to trade at about 4.38%. But still quite a lot for investors to focus on this week, including potentially more Fed speak that we will get throughout the week. As I was mentioning, though, we still are paying close attention to how Asia has been trading over the past few hours. We have Winnie Xu, who is in Hong Kong for us, with a closer look at what we've been seeing over the past few hours. Winnie, what have you been watching?
Yeah, good morning, Jen. You are seeing Asian stocks fluctuating quite a bit today as the U.S. and Iran held off strikes. Now, the key thing today, though, is around this rotation that investors are rotating away from these tech stocks that have been really seeing a big run up this year and rotating into the sectors that have been underperforming, especially as we are near the end of the month and also the quarter. And hence, you are seeing tech-heavy Nikkei 225 underperforming the broader topics gauge in Japan. Now, we are in fact seeing for the topics gauge that for every stock that is down, we actually have two stocks that are rising, and the more defensive sectors, the likes of retail and pharmaceutical companies as well as insurers are in fact rising. And the outlier today is in fact in HS Tech, up almost 4% after the gauge slumped into the oversold territory last week. Now you flip the board, we take a look at the Korean market because all eyes are on that upcoming announcement by Samsung and SK Hynix, a potential 1.3 trillion US dollars worth of investment over the next decade. And that announcement is expected for 2 p.m. local time later today. And we are seeing a bit of a sell-off in these two companies also as part of that rotation trade. And hence that rotation away from these names and into the small cap gauge here. Kosdaq here up more than 7% with the sectors including batteries and pharmaceuticals driving gains as well. Back to you, Jen.
Thanks so much, Winnie, and we'll dig more into some of those stories in just a bit. Thanks for that. Let's get back to our top story, though. The U.S. and Iran have agreed to stop attacking each other before peace talks resume this week. The development signals a de-escalation after several days of tit-for-tat strikes tested a fragile truce. Let's get more on the situation with Bloomberg Middle East breaking news editor Dana Krish. Dana, will this ceasefire hold, and why exactly did the escalation happen in the first place over the past few days?
Good morning. Yes, I think the ceasefire will hold. I think both parties do want the truce to remain. And I don't think that these skirmishes that we're seeing would impact that or impact the talks over the MOU. I think the question maybe remains is why Iran targeted this container ship in Hormuz last week. And of course, another one that prompted the U.S. to retaliate and attack Iran. And it seems that the U.S. had to respond, right, because it considered that to be a breach. And then we had U.S. President Trump, you know, he wants to show that they're not going to tolerate any breaches and that they are still in a very strong position and they won't allow Iran to have a free hand anywhere, especially in Hormuz. And that is, of course, maybe at the heart of this escalation this week. And of course, the fate of Hormuz, the free flow of traffic there, will it remain free, given that, you know, of course, Iran's insistence on some sort of fees, and that it isn't clear, of course. I think the worrying bit is, of course, what President Trump posted on Saturday. He said there may come a point that when we are no longer able to be reasonable with Iran and that we'll be forced to militarily complete the job that we very successfully started. So his words kind of leave the door open to more escalation and more skirmishes, but definitely both sides don't want to undermine their positions. But yet again, Iran doesn't want the blockade to return, and neither does the US, because they want Hormuz to remain open and have those ships pass through.
Right, and quite all of that really underpinned some of the talks that we are anticipating over the next few days. What exactly can we expect, especially considering all of those considerations you just pointed out there? What is it that you're watching out for over the next few days?
I think we are watching for an announcement on the frozen assets, right? We saw the sanctions waiver is taking place, but the frozen assets is what Iran will focus on, I think, this week. They want to start discussions on this and see the release of some of these assets. They are anticipating about $12 billion to be released to them. And this is, of course, to ease some of that monetary burden as a result of the war. Finance import, begin some sort of reconstruction, and pump cash into its economy. Now, President Trump insists that Iran will use that money to buy grains and wheat from the U.S., but we saw Iran last week, rebuffing this and saying we will buy, and that it is our decision only to decide on what to do with this money. I think the most sticking point will remain to be Hormuz and Iran's insistence on having any kind of administration over it. We saw Oman last week telling, from our own original reporting, telling European allies that it will at some point have to impose fees, and that it is under pressure from Iran to do so. So the situation is still very volatile, I would say. Even now with the technical talks, all eyes remain on Hormuz. And of course, those 60 days, if they expire, will Iran impose any fees? Will Gulf countries be able or want to pay? This remains the sticking point, I think, more so than the frozen assets.
Bloomberg Middle East breaking news editor Dana Quraish starting us off there. Dana, thanks so much for that. Let's just dig into this a bit more now with Julia Rocknefard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, thanks so much for joining us. So let's just get into more of what we were just speaking there with Dana about. Is your expectation that we will see some of these skirmishes and the halt in some of these skirmishes actually hold, especially given we are going into some of the technical talks over the next few weeks? What's your expectation?
First of all, I think it's not unexpected what we're seeing, those skirmishes, because there was a lot of pessimism about the ceasefire that was supposed to ensue the signing of Memorandum of Understanding. And I think it is demonstrating that we are not going to see any agreement anytime soon, because the intentions of the parties, especially on the side of the United States, they remain to maybe, as now I'm seeing, rather maintain a low-intensity warfare and use the negotiations as a sort of performative measure to maintain it at this low intensity rate, but not more. So answering your question, I wouldn't expect signing of a comprehensive agreement by the end of the 60 days, but also it probably wouldn't be escalating it into a larger warfare like the 40 days that we saw since the start of February.
How long do you expect these low-intensity conflicts to continue without spiraling into something a bit more serious?
For some time, probably for a long time, and maybe until the point that on the military side, the United States decides that there is enough in the stockpile to resume it, if such a decision will be made, because now there is a lot of talk about counting on how much was depleted by this war. So look at, for example, let's look at Syria's example. The intention was to indeed administer regime change. The same intention was there, although later denied in Iran. So it took about 13 years in Syria. We could expect low intensity military pressure around the Strait of Hormuz to continue against Iran, with the hopes that it will help collapse regime at some point.
And yet, Julia, you say that talks over negotiations right now between the U.S. and Iran are largely performative rather than a genuine peace negotiation. What changes that assessment, in your opinion?
How they can become non-performative and substantial.
Yeah, a bit more substantive.
I think for that, we need to, there's something that Iran demands, one of Iran's red lines, and that is inclusion of the Lebanese front, cessation of hostilities, and full withdrawal of Israel from South Lebanon. And we do not see this happening. And even this incident that happened, those so-called skirmishes in the Strait of Hormuz, well, I wouldn't imagine Iran attacking a ship because of what's happening in South Lebanon, because that is paragraph 1, the point 1 of the memorandum of understanding that's not being observed by Israel. So Iran wouldn't probably attack a ship for that reason, but the strike on the American targets in the region could be one of the responses that Iran considers valid at the continued military action by Israel in the south of Lebanon. So this decoupling of the Lebanese front from the Iranian front, in the eyes of Iran, it's a pointless exercise, and Iran is not going to agree for that. So to make the talks substantial, there needs to be cessation of hostilities everywhere, because if that is not fulfilled, later on, Iran is going to try to increase its strategic depth and get at Israel's logistics routes in the Red Sea and beyond that in the port of Haifa.
Well, we'll wait to see how these talks continue throughout the week. Julia Rocknifard, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, thank you so much for your insights this morning. Now, coming up, we'll discuss the market outlook with Ryan Lamond from Neovision Wealth Management. That's next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
What happened was you were out.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Traders are weighing developments in the Middle East, with the U.S. and Iran agreeing to return to talks after fresh tensions over the weekend. Stock futures have advanced while Brent crude has eased from its session high. Let's bring in Ryan Lamond, co-founder and CEO of NeoVision Wealth Management. Ryan, thanks so much for joining us. Let's just start with some of the focus that we're seeing for investors right now. There is a broader concern around some of the AI spend, which we saw really contribute to a lot of choppiness last week. You describe this current phase for markets as sort of a punishment phase. Can you explain where we're at right now and sort of how that's feeding into your own sentiment at the moment?
Absolutely. Absolutely, Jennifer. So just to give you some numbers, last month, the month of May, I have personally consumed 200 million tokens with my AI provider. I've paid $200 that month for my subscription. So the difference between the $5,000 of the consumed tokens, because 200 million tokens could cost $5,000. The difference between the $5,000 and the $200, the $4,800, is basically fueled and financed by VCs and by hyperscalers. If you look at the free cash flow difference between how much hyperscalers have made in free cash flow and how much they've consumed and spent on AI companies, it is negative today. So this is why today markets are punishing hyperscalers for this free cash flow consumption. These hyperscalers were profitable and interesting as an investment thanks to their free cash flow generation. But today they're consuming a lot of money into what I call a subsidy system, which is the difference between $5,000 and $200. And this subsidy system cannot continue for very long.
So do we continue to see a punishment, as you describe it, Ryan, across the board? Broadly speaking, we were talking about what we're seeing in Asia, a bit of a rotation right now, as Winnie was describing it. What's your expectation for how long this will continue?
I think the rest of the year will be very choppy, up and down, especially that most of the positions that have been taken, the new ones, are by retail, and they're mostly leveraged positions using leverage ETFs. And we've seen it in South Korea. South Korea is an exemplary market to look at it, where a lot of leveraged positions have come in through retail, and this is where the chop we're seeing, limit down, limit up, on a continuous basis. The US market is much broader, much bigger, so we see this effect in a much lesser way, but I think we will continue to be volatile until the end of the year, until an accident happens. So one of these AI companies shows serious weakness or fails, or until something changes.
So then where do you position, Ryan, just given some of the uncertainty right now? We mentioned we're at the end of the quarter. Where are you focusing in as you're speaking to clients?
This is the heart of the question. So we are institutional investors. We invest on behalf of clients. I have a lot of difficulty sitting in front of a client and justifying investing into the S&P 500 versus, for example, the Swiss index. Let's look at both. The Swiss index has gone up over the past 12 months by 19.5%. The S&P 500 over the past 12 months has gone up by 19.34%, which is exactly the same thing. One is very speculative, driven by leverage positions, by a technology that is yet to prove itself, prove its profitability, versus another market, which is chocolates, medicine, and very traditional sectors where people will continue to eat chocolate and will continue to buy medicine. So I have a lot of difficulty justifying one market over the other. So yes, we are, for example, in Swiss equities that have performed as good as the S&P 500. We're in gold as well. If you look at gold over 1 year, it has gone up by roughly 25%. That's more than the S&P 500. Over 2 years, gold has gone up by more than 70%, which is the double of the S&P 500 performance. We haven't done that well in Chinese equities, for example, but we continue to build positions because we believe we'll come back. And we are into emerging markets like Brazil, for example, that has a trade surplus.
And we are seeing gold marginally down right now, but still above $4,000. So still tactically positioned right now. Ryan Lamond, we have to leave it there with you, but appreciate you joining us, co-founder and CEO of NeoVision Wealth Management. Ryan, thanks as always. Now coming up, Israel and Lebanon reach a framework deal aimed at paving the way to ending the conflict between the two nations. We'll bring you the latest on that next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Hezbollah says the Israeli army carried out attacks in Lebanon on Sunday, posing what it called a flagrant violation of the ceasefire. It comes as Israel, Lebanon, and the U.S. reach an initial trilateral framework agreement aimed at paving the way for ending the conflict between the two nations. For more, we're now joined by Bloomberg reporter Dan Williams. Dan, what more do we know about Israel's attacks on Lebanon, and how will this trilateral framework agreement actually work to end the conflict?
Jennifer, Hezbollah is talking about continued Israeli actions against its facilities in southern Lebanon, which, if you ask Israel, and indeed very likely if you ask the Lebanese government and the United States, which served as a mediator between the neighboring countries, such attacks are completely consistent with the ceasefire, now upgraded to a preliminary framework for peace between the countries. Beneath the surface of that diplomacy, if you look at the small print, it's actually designed to defang Hezbollah with a quiet consent of the Lebanese government, which has undertaken for years to do so, has not been able to, and apparently now feels confident enough as part of this new deal with Israel, again mediated by the US, to open up what's called trial areas or pilot areas where the Israelis would withdraw forces or refrain for attacks so that the Lebanese government could come in and prove its ability to keep Hezbollah dislodged. Those are areas in the south of Lebanon, traditionally the heartland of Hezbollah. So Hezbollah is not part of that ceasefire. It really doesn't have standing to talk about violations of the ceasefire. And there's a good deal of evidence that it's feeling the pressure from the upgrade of that ceasefire to a deal that could see it dislodged by its fellow Lebanese, the government in Beirut.
Yeah, one certainly to watch in the region. Dan Williams in London for us. Dan, thanks as always for your reporting. Now for a look at some of the other stories we're following in the region. The Saudi press agency says a helicopter operated by Saudi Aramco crashed on Sunday, killing all 14 people aboard. The state energy ministry says it happened in the Ras Tanura energy hub, and the victims were all Saudi nationals. It didn't give a cause for the crash. Aramco had only just resumed loading crude at terminals in the area for shipments through the Strait of Hormuz. Anthropic has won U.S. approval to restore some global access to its Mythos 5 AI model for what the Commerce Secretary calls, quote, certain trusted partners. Howard Lutnick says the company has made significant progress on resolving concerns about potential national threats. Anthropic disabled global access to Mythos 5 and a related model this month on U.S. government orders. Now, let's just take a quick look at where markets are positioned to start the week. As you can see, green on the screen for U.S. equity futures. Also, potentially a positive start in Europe for Euro Stock 50 futures. Potentially a bit more positivity from what was a very volatile session and a week last week for markets globally last week. Now, coming up, South Korea seeks to cement its technological edge against rivals with Samsung and SK Hynix poised to unveil mega AI investments. We'll unpack the details on that next. This is Bloomberg.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
This is Horizons Middle East and Africa. Our top stories this morning. Diplomatic pause. Iran and the U.S. agree to stop attacks and resume talks following fresh strikes that threatened oil flows through the Strait of Hormuz. South Korea goes big. Samsung and SK Hynix prepare to announce more than $1 trillion in investments to keep up with demand for AI hardware. Plus, China turns up the heat on the EU, signaling Beijing can withstand a complete trade halt in trade with the bloc ahead of Commerce Minister Wang Wentao's trip to Brussels. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zapasaja in Johannesburg. We are starting the week off just waiting to see how markets will be positioned, especially given some of the choppiness and the volatility last week, especially with a number of the tech names that we focus on. Of course, the name of the game last week with the chip wreck that we were focused on. We will see whether or not that filters in to the week that is coming up this week. But right now we're seeing U.S. equity futures marginally up to start the week, up just over 0.6% right there, with the S&P futures up. Still in focus, though, as I was just mentioning, though, the broader AI trade, especially given what we saw last week. Investors will also be focused on the close of the quarter and also the U.S. jobs report, which is coming on a truncated week for Wall Street in just a few days. MSCI Asia Pacific Index has now moved marginally lower, down just about 0.2%. We'll get more from Winnie Xu in just a few moments, but still a bit of a continuation from some of the sell-off that we saw last week as it pertains to the semiconductor and also AI-related names. In focus, of course, is South Korea, which has been the world's best performing index, the Kospi index. So we will see how that continues to trade throughout the week. Brent crude up just over 0.7%, pairing some of the gains that we saw earlier in the session. Of course, in focus is that pause in hostilities in the Middle East, keeping Brent at just about $72.50 a barrel there. And we also have the U.S. 10-year yield on the board up just about a basis point to trade at 4.38%. We will see, of course, we get some Fed speak throughout the week. And, of course, we'll wait to see how the jobs number comes out later this week. On Thursday, it's actually coming because of the 4th of July holiday. But let's check in on how markets in Asia are faring. It's been a few hours that they've been open. Winnie Xu is in Hong Kong for a closer look for us. Winnie, what are you watching?
Yeah, morning, Jen. We are seeing Asian stocks coming under a bit more pressure today as this rotation away from the tech stocks, which have been doing well so far this year. We're seeing investors rotating out of these names and into some of the underperformers this year. Now, that's why we are seeing the Kospi here down almost 2%, leading declines in Asia after having risen about 100% so far this year. And following that, we have Japan's tech-heavy Nikkei 225 down about 1% as well. But the outlier today is, in fact, in the tech stocks listed in Hong Kong. HS Tech here up almost 4%, a bit of a rebound after being in that oversold territory. And in fact, the stock did have its worst week last week, the worst since October. So a bit of that rotation as well. Now, we can see that here is the picture of the tech sector. Infotech here down about 1.6%. And that is coming as 8 out of 11 subsectors in Asia are rising. So the drag here, specifically in Samsung Electronics and SK Hynix, down about 5 to 6% each, is ahead of that announcement of a $1.3 trillion worth of investment over the next decade into expanding capacity into the country's southwest region. Now, that announcement is expected within the next 30 minutes or so. So we will be closely watching out for that, but some concerns around if these massive capex are running ahead of itself. Also a bit of a concern when it comes to how Apple is in fact looking to source its memory chips from Chinese chip makers. So the question is if these Asian chip makers are able to keep up with that pricing power. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong for us. Let's just stick with what Winnie was talking about, South Korea's tech sector. Local media is reporting that Samsung and SK Hynix are preparing to announce major chip investment plans that may total up to $1.3 trillion over the next 10 years. For more, let's bring in Bloomberg's Kat Barton, who is in Seoul for us. Kat, we heard just a bit from Winnie there, but what more can you tell us about this investment package? It's an eye-watering number that we're hearing about.
There's a lot of numbers floating around in local media, and we do have to wait another 30 minutes until we will hear from the president himself and hopefully get clarity on this. So President Lee Jae-myung is set to speak in 30 minutes from now. And then after he's given us some details, we're also expecting that Samsung Chairman J.Y. Lee and SK Chairman Chae Tae-won will also give more details of their company's planned investments over the next decade. But this is part of a huge push by the South Korean government to have more regional investment. Obviously, at the moment, semiconductors specifically, but other, huge other sectors of the economy, it's all concentrated around Seoul, which is, of course, very close to the North Korean border. So the government is extremely keen to see more investment in the south of the country. What we're seeing in local media so far is that there could be multiple new semiconductor fabs being built in Gwangju, which is in the southwest of the country. So we're hoping to get a lot more details very soon on that.
How much do we know, Kat, how this fits into the president's broader strategy? You dug into it just a bit, but what more can you tell us about how this really fits into what we've heard from him and seen from him?
Well, South Korea is one of the countries in the world that is really benefiting the most from this AI boom. They are home to their these two huge chip makers, Samsung and SK Hynix. And it's also on the forefront in terms of debates about who benefits from AI. How should countries spend these huge bonanzas? We're looking at vast amounts of money going in, and South Korea is eager to make sure that everyone benefits, that the money is not just flowing to a tiny segment of society. So later today, after the president and the chair people have spoken, we're also going to be hearing from the president's policy chief, Kim Yong-bom, who has previously sparked debate by talking about a citizen's dividend, whether South Korea should consider something like that to use the excess tax revenues, which are likely to be record this year from Samsung and SK, to help benefit society as a whole. So this move today certainly fits into the Lee Jae-myung government's plan to share the benefits potentially, if possible, to make South Korea, a better place for all.
Do we know when we might see this actually dispersing and spreading equally amongst the various AI names that we've been watching, Kat?
We do not. I mean, the announcement today is not just Samsung and SK. There are multiple other companies involved, because obviously we also have Hyundai, which is a leader in robotics. So the government is looking at pushing these kind of titans, the chaebol, to invest outside of Seoul, and to try and push to do more. But obviously, when you're talking about building a new a semiconductor fab, this is decades, years of work, and we're talking about a 10-year investment plan. Actually, the numbers seem huge. The local media have been saying 1.3 trillion. But when you break it down year by year, we're talking about roughly the same kind of capex that they were looking at already for 2027. It's not out of range. It's about in the ballpark. So they are massive investments, but they're coming over a 10-year period, and we're not going to be seeing them, immediately. It's definitely going to be coming over the years to come.
But still creating quite a bit of excitement for that announcement that is coming imminently. Bloomberg's Kat Barton, thanks so much. We'll wait to hear more on that announcement, as she was just mentioning, in just a few minutes. Now, let's get back to the energy story. Oil paired early gains after the U.S. and Iran agreed to stop attacking one another. The de-escalation followed flare-ups over the weekend that saw an oil supertanker hit near the Strait of Hormuz. Rong Wei-neo is Bloomberg's Asia oil trading reporter. He joins us now from Singapore. Rong, how is this agreement to stop attacking each other holding up so far?
Well, you can see from the oil prices, it's testament to how the market is reacting to the weekend tit-for-tat attacks, as well as the market's subsequent reaction to the supposed ceasefire that has happened between US and Iran following that spate of attacks over the weekends. Now, for now, the agreement seems to be holding up pretty well, but we do have to note that traffic through the Strait of Hormuz has kind of been impacted since the first strikes landed late last week. Well, of course, now oil has opened slightly higher than last week's close, which signifies that the market is still a bit trepid about the potential of supply disruptions, as well as traffic through the Strait of Hormuz being affected. Well, since the first strikes have landed last week, several shippers have actually took a wait-and-see approach as they set to reevaluate the risks taken on the risks necessary to transit through the straits. But of course, the traffic through the Strait, even though it may have came down slightly through the weekend attacks, but it has not completely stopped. Right now, the traffic levels we are seeing is still much higher than what was happening at the onset of this US-Iran war. And shippers continue to evaluate and weigh the prospects of the upcoming peace talks between US and Iran, where both parties are expected to discuss a bit more on the details about managing traffic through the Strait of Hormuz. And of course, that would also lend further details and give further insights of how both countries plan to proceed in terms of unlocking technical details about other things, such as the lifting of sanctions on Iranian oil, which is expected to be a boon for supply in the market as well.
How much insight can you give us, Rong Wei, about some of the traffic that we have seen within the Strait of Hormuz? You mentioned what we've seen over the past few days, but can you dig into that a bit more about some of the activity that we've seen?
Right, so let's take a step back and talk about how traffic through the Strait of Hormuz has recovered since the US-Iran sides came to an interim peace deal and entered a period of 60-days of negotiation to kind of meet up more details about how they plan to bring this war into a close. Of course, traffic has increased significantly since then, which traffic came to a near standstill stop since the onset of the war. However, things started to slow down a bit when there were a bit more uncertainties emerging, such as the tit-for-tat strikes that I've mentioned earlier that happened through the weekend. One thing we do have to take note is that traffic through the Strait of Hormuz is not that straightforward. Right now, there's pretty much two passageways, one that is more closer to what the Iranian side is looking to police, and the other is something that the US side has been advocating. And of course, the International Maritime Organization has also warned ships that there could be about 80 sea mines that are still present in the Strait of Hormuz, which of course added to a bit more of the potential risks shippers will have to undertake when transiting through the Strait of Hormuz, which is why all eyes are on the upcoming talks and about how and the market will be looking forward to how both sides would come up with more details on how to police or how to manage traffic through the Strait of Hormuz. And hopefully this will give more clarity to those shippers which may be a bit more risk adverse, and they would have a bit more confidence to push ahead with bringing empty tankers into the Strait of Hormuz, as well as to lift crude and bring it out of the Gulf.
Absolutely. Bloomberg's Rong Wei Neo, thanks so much for joining us and giving us some more updates on what we're seeing with the Strait of Hormuz. Now, coming up, the EU's top trade official will meet the Chinese commerce minister in Brussels today as the bloc steps up pressure on Beijing over a growing trade imbalance. We'll have more on that story next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Chinese state media has warned relations with the European Union could hit a freezing point, accusing EU officials of showing a lack of sincerity in early trade talks. The warning comes as the EU's trade chief prepares to meet the Chinese commerce minister in Brussels today to tackle mounting tensions over trade imbalances. For more, let's get to Bloomberg reporter Stephen Engel. Stephen, what more have we heard from the Global Times ahead of these talks?
Well, yeah, I mean, the Global Times put out a article essentially saying that the Europeans are coming across as insincere in the preparatory talks ahead of that meeting between Wang Wentao, the Chinese commerce minister, as well as the European, or the EC trade chief, that's Maros Sefcovic. They're going to meet in Brussels later today. And a lot is at stake. So it's a very complicated, intertwined story here where, of course, Chinese brands and Chinese products have been flooding into the European Union. And that's, raising some concern, obviously, for industries in places like Germany and elsewhere. And also, it's a bit complicated as well for the Chinese because they've spent several years while battling the tariff regime from the United States to build better relations with the European Union. In fact, there's been a parade of European Union leaders coming to Beijing in the beginning part of this year to kind of strike better commercial ties between the two trading blocs. But there's some difficulties over subsidies that the Chinese do give exporters into the European Union. There's also the issue in Hungary where Viktor Orban's government, which was very friendly to Chinese investment and Chinese access into the EU, is no longer in power. And there's been some more, more hawkish rhetoric from the new government in Budapest. So again, that's the backstory. We'll have to see if we can get through some of that rhetoric and get to some agreements and face-to-face talks, because essentially the Chinese are saying the Europeans are only talking about access to rare earths and chips. They're not addressing China's concerns about everything from EV access and the details of the minimum price guarantee mechanism that the European Union had agreed to, but has not shared the details with the Chinese.
Yeah, and Stephen, we're hearing that the trade imbalance for the EU is, quote, unsustainable, is the way they describe it. What's your expectation then from what we could hear from both sides?
Well, again, the Chinese don't want just a meeting that doesn't resolve these difficulties, because again, European leaders have basically just in the last week or so asked the EC to come up with some defensive measures to protect European industries. They've ordered the Commission to negotiate with China about the EU's trade deficit, which is now in 2025 $360 billion. But again, the Chinese are concerned that if the talks are just treated as a mere formality, they won't get some of their grievances heard. So it's an important meeting. How much it's going to resolve these bubbling issues is yet to be seen. But it's a conundrum for the Europeans as well, because on the one hand, they want to address these issues, but they don't want to be too vocal, too public with their criticisms, and basically get to the situation where the Chinese state media threatened the possibility of a freezing of commercial, if not diplomatic, ties.
Yeah, quite a lot to watch for. Stephen Engel. Stephen, thanks so much for your reporting. Appreciate you joining us. President Putin has acknowledged that Russia is facing persistent fuel supply problems, with motorists and businesses confronting long queues at gas stations. To stabilize the domestic market following refinery outages, Putin says a full ban on diesel exports is now under consideration. His comments come after Ukrainian drone strikes on refineries reduced fuel production. Also, Andy Burnham will pledge the biggest devolution of power in England in modern times in his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. In a speech today, the former Greater Manchester mayor will outline plans to boost local economies and jobs and tackle youth unemployment. Now, coming up, the former U.S. ambassador to the UN, Samantha Power, says there's been a dramatic decline in America's soft power since the winding up of USAID. More from our interview with her next. This is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
On July 1st last year, the U.S. effectively ended operations of the United States Agency for International Development, cutting off most staff and moving it into the U.S. State Department. The former U.S. ambassador to the UN, Samantha Power, led the agency under President Biden until early 2025. She spoke to David Gura on the Big Take podcast about what she thinks was lost both internationally and at home. Take a listen.
We see with Ebola our rapid response capacity eviscerated. There are still individuals who call themselves people who work on Ebola, but they are too few, they are too dispersed, and many of them lack the expertise that was exported when the USAID staff was terminated so abruptly. The unseen costs are equally dramatic, and that ranges from girls who are no longer getting an education because USAID was either helping support a school to do that or leveraging its other programming in health or clean energy or agriculture to push a government to move in that direction. Villages that won't be electrified. USAID, through its Power Africa program, helped connect about 150 million people to electricity. Most of that was in places that would never have been able to connect to the grid in my lifetime. Pop-up solar panels, private-public partnerships that allowed things to happen at a much more accelerated pace. So the soft power suicide for the United States, I think, is pretty obvious when you pull the rug out from programming of this nature with no warning, with no regard for the human consequences of those actions. That's going to cause, to say the least, a severe trust deficit. But I think when you go behind that as just an argument and think about the families that on a Friday were able to send their female child to school and on a Monday suddenly found that that child was no longer welcome. The family member who goes to get antiretrovirals to treat HIV, which has now become a disease that you can live with, thanks to George W. Bush and the PEPFAR program combating HIV around the world, able to get their meds on a Friday, showing up on a Monday, the meds still available, but the pharmacy closed because the health workers laid off because of the cuts that the Trump administration made. So it's all system failure, an all system attack, and there's not one part of human development that has been untouched by this blunder.
That was former U.S. Ambassador to the UN, Samantha Power, speaking to Bloomberg's Big Take podcast. Now, a few other stories we're watching. Uganda's army chief, Muhoozi Kainerugaba, said he ordered the country's main independent media group to halt operations because of biased reporting. According to Kainerugaba's post on X, Nation Media Group's television station NTV Uganda and Daily Monitor newspaper will remain closed until further notice. Nation Media's outlets have had a series of disputes with the Ugandan authorities in the past. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. European and US futures gain as the US and Iran agree to halt strikes ahead of talks set for this week. South Korea goes big on AI, with Samsung and SK Hynix reportedly set to power a $1.3 trillion decade-long push into memory, data centers and robotics. Plus, Andy Burnham will pledge England's biggest devolution of power in modern times in his first major economic speech as he looks to become the UK's next Prime Minister. Well, happy Monday. Coming to the close of Q2, the end of the first half, and here is the picture in markets. Asian stocks slipping as we see a rotation out of tech into healthcare and consumer products. We're waiting for a key investment announcement out of South Korea. The Kospi at the moment is weaker, 2.4%, but futures pointing higher on both sides of the Atlantic, thanks to the reports that the US and Iran have pulled back from a fresh escalation of their conflict. Axios reporting that both sides have agreed to halt strikes and meet in Qatar to resume talks. Now, flip cross-asset and correspondingly, oil has eased from its session high. Brent still, though, up 0.5% at $72 a barrel. Gold, declining on the inflation concerns. We're down nearly 1% now at $4,049 a troy ounce. And treasuries are a touch weaker. We're up a basis point on the 10-year yield at 4.38%. And now looking ahead to the meeting of central bankers in Sintra, as well as that slew of US jobs reports out this week. Speaking of which, let's take a look at the risk events on the agenda for today. At 8 a.m. London time, we'll get Spanish inflation numbers for June, expected to have declined to 3.4%, even as VAT on household energy bills rises. Then at 10 a.m. London time, we'll broaden the lens to Eurozone consumer confidence. We'll see how that inflationary backdrop is impacting sentiment. And finally, what does it all mean for central bankers? Well, we'll be hearing at 6:30 p.m. London time from the European Central Bank President Christine Lagarde in Portugal. And the Sintra Summit this year focused on AI. But, of course, the backdrop is that inflationary shock of the Iran war. So plenty ahead. Let's get started. Well, as we're waiting for the beginning of that event in South Korea, let us take a look at Asian markets, where stocks a little changed as investors continue that rotation out of tech. We can go straight to Winnie Su in Hong Kong for an update. Winnie, what's catching your eye today?
Yeah, good morning, Lizzie. As just mentioned, Asian stocks under a bit of pressure as this rotation away from the tech stocks that have done extremely well so far this year continues, especially as investors rebalance their portfolios at the end of the month as well as the end of the quarter. And that's why we are seeing Japan's Nikkei 225, which is a tech-heavy gauge, underperforming the broader topics gauge. And in fact, on the topics index, we are seeing retail pharmaceuticals gaining. And that rotation is also going into tech stocks in Hong Kong. We are seeing the HS Tech here up more than 3% after having its worst week since October and coming into that oversold territory. Now, you flip the board and take a look at the Korean assets because, as you mentioned, all eyes on that ongoing announcement from President Lee Jae-myung. And we are also expecting Samsung and SK to announce that $1.3 trillion worth of investment over the next decade to fund its expansion of capacity into the country's southwest areas. Now, this is likely going to have a significant impact on the economy, but also we are hearing some concerns if this capex is really running ahead of itself right now, and also a bit of more concerns when it comes to the report saying that Apple is considering potentially sourcing its memory chips from Chinese memory chip makers. So that raises the question how far these Asian chip makers can keep their pricing power. Now, flip the board, we also take a look at the Asian air conditioner sector because this massive and intense heat wave hitting that side of your side of the region, Lizzie, is actually raising the demand for the Asian air conditioners. And that is coming as the French government also setting aside €100 million worth of emergency funds to support the equipment for the hospitals. Back to you, Lizzie.
Really interesting. The way to invest in this heat wave. Winnie, thank you for the update. That's Winnie Su out of Hong Kong. Well, let's take a look now at what's powering US futures higher. As I say, we've got S&P E-minis up 0.5% right now, and it comes back to the geopolitics. The US and Iran having agreed to halt attacks on each other ahead of peace talks resuming in Doha this week. The de-escalation comes after the two sides blamed each other for breaching the fragile ceasefire amid strikes on vessels in the Strait of Hormuz. Let's go now to Bloomberg's John Herskovitz for an update. John, good morning. We have talks due to continue in Qatar, but the background are these strikes. How are negotiations going?
Yeah, the negotiations are still on track, but we saw the most serious violence and attacks between the two sides since this interim agreement was reached. There's a lot that needs to be done in these talks. Bloomberg spoke to a U.S. official who said that all the items of the Memorandum of Understanding are going to be up for discussion. There have only been a few days of technical talk so far. One of the key issues, of course, is going to be control of the Strait of Hormuz, whether they're going to be tolls charged by Iran and possibly Oman. But you have a slew of other issues, the biggest of which is the nuclear issue. And the time frame to get these things done is 60 days. And if you just think about the time frame for the nuclear issue under the Obama administration, it took nearly 2 years to negotiate that deal. So there's a lot to be done. Both sides are pointing the finger at each other, blaming them for violating the ceasefire, the most serious violence that's happened since the interim agreement. But it did not derail the talks that are set for this week.
Well, yeah, just give us some colour on what attacks happened over the weekend. Really, a lot of action since Thursday.
Yeah, exactly. It started Thursday with Iran attacking a container ship, commercial container ship, and then the U.S. attacked Iranian targets. Next, Iran targeted a Qatari oil tanker. U.S. went back. Iran then launched attacks on neighboring states in the Gulf, I think Bahrain and Kuwait. No fatalities, but this just served as a warning to shippers about how dangerous the situation is. Before this these back and forth attacks, shipping had gotten to about 70 transits a day. This is it's significantly higher than before, but still below the daily averages of about 100, 130, 135 before the strait was closed. And it just also underscores how important control of the strait is for Iran. This is one of its big cards in the negotiation. It really wants to keep its control of this. It says that the language in the Memorandum of Understanding helps support its position, but the U.S. has also drawn a red line about tolls and charging ships for transit of the strait. So this will be an issue that's front and center as the two sides are set for talks this week.
John, thank you very much. That's Bloomberg's John Herskovitz there. Well, of course, the geopolitics has been feeding into the macro outlook, and we've been hearing from the Richmond Fed President Richard Barkin warning that US inflation is too high, describing modestly restrictive policy as appropriate, given his view that businesses are adding to inflation's persistence through price setting. We can go now to Mark Cranfield, Bloomberg MLive strategist. Morning, Mark. So this is going to be a topic for central bankers at Sintra this week out of Portugal. We also have Thursday's US jobs report on the agenda. What should investors be focusing on as we head into the second half of the year?
Yeah, morning, Lizzie. I think the highlight for most investors will be anything that Kevin Walsh has to say. He's only speaking, though, on a panel. He doesn't give an individual address, but certainly depending on what questioning he's given there, he may well have a chance to express some of his views on monetary policy, where he sees it going. Now, it's very important because of where traders are pricing the market. So we're going to hear from the governor of the Bank of England, we're going to hear from Christine Lagarde, and we're going to hear from Kevin Walsh over the period of the week. And in all cases, traders expect at least one interest rate hike from each of those central banks, either before year end or early into next year. And now's an opportunity for each of them to push back a bit. If they think that pricing is incorrect, if they think traders have got ahead of themselves, now's the time when they may well use a few words to try and dilute some of that impact on the market. So that's really why people are very much looking forward, particularly to Mr. Walsh. because he has said in the past that he doesn't really like to give guidance very much. But if he sees a big disconnect between what investors are expecting and where he sees the situation, now's the time that he might want to do something about it. As you say, there's also a lot of data coming out this week. We've also got an ISM report, we've got the jobs report, plenty for people to factor in, considering that last week the PCE confirmed that inflation is around the 4% area, way too high from the Fed's point of view. So clearly the market has shifted its focus. It does expect interest rates to remain relatively high in the short term. But at some stage, those lower oil prices will come in, and then we'll get a CPI report in a couple of weeks' time. So really the combination of the data and the Fed speak is really going to have the chance for plenty of volatility in the yield curve. And I guess we're going to talk about what's happening in the Treasury curve right now.
Yeah, completely. We're seeing some of the world's biggest bond investors, Mark, zeroing in on 5-year Treasuries. Why is that the sweet spot?
Some of that is really a reaction to what's happened over the past few weeks, where because people were heavily focused on curve flattening and they were using the 5-year to short against particularly 30-year sector, so the 5 years really got out of line. If you look at, they called it the butterfly trade, 2-year, 5-year, 10-year trades, or even longer, and that's really got out of whack, which makes the 5-year look relatively cheap compared to the rest of the curve. So it's really a trading setup for some of the major houses in the short term. But if Kevin Walsh doesn't push back against the interest rate hike this week, the 5-year will not perform particularly well by the time he has to speak, and of course the data that follows as well. So it's very much a short-term thing. The 5-year may look a bit cheap right now, but if we do proceed to the idea that the Federal Reserve is going to tighten policy before the end of the year, then the 5-year will fall back in line and will be one of the most vulnerable parts, because people will be looking for a big flattening between the very long end of the curve and the shorter end of the curve, and that's exactly where the 5-year tends to get hit. So it's really more of a short-term thing, but Bloomberg does have a very interesting story today on some of the big players which are currently looking for value in the middle of the curve.
We certainly do. Shout out to Michael McKenzie and GG on that story. Worth reading on the terminal. Mark Cranfield, thank you for your analysis. That's our Bloomberg M Live strategist. Well, still ahead on Daybreak Europe, the Prosus and Naspers group, known for its early bet on Tencent, has full-year results out this morning, and we'll be speaking to the CEO, Fabrizio Bloisi, on tech investing as well as the company's acquisition drive. So that conversation coming up later on in the programme. But first, we'll bring you more on South Korea's mega AI spending plans. We've been hearing from the president in the past few minutes, and this is as the country seeks to keep hold of its memory chip crown. So we'll dive into all the details for you next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
What happened was you were out.
Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Turning to tech now, Anthropic has won US approval to restore some access to its Mythos 5 AI model after resolving the Trump administration's concerns over the tech's potential threats to national security. Now, the clearance allows access for certain trusted partners, but Anthropic's other AI model, Fable 5, continues to remain restricted. Let's get more now with Bloomberg senior strategist Neil Campling. He joins me in studio. Neil, good morning. So just break it down for us. What do we know about who actually has access now?
So we know it's a limited list of trusted partners, likely to be US technology firms. It appears the US government are now happy enough that the controls are in place to prevent sort of cybersecurity hacking of the code itself. So it shows that the government and the company have worked towards this resolution over the last 2 weeks. It restores access to these companies, and of course the AI models are moving at such a fast pace. The access was very important to get that through to again. Now, there are other reports over the weekend that China have caught up with some of the US models in terms of the cybersecurity protocols and about the resilience in terms of what they offer, and also the ability to find where there are flaws in existing coded systems that have previously been undetected. So we've had good progress in terms of the AI models over the last couple of weeks. It's great to hear that there is some progress that's taken place, but it's still not ready for general consumption by everyone. That's quite clear.
And so if Anthropic has resolved some of the Trump administration's concerns, does that mean that the path is clear to the IPO?
Well, we certainly can hope that the path is clearer now. And Anthropic will obviously want to come to the market at some point when they're having the growth and the financials that support getting as high a valuation as possible. It's a good step forward, but clearly they would want to have the sort of commercial availability of Mythos 5 and any tools to come to market. So we're not quite there yet, but certainly it's a positive step in that process.
OK, Neil, thank you very much. That's Bloomberg's Neil Campling there. Well, we have been monitoring the situation in South Korea. We have been listening with one ear to the President, Lee Jae-myung, talking about plans for investment, massive investment into AI. Of course, South Korea, one of the biggest beneficiaries of the global AI boom. And the plan is for the world's two biggest memory makers, Samsung and SK Hynix, to have a decade of large-scale investments in memory chips, data centers and robotics. So just to bring you some of the latest lines from President Lee, he says that there's massive competition in chips and AI sectors. This is a historical achievement, he says, because Korea needs to accelerate building its chip base to meet demand. He says it needs to develop land, provide cheap water, cheap power as well, needs to expand its chip supply capacity by investment in the southwest. Balanced growth in South Korea, for him, he says, has become a survival tactic. And so this really cements the country's status as a technological powerhouse. The figure that has been reported is $1.3 trillion. And we had seen shares in SK Hynix and Samsung falling in advance of this. We had seen the Kospi down as well. The Kospi is still down 1.3%, so pairing some of the earlier losses. But the stakes really high for the president here, given that his approval rating has been at its lowest level since he took office a year ago. We've got a fantastic T-Live blog on the terminal about all of this. But let's get some analysis now. We can go straight to Seoul and speak to Bloomberg's Kat Barton. Kat, thank you so much for making time for us this morning. Just give us some context to this messaging from President Lee this morning. What does it mean for the South Korean memory-making industry and also its place in the global AI landscape?
Sure. So President Lee has just been speaking, and he's sitting in the Blue House in the heart of Seoul, and he's flanked by both the chairman of SK Hynix and the chairman of Samsung Electronics. So these are, the two largest memory makers in the world. And they're sitting there smiling as President Lee is announcing this huge project to bring more semiconductor investment to the southwest of South Korea. So he's been talking about how everything at the moment is just concentrated around Seoul, and that those sites are really hitting their limit. They're running short on electricity, they're going to run short on water, and the southwest of the country is ideal for further development. This is what we've just heard President Lee say. He's pointing to the fact that it has plentiful water. It's promising for the government to invest heavily in renewable energy down there, and we're literally just waiting to hear from the industry minister, who's likely to announce a number. The number we've heard this morning is the 1.3 trillion, but let's see if we get that number very soon. And I think, beyond that, it's very significant for South Korea as an AI, powerhouse. They're trying to really capitalize on this moment. The government is really starting to see semiconductors as a kind of, national strategic asset, and they want to be able to capitalize on this moment and make sure that the potential AI boom and the vast excess tax revenues and the real opportunity here is not squandered.
OK, thank you, Kat, for the analysis. And we have South Korea, according to President Lee, aiming to double DRAM production capability in 5 years. That's the latest line. Of course, we, as you say, are waiting for the confirmation of that $1.3 trillion figure. But for now, Bloomberg's Kat Barton, thank you very much. Well, coming up on Daybreak Europe, a plan for growth. We're going to look ahead to Andy Burnham's first big speech since he launched his bid to become the next UK Prime Minister. We'll do UK politics next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We're entering an era where the page turns in the blink of an eye. Speed is the only way to survive. That, according to President Lee of South Korea this morning. We've also been hearing from the industry minister announcing that South Korea plans to invest 800 trillion won to build 4 semiconductor fabs in the country's southwest. So Samsung Electronics and SK Hynix each planning to construct 2 fabs, according to Kim. This is the latest out of South Korea. That presidential briefing ongoing. You can see the reaction in stocks at the moment. And, of course, we have a T-Live blog on the terminal tracking all the twists and turns of this. So do continue to monitor that. Let's turn back to the UK now and to the political situation. Andy Burnham expected to pledge the biggest devolution of power in England later today. The former mayor of Manchester preparing to give his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. We can get some analysis on this now with our Bloomberg opinion columnist, Rosa Prince. Rosa, good morning. Just like Keir Starmer, of course, Burnham's going to be caught between the fiscal rules, the bond vigilantes and Labour's backbenchers, of course. What do you expect his economic priorities to be for his first 100 days in office, as we're going to hear from him later?
Yeah, well, he is going to pledge a mission to deliver 10 years of growth in every postcard. And his big plan for achieving that, which obviously every Prime Minister wants, and Keir Starmer himself made a big hallmark of his premiership. So Burnham's going to do something a little different. He's going to say this is going to be all about devolution, about taking power away from Whitehall and handing it to some of Britain's cities and regions, including, we hear, what he's going to describe as a number 10 in the north, a kind of power base in his town of Manchester, where he was the mayor for 9 years. And he's going to hand those regional leaders the levers to achieve economic growth everywhere, he says. And one thing in particular he's going to do is empower them to really tackle Britain's problem of youth unemployment and try to get the economy moving in that way.
A town, Rosa? Manchester, a town? You've been listening to President Donald Trump. But look, I want to know who his Chancellor's going to be. Are we likely to find that out today? Because surely if he's setting out an economic vision, it would make sense to tell us who's going to be next door in Downing Street.
Sorry to disappoint you, Lizzie. Yeah, I want to know who that name is going to be as well, but we are not going to hear who his pick for Chancellor is. And I think that partly is because he doesn't want to sort of get ahead of himself. He still isn't confirmed as the Prime Minister, although it's 100% certain that he will be. But partly, I think, is that question still is not resolved. So the obvious choice for him originally had been Ed Miliband, a close friend of his, someone who's seen as really very good at driving a government department. Sometimes that was a criticism of his colleagues, that they really weren't on top of their brief. They weren't able to implement a plan. Ed Miliband is seen as strong in that way. But in other ways, there are criticisms of Miliband. He's seen as a bit more on the left. Would that be a problem for the markets? He's also resistant to things like drilling in the North Sea. You talked about Donald Trump. Yeah. That's very much something that Trump would be unhappy about. So perhaps the Home Secretary, Shabana Mahmood, more on the centre of the party, if unpopular with some of those left-wing Labour MPs. So still not resolved, Lizzie.
OK, Rosa, we'll look forward to that speech out of Manchester about 11:30 a.m. London time. Bloomberg opinion columnist Rosa Prince there. And coming up, tricky talks on a growing imbalance as EU and Chinese trade chiefs prepare to meet in Brussels. We'll do that next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. European and US futures gain as the US and Iran agree to halt strikes ahead of talks set for this week. Meanwhile, South Korea goes big on AI with SK Hynix and Samsung confirming plans to build 2 new semiconductor plants each in a $520 billion project. Plus, Andy Burnham will pledge England's biggest devolution of power in modern times in his first major economic speech as he looks to become the UK's next Prime Minister. Well, a very good morning. Happy Monday if you are just joining us. 6:30 a.m. here in London. This is the picture in markets as we come to the close of Q2, the end of the first half. Asian stocks slipping down 0.2% on the MSCI Asia Pacific Index as we have that rotation out of tech. The Kospi Index down 1.2% despite this key investment announcement out of South Korea. But futures pointing slightly higher in Europe and up 0.5% for Nasdaq futures, thanks to the geopolitics. Reports that the US and Iran have pulled back from a fresh escalation of their conflict and that talks will resume in Qatar later on in the week. Now, if we flip cross-asset, Brent is weaker, 0.1% at $71 a barrel, so easing off the session high in correspondence with the geopol. We also have gold declining on the inflation concerns, however, down 1.1% at $4,042 a troy ounce as things stand. And if we look to your bond space, the 10-year Treasury yield up a basis point at 4.37%. We have been looking ahead earlier in the programme to that meeting of central bankers in Sintra, a huge focus on what Kevin Walsh will say, as well as that slew of US jobs reports out throughout the week. Now, let's take a look at our front pages this morning, kicking off with the Financial Times, reporting on that economic speech due from Andy Burnham later today. It says that the Prime Minister in waiting, as he essentially now is going to set out a 10-year mission to raise living standards and pledge to go further on devolution. So that speech taking place in Manchester, of course, we'll be all across that for you. We also, if we have a look at the Wall Street Journal, have that paper warning that a $1 trillion borrowing binge has lifted the stock market to risky heights. It says that leveraged funds and market debt have grown to unprecedented levels this year. Finally, here in Europe, we can look at Les Echos out of France. Their headline reads, "After the heat wave, the government is under fire." The paper saying that all political sides have criticised the French government for its lack of preparation, as well as its handling of the crisis. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which as ever terminal subscribers can find by going to DAYB Go. Now, let's stay in Europe because the European Union's trade chief is to meet with his Chinese counterpart today as the bloc pushes Beijing to address a widening trade imbalance. The meeting comes days after the EU's leaders ordered the Commission to negotiate with China and start preparing possible defensive measures. So let's get some analysis now. We can speak to Bloomberg's Richard Bravo in Brussels. Richard, just talk us through what's on the agenda today for both sides.
Hi. So in this situation, it's really important to understand that from the European side, the EU for the very first time just over a week ago came to a unified agreement that the bloc's relationship with China, its economic relationship with China, is unsustainable and that they need to do something. So as you referred to, the EU leaders gave the European Commission a mandate to come up with stronger trade defense tools so that they can fight back against China, namely overcapacity and what they think are illegal state subsidies. So the message that the EU will be taking to Chinese Commerce Minister Wang Wentao when he arrives in Brussels today is that this economic relationship needs to be rebalanced, and there needs to be some kind of dialogue whereby they can find a better relationship. And the message that the Chinese side will be bringing to Brussels is that they don't want they don't like the sound of these new trade defense weapons, and they want to tamp down any idea in Brussels that they can come up with these new measures without any sort of retaliatory threat from China.
Yeah, it doesn't sound like the mood music is really set for productive outcomes here, Richard. You've got Chinese state media accusing the EU of a lack of sincerity. We've also got the EU talk about defensive measures. Is the stage really set for positive outcomes here?
That's a really good question, and it really remains to be seen. As you said, China, for the past few days, has been leaking into Chinese state media that they're really unhappy with what's happening in the EU right now, and that they are prepared to retaliate. And as everyone in the European Commission knows very, very well, if China decides to, they can impose export controls on critical inputs to European industries like car makers and semiconductors, and effectively shut down those industries in a matter of weeks. So the mood music really is not great, and what we're seeing play out in the media doesn't bode well that these talks will go swimmingly.
OK, Richard, we'll look forward to your coverage of those talks later on today. Bloomberg's Richard Barfield, thank you very much for the preview. Well, let's take a look at some of the other top stories we're following around the world this morning. The Saudi press agency says that a helicopter operated by Saudi Aramco crashed on yesterday, killing all 14 people aboard. The State Energy Ministry says that it happened in the Ras Tanura energy hub, and the victims were all Saudi nationals. It didn't give a cause for the crash. Saudi Aramco had only just resumed loading crude at terminals in the area for shipments through the Strait of Hormuz. Elsewhere, President Putin has acknowledged that Russia is facing persistent fuel supply problems, with motorists and businesses confronting long queues at gas stations. To stabilise the domestic market following refinery outages, Putin says that a full ban on diesel exports is now under consideration. His comments come after Ukrainian drone strikes on refineries reduced fuel production. Plenty more, though, coming up on the programme, so don't go anywhere. This is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that just empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Jobs Day, and Bloomberg has the report under surveillance.
Things have started to pick up in this economy based on the jobs number.
But there is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The unsaid thing is that we're basically at full employment.
Apparently the labor market right now, not a problem.
The June Jobs Report, Thursday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, on the 1st of July last year, the US effectively ended operations of the United States Agency for International Development, cutting most staff and moving it into the US State Department. The former US ambassador to the UN, Samantha Power, led the agency under President Biden until early 2025. And she's been speaking to David Gura on the Big Take podcast about what she thinks was lost, both internationally as well as at home.
We see with Ebola our rapid response capacity eviscerated. There are still individuals who call themselves people who work on Ebola, but they are too few, they are too dispersed, and many of them lack the expertise that was exported when the USAID staff was terminated so abruptly. The unseen costs are equally dramatic, and that ranges from girls who are no longer getting an education because USAID was either helping support a school to do that or leveraging its other programming in health or clean energy or agriculture to push a government to move in that direction. Villages that won't be electrified. USAID, through its Power Africa program, helped connect about 150 million people to electricity. Most of that was in places that would never have been able to connect to the grid in my lifetime. Pop-up solar panels, private-public partnerships that allowed things to happen at a much more accelerated pace. So the soft power suicide for the United States, I think, is pretty obvious when you pull the rug out from programming of this nature with no warning, with no regard for the human consequences of those actions. That's going to cause, to say the least, a severe trust deficit. But I think when you go behind that as just an argument and think about the families that on a Friday were able to send their female child to school and on a Monday suddenly found that that child was no longer welcome. The family member who goes to get antiretrovirals to treat HIV, which has now become a disease that you can live with, thanks to George W. Bush and the PEPFAR program combating HIV around the world, able to get their meds on a Friday, showing up on a Monday, the med's still available, but the pharmacy closed because the health workers laid off because of the cuts that the Trump administration made. So it's all system failure, an all system attack, and there's not one part of human development that has been untouched by this blunder.
That was the former US ambassador to the UN, Samantha Power, speaking to Bloomberg's Big Take podcast. Well, of course, another place that was getting a lot of US attention recently was Greenland, the far north nation, attracting investors from across the globe, though some locals are unconvinced. Officials, though, and business leaders within Greenland have argued that the newfound attention presents an opportunity to attract capital, to diversify the economy, and eventually to chart a path towards independence. So let's speak now to Sarah Sjolin, who joins us now from Copenhagen. She is our bureau chief there. Morning, Sarah. Just talk to us about what's actually attracting this foreign investment to Greenland. What's the big opportunity?
Well, first of all, Greenland has said it's open for business. For everything that's been going on with the U.S. push and Trump's ideas about taking over Greenland, the island has really now found itself in the middle of both international and local interest. a lot of investors, they're looking to get in on these seemingly endless opportunities. Greenland is rich in minerals, energy, tourism, infrastructure, and defense. And just the infrastructure projects alone, there's been identified more than 6 billion worth of potential projects. So for investors looking outside in, this looks like an area where you could actually potentially make a lot of money, and also for some try to make a difference. Is an area that's going to be increasingly popular, increasingly important for the future.
But is there a sense that Greenland's under pressure for this sort of investment?
Yeah, and I think it's also a pressure that they're putting a little bit on themselves. Greenland, as you also said in the beginning, they have this long-held goal of independence, but it's difficult right now because they have a shrinking native population. There's only 57,000 people living in Greenland, and that number is shrinking. They have a shortage of skilled workers, and the public finances are expected to come under increasing strain in the coming years. They receive about $700 billion from Denmark every year in a grant, and they really want to try to reduce that amount. So they're looking to really make their own place in the world, and by doing so, they need to get foreign investments to be able to really boost their tourism industry, boost their mining industry. They just don't have the capital at the moment to really expand these sectors.
But if you've got all of this money eventually flowing in, surely that would be of some concern to locals as well.
Yeah, and that's what we're seeing right now. Greenland is this vast island. We're all seeing the photos. It's very difficult to do business up there. Just like out of infrastructure, if you have a great mining project, there are going to be no roads, no ports. So that in itself is difficult. Then you have all the regulatory hurdles. There's been some really high-profile issues in recent years. This is Australian mining company that's been 15 years developing a mine in the Kvanefjeld area, one of the world's largest untapped rare earth deposits. And then uranium, which also mined at this site, became one of the defining issues in an election, and it was banned. So we've seen in Greenland from time to time that some of these issues become hostage to local politics. And for foreign investors, that's one of the things they're concerned about. We're also seeing for tourism, which is now booming in Greenland. They introduced a new law that 2/3 of the ownership has to be local in order to preserve some of the money, the profit they're making. They see Iceland as this example of how bad things can turn. Iceland has this great tourism boom, but a lot of the money has left the country because of international investors coming in, setting up tour operators, and then the capital has flown out again. So that's what they're trying to balance. They want to attract the capital, but at the same time, they also don't want to give up too much control. And Greenland is, as I said, it's small. It's maybe not used to these really big investment projects. So foreign investors are finding that it's very slow. The regulatory hurdles, there's just a lot of obstacles. So right now we're seeing this paradox of Greenland saying it's open for business, but it's really a question whether they want it or not.
OK, Sarah, thanks so much for bringing us this story. That's Bloomberg's Sarah Sjolin out of Copenhagen. Now, I want to just turn back to Korea because we've now got the Kospi in positive territory, up 0.4% off the back of the latest lines from this announcement coming out of the presidential office. We're hearing that Samsung and SK Hynix are going to build 2 chip fabs each in a $518 billion project. Korea is set to spend $19.4 billion over the next 15 years on next-gen memory capacity. But the latest lines are that the South Korea will be spending more than 1,000 trillion won on AI data centers by 2035. So the Kospi are raising its previous 3.4% loss, now trading up, as I say, 0.4%. But the redhead that crossed the terminal earlier this hour was that Samsung and SK Hynix will build these 2 chip fabs each in this 800 trillion won project. So we continue to monitor this, President Lee hoping at least that this is going to turn around his position in the polls. But we're hearing from the industry minister as well with the details on where this investment will be targeted. Well, coming up on the programme, the Prosus and Naspers Group CEO Fabrizio Bloisi is going to be joining me to discuss their full-year results. Tech investing on the agenda as well, and we'll also talk about the company's acquisition drive. So don't go anywhere. That conversation coming up next. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:50 a.m. here in London. Well, we've had breaking earnings out of Prosus Naspers Group earlier this hour. Just recapping those, they see profitability jumping 84% and free cash flow up $2 billion over 3 years. We can dive into these results now, I'm pleased to say, with the Prosus Group CEO, Fabrizio Bloisi. He joins me now here in London. Good to have you with us, Fabrizio. Thank you so much for making time. Just give us your message to shareholders broadly off the back of these results this quarter.
Good morning, Lizzie. Good morning, everyone. I'm very excited about the results. We are going up, as you just said, 85% in profits, $2 billion in cash flow. I think our ecosystem strategy is working. We are delivering results. We are moving faster. We're innovating as fast as ever with AI. So I'm very excited about the next steps.
So you've been on an acquisition drive. What's Prosus looking for when it decides on targets?
Right now, I'm looking forward to keep delivering the results. We made 3 big acquisitions last year. We expanded $6 billion in Europe, $2 billion in Latin America. The biggest question my shareholders had is, can you really make those companies work better? And we did it. Just Eat is growing much faster, from -9% to 4%. Despegar is growing 30%. It was growing 10% before we acquired it. La Central is moving faster. So my big priority now is not make bigger acquisitions, to make sure that we can deliver our plans of having an amazing, the best ecosystem in Latin America, India, and Europe, and we are delivering that.
Well, let's take those in turn then. What's the integration roadmap for the Just Eat acquisition?
We acquired Just Eat just 6 months ago. We started to operate. The company was going down -9% by the day we started to operate it. Now it's going down -4%. But the good news is we expect in the next very few months to start growing again. How we are doing that? Through technology, through a culture of growth, and through our big vision that is Europe deserves big European champions. And we are sure we are going to deliver that with Just Eat.
And when it comes to the Delivery Hero stake sale, there are so many moving parts around the sell down of the stake as a result of the Just Eat acquisition. What would be the ideal outcome for Prosus in terms of selling or not selling the rest of your Delivery Hero stake?
Look, we really believe Europe deserves big tech champions based here. We are talking about that for 1 year. I put $6 billion on this thesis, and I'm going to deliver that. I think Europe sometimes fight against its own European companies, different than the Americans and the Chinese. We sold down. We are not the #1 shareholder of Delivery Hero anymore. It is Uber now. So the next step, we have to ask Dara. Let's ask Dara more. I'm going to keep focusing making Just Eat being the global, most innovative and fastest growing company. That's our focus now. And I don't have any other news on Delivery Hero, unfortunately, because I keep thinking Europe deserves really big global champions. I'm going to keep fighting for that. On the Delivery Hero case, it was not what I expected. We sold a lot, but that's part of life. Let's keep fighting for creating that.
But maybe you can tell us if there are any specific business units within Delivery Hero that Prosus prefers to others.
No, I can't tell you anything about rumors. There are many rumors in the market. I'm going to keep waiting for the next Uber. They are the new biggest shareholder of Delivery Hero. Unfortunately, it was a European company until 1 month ago. Part of life, I have now to wait to see the next results.
How are talks going with the EU regulator on this, though?
Look, as I told you, I interact a lot with Americans and Chinese players, and we see Trump fighting for their companies all the time. We see the Chinese fighting for their companies all the time. Here in Europe, I feel I'm fighting against the European regulators. Not that they are fighting for us, they are fighting against us. It's a big mistake because we need to have really big global tech leaders in Europe. We need to have that. So Prosus invested $6 billion on that. We're not talking about that. We are delivering on that. Our companies are growing faster here, and we keep pressuring Europe. It's time to move faster. We have some Europe sometimes say we agree, and that's the vision, that's the Mario Draghi vision, but they are not moving fast enough. And we are going to keep complaining until we create an amazing global tech companies here. That's what Prosus are going to do.
Okay, got it loud and clear. Let's turn to Tencent now. What's the plan to close the holding company discount to your Tencent stake?
Tencent is doing very well. Tencent is talking much more about AI, and there is lots of expectations in the market that they are going to do good AI moves. We really believe that the future of Chinese internet is going to be, Tencent is going to be very important on that. It is already, but at the same time, Prosus now is delivering $1.5 billion in cash flow. It's $2 billion more than just 3 years ago. So I'm very confident that it's not a Tencent minus story. It's a Tencent plus Prosus story where we are going to deliver $1 billion in profit. We are ready to deliver this year $1.3 billion in profit, a few $1 billion more than 2 years ago. So I think this discount is going to naturally reduce because people are going to realize we have an European champion just delivering results in terms of profitability, in terms of growth, and more than that, in terms of innovation. We are in a moment of having AI champions is a requirement for Europe. And Prosus is training models here with more data than everyone else. We are moving faster in creating agentic services, and now we are pushing that for 5 million restaurants all around the world. We are pushing AI innovation to 1 billion customers all around the world, and the results are already, the results are here. I am confident we will have very good results for many years.
Okay, really appreciate you making time for us this morning. Fabrizio Bloisi, Prosus and Naspers Group CEO there, off the back of the company's results this morning. The redhead is that Prosus's full-year adjusted EBITDA comes in at $1.05 billion, beating the estimate of $947.3 million. Well, we've got a busy week ahead. Of course, we've got Sintra starting off today. We have the euro area inflation data coming on Wednesday. The jobs report on Thursday, a day earlier because, of course, it is the July 4th holiday coming up. So the opening trade will be prepping you for all of that. It's up next. This is Bloomberg.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable. And people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning. Monday the 29th. What do you need to know? Firstly, Korea confirming plans to spend over $500 billion on 4 new massive memory chip factories. The US and Iran are de-escalating ahead of fresh talks in Doha. And prospective British Prime Minister Andy Burnham makes a big speech today in Manchester, not in London, Anna.
Yes, and that's important, isn't it? Let's have a look at where we are on these assets then, reflecting some of the stories you've been talking about there, Guy. We've actually seen the Kospi significantly pairing earlier losses. Such a lot of volatility over the last 5 trading days or so on the Korean benchmark. We're now up by 1.2%. We'll digest the detail we've heard from SK Hynix, from Samsung and the Korean government. Futures are pointing higher. US futures pointing increasingly higher as we get closer to the European trading day and then into the US trading day. And Brent crude, interestingly, was up by just shy of 2%.
Good morning. So the picks and shovels makers of this AI revolution committing hundreds of billions of dollars over the next decade to build out fabs, data centers, materials, robotics to support demand they see stretching into the 2030s. The South Korean government saying they see the memory market quadrupling in the next 5 years.
Will it be cyclical? Is this the start of the cyclicality? Usually you get a build out, that's what happens. But we've learned over the last few days that current prices are unsustainable. We need more capacity.
Yeah, need more capacity and memories, and that's what they seem to be responding to. The thing is that lots of other places are going to try and respond to this signal as well, aren't they? And so are we going to see, not maybe to this scale, and we'll take a moment to digest all of the numbers involved here, but the US Chips and Science Act, China and Japan, they're all trying to ramp up production in this space. So we'll see where this goes. Such a lot of volatility in the Korean market. We started off down another day of 5% losses on the Korean Kospi, preparing those. And there's a lot of focus on the internal, leveraged ETFs, the use of margin loans in Korea, so much volatility. But for the moment, at least, the market seems comforted by something that it heard.
Yes, question marks as to whether or not they've been pricing in potentially more spending, and maybe the spending's coming in line with what they expected, maybe a little bit less than what they expected. Maybe that's part of the story. Maybe it is the Korean government reassuring in terms of how far this has to run, further to run. And in terms of the competition story, I mean, they are painting this. The Korean officials are painting this almost as a life and death moment. If you look at the language, the intensity of the competition. So certainly they are looking over their shoulder at China with that plan there in China. China can provide a lot of this memory as well. And we're getting reminders of that with reporting that Apple is reaching out to the US government saying, can we tap into some of the memory that's available in China as we ramp up our prices? And we don't know yet whether they're going to approve that. But that really shows where Apple is on this in terms of reaching out to China for additional supplies as they have to push up prices across their portfolio.
Chip inflation up, oil inflation down.
Yes, well, that's it. I mean, it's interesting to watch what's going on with the oil price. We've been on a bit of a journey overnight there already, and it's only 7 a.m. here in London. But when oil started trading, it did jump nearly 2%, and that was reflecting a return to violence over the weekend, or a testing of the ceasefire, certainly. We've seen both sides attacking each other, both sides blaming each other for breaching the terms of the ceasefire. But then we saw Axios and then others, and now Bloomberg has reports saying that this has come to a halt because we are preparing to go back to these technical negotiations negotiations, which start again this week, supposedly taking place in Doha. So what does this tell us? It tells us that, you know, we're still vulnerable to these flare-ups, I suppose. It also tells us the importance of the Strait of Hormuz is still very much at the centre of all of this, because that seems to be what both sides were responding to with this violence.
Little skirmishes over the weekend, but by the time the markets open on Monday morning, we're back to being OK.
And oil is basically flat.
Exactly. It is interesting, though, the Omanis are talking about the fact that there may have to be charges. And that seems to echo what we're hearing from the Iranians, that there will be a toll system going forward from here. That toll system could be quite high and could be certainly inflationary as we come back into the narrative around energy. There could be more.
So have markets priced in a future where the Strait of Hormuz, there is longer-term friction in the Strait, whether it's the risk of military attacks, occasional maybe, and that volatility, or the tolling system, or what that means in terms of slowing supply, the logistical challenge of actually having to get ships dock and pay those tolls. Is that friction being priced in at this point?
Right, well, here's a question. I mean, if the tolls are not very high in terms of the inflation impact, if you're the US administration, and they've said no to tolls so far, they've said no, absolutely, the Iranians cannot charge tolls. But if they were looking at a toll that wasn't that big and wouldn't actually have much of a inflation impact when you pass it along the chain, would they accept that for not having ships being shot at as they try to pass the strait?
The Iranians are saying if you go outside the lane, you will be shot at, basically. That seems to be the message. But I've heard, talking to people in the shipping industry, $25 a barrel? Like, these are the kinds of numbers that people are talking about in the shipping industry.
Which wouldn't be small.
Which would not be small.
Yeah.
That would be quite significant. Andy Burnham. Let's talk about Andy Burnham, the PPM, prospective Prime Minister, that we are looking forward to arriving at number 10 Downing Street here in the UK. Or is he arriving at number 10 Downing Street? Are we arriving there, or are we staying in Manchester? Seems to be a little bit of both at the moment. The big speech today is in Manchester. It's going to be about devolution. It's about taking power, which has been sort of centred for centuries in London, away. But the UK has huge regional disparity. And it's going to be interesting to see how quickly he can do this. He's talking about 10 years. Maybe it would take even longer. It certainly is a difficult Gordonian knot to sort of unpick for him. Yeah. But he thinks this is the way to growth.
Yes, and it's interesting. He's clearly a big believer in devolution. That's his backstory. That's the story he brings. That's the experience he has. So with what he did in Manchester as the mayor, that's the story he wants to tell, at least. So devolution, it's not surprising he leans on that. What difference can that make in an environment where you are fiscally going to find it difficult to do anything new? And a lot of the things he is talking about, or has talked about so far, and we wait to hear from him today, do sound very similar to the things that the Prime Minister and Rachel Reeves as the Chancellor have already talked about. So what difference will Andy Burnham bring?
It also sounds a lot like levelling up, which didn't appear to bear fruit, which was, of course, the mission by Boris Johnson.
No, we got as far as Birmingham with HS2, and then we stopped.
I suppose Burnham's team might say that nobody else has really believed in it the way that he does and actually want to do it, because to have levelling up, you need somebody to release power to allow somebody else to accumulate power.
The levelling up thing was interesting because basically it was Boris Johnson trying to have his cake and eat it. He wanted to maintain the voters up north at the same time as maintaining the vote down south. And I wonder whether Burnham will hit the same issue, in as much as there are a lot of Labour seats in London, which probably won't want to lose out too much to the north. Can you do both things at the same time and maintain that majority in both places? It's going to be interesting to see from the politics and the economics perspective what's going to happen here. Let's talk about what we've got coming up on the show. Alexandra Ivanova, Investcare Fund Manager, is going to be joining us, as will Henry Allen, Deutsche Bank Research Macro Strategist, Birgit Niesa, BWG, Austrian Society of Bank Research CEO, is going to be joining us later in the programme as well.
OK, let's look ahead at what else we are watching throughout the week. Later today, China's Commerce Minister Wang Wentao will be in Brussels. We'll keep an eye on that, of course, in terms of anything that comes out in regards to the relationship, trading or otherwise, between the EU and China. The Supreme Court decisions come through on Tuesday, potentially consequential, of course, for President Trump. We'll have the details on those for you if they come and if they cross. A preliminary CPI for France, Germany and Italy comes out. It's inflation gauge across the Eurozone, and final UK first quarter GDP on Wednesday. The Sintra Monetary Policy meeting and panel will be held with Warsh. That is on Wednesday. Ireland's EU presidency begins on Thursday. And then you have the US jobs report later this week, towards the end of this week, on Thursday, not on Friday because it's a public holiday in the US. Also, In France, Aix-en-Provence, the Economic Forum with Lagarde, Nagel and Bailey will be speaking there. So a lot of central banks speak through this week as we think about the inflationary impacts of both oil and chips and US Independence Day holiday on Friday.
Are we most excited about the panel at Sintra? Is that where the drama is going to be? So you have Lagarde, you have Walsh, you have Bailey and Macklem of the Bank of Canada coming together. And there's a lot of talk about the dynamic between them because Powell was very popular in this grouping for standing up to political pressure from the
they came out
administration.
forcefully, didn't they? In
And then they
Powell.
clapped him, gave him a standing ovation, I think, at the last Sintra. So we'll see whether Walsh gets the same treatment. He's good at making friends, given the performance he's given on Capitol Hill.
We don't know whether he's going to stand up to Powell yet. The indications are that the Fed is priced. The Fed is priced to hike. He sounds very hawkish.
Yeah.
That sounds like he's standing up to Trump, or maybe just a reflection of the economic reality.
Coming up on the programme, the US clears Anthropic to restore some access to its most powerful Mythos AI models. We will have the details. Plus, we'll look at the stocks to watch this morning, including UK telecom company BT. This after Verizon and BT announced plans to combine some of their international businesses. Up next, we'll be joined by Melanie Baker, senior economist at Royal London Asset Management. Is she looking ahead to the jobs report, the events in Sintra? What is front of mind there? IB plus BBTV Go if you want to.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
What happened was you were out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
46 minutes to go until equity markets here in Europe open. The European equity market open looks really dull right now compared with what we're seeing elsewhere. You've seen a huge turnaround in the Korean markets, so whippy with so much leverage involved. But you are also seeing quite a decent turnaround when it comes to the Nasdaq, now up by 0.8%. The S&P's up by 0.6%. European markets are not up by that much, though we're moving in that direction.
Yeah, what is certainly not dull is the spending story out of Korea, as you're suggesting, guys. So let's go there now. Samsung and SK Hynix will invest a combined $518 billion to build 4 new semiconductor plants in South Korea. The investment is part of South Korea's ambitious plan to cement its status as a technological powerhouse. Joining us now from Seoul is Bloomberg's Kat Barton with all of the details of what has been announced today. We talked about this then, Kat, at the back end of last week, but now we have confirmation of it. Put the sums into some context for us. What does it mean for South Korea, for memory making, that industry, and its place in the global AI landscape?
This is huge news for South Korea. At the moment, all of their semiconductor construction facilities are very much concentrated around the capital, Seoul. And what President Lee Jae-myung and SK Hynix's Che and Samsung's JY Lee have just announced is plans to really develop in the southwest of the country. They're talking about 4 new semiconductor fabs in the area around Gwangju. And the government is talking about providing more water, providing the infrastructure, including renewable energy, to really power that transformation in an area of the country that is not particularly nowhere near as developed as the area around Seoul at the moment. So it's likely, obviously, to really help them improve and meet the demand, because at the moment, obviously, they just can't make enough memory chips to meet global demand. And with this kind of expansion, especially a kind of 10-year investment project, which is quite rare from private companies, we should be seeing that they're really ramping up the supply.
Kat, are investors in Samsung and in SK Hynix, are they convinced that this is a plan that's going to pay off in the long term?
It's a tricky one. We've seen a lot of volatility on the KOSPI and in the Samsung and SK shares specifically. But actually, these numbers, although they seem huge and they sound quite scary, if you put them in the context of what the hyperscalers are spending, if you put them in context of what SK Hynix and Samsung themselves have already committed to spend for, say, 2027, they're actually very much in the ballpark. We're not talking about massive, additional capex expenditure. It's what they need to spend to stay on top of, or to stay in the positions on top. And that, again, is what the government is hoping to do here. South Korea, is really benefiting from the AI boom. They're seeing huge, inordinate profits for these two companies. And they want to be ahead of the curve in terms of thinking about how to use that money, how they can invest now to make sure that they're still able to reap the benefits from the AI boom over the coming years.
Kat, we're going to leave it there. Thanks for the update. Really appreciate it. Kat Barton joining us on the latest out of Seoul. Joining us now, Melanie Baker, Senior Economist, Royal London Asset Management. Good morning. AI inflation. It's becoming increasingly a big topic. When you look at your models and try and work out how big an effect you're seeing, how much of an effect are you seeing?
Not that much, not a huge discernible effect at the moment. I mean, I do think that it can be something that is inflationary in the near term, but you're looking for effects through things like consumer electronics, because the price of chips has increased because of explosive demand, right? That's the sort of channel I'd be looking at the moment. So at the moment, not seeing a huge amount of effect on aggregate inflation from that. I think for economists, most of us are probably more focused on the kind of medium to long-term implications, where it's expected to be broadly disinflationary because of the impact it will have on productivity and lowering the costs of producing goods and services. But that's more of a medium-term story.
But central banks seem to be worried about inflation. Kevin Walsh.
Indeed.
So what is he worried about?
I think this is more about oil still. So, okay. I mean, oil has fallen clearly, but we've been through a period of high inflation in the sort of 22, 23 period. And now we've had another oil shock, which may yet be followed by other shocks. This is still a very uncertain environment. And it's how that oil shock that we've been through still can feed through into indirect effects and second-round effects. So indirect effects is that, if firms have paid more for all this energy, is that going to be now passed on into the cost of other goods and services? And then those sort of indirect effects. We've had a bit of an impact on inflation expectations. Maybe we'll see something on wages. I'm not convinced of that. But it's that kind of thing that central banks are watching out for.
So we're looking for all of those effects, as you described them, Melanie, but we also can't let go of the fact that there's still volatility in the oil price itself, given we see returns to small-scale violence and attacks, but still that's happening in the Middle East, as we saw over the weekend. We were discussing whether we would see an inflation impact from a future that includes tolls. I suppose we can't know how the geopolitics plays out, but what kind of scale of toll would have to be implemented for it to be material for the inflation story? I suppose it's just consider it a part of the oil price, would we? And anything that would have been a material move in oil prices, if that's the scale of the toll, then that would be material, I suppose.
And it's partly going to be about how the volume's going through, and then how things settle in the kind of global oil market sort of context, right, as well. I'm a bit concerned about the need for stock rebuilding as well. So that element too. We've had sort of inventories run down, so that will need to be rebuilt at some point, which presumably will have a bit of an upward effect on oil. I don't think we've seen the last of it yet. I'm not convinced oil prices are going to stay at this sort of level. OK, so we keep that under review. In terms of the AI story, which is where we started the conversation with Guy, I mean, what kind of AI boom to the US economy are you looking at here? Because is it all in CapEx still, or is it wider? And if it's in CapEx, are they spending on things made in the US, or are they importing a lot of this? Really good question. Absolutely. Most of it seems to be in CapEx at the moment, right? So this is all the AI equipment CapEx. And there's a sort of data center build, a bit of construction, that element as well. But huge quantities that are being imported. So effectively, you look at it in a kind of whole the GDP economist type sense. You've got that investment, but then it's kind of leaking out through imports, quite a chunk of it.
We hear from people who are making data centers that it's hard sometimes to get people to make them. Like literally labour. Are we going to see this as a dynamic that shows up maybe in some of the wage data? Construction.
Yeah, so always looking out for those pockets where you may get sort of tight sort of availability of skills. I mean, and skill shortages are often, they've been a complaint throughout really for the US economy in pockets, so I wouldn't be surprised.
How's the UK economy looking to you right now, as we await the entrance of a new Prime Minister?
Better, with oil prices lower, yeah, absolutely. So it looks to me, if I smooth out the data, we had some real bumps in the GDP data. It's an economy that still looks like it's not growing very much. And if you look at the business surveys, that's what they suggest, right? This is not an economy that's doing brilliantly. We know the labour market is soft. That's still my kind of main area of worry. But, the oil price environment does improve the outlook. Your risk of recession has fallen. In that context, the outlook for the consumer looks a bit better as we think about 2027. But, yeah, it's not in the greatest place for a new Prime Minister.
So the BOE can stay on hold, do you think, this year?
So I've had a one hike penciled in to my forecast, which was a kind of insurance hike idea, the idea you have sort of, with the sort of risk of second round effects, they'd need to do something. Now, because the risk of that has fallen, now oil prices are lower. We'll have to wait and see what happens there. If they stay at this level and everything behaves itself, then I think they can probably stay on hold, but let's see. I'm not counting anything yet.
Can I just come back to the Fed, Kevin Walsh, and what he's going to do next? He seems to be pointing to the fact that the Fed seems to have a single mandate now, and that is price stability. And I look forward to the payroll numbers on Thursday. The US labour market looks like it's in fairly good shape. Is he right to focus on that side of the ledger rather than focusing on both sides, the dual mandate?
I think it's fair at the moment. So, I mean, a lot of them have been saying the labour market looks broadly imbalanced. Those kind of comments have been fairly common. So in that sense, it makes sense to focus on the bit that isn't in balance, where we've had inflation, quite a long way above target for many years now in the US. So in that context, it makes sense. But there is still another side of the mandate. And if the labour market, the picture in the labour market does change, I'd expect to see him switch focus.
But we've been away. If we'd have missed the labour market target, if we'd have had a labour market sort of crisis, we'd have reacted already. We haven't reacted to the fact that we've had an inflation crisis, you could argue, we've been above target. Do you need to get, therefore, to get credibility back, do you need to get back to that target? How important is that going to be to him?
No, it is important. You can't have sort of nearly in the 6th year of above target inflation and just keep going and expect inflation expectations not to adjust and expect this risk of just getting stuck at uncomfortably high inflation. So, it is important. Now, whether that needs a rate rise or needs much is another question. But, yeah, that credibility, getting inflation back to target is absolutely important.
Melanie, are you expecting in Sintra we'll talk a lot about these same topics we've just been throwing around this desk? One that seems to have entered the fray as well is whether AI leaves us most vulnerable, whether the huge flows going into the US, are they adding up to some sort of macro vulnerability? And our reporting suggesting, you've got lots of central bankers who've been through the GFC, they've got all of that experience, so this might be something that gets talked about on Wednesday. Are you looking at the developments in AI and thinking this is starting to add up to something that could have a macro impact in a negative sense?
That's interesting.
The financial stability, I suppose.
Yeah, I suppose one element there you're looking at is the markets element. Are markets a little bit complacent? Have things gone too far? Is there a risk of pullback? And then what does that do to wealth, especially household wealth in the US, and then affect consumption? It's those kind of linkages that I'd be focused on. But yeah, the broader financial stability picture will be interesting. I'm sure it will come up, given what's happened.
OK, Melanie, thank you. Melanie Baker, Senior Economist at Royal London Asset Management.
OK, lots to look forward to this week, but let's update you on what else you need to know this Monday morning. President Putin has acknowledged that Russia is facing persistent fuel supply problems, with motorists and businesses confronting long queues at gas stations. Putin says a full ban on diesel exports is now under consideration. The comments came, of course, after Ukrainian drone strikes on refineries reduced fuel production over the last few weeks. Bloomberg has learned that China's central bank said the interest rate on its new overnight liquidity tool at 1.25%, below the expected 1.35%. The move is seen as some economists as a de facto rate cut that could push down market borrowing costs. Watch this space. And Anthropic has won US approval to restore some global access to its Mythos 5 AI model. The clearance eases a confrontation that erupted 2 weeks ago when the United States government abruptly barred Anthropic from giving foreign nationals access to this cutting-edge model. The order prompted Anthropic to disable all global access to the system. So, easier access maybe.
Yeah.
We're starting to calm things down a little bit, but there's a really interesting piece as well this morning in the Journal talking about how China is now catching up rapidly in terms of its capability in cybersecurity. So you've now got effectively an arms race between these two, and if the US limits its export of this, does China, with its open source models, just fill the gap?
This is Jupu AI, which has come out with its latest model, which, to your point, rivals Anthropic on some cybersecurity metrics. I think we should not underestimate the impact that these controls that the US administration have put around Anthropic and now OpenAI as well, restricting OpenAI's push out of some of its models, has done globally. The ripple effects of that to countries like China in terms of accelerating a determination already embedded in the infrastructure and the body politic of China to catch up on this front, and to some extent Europe as well. But that's frankly less important in terms of this global battle. Yes. But what that's done to Chinese policymakers, just accelerating that push to make sure that they match and they have the capabilities.
The ripple effects, though, in Europe different, but felt in a different way, not necessarily because they can stand up and compete, but because they're suddenly nervous about the reliability of a key supplier and a key supplier of things that go, way back before AI.
Absolutely. As some people were saying to me at VivaTech last week, it would be like giving the US the power to cut off electricity. That's how potentially significant it would be for Europe. Coming up, we're going to talk with Alexandra Ivanova, fund manager at Invesco, as the Fed's Richmond President Tom Barkin warns that inflation
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Morning. Welcome back. Half an hour to go until we start equity trading here in Europe. Picture looks like this. Futures are currently a little mixed in Europe. We're getting a little bit better over the last few minutes in terms of the picture that we are painting, but nevertheless, we're up by a little bit and quite a big dispersion. 50's up by 0.3%, CAC's up by, let's call it flat. Let's call the CAC flat this morning. US futures are gaining ground. The Nasdaq futures are up 1% now, and there's been a big turnaround in the Korean market overnight.
Yes, sentiment has certainly improved, and it's the Korean story, certainly, and you've referenced the Nasdaq impact of that. Also, the oil story has been on quite the journey. So if we had European bond markets opening up in around the middle of our European night, then we might have seen a bigger spike in yields, but we didn't. And now oil prices are back down. They spiked up, then they dropped back down again, as we've seen signals that the US and Iran have paused their military activity in the area and gone back to talking, or will go back to talking this week. And so as a result, we don't see much movement on bond markets. A slight move higher in some of those yields then, Tom.
It is a big week, of course, for central bankers, and we'll be hearing from many of them through Sintra, of course, in Portugal. That kicks off really in earnest later this evening. Federal Reserve Bank of Richmond President, meanwhile, Tom Barkin, has warned that inflation is too high in the US, though he sees tentative signs that price pressures may moderate soon. Those comments come as investors await Fed Chair Walsh's appearance then at the Sintra conference this week. Let's bring in at this point Alexandra Ivanova, fund manager at Invesco. Alexandra, good morning. How vulnerable is your portfolio if we get a more hawkish wash than maybe some have expected?
Well, I hope it's not that vulnerable. I've been quite active in managing duration. And so volatility in the market, as you mentioned, it just still is a feature. So being active and being able to adjust your portfolio as the market moves is probably the good thing for active fund managers like ourselves. So I've moved to neutral. I haven't really taken any bets either side of it. I think the inflation picture looks so much better with the oil price coming down. But and also that will have impact in terms of how central banks are going to react to this. But given the fact that we're actually still above target in the U.S., and with the new Fed chair, I do feel like maybe we are taking a little bit too sanguine about rates risks. So
that's a neutral on equities. Is that right? What are equities pricing? Is it the equity? Which parts of the equity market are most vulnerable to a higher rates regime?
Interesting, but I do think that it's actually mostly the growth-oriented stocks, right? Like they will be much more sensitive to higher interest rates. In our portfolios, we are much more balanced. That's where I do think that broadening of equity market exposure, a broadening rally is actually quite good for us. We have a little bit of a tilt to European equities, which it's been a headwind for us, obviously, with the start of the Iran and US war. That is coming back, and investors are not necessarily positioned for that to rally back. Okay. And the US, semiconductors, the hyperscalers, I do think that there is a little bit of overpricing, and if we do have a little bit hawkish head,
so this
that
is
might
credit
be.
You're talking about? Or the
No,
equity?
I'm talking about the equities.
The equity. What about the credit?
Credit is interesting. Credit has been quite low volatility.
Yeah.
The spreads have been very, very tight, and they're not really reacting to these big macro headlines.
What about hyperscaler? Kind of. What about the AI credit bit? Why wouldn't I buy the equity when it comes to the growth story? Because there I get the upside. Mm-hmm. Whereas if I buy the credit, I don't get the upside. And I run the risk that actually they're spending too much and we end up with some sort of a pullback. Why would I buy hyperscaler credit at this point?
This is what's happening. I mean, the SpaceX issued last week $25 billion. And if you can see how the market is actually reacting to the pricing of it, we're actually 200 basis over in the long end. So people are still skeptical that how long I'm a little bit skeptical, yes.
Did you buy it?
I didn't buy it. I do think that you can do tactical trades, maybe, but it's very difficult to price the risk that you don't know what the fundamental picture is going to look like. Yeah. Gross leverage, interest coverage, all these ratios actually look like a high yield issuer, and rating agencies give BBB+. So you kind of look at it and forward guidance, we're going to be investment grade company. Yeah, fine, but it's very difficult for me, at least, to value that.
So you say you're running, Alexandra, a beta-neutral portfolio, so you don't want to be exposed to these sort of broad market moves. Is that a reflection on just the level of uncertainty that you have about whether the next leg is up or down for stocks, up or down for bonds, or for what credit does? I mean, where is the uncertainty most acute?
Well, everywhere, in fact, actually. As you said in your intro, the oil price went up and then went down. The yields have come down again. So the volatility is still there and uncertainty is still there. And in this environment, for me, it makes sense to be quite nimble and also not to take big bets either way. But when the market throws you opportunities, like, for example, when we were pricing a whole lot of hikes in the front end, that was actually a good opportunity for us to buy in the front end of the curve in the rates market. So if you can play with that and add additional value.
Are you thinking that the rates market will provide protection if stocks drop? I guess that tells us something about why you think stocks might drop.
Depends. If it is actually flaring up of the geopolitical risk, and we're seeing that it's very fragile ceasefire, I do think that it depends where the risk comes from. Yes. If that, again, flares the inflation risks, which I think they have been subdued more recently, that you could have correlations coming back again where the bonds and equities actually fall at the same time.
So is it more likely that we get an inflation scare rather than a growth scare? In which case, bonds are not the place to
exactly.
hide.
That's for a multi-asset portfolio. That has been the feature and challenge.
You mentioned your holdings, small holdings, I think you described them, of European equities, and you described how that had been a headwind for you through the year. But you hold that view. What would lead you to turning more constructive on European equities, and what sits in that basket right now?
It's very balanced and actually not necessarily tilted either way. It's very idiosyncratic. Bottom-up selection is quite key for us. And I do think that if we do get sustained ceasefire in US and Iran, investors in general not really positioned for European equities to rally strongly. So the repositioning, broadening of equity market rally is really good for our portfolios, and I think that's actually good for every investor, because it's going to be much more healthy rally rather than taking one momentum trade. And if you're not on it, it is a headwind. If you earn it, you're a winner, but you can have to deal with the higher volatility. Exactly.
Okay. Just staying in Europe, do you think Lagarde's going to raise rates again? Do you think she's going to point that way this week?
I don't know. I think we have taken out our expectations of rate hikes that are insurance hikes, given the fact that the oil prices have come down to pre-war levels. So that makes more sense, and it's much more sensitive to oil prices.
Do you think she do you think the ECB hikes again?
No.
Okay.
Not this year.
Not this year. Next year?
I don't think so.
Okay, so they're done. One and done. One hike and done.
One and done. Yeah.
What was the point of that?
I don't know. Well, maybe it's expectations management in terms of the de-anchoring inflation expectations is a risk. Second round effect is a risk.
Yeah.
I do worry about the second round effects because we haven't seen that yet in the pricing. The companies that we talk to, most of them are talking about passing on through the costs to consumers. So if we start seeing that, maybe the inflation fears will flare up again. So maybe being on hold but being open to act is, I think that's how I view them.
Alexandra, nice to see you. Thanks for coming to see us on a Monday morning. Monday mornings are tricky. Alexandra Ivanova, fund manager at Invesco. Some Fed policymakers say the central bank may need to hike rates, though.
It is our job to get inflation back down to 2%. It's been made much more challenging because there have been all of these, what we call supply shocks hitting the economy. Obviously, COVID and supply chains, Russia invading Ukraine, tariffs affecting inflation, the Iran war affecting inflation, immigration changes can have effects on inflation, and now, of course, the data center build-out.
Hikes to come. Minneapolis Fed President Neil Kashkari, who, remember, is a voting member of the FOMC. We'll discuss all of that story. The AI investment.
Are you a different president from your father?
I have to be. It's a different time. There's fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom? She's in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95 years old. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, you know, I always learn something new with my mom. In my family, she's the real politician. And she's a natural. My father was an intellect. He was a statesman. And we always said that he lived in his head. You know, he was very, very, very deep thinker. That's what I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend. She doesn't know how to fight. She's very bad at conflict.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Things have started to pick up in this economy based on the jobs number.
But there is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The unsaid thing is that we're basically at full employment.
Apparently the labor market right now, not a problem.
The June Jobs Report, Thursday on Bloomberg.
Good morning. We are about 15 minutes away from the opening trade. European futures pointing up by 0.2%, actually after a modest week of gains for European stocks. It's a brighter picture when you look at US futures. S&P even is pointing up by 0.7%, 1% gains for the Nasdaq 100 futures. But here in Europe, you can see the DAX is looking to outperform with numbers caught up for about 0.4% on that index, Guy.
It's about the oil price. Crude is up this morning. Brent is up 72.56 is where we are, up by 0.8%. TI's up a little bit more. We're off kind of earlier highs that we sort of were talking about over the weekend. But we have bounced back over the last few minutes, which I think is fairly interesting as well. Apparently the Iranians and the Omanis have been talking about what happens in the Strait of Hormuz. But what appears to be happening more broadly is that we seem to have a little bit of de-escalation. Over the weekend, Iran and the United States sort of attacked ships, attacked each other. But Monday morning, apparently that is all done and dusted and we can get back to talking. Attacks at the weekend, talks during the week seems to be the narrative that we're moving towards. John Herskovich joins us now. John, talks back on track. Is that where we are now?
It seems that way. We spoke with a U.S. official who said that the 4 days of counterattacks between the U.S. and Iran over the weekend, those are over. They're trying to get shipping back to normal. And this is to set the stage for talks this week on the various issues of the Memorandum of Understanding. Talks are likely to be in Doha. The key issue, of course, is going to be control of the Strait of Hormuz, but the MOU covers a lot of area, from a sanctions relief and the big issue of the nuclear program, which under the Obama administration took about 2 years to negotiate. So talks are on track. How they progress is a matter, we'll see how they go, but tensions have cooled, and this is where we stand now.
John, thanks very much. Thanks for the update. Bloomberg's John Herskovich with the latest on developments in the Middle East. That is one of the dynamics feeding into markets this Monday. Let's turn our attention to those markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, great to have you with us on the programme. So a lot of our focus has been on Korea of late and the incredible volatility we've seen in those markets. We've had some big numbers being announced through the Asian trading day about what is taking place in Korea. Are we a little further, which seems to be perhaps supporting Nasdaq futures? So how's your thinking evolving around that tech AI trade?
Yeah, very much the announced kind of mega spending plan out of Korea did see the Kospi regain ground after earlier losses, and then that did help kind of improve sentiment right across the board. And it was even noticeable this morning, actually, as the Kospi opened at 8 a.m. my time. The Kospi opened poorly, down a couple of percent, and Nasdaq futures kind of fell about 0.5% on that opening. It is interesting how much Korea is really driving the sentiment at the moment. Probably the big theme for the last couple of days, there has been the kind of rotation as we kind of reach month-end, quarter-end. We're kind of assuming that most of that is done. It was shown up again today with Hong Kong stocks, the major laggards of the past quarter being the real outperformers in the day. So I think, we're kind of short term over the next day or two. We've still got a little bit of the kind of fallout from that rebalancing, that quarter end kind of moves, some of those flows driving that. But I think that July is probably set to start relatively positively if we get through this week's pretty immense lineup of event risk with Sintra, with non-farm payrolls, with multiple options expires in the middle of the week, and of course a holiday impaired week. So I think there's a lot of event risk this week, but after that we should be in a positive backdrop if none of the news this week kind of ruins that. And the reason I say that is because we know that earnings are likely to be pretty good for in July. The earnings for the second quarter. The macro data has held up pretty well in the US overall, and we know that kind of companies have guided expectations pretty low. That it should be easy for a beat. And Micron earnings recently just showed that the AI capex bubble continues for now. So I think we're going in with a relatively optimistic tailwind overall.
What's mispriced this week? Which macro event? Is it Walsh? Is it payrolls? What are you watching?
I think I'm not that concerned about payrolls. I say that hesitantly because it's a shortened session on Thursday, and then it's a holiday in the US on Friday, but not in the rest of the world. So if we get a weird number, we get a really outsized reaction. But I'm not expecting that to be the main driver. I think Walsh at Sintra will be very interesting because he's so determined not to provide much Fed guidance. But we've just had over 15 years of the market learning to take all their kind of data interpretation from Fed officials and to get massive forward guidance. So I think people will be parsing what he says, even if he's not trying to send a message. And that creates dangerous territory.
Mark, I want to draw on your former FX trading experience with these calls on euro dollar at 110 coming through from Morgan Stanley and JP Morgan, the rate differential, the macroeconomic picture. What does that call stand to kind of the test, do you think? Do you take a view on that?
Short term, I think euro dollar's probably got more downside, but I'm not as excited about it as I was maybe a couple of weeks ago. I think longer term, later on this year, we'll go back into a dollar downtrend, but I don't think we're ready for that yet. So I think we're coming to the end of the dollar appreciation phase, but we're not there quite yet.
OK, Bloomberg Markets Live Executive Editor Mark Cudmore. Remember, you can get up to date. Thank you, Mark. In insights and analysis from Mark and the rest of the team, just go to MLive Go on your terminal. Let's get your stocks to watch this Monday, bringing Chloe Melee. Chloe.
Good morning, Tom. BT is forming a joint venture with the US giant Verizon that combines their respective international businesses. And so for BT, this is part of this ongoing strategy under the new CEO, Alison Kirkby, of really refocusing on that UK market and moving away from the international unit that had been really dragging down that growth for years. And so there had been a lot of chat about potentially a partnership with AT&T or with Orange. But now it seems like Verizon has been the chosen partner for this joint venture, and so we could see that potentially boosting those shares this morning as BT really refocuses on that UK market. So we'll be watching out for that primarily this morning. Moving on to Volkswagen, which has been having a tough few days, arguably a tough few months or even a tough few years, but we had a report over the weekend that it is abandoning its autonomous driving project. This comes on top of another report from Friday that is looking to cut 100,000 jobs, and so we could see that dragging down those shares even further after what has been a lot of weakness, as we can see down about 17% over the last year. And this could potentially be a wake-up call for that German industry just in general, with one analyst saying that the German car-making sector really needs to adapt to those new market realities, that they can no longer sit back and rely on this high-cost made-in-Germany seal. So this might be a wake-up call more generally, so we'll be watching out for any impact there. And finally, let's move on to some earnings. We have got Prosus saying that profit had doubled over the last financial year. They've been really benefiting from growth in their e-commerce companies and also the big stake that they have in the Chinese company Tencent. But we have seen actually the shares, as we can see here, are down quite significantly. We're down about 29% year to date. But perhaps those earnings will provide that much needed relief for that company.
Thanks very much, Chloe. Chloe Melee with the stocks to watch. She'll be back with an update on how those stocks are performing of course, in the European session. It's set to start in around 8 minutes' time, let's call it. The Kospi was significantly weaker, then turned positive. Now it's basically pretty flat. But it's quite interesting that actually we've seen a bit of movement away from, clearly, Samsung and SK Hynix are the big two that everyone's been talking about for a very long time. But there is a bit of broadening happening as a result of what South Korea's been saying about, OK, you're going to build these new fabs, but we're going to need more power power, we're going to need more water, we're going to need more of all these things. And so cloud infrastructure businesses are doing well, power equipment like HD, Hyundai Electric, LS Electric, all of these stocks up by more than 10% in session today. Cooling systems, and that's nothing to do with the temperatures in Europe over the last week or so. But that broadening of the AI trade into some of those energy, cooling, infrastructure plays is an interesting one.
Telling you maybe should look at Europe as well. That's where Europe doesn't have the first point of contact AI stocks, but it does have some of those sort of names.
Yeah, you've got the Siemens Energy of the world and others that have exposure to data centres in terms of providing the infrastructure that actually supports the whole ecosystem. Elsewhere in the region in Asia, by the way, it's worth mentioning that there's been an effective, what many economists have seen as an effective rate cut in China. Which points to the vulnerability of the domestic economy and the need for policymakers to try and support that. This is a new tool, an overnight reverse repurchase agreement that was being conducted, and the signals seem to suggest they have actually moved that rate lower than expected.
Yeah, so it's going to be really. I think you probably need a few days and weeks to get a more stable picture on what is happening here. I think that probably this is the Chinese moving to that reverse repo operation that most central banks now around the world use to manage the rate path. But it does bring extra transparency, which I think a lot of people are going to welcome, and maybe also opens up this kind of wider idea of the yuan being a kind of more global currency. If you have a more sort of transparent central bank, maybe that allows that alternative dollar path maybe to become a little bit easier to understand.
Yeah, so we'll monitor that, as you say, wait to see how it beds in and we get a better understanding of the signalling and the decision-making in China then on that front. So European equity market futures are positive, a lot of that coming from Germany right now. So we are expecting maybe there'll be a tech focus then in what we see coming through on the European markets, because CAC futures and FTSE futures are pretty flat. At this point of the trading
What I do think is interesting is that you have seen a rotation towards pharma over the last few weeks, and Europe has a lot of that. So if that has legs and broadens, maybe we actually do see a benefit coming through for European equities,
which many have pointed out to us is still valued pretty attractively, pharma, and so there's an opportunity there as well. Yeah. And that's potentially a space where Europe can play. With currently the European benchmark and the S&P up both about 7% year to date.
We'll keep an eye on everything commodity related, of course. So in London, we'll keep an eye on the energy majors, the basic resource stocks also could be in focus as well. Some movement in the dollar, actually to the downside, but the talk has been of more expensive, commodities of late. So we'll watch all of that. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome back. A couple of minutes to go until we start trading this Monday morning here in Europe. Friday feels like a long time ago. That's where Europe went out on Friday. We were a little lower when it came to the US markets after that, but I think there isn't that much to price in out of the session. US futures at the moment are very positive. The oil price is a little bit positive, and we've got a massive macro week on the way, Tom.
Futures are pointing up by 0.2%. You're still close to those record highs for European stocks, up about 7% year to date. The FTSE 100 is currently flat. We'll watch energy, we'll watch tech, of course, on the developments in Korea and the commitments around capex and spending there. The DAX futures picture is looking slightly brighter, looking to add 69 points, pointing higher by 0.3%. Anna.
Yeah, let's talk about some of the stocks and sectors that could be in focus then, Tom. We could get more information this week from the UK government around defence spending, defence investment plan due this week, we understand. And so that comes ahead of NATO meeting. We've got a little preamble into that with a story that talks about destroyers, Type 83 destroyers being out, hybrid ships being in. And so we'll keep an eye on the defence spending plans of the UK. We've seen how when the German government shifts focus, it can have an impact on what is bought and sold in terms of stocks in the defence space. Process in focus, profits jumping as bets on the e-commerce business seem to be paying off. So we'll certainly watch that one at the start of the trading day. We're also watching BT. Verizon and BT have created a joint venture, this for their international business. Is this going to have an impact on the BT expectations, or they're keeping their midterm guidance unchanged? So perhaps if that's the important line, we'll moderate our expectations of movement a little, but we are watching that one at the start of trade.
Okay, plenty to focus on, plenty to think about. Let's get this session underway. Let's get this week underway. Short and remember with the United States out on Friday and lots of macro events to focus on. How quiet a start, though, will we see here in Europe? Looks like a fairly quiet one, despite the fact the US futures have turned around fairly sharply. The Korean session has certainly seen significant volatility. Here in Europe, we're taking a more muted approach to the starts of the week. FTSE 100 absolutely unchanged. Stock 600 absolutely unchanged. CAC 40 is expected to be absolutely unchanged. DAX, maybe we get a little bit of movement out of the DAX this morning, but I think we're going to have to wait a while before we see that. The AEX will be interesting in terms of the build-out story that we're seeing in Korea today. Presumably they're going to need a lot of lithography machines to be able to manage all of this build-out. The IBEX is down by 0.2%. So at a headline index level, I would argue nothing to see here, Tom.
On a sector-by-sector basis then, top of the list, it is tech, up 0.7%, and we're getting a little bit of upside for ASML, the maker, of course, of those lithography machines that you mentioned, just up 0.1%. But tech as a sector is gaining 0.7%. Interestingly, some of the software names like SAP are posting gains after a choppy week last week. That is followed tech by media, industrials and energy, but majority of sectors are actually in negative territory, at least so far. Construction is down 0.4, food and beverage also down around 0.4. But you do have to look for individual names, I think, for more of the interest in the session so far, just in the opening moments, Anna.
Yes, I can see on that screen there we've got British American Tobacco. That is one of the areas of weakness. And we have a story about BAT, cost-cutting, hitting 9,000 roles, their turnaround plan intensifying. So this is BAT reducing its global workforce by about a fifth. It's part of a plan to bring down costs, to simplify operations. So we'll watch that one with interest. That is just one of the stocks that is on the back. For Prosus was one of the ones to the upside on the back of the report earlier on. Profit more than doubling in the last fiscal year.
SAP is the biggest points add this morning. Roche is second. What is interesting, you're actually getting quite a lot of sort of disbursement within the space, pharma space. Roche is up. Novartis is down. What have we got on Spanish CPI?
On the macro front, we've got Spanish prelim June harmonised CPI rising more than expected, 3.6%. 3.6% year on year. The estimates have been for 3.4%. On core, we've got, for the month of June, 2.9%, slightly below the estimates of 3%, marginally, obviously. But on the headline basis, you do have CPI inflation rising slightly higher than expected in Spain, 3.6%. I'm checking euro dollar, currently at 1.14. The single currency is up 0.2% so far in the session.
It's been drifting higher into that number, actually. So we're ahead of that number. It's been drifting a little bit higher, despite our reporting suggesting that Wall Street may be turning a little more negative on the euro against the dollar right now. Let's get the thoughts this morning of Henry Allen, macro strategist at Deutsche Bank Research. Henry, good morning to you.
Morning, Alan.
It's Monday. Back to the markets then for this Monday morning. And I wonder where your head is at. We're looking ahead to Sintra and non-farm payrolls data out of the US. We've come off a big week for tech with this sort of chipwreck story that seemed to dominate markets, and the Kospi swinging 5% on a daily basis seems to be a regular occurrence. What's setting the pace in terms of your thinking at this time? What are you focused on?
Well, a couple of things. Firstly, the reopening of the Strait of Hormuz, at least from low levels, is really acting as a very positive macro catalyst. Indeed, we've been struck by how on Friday, for the first time since the Iran conflict began, oil prices finally at their pre-conflict levels. So from an economic standpoint, in terms of the risk of second-round effects of aggressive central bank rate hikes, that does appear to be off the table for the time being. And so markets are really taking some reassurance from that. So that's been a bullish catalyst. And then, of course, the other thing this week is non-farm payrolls a bit earlier on Thursday. And, the last 3 jobs reports in a row, despite the Iran conflict, have all been very, very strong. And that has obviously seen Fed hikes get priced in. But contrary to a lot of expectations that Fed hikes are traditionally bad, that hasn't necessarily been bad for risk assets, because a large part of the reason that the Fed hikes are being priced in is actually upside growth surprises. And we've seen consistently before that if it's upside growth surprises that are driving that hawkish repricing, then risk assets can do well at the same time.
So we heard from Kevin Walsh. He wants us to focus more on the data rather than, Fed press conferences and what Fed officials say. So does that mean the risk this week is backloaded on Thursday on the non-farm payrolls rather than the thoughts of central bankers at Sintra?
Absolutely. I mean, central banks have always talked in this kind of language of data dependence. And as I say, if you look at the data globally, it's been remarkably resilient. And that resilience has been concentrated, as it has so often in recent years, in the United States. I mean, it's not just 1 month's data either. The 3-month average of payrolls is now at 188,000. That's the highest it's been in over 2 years. I mean, the consensus for this Thursday is 115,000. If that were realised, that's, again, the first time in a couple of years that we've had 4 payrolls in a row all back in triple digits. That kind of softness we saw last year, it does look as though the labour market has finally turned.
Henry, if you think the AI trade has further to run in the short to medium term, but eventually actually breaks, how do you position for that?
I mean, if that were your view, then I think, clearly equities in the short term are the place to be. But we're actually neutral on tech. I mean, we've had this kind of run, particularly in the chip stocks, but now we've come down a little bit, particularly. I mean, it's worth noting the Mag 7 now are back in correction territory. We've down 12% from the peak. Indeed, the Mag 7 since September has gone nowhere in 9 months.
But that's not an opportunity to add at this point.
It could be a little bit, but I wouldn't be overweight the tech sector. I'd be neutral on the tech sector, is our view, in terms of a relative play. And then longer term, I would push back a little bit against the idea that we're in for some inevitable correction, actually. The parallels with the dot-com bubble, I know, have been rising clearly in the last year or so. But, we've actually made the argument this looks more like 1999 than 2000. That even though valuations are stretched, even if you take kind of the worst-case scenarios, this rally could still have another year to run before you then saw a turnover. And actually, there's a lot of other differences. If you go back to 1999, the Fed were hiking rates because they were worried how fast this rally was going, that growth was overheating. We're not seeing anything like that today. It's a whole debate around rate hikes.
Do you think the Fed hikes rates?
Yes.
How much?
50 bips this year.
This year. More to come next year? So the Fed is hiking?
Yeah, I think so. I mean, next year, the data dependence, we'll have to see. I mean, it probably all depends on...
Walsh won't tell us.
No, I mean, definitely not. I mean, he didn't even submit a dot in the dot plot. I mean, this is a guy who... And I think that there is some merit in that, he is conscious that during the pandemic years, where the Fed committed to keep rates low forever and ever practically, that made it harder for them to pivot because they then had a credibility problem. They'd come out so strongly in a dovish direction, it was then hard when the data did turn in an inflationary direction to adjust. So I think he'll be resistant to doing something like that.
Are Fed rate hikes negative for the stock market?
No, because one of the reasons we're getting Fed rate hikes is positive earnings surprises, positive data. So in terms of the correlation, actually, we've seen this a few times play out. that actually Fed rate hikes, because it's growth upside surprises, are okay. Actually, we saw that in early 2024. At the start of 2024, there was this whole argument that, we're priced to perfection. Very rapid Fed rate cuts priced in. They weren't materialised. The Fed held rates for a lot longer than expected that year. Yet the S&P was up double digits in the first half of the year. Why? Because the reason was upside growth surprises. This isn't a 2022 playbook where we're having a stagflationary shock. Indeed, oil prices are now back to normal. This is a playbook where growth is surprising the upside, and the Fed are comfortable hiking rates into that.
Yeah. And Henry, when you think about tech stocks then and the moves we've seen, and you mentioned the Mag 7 and where they are under pressure, so are you interested in rotation within the tech sector in the US, or are you more interested in getting increased exposure to what's going on in Asia, or do you play it through Europe? Where's the thinking? If you want more exposure to tech, where's the best place to be at this point?
So the US and Asia seem to be promising, but actually one of the things we've noted is it's not just a rotation within tech, it's a rotation within the stock market more broadly. So just as the Mag 7 has fallen others, actually on Friday, the equal-weighted S&P 500 was at yet another record high. Actually, the Russell 2000 also doing pretty well among the small caps. So there is still actually this story of broad-based resilience. We've been in this situation the last couple of years where, because the Mag 7 and the tech sector have led those gains, we've been a bit vulnerable to that, and we've kind of forgotten that actually some of these other sectors, particularly the more defensive space, have actually been a bit flatter in recent years, and there's room for those guys to catch up. So, we're seeing a broader rotation within the market, hence the equal-weighted is doing so well.
Talking of catch-up and stealing blatantly from Guy Johnson here, healthcare saw a bit of a pickup. I think we've got a chart that shows what has been going on. It's a little bit more loved, and we saw that last week, particularly in Europe. Does that stand Europe in a better place in this environment? Do you like healthcare, given the dynamics there?
So I'm not a sector analyst, but in terms of that kind of European story, I mean, actually, Europe has done really well in terms of the narrative shifting in the last couple of years, obviously with the whole fiscal stimulus story. And actually, I think there's also an argument that the ECB are going to be very helpful from here, because one thing I've been struck by is, their meeting a couple of weeks ago, they were saying that oil prices in their baseline forecasts were kind of, even in the milder than the baseline forecast, going to be $88 a barrel in Q3. We're now at $72 a barrel. So in terms of where the hawkish repricing risk has gone, that has gone. So in terms of the equity risk from that, we're actually looking at a much better space. Things are looking even better than the ECB's mild scenario from a couple of weeks ago because of this normalisation of the energy shock.
You're confident that we don't go back to a conflict. You're confident that we don't see oil prices drifting higher from here as we refill tanks. Do we stay where we are now? Is the risk to the upside or the downside on the oil price?
I think the risk is still on the upside, but I think the idea that we're going to go back to $110 a barrel is very, very hard to imagine, partly because there's already been rerouting away from the Strait of Hormuz.
We're at 90. Let's say we don't go back to the extremes, but let's say we stay at sort of 90. That's inflationary, isn't it?
Yeah, I mean, certainly inflationary. I mean, given that the start of the year we were only at 60, that's still a 50% increase in the oil price year on year. But is it going to cause the kind of big macro damage we saw a few years ago? No. And actually, one thing that was impressively resilient this year is the fact that we got to 100 to 110, stayed there for around a couple of months, yet the data still held up pretty well, partly because we're not as dependent on oil as we were in years past.
Yep. Or we just emptied the tanks and got to refill them now. There's other ways to look at it. Henry, nice to see you. Thank you very much indeed for coming to see us. Henry Allen, macro strategist, joining us from Deutsche Bank Research. Call 6 looks like this morning. Let's see what we are watching. So the AI trade is front and centre as we've watched what has happened overnight in Korea. ASML is up. Defence stocks are also up this morning, which is interesting as well. Mixed picture, much more mixed picture when it comes to the pharma space. Let's turn to telecoms. Chloe's here with more.
Good morning. We have got BT up about 1.3% this morning after announcing it is forming a joint venture with US telecommunications giants Verizon that combines their international units. And so this is part of the strategy from BT of refocusing on the UK market and moving away from the international unit that has been really dragging down that growth for a few years now. And so we can see investors be actually quite happy about this joint venture with Verizon, and we'll see how it impacts BT in the year ahead. It has kept its medium-term guidance. Moving on to Prosus, which is also up this morning after its profit doubled in the latest financial year. So we're up about 2.6% this morning. It has really made a big bet on e-commerce and really benefited actually from its big stake that it has in the Chinese company Tencent. So we're up there actually quite strongly. We're also in the green for Bridgepoint, which is a private equity firm here in the UK. It has bought a Florida-based company called Kane Anderson Real Estate for $1.4 billion. This is part of a broader wave of consolidation acceleration in that real estate sector, and we're up very strongly on the back of this M&A this morning, about 10%. We're also up, there's a lot of green movers this morning for Sweatec, up 8%, the French tech firm having a strategic collaboration with Zen Semi to provide some new technologies that will be used in AI data centers, in EVs, in robots. So all of that really boosting that stock this morning. And finally, let's end with one mover to the downside, and that is Volkswagen, which has had a report over the weekend that it is abandoning its autonomous driving project. We also had the news on Friday that it was looking to cut about 100,000 jobs. So it is struggling quite a bit, really struggling to get back on track because of all this competition from Chinese auto manufacturers and also just weaker demand in Europe. And so we're down, continuing that weakness for Volkswagen, down about 1.8%.
Chloe, thank you very much indeed on some of the individual stocks on the move this Monday. Chloe Melly. Coming up, South Korea has unveiled an ambitious plan aimed at cementing its status as
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Jobs Day, and Bloomberg has the report under surveillance.
Things have started to pick up in this economy based on the jobs number.
But there is a lot of concern about why the labor market is not keeping pace with what we're seeing right now in the AI space.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The unsaid thing is that we're basically at full employment.
Apparently the labor market right now, not a problem.
The June Jobs Report, Thursday on Bloomberg.
Another the Monday morning. Welcome back to the opening trade. 17 minutes into the programme and into the trading day, and we've got European equity markets overall pretty flat. You can see we have some outperformance, though, coming through from the German market. And, Tom, that's relevant because a lot of that being driven by technology. So tech stocks actually outperforming, even though two-thirds of sectors are going downwards today. Tech is one of those that goes higher, and part of that is the handover, I guess, from the Korea story.
Yeah, massive spending plans coming out of the likes of Samsung and SK Hynix. Both those stocks negative. The Kospi largely unchanged, a little bit underwater, just down at around 0.2%. But the selling has come through for Samsung and SK Hynix. Both companies to invest a combined around $518 billion to build 4 new semiconductor plants in South Korea. The investment is part of South Korea's ambitious plan to cement its status as a tech powerhouse. For more, let's bring in Bloomberg's Anthony Stevens in Hong Kong, who's been monitoring all of this for us. Size and scale, Anthony, how significant is this? And kind of work through the kind of the investor reaction to these spending plans in Korea.
Yeah, so in terms of size and scope, this is more of the same, but over a much longer time frame. So initially, Samsung in this year is going to spend around $70 billion. So, you take the total spending of $518 billion divided by 2 with Hynix, that's not really that big, but it's the level of spending over that many years that catches the eye. On top of that, the Korean government is also helping these 2 companies in developing new technology for DRAM. Also is helping them alongside the energy transition. So it was kind of a coordinated effort to build out this memory kind of capability in the decade to come. Korea plans on doubling its DRAM capacity in the next 5 years. So that's quite a punchy goal. It's also talking about geographic diversification. That's a really big theme from this press conference. The metropolitan area of Seoul is really stretched as far as its water and power supply is concerned. And the Koreans want to really diversify the areas of the country that are benefiting from the memory boom. So we saw actually underneath the hood, you said that the Kospi was flat, but under the hood there are some massive moves. So the renewable energy sector was up 15 to 20% as most of these new data centers and semiconductor fabs are going to be powered with renewable energy. So that's a really important theme to follow in the coming days, whether this follow-through spending actually comes through in the renewable energy space.
Okay, so if I'm an investor in those companies, great. If I'm an investor in SK Hynix, how am I feeling?
You have to just go back to the worries about memory, right? So this risk event has been processed. It's fine. No gremlins in that. It's pretty much in expectation with kind of a rational capex with what these guys were planning on the next 2 to 3 years. So you have some visibility on that front. So you go back to worrying about memory overcapacity and memory pricing. Today we had Apple talking about reaching out to the Chinese for more memory capacity on the NAND and DRAM side. So that is still out there. Kyoshia, for example, in Japan, it's down around 5% because of those worries. And you start to see this capacity coming online in memory, just as there are concerns on the pricing power around memory. So you have to move those concerns back to your front of mind and move on with this capex story.
Anthony, we caught up with Deutsche Bank a little while ago on this programme, and we heard from them that they were, the parallel was being drawn with 1999 and not 2000, which is either comforting or not comforting, depending on your time horizon, I suppose. But how are you thinking about the overall tech, the AI trade? I saw that on the Markets Live blog, they were saying SK Hynix wanting to list its ADRs in the US. Is that something that suggests we're nearer to the end of this particular cycle? How are you, big picture, thinking about that?
Yeah. On a big picture, from a kind of a trading background, what strikes me is the increase in volumes and sizing as volatility goes up. Now, that is quite rare. As a risk management function, you're supposed to bring your position sizing down if volatility goes up. So today, Korea's volatility hit a new record. It's almost on the brink of being a 100 vol index. If you think about the VIX at almost 20 vol, it's 5 times as volatile as the S&P. But the volumes and the size of people's positions are near record highs. So that is a little bit uncomfortable. In terms of the fundamental underpinning of the rally, there's a lot more free cash flow these companies are throwing out. The government is behind them. It's a structural bull market in terms of memory shortage. So there's a lot of fundamental differences from previous bouts. But the setup from a technical and a flow basis, especially coming into month end, quarter end, that looks uncomfortable to me. So your ability to withstand drawdowns is much more important than the actual fundamental story here.
Anthony, great stuff. Thanks for the update. Appreciate it. Anthony Stevens joining on what we've watched come overnight out of Korea. Let's turn to the UK, where apparently we are scrapping plans to replace the current ageing warships with a new destroyer, going from Type 45 to the new one. We're not going to do that. Opting instead, it seems, for a hybrid vessel, which is going to allow lots of different AI, drone-driven types of manoeuvres. The Defence Ministry says these new British-built warships will act as advanced control hubs for aerial, surface and underwater drone fleets. I was just joking with Jerry Doyle, our Global Defence Editor, that these feel like floating data centres rather than warships. Is that the right way of looking at it?
Yeah, I think so. What we're doing here is sort of removing this idea of like many large, highly capable ships and replacing them with a smaller fleet, but amplifying their power with these uncrewed systems and other sort of advanced electronics that will allow them to punch above their weight, ideally for a lower cost than buying these larger warships.
Is this a strategy that other governments are pursuing? Does it make sense? Do we see more of these kind of deals, more switching away from some of these highly capable but very expensive ships, but also aircraft? Is this something that we're going to see more from European governments, for example?
It could be. The proof in how good of a concept it is will, come down the line when we see these systems deployed, when we see how they work together, when we see how they function in a conflict. But just recently, we saw Germany sort of head in the same direction. Germany had this F-126 advanced frigate program that's supposed to be a submarine hunting warship, very expensive, very large. It was the largest procurement program in the German Navy's history. And after a troubled development program, they started off with a Dutch shipbuilder, Damen, and then they weren't able to deliver. There was some legal trouble. They were going to shift the contract to Rheinmetall's shipbuilding arm. And then the German government just decided it wasn't worth the money, and instead of buying these 6 very large ships, they're going to buy 8 smaller ships for a smaller price. The idea being the same, that by spending less money but getting these more small, capable systems, you can have roughly the same type of combat power for a lower price.
So, Jerry, we know a little bit about how the UK government is thinking about switching up what it spends the defence money on. What about the overall pot of defence money and how it gets allocated to patching up the existing capability versus pivoting to new capability? We're going to hear more, are we, this week in the Defence Investment Plan?
We should, and I'm just as curious to see what the Defence Investment Plan says as you are. It's expected to be slightly larger, the amount allocated to Jarvis's Ministry of Defence than it was to Healy's, but we don't know exactly how much money that's going to be. I do think we can expect to see a slight shift in thinking, maybe in trying to see how you're going to spend that money, which, as we reported in December, was something like a £28 billion shortfall in what Healy had hoped to get. So how do you get that Defence Investment Plan to deliver the capabilities that the UK needs for less money than it expected?
If we're going down this route of kind of using drones and smaller ships, does that make Europe more interoperable? Does Europe in aggregate look like it's going to have a better defence outlook, i.e. can systems that the UK are going to operate with, the drones, work with German or Ukrainian or whatever else it's going to be? Is that the path we're heading down towards? Because Europe needs to spend more money, but it needs to spend it wisely.
Yes, it could. It again sort of depends on how things unfold. You already see a lot of interoperability with the NATO countries because their militaries have to be able to communicate, have to have the same data links, have to use the same types of ammunition, have to be able to communicate and operate with each other. Whether Europe as a whole is able to do that will require some coordination, at the EU level. Will require a lot of cooperation, which we've seen recently has been tricky with the FCAS program falling apart. But if all the industry and all the governments get on side, there is a possibility for that sort of interoperability.
And no doubt that will be part of the conversation at the NATO meeting, which is set to take place, I think it's in Turkey, isn't it, July 7th and 8th. Jerry, thank you very much. Thank you for joining us. Jerry Doyle from Bloomberg News with the latest on the defence stories out of the UK and more widely. Coming up on the programme, we'll get back to central banking. The Sintra Economic Forum kicks off this week. We'll be joined by Birgit Neisner, who's the CEO of the Austrian Society of Bank Research, former chief economist at the Austrian Central Bank. So interesting.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
This is the opening trade. We're 30 minutes into the Monday session. A tentative start to the week for European stocks, up just 0.1% across the benchmark as we think about the spending on chips coming through from South Korea and volatility in oil in the Strait of Hormuz, although the two sides, US and Iran, are set to talk. That is the reporting, at least potentially in Doha later this week. The DAX currently pointing to a slightly brighter picture in Germany, up 0.3%, though you're seeing a bit of downside pressure coming through for the CAC and France, dropping 9 points, and a loss here in the UK of just 0.1%, still at 10,498 on the FTSE 100. Guy.
Internals are quite unexciting. Nobody's trading. Volume is very light. 277 up, 301 down. The market is fairly balanced when it comes to winners and losers. So we're going to park that one. Let's move on and talk about what we're seeing in terms of the winners and losers, because here we start to get a little bit more exciting. Bridgepoint is a private equity firm. It is pushing into real estate in the United States. It's making an acquisition. I think it's Florida-based, the acquisition, and the stock likes the idea of this. It's up by nearly 10%. Prosus is up on the back of its numbers. We spoke to the CEO a little bit earlier on. And BCD on COI. I had to look that one up. I'm still not entirely sure. I've got to the bottom of it. This is Soitec's business. It is up by 7% this morning in the semiconductor space. So the semiconductor story still very much present here in Europe. Downside, BAT making some fairly substantial cuts to its business. We are certainly watching the effect of that. British American Tobacco down by 1.4%. I'll get out of the way. I can show it to you. German Auto absolutely being pummeled again today. Volkswagen is down by 1.4%. Let's call it that. And let's stay in Germany and come over to Lufthansa, down by 1.65. A little bit of oscillation in the oil price, maybe affecting what is happening with that space. I'm just looking for other factors. But Lufthansa, some of the other airlines also under pressure as well. But Lufthansa down by 1.7%. Helen.
Yeah, Guy, let's get to the source of the volatility in the oil price then. The US and Iran have agreed to halt attacks on each other ahead of peace talks resuming in Doha this week. The de-escalation comes after the two sides blamed each other for breaching the fragile ceasefire amid strikes on vessels in the Strait of Hormuz. South Korea has unveiled an ambitious plan aimed at cementing its status as a technological powerhouse, with companies led by Samsung and SK Hynix initiating large-scale investments in memory chips, data centers and in robotics. robotics. The companies will build 2 chip fabs, each in a $518 billion project, and Korea has pledged to spend $19 billion over 15 years on next-generation memory capacity. And here in the UK, Andy Burnham is expected to pledge a major devolution of power in England later today. The former mayor of Manchester is preparing to give his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. Tom?
Meanwhile, the European Union's trade chief, Maros Sefcovic, is set to meet with his Chinese counterpart today. That's as the bloc pushes Beijing to address a widening trade imbalance. The meeting comes as European companies struggle to compete with subsidised Chinese products and a growing reliance on Beijing for critical supplies. For more, let's bring in Bloomberg's Richard Bravo, who is in Brussels. Richard, what is expected to come up in these talks? How much leverage does Europe have right now? What are they looking to do, and will China resist?
Hi. So the EU really wants to open up a new type of dialogue with Beijing. Just over a week ago, EU leaders met. And what's really important to keep in mind about that meeting was it was the first time that all 27 member states agreed that the current economic relationship with China is unsustainable and something needs to be done. Now, where the problem begins is that they can't agree on what to do. So the EU leaders tasked the European Commission to come up with a new set of trade defense measures that they can use to try and rebalance this relationship. Now, those measures could look like anything. They could be very aggressive, and they could presage a new kind of relationship with China in which the EU is much more antagonistic, or it could be very light, in which it's you don't see the chances of increasing trade friction with China. So it really depends what the Commission comes back with in October, when EU leaders will meet again and begin to work through what kind of measures they want to put in place. So at this meeting, the EU wants to start a dialogue with China, talk about the trade imbalance, and on the Beijing side, China wants to do whatever it can to keep those trade measures from being too antagonistic.
What is the expectation in Brussels about which way this goes?
It really depends on who you speak with. If you speak to somebody in Berlin, Berlin obviously has a massive auto industry, and they do not want to have an antagonistic relationship with China because German car manufacturers export so many cars to China. If you talk to somebody in Paris, they are much more hawkish in terms of wanting to implement some very strong trade defense measures that have some teeth to them to try and make industries in Europe stronger and able to compete better with Chinese industry. Right now, the EU is looking at a 360 billion euro trade deficit with China. They're really concerned about the overcapacity in China, which is just flooding the European market with cheap goods, as well as state subsidies, which mean that it's very difficult for European companies to compete on a level playing field with Chinese companies. So they're looking to address those two main issues, and we'll see what happens with this meeting with Sefcovic and Wang Wentao later this afternoon to see if we get any indications on what direction these talks are going in.
OK, interesting. We will be watching that, as you say, and across any lines that come through on the back of that meeting. Thank you for the setup and what to watch for. Richard Bravo joining us out of Brussels, a potentially consequential meeting then between the two sides, China, of course, and their European counterparts. Meanwhile, on the macro front, Fed Chairman Kevin Warsh will make his first overseas appearance since taking office in May, attending the European Central Bank's annual symposium in Portugal. For more on what we can expect, we are joined by Birgit Neisser, CEO of the Austrian Society of Bank Research and former chief economist of the Austrian Central Bank. Birgit, thank you very much indeed for your time. Given your previous role and your current role, what would you expect that the relationship is going to be like when ECB members meet with Kevin Warsh? What are you going to be watching for on the kind of on the personal chemistry between the two sides and anything they have to say?
Thank you and good morning. Indeed, that's probably the most important social factor that Kevin Warsh meets up with the European central bankers. They don't know each other very well. They were very cozy with Mr. Powell, of course. And it's a global community he has to join and where he still has to gain some credibility. They are waiting for him. They look forward to meeting with him, socializing with him, and finding out whether he is a mainstream central banker as they are, or more of a political appointment.
Interesting. So you think there's still a credibility test for Kevin Warsh amongst his European allies or European partners?
Yes, I think so. I mean, we have seen the first FOMC committee, which he chaired, that went very well. But we all know that the clear independence test for Mr. Warsh will come in autumn. We see that the Iran war is not a short blip. We will have volatility in energy prices. We have quite some tension on food prices, and we will need to see quite a hawkish Fed. Now, he has promised something else to Mr. Trump, and he will have to navigate this trade-off between being a credible chair of the FOMC and being loyal to Mr. Trump.
Okay, good morning, it's Guy. Do you think central banks, ECB, Fed, Bank of England, have lost control of the inflation narrative? Inflation has been above target for a long time now.
I wouldn't put all the central banks into one basket. I mean, the ECB, after the big inflation push, has come down to target. The US, we have seen inflation above target for more or less 5 years. So there are different trajectories. I think that for the ECB, speaking for the ECB, that they did this strategy assessment last year now comes in very handy because we have the second exogenous price shock, and they have set out that the toolbox is clear. Scenario analysis as a tool is now better developed, better established into their processes, and also giving an outlook may not only center around the baseline, but also has to involve the risks to the baseline. So I see the ECB well prepared, and I don't see them losing control of this next inflation surge.
Okay, so you see another inflation surge coming?
Yes, I mean, we are not yet in a big wave as we have seen after the pandemic, but it's not a blip where you can look through. We are in an intermediate scenario right now. I also politically think that there will be more volatility coming from the Strait of Hormuz, and they have to be prepared. So I'm not saying we are at the beginning of a big cycle, but I think that their formulation of a measured additional tightening makes sense. Nothing to look through, but not another repetition of what happened after the pandemic.
So Birgit, you do think that then, good morning, you do think that we might see another hike from the European Central Bank? Does that mean you would not cast the first hike as a policy mistake, or is it just too early to say? You need more hindsight, perhaps?
I would expect, by the way, as the market does, another hike this year, maybe even two, because I'm pessimistic on the geopolitical situation. And I think that in view of having an inflation forecast of 3%, which is clearly above target, and also a little bit the episode which we just lived through, which shaped inflation expectations of people, that they expect reactions from the ECB, I see another rate hike coming.
Okay, and Birgit, going back to this thinking about the relationship between the world central bankers, we've heard from Kevin Warsh, he's more hawkish maybe than people had anticipated, and he's certainly trying to re-educate the market away from forward guidance. He doesn't like the dots, we know, and so that's the US story right now. On the other hand, the European Central Bank, as you point out, is leading into scenario analysis. I wonder, does the ECB rethink what it's doing based on the Fed taking a moment to rethink its guidance to markets, or is the ECB quite happy with the track that it's following?
I think the ECB is very well settled with the way of communication they're doing right now. It's a little bit repetitive. Yeah, we always hear the mantra of database decisions, meeting by meeting process, but it makes sense. As for Mr. Walsh, I have the doubt whether his reluctance to use mainstream central banking communication may lead to higher volatility. The dot plots are well accepted by the market. People know to read them. Now, if he doesn't like this, and if he doesn't like press conferences, the market will lack guidance. Maybe they will get used to him, but we will see a period of where global central bankers, the markets, they observe Kevin Walsh very well, and they have to understand and start reading him.
When we think about volatility, I'm thinking about the risks around financial stability potentially posed by what's happening with AI. Do you see AI and the build-up of AI, if this is a bubble, if it does burst at some point, as a risk to financial stability, and are central banks prepared for that? Okay, AI is well on the agenda of the Sintra powwow. So central bankers do take it serious. The connection with monetary policy is that it has a deflationary and an inflationary effect. But currently, we are more seeing of the inflationary effect. So AI services, data centers, electricity costs, they're all going up, which is bad for the inflation outcast. As for financial stability, I think that the bubble is a problem in the US. Europeans, unfortunately, are only following in the AI wake. So that also, but on the positive side, it means that the financial stability risks for European banks are not very big. So we look at the US, we see a certain we see exuberances of capital markets. We hope that this is all still solid and based on good business plans. But coming from a European perspective, we don't see the financial risks bursting here, but materializing rather in the US.
Okay, great to catch up. Really useful insight into what we are going to be watching so carefully this week ahead of Sintra. Birgit Neisser, CEO of the Austrian Society of Bank Research. Formerly, obviously, having a great view of the ECB. Coming up, a plan for growth. We're going to look ahead to Andy Burnham's first big speech since he launched his bid to be the next UK Prime Minister. It's in Manchester.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20 best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the Opening Trade. We are 48 minutes into today's session. European stocks are flat. Here in the UK, the FTSE 100 is currently down a little over 0.1% as we think about the speech that Andy Burnham, potentially very likely to be the next UK Prime Minister, of course, is expected to pledge. The biggest devolution in that speech of power in England later today. The former Mayor of Manchester, of course, is preparing to give his first major speech since confirming his intention to succeed Keir Starmer as UK PM. For more, let's bring in Bloomberg's Lizzie Burden. Lizzie, what are you going to be watching for? What do we expect is going to come out of this speech? What is he going to say on economics? What's he going to say on the state of the country? What is he going to say about his policy priorities?
Well, it's a huge moment for Andy Burnham because this is the biggest speech, arguably, so far of his career. And what we know of his economic policy is just drawn together from bits of what he said in Manchester, things that his aides have said in private. In terms of what he's going to emphasise, of course, he'll emphasise fiscal prudence because he's still in the doghouse about his in hoc to the bond markets comment. But as you say, a huge emphasis on devolution, which is ironic perhaps because the mayor of Greater Manchester seat is going to be up for grabs. If that goes to reform, is he going to be all that keen on devolution in the future, you might ask? But in terms of other economic policies, I'm sure that there'll be an emphasis on the cost of living. He wants to show that he understands the problems of ordinary Britons, and that's the message that he's been putting out on the doorstep in Makerfield. He wants to boost the investment in the UK by flexing the fiscal rules. Maybe we'll hear a bit more about that. And then a big question for us is what happens in terms of taxes, because we know that in the manifesto there was the commitment not to raise the three levers of tax. It leaves business very, very vulnerable. So is he going to, for example, shift the burden of business rates onto the big fish like Amazon and take it away from smaller businesses?
So many questions then, and we'll look for what kind of detail. Can we get any detail, or is it still just very high-level stuff then from Andy Burnham today? One of the areas we want more detail on is defence. That might be for later in the week, but this is a big area of focus right now because Keir Starmer ran into troubles holding on to his cabinet, didn't he, around his defence spending plan?
Yeah.
So what do we expect this week?
Of course, he lost John Healey and he lost Al Carnes over this. I should also just say on the economic policy, we're not likely to hear who the Chancellor is today. There isn't really an expectation of that, even though we are going to hear more about the economics, which seems a bit weird to be, but nonetheless. When it comes to defence, I think for our audience, the emphasis is how do you pay for it rather than what you're going to buy, although, of course, it's important on the international stage with an NATO summit coming up. And there's a lot of talk about war bonds, which is an interesting idea. It's been revived by Andy Haldane, former Bank of England chief economist, who we know is advising Andy Burnham. And the idea would be that you would have them exempt from 40% inheritance tax. Gilt's already, of course, free from capital gains tax. But it raises the question, if you're not getting that tax revenue, how are you going to balance the books elsewhere when, yes, OK, you may be easing your borrowing problems, but you've still got all of the fiscal constraints that every other Prime Minister in recent times has been straitjacketed into?
Can I come back to the Chancellor? I want to talk about this. What is he doing, giving a major policy speech without us knowing who his Chancellor is going to be? And is that significant? Because the weekend press, once again, full of talk of Miliband. And if he's punchy today, does that mean Miliband? If he's not punchy today, does it not mean... read the tea leaves.
Does it show that he's showing how powerful he is
by
actually setting the policy before he tells you who's going to be in charge of it? Does it actually suggest that rather than an Ed Miliband character, you get someone like a Pat McFadden who perhaps is just going to do his bidding loyally and
Why do you need a
competently?
chancellor? There have been prime ministers in the past who haven't had chancellors.
Well, of course, you could say that perhaps he would bring Jim O'Neill in from the Lords and run his economic policy if you're going down that route. And not...
There's lots of talk of what his broader plans for the Treasury are, isn't there, about which bits might be, maybe hived off, moved elsewhere. This is all, in the mix.
Yeah,
as well as we wait to hear from Andy Burnham.
Government functions, you could have growth split off from the fiscal side of policy setting. All of this up for grabs. But if they're going to appoint Ed Miliband, huge political consequences, and I don't think the market would like it either.
OK, what time's the speech? 11:30?
11:30. Up in Manchester, by the way.
Different time zone.
Manchester. Lizzie, but that's not really laid down too well, is it? Lizzie, with our Mancunian viewers. Lizzie Burden, thank you very much, including Lizzie, for the update. As we look ahead, 2.5 hours, a little over 2.5 hours, to that speech then from Andy Burnham, of course. Let's look at what else we are thinking about through this week. Later today, China's Commerce Minister Wang Wentao will be in Brussels. There's a Supreme Court decision as well, potentially later today, out of the US. On Tuesday, we're getting prelim CPI in France, Germany and Italy after the inflation data in Spain came in a little hotter than expected today. Final UK first quarter GDP is also out. And on Wednesday, the Central Monetary Policy Panel with Kevin Walsh takes place, so all eyes will be on that. Ireland's EU presidency also begins, just as a note. And on Thursday, it is non-farm payrolls. That's on Thursday. Friday, Aix-en-Provence, the Economic Forum takes place with Lagarde back in the spotlight, Nagel and Bailey all set to speak. And it is the US Independence Day holiday, of course, on Friday.
OK, so big macro week coming up. Skylar's excited. What's she watching? What are the big events this week?
I mean, I think Sintra's very interesting because we're getting a number of central bank speakers, maybe more potentially from the Warsh side. And I don't think we're going to get anything that really shakes things up or diverges from the views that we already have in the idea that Warsh doesn't really want to say a lot on forward guidance.
Does he just sit there? Just kind of
well,
I've said I'm going to say nothing. I'm not going to say anything.
But I think it's, the combination of that plus non-farm payrolls on Thursday that are expected to come in quite strongly. Yeah. And the risk is a hotter than expected reading because of what you have happening with football, et cetera, in terms of more hiring from a leisure and hospitality perspective. So that number could come in quite hot, and it could confirm the kind of hawkish bias you have from Warsh and boost the dollar further, which has had, a bit of a breather at the end of last week and the beginning of this week in terms of its upside momentum.
Yes, the dollar getting a lot of attention, or rather its relationship with the euro, it seems. We've got some reporting suggesting that Wall Street's not quite expecting as much as it was from the euro. Skylar, that would seem to play into your thinking.
Yeah, absolutely. I think there's been this really big shift where you had this kind of bearishness around the dollar in 2025 that really impaired its ability to rally despite fundamentals shifting in its favor. So when you had the Iran conflict begin, that wasn't as growth negative for the U.S. as it was for all these other partners, but you still had inflation that was going to be higher because of it, and you had a higher level to start with as well. And so that means that you should have had more dollar upside than you probably did have because the market was looking forward to peace. Now that we've moved on from peace in terms of it's well priced, you can look towards the data, which is telling you the dollar should be stronger. And then I think also a big constraint on the dollar has been the Fed. It's been very dovish for the past 2 years, despite inflation being above target. And that shifted quite significantly on Warsh's first meeting. And so as we look towards that kind of data and speaking this week, it should be more dollar upside towards the end.
Just back to the equity markets. So caution in the European equity market story today, a little bit more positive on US futures. But the kind of hand-wringing that we've seen over recent days and weeks, is that actually a healthy dynamic that we're seeing in the stock markets globally?
Well, yeah, it's really interesting because we've seen a broadening of the rally. So the Euro stocks, for example, 70% of its constituents are above its 200-day moving average. But you've also seen this rotation to more defensive sectors, which one is telling you that growth is strong. The other is telling you that investors are more worried about growth. And I think, part of this is quarter-end rebalancing, month-end rebalancing, but I also just think it's this view that you need to be more cautious, and that's not necessarily unhealthy. That's actually quite positive.
Skylar, thank you very much indeed. Skylar Montgomery-Koning from our Markets Live team. That is it for the opening trade. The pulse is next. US futures pointing higher by 0.7 on the S&P E-minis here in Europe. Stock 600 is up just 0.1%. This is Bloomberg.
studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
South Korea unveils a record spending plan for AI, with Samsung and SK Hynix set to invest more than $500 billion. The U.S. and Iran reportedly back away from a fresh escalation of their conflict, with negotiations set to continue this week in Qatar. Plus, Andy Burnham will pledge the biggest evolution of power in recent English history in his first major speech since confirming his intention to replace the UK Prime Minister. So there is a lot going on in the markets. Everyone, happy Monday. On Monday, we look at central banks, we look at inflation, and there's always a little bit of AI or technology news. Now, stocks are gaining. It does seem that after the sell-off that we had towards the end of last week, look, some investors may be coming in trying to snap up a little bit of bargains. Traders, of course, shifting their focus to Sintra, where there's central bankers in Portugal, and then the monthly jobs report from the U.S. on Thursday. Oil, I'm looking at Brent 72.03, really fluctuating after a weekend of tension in the Middle East, so we'll get to that in a second. Let's also have a look at what's happening in Europe with the European markets map. If you look at the DAX, but also the CAC 40, I guess they're fluctuating a little bit less than, well, they're still fluctuating, but the FTSE is pretty much unchanged, and we're seeing a bit of a difference between the DAX that's up and the CAC that's lower in today's trading session. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Another packed agenda this morning. Peace talks between the U.S. and Iran are set to continue in Qatar this week. Here in the U.K., of course, the man expected to become the next prime minister is set to pledge the biggest evolution of power in modern English history. But first, let's also begin with tech. South Korea, one of the biggest beneficiaries of the AI boom, has unveiled ambitious plans to try and cement its position as a global powerhouse. To discuss all of these details, we're joined by Bloomberg Tech editor Shona Ghosh. We're also joined by Marieke Blom, chief economist and global head of research at ING. So Marieke, welcome to London. It's so nice having you in the studio. Shona, I mean, there's just so much of tech going on. How does Korea's announcement compare to other regional plans? I mean, they really want to be at the forefront of this.
Yeah, it's pretty big. So the two companies who have sort of spearheaded this announcement around, as you say, about $500 billion of expenditure at SK Hynix and Samsung. So they've pledged to build new chip fabs, which means the infrastructure you need to make chips. And as we know, chips are pretty integral to the AI boom because we need them to power the AI data centers that are currently being built by companies like Microsoft, Google, etc. These two companies account for 80% of the world's market share for memory chips. So they're a pretty big deal inside and outside of Korea. And so sort of it is a very large expenditure plan. It's not outside the realms of what everyone else is doing. You know, the US is spending many billions of dollars across its different companies for AI data infrastructure. You've got China with an approximately $300 billion plan to build similar infrastructure. That's more being driven by the state rather than private enterprises. The EU, sadly, is lagging much behind. You know, we're talking sub $100 billion really for the EU's plans to build AI infrastructure. So the EU is sort of lowest on the list, but everyone else is in a similar position.
So, Marika, how do you look at the EU? I mean, I guess there's opportunities in some of the smaller companies. Again, ASML does have a kind of ecosystem, but how can Europe really take advantage of it?
Yeah, so of course for Europe it's mainly as a user. And that's the most important upside for Europe. What I believe is that there are reasons to be optimistic about that. I think contrary to some other technologies, the barriers to making use of it, so the initial investments are relatively low. Of course, you can all buy a subscription for a relatively limited amount of money. And of course, Europe does struggle with the productivity issue and with tight labor markets. So in that sense, I think Europe will benefit. But if you look, of course, at the broader ecosystem, most of that is in the US and then large parts of it in Asia. The ASML's ecosystem is about more than just ASML itself. And I think, relatively speaking, of course, the fact that semicon is benefiting, at least in the AI sphere. We don't have the model builders here. We don't have the hyperscalers here, but we do have some semicon. So relatively speaking, maybe for Europe, that's not too bad.
Shona, I mean, we have Mistral, right? Does everybody need the Ferrari of AI, or can Europe kind of have piecemeals? You know, can you have like smaller companies in enterprise trying to be the link between the Ferraris of AI and companies?
I mean, it'd be good to have a Porsche in the mix, you know. We don't need to be the Ferrari, but it'd be good to have some other supercar in that. You know, I think, you know, you've got China with its manufacturing power and state expenditure power. You've got the US where a lot of the tech is, and then Korea where a lot of the infrastructure is being sort of built out of, the chips, etc. It's hard to know where to position the EU in that. So while we do have promising companies, obviously ASML is the one everyone talks about because it has a stranglehold on a certain bit of the supply chain. We probably don't have enough there to sort of compete on the global stage. And I think it's showing, unfortunately.
Yeah, I think if you look at industrial usage of AI, Mistral is interesting. And that's one of the reasons why ASML took a stake in Mistral, because they believe that industrial production, manufacturing can really benefit from usage of AI. And that's really where they see the future going. Those models may be slightly smaller. We may also benefit from open source models. So I think in that sense, there are opportunities there. And I also think we should not underestimate the research capabilities that we have in Europe. Although, of course, look at what's happening here in London. They are typically being used by the large US model builders, but I think there are opportunities there, and we should look at it with a positive lens too.
And Marika, I mean, there's everything being thrown at us, right? It's still, we don't really know what's happening with Iran, US, the Strait of Hormuz, inflation. There's this, superpowered everything with AI. How much does your AI thinking change the perception of the economy and therefore where you want to be invested in 5 years?
I think, it's really a drastic change, but I think we tend to look a lot at the AI space itself. And I think over time we'll be looking much more at the impacts of AI, the AI users. It may disrupt entire markets. We don't know yet. It's just too early to tell. And I think we've gone from the phase where we're sort of like, there's a general skepticism about the impact of AI. People do believe that it will be impactful, but companies are slow in how they will use it, really. I mean, if I look at it, even my own team, right, we start adopting it, but it's going slower than you'd want it to go, always. But I think in 3 to 5 years' time, we'll be looking at completely different structures within services, of course. So that will really change the market, I think.
Shona, the trillion-dollar question is, when do we know if we can make the money back, right? So at the moment, there's this massive race, there's CapEx, I mean, it's $1 trillion, but we also know that the technology is expensive. We know that some firms are looking at some digital tokens and saying, well, why am I paying him less than actually what, he or she is spending on these digital tokens? So, where are we on valuations?
So the good news is there are signs that it is possible. So there was a report out last week by Exponential View that found that AI sales for the first quarter of this year slightly exceeded, and I am saying very slightly, exceeded depreciation costs, which is the sort of spread of spend on data centers. It's not accounting for all that money in one go. It's spreading the cost over the life cycle of the hardware. So what we have seen is that it is possible to make a little more revenue than the immediate expenditure. That could all go into reverse. That's dependent on the life cycle of the hardware, whether businesses are sort of up for paying the amount that they are for AI. There's lots of factors that could turn that the other way, but there are indications that it's not out of the realms of possibility. We're not there yet, but there are signs that it's positive.
Do you worry about it now, Marieke, or is that a problem for 2027?
The funny thing is, again, I'm looking at it from a European perspective. If those models in the end are not that profitable, that may slow the investment down initially. But as a user, of course, that's beneficial, right? It means that there's more competition in the market. There's not a huge markup. So, of course, that may lead to an initial sort of effect on valuations and so forth. But longer term, as a continent that's mostly using the models, lower prices would be beneficial. So I'm seeing that as an opportunity longer term for Europe.
Okay, thank you both. Shona Ghosh, our Bloomberg tech editor, and Marieke stays with us as we turn a little bit to the UK. Now, Andy Burnham is expected to pledge the biggest evolution of power in England later today. The former mayor of Manchester is preparing to give his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. Well, Bloomberg's UK government reporter Joe Mays is here. Joe, thank you for joining us. It's Monday. We're expecting, of course, this big speech a little bit later. We've heard very little from Andy Burnham since Keir Starmer announced that he was stepping down as PM. So how much do we know about what he's going to say today?
Yes, we know the broad outlines. We can expect to hear him say we need a big push on devolution. That's to say, moving power away from Whitehall to the regions of the UK, such that mayors can now be in charge of more budgets, more powers. And Burnham's view is that when you do that, you get better delivery, effectively, of government in those areas. Now, which budgets, which powers, we don't know. We expect Burnham to set some of that out. We also expect him to pitch a so-called number 10 in the north. That's to say, have part of the executive branch somewhere in the north of England, which, again, he hopes will focus and ground politicians more in what's needed in those areas rather than what's happening in the south, which often has historically been more benefited by government policy. What we don't think we'll hear too much of is things like, who will Andy Burnham appoint as his chancellor? That's a really important decision for the economy, for investors. We don't think we'll get more detail on that. He might say something about the UK's fiscal rules, which, up to date, he said he will stick by. But then again, some of his allies have been saying he'll be seeking flexibility within those rules. You've got Lord Jim O'Neill effectively encouraging him to borrow more, to invest in infrastructure. These are these huge decisions that Burnham will have to make on the economy. I think that's what we're really looking for, but I don't think we'll get too much detail on that today. So the focus today, devolution, moving power out of Westminster, but we're looking for that nitty-gritty on which budgets and which powers.
So interesting, Joe. Thank you so much. Bloomberg's UK government reporter Joe Mays. I know we'll all be listening to the Andy Burnham speech with us. Again, Marieke Blom from ING. Marieke, when you look at the UK, I don't know how much, we've seen some big moves in gilts. Of course, we're expecting this big speech from Andy Burnham, but then he'll be tested by the markets. He'll be tested by inflation. I mean, there's going to be a lot of challenges, especially when it comes to the fiscal situation. Yeah. So how do you look at the UK?
I would say he's a bit lucky there in the sense that oil prices have been coming down, so the inflationary risks are becoming a bit less over time. We don't expect the Bank of England to hike, although the market does. We would say that there is basically, with these oil prices coming down and with a not too strong economic backdrop, there's no reason for the Bank of England to hike. And that, of course, will give him a bit more room. And generally speaking, I would say that the markets are so on top of UK politics, that's so different from the rest of the continent, that it's very difficult for him to completely change his stance there.
How much, when you look at inflationary pressures, right? A couple of months ago, we were worried that central banks really had to hike. Yeah. Does it change your view also on what the ECB does next? If you look at the UK and the ECB, they're in vastly different places in terms of the level of interest rates. Yeah. the economies are different, but not that different.
Yeah, true. Well, we would say that, of course, the original stance in the UK was tighter than the ECB stance, right? So the UK would have cut interest rates were it not for the war in Iran. So in that sense, that's a big difference. We believe that the ECB will hike once more, but that's part of our scenario in which we see oil prices creeping up again to levels above $80. And of course, that's a big uncertainty right now. What we see is that the market has completely repositioned over last week. So initially, there were quite a lot of speculators still in the market, keeping that oil price a bit higher for a longer period of time. And now they've repositioned to such an extent that we believe that this is a market that's oversold. So we believe the prices will go up again. And of course, that would give the ECB a reason to hike rates one more time. We expect this week at Sintra that they will sound hawkish because, of course, they want to be sure to signal to the market that they're on top of this. But I think they will try to do a bit of a wait-and-see approach there because, of course, those oil prices will be so important for the actual inflation outlook, but also for inflation expectations. So in that sense, I think they will try to buy some more time. Then again, given our current scenarios, we expect them to hike again. But should oil prices behave differently, they will probably reconsider.
Okay, Marika, thank you so much for joining us. Marika Blom, their Chief Economist and Global Head of Research at ING. Now, coming up, with Europe divided on military spending, we speak with Eric Lee, the Chief Executive and President of the Norwegian defense firm Kongsberg. That's coming up next, and this is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, the U.S. and Iran have agreed to halt attacks on each other following a flare-up over 2 vessels that were struck within the Strait of Hormuz. Let's get to Bloomberg's John Hersovitz. John, talks due to continue in Qatar, so what can we expect?
Sure. We're trying to see if we can get movement on the basic of the Memorandum of Understanding. Now, the key issue is going to be the Strait of Hormuz after what happened over this weekend. Iran has talked about some sort of management, maybe in conjunction with Oman, which could involve fees being paid. The U.S. explicitly last week said that this was a red line. Trump said it. Secretary of State Marco Rubio said it. So that's going to be one of the key issues. And also trying to get shipping to return. Before the back and forth last week, there were about 70 ships that made a daily transit. The weekly average before the war was about 135. There's caution in the shipping industry because of the attacks that happened over the weekend. So key issue, and then all the other issues from nuclear to sanctions relief. A lot on the table.
Thank you so much, John, for the terrific briefing. John Hersowitz there with the very latest on Hormuz. Now, European defense spending remains divided, especially within southern and western countries that are struggling with tight national budgets. Now, as NATO prepares to convene in Ankara next week, focus now turns to how Europe can rebuild and advance the defense sector. Well, I'm delighted to be joined by Erik Lie, the chief executive and president of the Norwegian defense firm Kongsberg. So, Mr. Lie, thank you for joining us. When you look at European defense industry, are they in a place where they can actually scale up and meet the demands that NATO leaders have said fast enough?
Yeah, I think, we see definitely improvements throughout the last year. We can see it from the budgeting, but we also could see it from an increased spending on, building up capacity. We are not at the level that is needed, but we see a positive movement forward to achieve some of the targets. But what we definitely see is that the need for spending to increase capacity is definitely built into many of the governments in Europe.
What are the main AI-driven changes for modern defense systems in which Kongsberg is fully focused on?
Autonomy combined with artificial intelligence is really important for Kongsberg going forward when it comes to looking at the technology. We are involved in a lot of these things, both underwater, but also on ground and in the air, and also as part of our air defense system. So AI is part of the equation when it comes to get good solutions for providing the soldiers with the best tool that they can utilize.
But, Mr. Lie, so when you talk about, autonomous or autonomy or unmanned systems, will they be the bulk of what you're selling and doing in 4 or 5 years? How much is that acceleration?
I think we will see a trend that more and more autonomous system will be fielded because you don't want to put soldiers in the front, and I think that will save lives. At the same time, this technology-driven effort needs to go hand in hand in having control. So I think this is the technology is going forward in that area, and I think also that the different armaments in Europe taking that direction as well.
How do you see your company changing in the next 5-6 years? If we look, for example, at the naval strike missile, how much of revenue and how much bigger will that be in the next, 5 years or decade?
We have seen a scale up in our strike missile capacity, both for naval strike missile and also joint strike missiles to be part of the F-35 fighter jets. And we saw this started back in 2018. And we have a really steep demand for our missiles. And that has made us being aware of this so that we have built up capacity both in Europe, also factories in the US and Australia is under construction. So we are actually able to secure that we are able to deliver on the demand we see now in our order backlog, but also looking into the prospects going forward in the next few years.
So in the next few years, where do you also see the regions, I guess, that represent the biggest opportunities for some of your new missile sales beyond current NATO members?
I think we think that the most growing area for us is Europe. US is very important as well. So those are the two main regions. At the same time, we see also countries like Australia, Japan, Canada, they are ramping up and buying our missiles. So I think those areas are also of very much high interest to us. But we definitely will see a ramp up in many countries, but particularly in Europe. And at the same time, we will also see a ramp up in US, as I think it will be.
Mr. Lie, the French defense firm Safran is in talks actually to buy Sea Drone from Excel. Did you consider making a bid for Excel?
No, I cannot comment on those M&A activities. You know, we have stated that we look at M&A as an active tool to support our growth ambitions and also to support what we are doing, but I cannot comment any specific alternatives in this case.
Understood and fully respected, but if you were to buy something, in what space would you be looking at?
You know, we have our core products, that is air defense, missiles, remote weapon stations, anti-drone systems. So everything in that category could be of interest. At the same time, we look at two new frontiers, like the space, or we call it space for defense. But at the same time, we also see that underwater domain, underwater warfare, is definitely of high interest to us, especially with Kongsberg having a technology backbone for underwater technology. So those two frontiers are definitely also of our agenda.
With increasing production volumes, what does it mean for pricing? Does it stay favorable, or are the conversations with governments more difficult?
No, I think we have a very professional dialogue with the different customers and governments. You know, we normally when you scale up, we could be able to take out cost to be more efficient, so that is good. At the same time, we want to secure that we also are building the future by investing into new products, R&D, and do innovative things to support what we are doing. So this is a combination, and we try to be stable on the price levels.
Where is your biggest supply chain risk right now?
No, you know, I think in general, our main focus every day is to deliver of our quite huge order backlog. And if we control ourselves, which I think we are doing quite well, we need to secure that the supply chain is working together with us. So our daily work is to actually secure that our suppliers are able to ramp up, invest enough, and deliver to us. So our plan and what we are doing right now is to build up capacity in 3 regions, being Europe, being US, being Australia, to secure that we have multiple sources for many of the things we need as part of our supply chain. So I think that gives us a more robust and resilient supply chain so that we can deliver on our promises to the government and customers.
And so when you're looking at your margin expansion, how will that change in the upcoming years?
No, you know, our expansion will probably be in all these places where we now have production. And we will also hire more people around the globe, especially in these 3 regions, to be more local in the different places. I think that's also a demand from the governments and customers to be able to be more localized in different countries.
Mr. Lee, when you look at all of the opportunities but the challenges, I mean, nothing is really great to come out in terms of wars and instability. What do you worry about the most, actually, concretely?
No, I think we all hope for a peace in Ukraine on fair terms, because that will be in all interest. But definitely the geopolitical setting with all the different conflicts and things that are going on, I think it's really important that we continue to build up the capacity for defense in each of the countries, especially in Europe, to step up and continue the path we are on. It's difficult to predict the world in a few years from now, but I think the best we can do is to secure that we have a defense that could really make a difference and to tackle a different situation we might end up in.
Thank you so much for joining us today. Eric Lee there, the Chief Executive and President of Kongsberg. Coming up, we'll be joined by Jeremy Allaire, Chief Executive of the stablecoin issuer Circle. We'll discuss the company's new blockchain project and how it's faring 1 year since making its IPO. That's coming up next, and this is Bloomberg.
there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. South Korea unveils a record spending plan for AI, with Samsung and SK Hynix set to invest more than $500 billion. The U.S. and Iran reportedly back away from a fresh escalation of their conflict, with negotiations set to continue this week in Qatar. Plus, Andy Burnham will pledge the biggest evolution of power in recent English history in his first major speech since confirming his intention to replace the UK Prime Minister. Now, the European Union's trade chief is meeting his Chinese counterpart today as the bloc pushes Beijing to address a widening trade imbalance. Now, the talks come days after EU leaders ordered the Commission to start preparing possible defensive measures. To assess the state of negotiations, we're now joined by Bloomberg trade czar Brendan Murray. Brendan, thank you so much for joining us. So what is on the agenda for both sides?
Yeah, look, the European Union is taking it really from both sides now. We had Donald Trump on Friday going after their digital services taxes, and now we have these talks taking place in Brussels to where the escalation, or at least the rhetorical aspect of the relationship between Brussels and Beijing is really starting to deteriorate, and both sides are trying to draw some lines over which neither one wants to really cross, and that is a full-scale trade war. And so the Chinese have come into this with the attitude of, we can outlast you, we have a pain tolerance that's greater than yours, we don't have the dependence that you do on critical minerals. And so the Europeans are really facing a difficult task at the moment, all the while the auto industry, the German auto industry in particular, is announcing tens of thousands of layoffs. And so the pressure is really building on the Europeans to do something to counter this wave of Chinese imports that are just making the trade imbalance get bigger and bigger.
Brendan, Chinese state media has accused the EU of a lack of sincerity in the preparatory talks. So we also have this EU talking about defensive measures. What is the current state of EU-China trade relations?
Yeah, I mean, look, it's the EU did put some tariffs on all electric Chinese-made vehicles, and that did have an effect. But there are all these other sort of hybrid vehicles where China's market share is growing rapidly. And so that we could see some issues like tariffs. The Europeans are also talking about diversifying their supply chains. That was something that the G7 industrial nations had agreed upon a few weeks ago. And so the message from the Europeans is basically we need to de-risk, diversify away from China. And to China's ears, that strikes a protectionism, and that will trigger some more offensive measures from China if that's what the Europeans decide to do.
Brendan, thank you so much. Brendan Murray there with the very latest, of course, on EU-China. Now, key stablecoin player Circle is preparing to launch its own blockchain project called ARC. Pre-sale investors in the tokens include Wall Street giants like BlackRock and Apollo. It comes as a crypto firm looks to overcome headwinds in the sector since its IPO last year. Well, with us now is the chief executive of Circle, Jeremy Allaire. Jeremy, I'm so happy to speak to you because actually there's quite a lot going on in your space. You're doing quite incredible things. When you look at your ARC token designed for your ARC blockchain, when will that launch?
So what we've said is, ARC has gone through a period of testing, and we are, getting ready for liftoff, as we say. The mainnet launch, which is sort of the full commercial launch, is coming soon. We've had hundreds of companies working with us as we've built this, and of course some of the leading payments companies, capital markets companies, asset managers, digital asset companies. So we're gearing up and very, very excited about the upcoming launch.
So how do you think it will actually be used?
Well, one of the things that we've had the benefit of is we've been working in this space for 13 years. We've watched as this technology has matured from very, very raw early technology to where we are today, and ARC represents what we believe is a sort of fourth generation of this technology. And it really is a departure from what I like to broadly call like the early adopter speculative phase of this technology, and now moving into more of a mainstream scaling phase where it needs to be designed with the needs of major financial institutions in mind. And so ARC, I think, to your question, is going to be used by banks, by major payments firms, by asset issuers, asset managers, but also builders and startups. One of the things that's been most interesting about the testing period is that an enormous amount of the startup builders who are coming and building on ARC are building agentic applications. They're using AI as a primary way, not just to build, but actually they're building systems for AI to interact with all this on-chain financial infrastructure. And so it's both the traditional space that are bringing their products into the on-chain world, and that's across nearly every segment and geography, and it's this whole new wave of startups who are AI first in what they do. Yeah. And so that's one of the things that we're most excited about, and we've built the infrastructure to be in a very purposeful way for the agentic economy.
I mean, you've had some really impressive participants in the token pre-sale, right? We're talking about BlackRock and Apollo. I mean, they're investing in it now where crypto is going through, I guess, a bit of challenges because they want to use it for themselves, or are they seeing opportunities for everyone else as well? Yeah, I mean, look, I think, the trading of speculative cryptocurrencies is very different than the development of blockchain technologies. Right. And I think, every single week, nearly every single day, what we're seeing is major financial firms, and this is in every country in the world, are upgrading to use on-chain infrastructure. And so while the kind of early adopter speculative cycle might not feel great to those that have spent their time on that, the maturation of this as an infrastructure, this what we call the internet financial system, this infrastructure is here. Governments are all figuring out how to enable the firms in their markets to safely interact with it. And so I'm more constructive than I've ever been about how this technology is actually being used for real-world activity, whether it's real-world assets coming on chain, payments activity coming on chain, and now agentic activity coming on chain. How big will this be for you? How much will it improve profitability?
Well, we haven't given specific guidance on how ARC will kind of shape our financials. We did share with the street in our last earnings that we would be updating our guidance in an upcoming earnings report. But what I would say, and what I can say is, this is a very significant new platform initiative. It's been in the works for a couple of years, and we view it as one of the largest opportunities that we've ever had, and it could be as large as USDC itself. And so this is a major, infrastructure platform that we think, as an economic operating system, can undergird an enormous amount of how the economy becomes fully digital and how the economy comes natively onto the internet. So we view it as a huge opportunity.
It also means that you just have much more offerings, right?
Yeah, I mean, we've really, this is an interesting kind of thing to think about. When we went public a year ago, we were the stablecoin network, right? And that is the heart of the business, and it is huge. But since going public, we've launched a payment network, CPN. We've launched ARC, or we're in the process of launching ARC, I should say. These are two major new platform pillars that both, represent significant expansion of the role that we play. And we've launched our agent stack, which was a more recent platform launch, which is really bringing us into the whole realm of AI agents, helping people who build them and operate them.
Jeremy, a lot of your support still comes from Coinbase, but I guess it's not exclusive, right? So they could decide to go, support another stable coin or things like that. How do you think about that?
A couple general thoughts. I think one is there's an enormous amount of what I like to call co-opetition in this industry. But
I like that, co-opetition.
Co-opetition, yeah. That's I forget who came up with that, but. And you see this in lots of tech sectors. You see, for example, Anthropic buying from XAI, or Google buying from, Anthropic, and Microsoft buying from, all these different players buying each other's, using each other's infrastructures, platforms, et cetera. And we've seen that in cloud. We've seen that in consumer internet. Google wants their apps on the iPhone, all these things. So in this space, as we become a full stack platform play, where we're at the infrastructure level, the application level, the digital asset level, we're going to collaborate and cooperate in a lot of different places. We're going to support other stablecoins besides USDC on ARC and in our payment network. We're going to put our own assets on lots of competing blockchains, even if we're in the blockchain space ourselves. And so there's going to be a lot of co-opetition, and for us. With our core digital assets, USDC and EURC, for example, we've done a very good job of building a wide range of partnerships and distribution partnerships. We have partnerships now with so many major companies around the world who are distribution partners on our network, and you're going to continue to see that expand as more mainstream companies get involved. And so. That is sort of how the market looks today.
Would you ever renegotiate with Coinbase, or do you see that as something that may have to happen at some point, and under what circumstance, or how would you renegotiate?
What I would say is we have a very strong relationship with Coinbase because we're both focused on the growth of the USDC network, and we're both incentivized to drive that growth, and we work together all the time to make sure that. This network can continue to grow and have great partners in it. And so there's a lot of collaboration that goes on there.
I know you're a little bit of I don't know if it's a win-stop tour in Europe, but what are people asking you the most? I know when you sat down, we were talking, you were saying, look, it's the fact that we're going through this agentic life where we'll have agents on our behalf acting. What does it mean for your industry?
It's a fascinating time, obviously, on so many levels, but something that we've been paying really close attention to for a couple of years, but now in the last 6 months we've seen really start to accelerate, is this ability for companies and developers, people who build solutions, to kind of decompose cognitive work into AI agents. And that's accelerated at an incredible pace. You're seeing organizations look to transform themselves by deploying agents inside their organizations. We're doing that at Circle. We're deploying agents in every single business function. But we're also seeing an agentic economy develop where agents are being built that themselves can offer services to other agents. And so we see a huge opportunity there. We see an opportunity for all of these builders of AI systems to have a new system of monetization using transactions that are orchestrated on blockchain. So agents themselves need an economic substrate to work with that works everywhere in the world, that can do a transaction from a penny to large, and that is essentially built for machines and machine programmable infrastructure. So something like Arc and on-chain infrastructure are really purpose-built for this age of agentic. And so this agentic economy theme is going to keep coming up on many levels. And so that's absolutely been on a lot of people's minds.
As I'm sure. Jeremy, thank you so much for the terrific briefing also so that we understand what you're doing a little bit more. Jeremy Allaire, they're the Chief Executive of Circle. Now, coming up, we have a new report highlighting the key pressure points facing the global economy. So we'll unpack the findings next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back, everyone. Now, Kevin Warsh and three other veterans of the 2008 global financial crisis are sharing a stage this week at the European Central Bank's annual symposium in Portugal. Now, it's the new Federal Reserve's chairman debut public appearance outside the U.S. since taking office in May. Now, we're joined by Jamie Rush, Global Economics Director at Bloomberg Economics. Jamie, it's going to be exciting. We really want to hear from Warsh. He's the new guy in town, and he'll maybe try to say as little as possible in Sintra.
Yeah, we're still getting to know Kevin Warsh, right? We know that he's not a sock puppet, as he was accused of being before taking the position. He's endorsed, or at least he seems comfortable with keeping rates where they are. But what he has told us is that he doesn't want to tell us anything. He doesn't want to tell us what the future holds. He doesn't believe in forward guidance, which is one of the central tenets of central banking over the past 10 years. He doesn't want any of that. So he's not going to be telling you what he's going to be doing with rates. But I think actually we may just, because it's central bankers, because it's central banking, we may get a flavour of that debate, actually, because on his side, he doesn't want to tell you anything. Lane, Lagarde, they prefer to do forward guidance still in some sense. So there's going to be a bit of a clash, and we can see where they lie.
Yeah, I'm looking forward to actually the big panel discussion. There's also been a lot of discussion among central bankers about how AI changes our economy, the impact on jobs and inflation. Is it a bit too soon to really delve into it?
No, they're going to be delving into it. And there's also, it won't be just jobs and inflation, it'll be productivity as well. I mean, that's how they'll map to inflation, looking at jobs and productivity. And what we see at the moment, of course, is that you've got all the spending with the AI boom pushing up demand in the economy, but none of the productivity gains yet, or very small productivity gains. And so they'll be considering that. They'll also be considering economic sovereignty. We used to think it was enough just to piggyback on US innovation. actually, when it comes to economic statecraft, they can't do that because you can switch off the models. So there's a lot of stuff to talk about, financial stability as well. So AI is going to be the dominant theme of the meeting.
Thank you so much. Of course, Jamie Rush from Bloomberg Economics. And then we're live in Sintra from tomorrow. We have some great guests lined up, including the ECB's chief economist. And then I'll be speaking to the heads of the central banks of the Netherlands, Belgium, but also Finland. Now, as policymakers at Sintra prepare to discuss the dangers facing the world economy, a new report highlights biggest threats to global prosperity. They include an AI bust, inflation, and fiscal stress. So let's get straight to Frank Smets, acting head of the Monetary and Economic Department of the Bank for International Settlements, which published the report. Frank, thank you so much for joining us. If you look at the sustainability of the AI boom, what do you worry about today? Is it the same thing that the markets, or is there even a longer-term impact on what this could do to financial stability?
Well, clearly, I mean, the AI boom has many advantages. And I mean, it is a big change to how we work. It will affect productivity, and it has affected economic activity already through the investment boom and through very rich equity markets. What we point to in the report is that this also comes with vulnerabilities. We make a comparison with previous innovation booms, and most of those have led to some type of overinvestment as there is a race for market share. Secondly, these booms, because they happen so fast, can also run into supply constraints, and we do see that some of the prices of the materials that are inputs are rising, like the price of memory or microprocessors. And then finally, one of the things we point out is that, of course, over the past 2 years, this boom is more and more financed by debt. So it becomes leveraged, often through private credit. It's not always very transparent where the credit risk lies.
So if you look at some of the things that you were explaining, if you look at, safeguarding price stability, ensuring fiscal sustainability, what does it mean for policy? What do they need to be mindful of?
Well, I mean, we are in a world where, there's much more price volatility, particularly in energy markets. And what that means for central banks is that they need to focus on medium-term price stability for the benefit of the general public. Now, what it actually means in terms of interest rates varies across countries because initial conditions are very different. But there is this trade-off between, on the one risk is that they raise interest rates too much, and that has then a negative impact on financing conditions and the economy. The other risk is that they increase interest rates too late, and then inflation takes off, becomes persistent, and then they have to react much more strongly later.
So, which is what you're calling for policy discipline, and it changes by, region by region.
Exactly. Central banks particularly should focus on what for most of them is their primary mandate, which is price stability, keeping prices stable.
Mr. Smets, we just had a great conversation with the chief executive of Circle. How do you look at stablecoins? Are they a longer-term risk to financial stability?
Well, in our report, we do look at the future of the monetary system in the digital age. And we think there needs to be cooperative efforts along two tracks. One is indeed to address some of the weaknesses of stablecoins to make sure that they're trustworthy as money. And secondly, is to bring in the tokenization into the two-tier financial system. So make sure that in the digital world, also central bank money can be used as a safe settlement asset.
So, I mean, is it regulation that needs to happen, or how do you see the way forward for this?
I mean, it depends very much, but there is, on the one hand, regulation, and the authorities need to decide whether they want to make stablecoins more money-like, in which case redeemability at par is very important. In that case, also preventing illicit finance will be very important, or whether they want to have stablecoins more like securities, so like tokenized money market funds. So that in that case, it would be like an investment asset like any other one.
Mr. Smets, what's the BIS working on? If you look in general also about AI valuations, I mean, there's a number of things that we can worry about. I mean, what's your the game plan that's more likely in the next 12 months?
I mean, what our task is, of course, is to point to some of the risks. Equity valuations are quite stretched. Credit risks are tight. And as I mentioned before, there's increasing leverage in the financing of the AI boom. And so for supervisory and regulatory authorities, that means, on the one hand, that in terms of supervision, some of the credit risk exposures need to be addressed and need to be made transparent. On the other hand, we also argue for what we call congruent regulation. Basically, it means that similarly stringent measures are applied to similar risks, whether they take place in the banking sector or in the non-bank financial sector, like through hedge funds.
Yeah, and this is, you also have in your report the fact that the expanding role of non-banks could amplify and I guess accelerate the transmission, for example, of market stress. How much of a worry is this?
Yes, we have a special chapter on exactly this interplay between high government debt, near record high government debt in many advanced economies, and the increasing role of hedge funds, which are highly leveraged investors in those government bond markets. And when financing conditions are relatively easy, as they are now, then actually that helps the financing of government, particularly in a time when central banks are withdrawing from holding government debt. But when times change and you have shocks to financing conditions, then that liquidity can dry up very, very quickly. And so it's this type of fiscal risk repricing events, as we call them, that worry us.
Okay, thank you so much, Mr. Smets. Frank Smets, they're acting head of the Monetary and Economic Department at the Bank for International Settlements. Now, Serena Williams will make a surprise return to Wimbledon this week after being given a wild card. The 23 Grand Slam winner has not played a competitive match since 2022. She's scheduled to take on world number 53 Maya Joint on Tuesday, and her comeback was welcomed by the former men's world number one Rafael Nadal, whom I sat down with last week. Serena Williams is returning to Wimbledon. What do you think about that?
Great news.
Why?
Because if she's coming back, it's because that's what she wanted, because she doesn't need it at all. So it's a great news for her that she's committed to go on court again in a professional stage, and because the best female athlete of our sport it's on court again, going to be very, very positive for the fans.
Will you watch?
Yeah, of course.
And you can see the full conversation with Rafael Nadal on the next episode of the podcast Leaders with me, Francine Lacroix. Subscribe wherever you get your podcast, but also catch it on Bloomberg TV next Monday. Up next, it's a Bloomberg Brief, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. and Iran agreed to halt attacks after days of escalation. Talks in Doha set for this week. South Korea prepares for massive AI investments led by Samsung and SK Hynix, planning to spend $880 billion. And U.S. stocks looking to bounce following investors' rotation out of chip makers' jobs report on deck later this week. Let's get a check on markets around the world now. We'll begin with Winnie Su in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. As you just mentioned, the big news today in Asia is that massive investment pledge by Samsung and SK Hynix to build chip-making facilities and also to invest further in data centers. Now, that has also come with the support from policymakers, and hence, in fact, we saw Kospi, although closed down in the red, actually rebounded from a sharp decline of 3.4% earlier today. And the gains are specifically seen in sectors like power and also solar that are related to the AI infrastructure. And that's why we are seeing that the Kosdaq is up about 8%. Now, Samsung and SK Hynix still down a bit amid that broader rotation away from tech that has done well. However, you flip the board and take a look at the broader Asia market supported by that the sentiment from the South Korea's overall investment in AI. That's why we are seeing MSCI Asia here up about 0.2%. Also seeing tech continue to lag, but the outlier here is HS Tech, seeing a bit of a dip buying after the week, after having its worst week since October. Back to you, Bonnie.
Winnie, thank you so much. Winnie Su there in Asia. Now to London for a look at Europe. Here is Justina Lee.
Good morning, Bonnie. Now, it's a less sanguine picture here in Europe with the Stoxx Europe 600 reversing those gains we saw earlier this morning, and it's now down. Now, the tech shares are still leading those gains, but of course, tech shares are a smaller part of the European market. Now, when it comes to fixed income, we're seeing a slight gain in the German two-year bond yield after Spanish inflation stayed stubbornly at 3.6% in June. And I think that might also be feeding into some of the strength we're seeing today in the euro-dollar cross rate, because traders are kind of pricing in the chance of an ECB rate hike for the rest of the year a little bit more today. But if you kind of flip the board here and we look at the longer-term trend in the euro, we've actually seen quite a bit of depreciation to the extent where the euro is actually at a one-year low versus the dollar.
JP Morgan and Morgan Stanley coming out to say that they even see that cross rate getting to 110 kind of over the next year because of a hawkish Fed. And of course, the next data point we're looking at in terms of that is kind of the euro area CPI coming out later this week, and kind of that will have an effect on kind of where this currency evolves. Money.
All right, Justina, thank you so much. Justina Lee there in London. Here in the US, we are looking to bounce as we head into a holiday-shortened trading week. Last 2 days trading not just in June or the quarter, but the half. We are halfway through the year at this point. Obviously, there's been some repositioning of portfolios. There may continue to be for the next 2 days. Last week, for example, tech and telecoms had their second worst week of the year, and we ended Friday down 1% on the Nasdaq 100, but it looks like we might be bouncing by that much again today. S&P futures also higher, and Russell 2000 futures higher. The Russell 2000 has been outperforming the other benchmarks. Also, the equal weight S&P 500 hit a record as well on Friday. Let's take a look at the bond universe, because, of course, Kevin Walsh will be speaking at Sintra this week, and we'll be looking for anything out of the jobs report that might give us any kind of a hint as to how FOMC thinking will be evolving. The 10-year yield staying at 434.84, no change there, no change at the back end. We are up just a basis points, creeping back ever so slowly higher. And then oil, right? We put on just a few cents after we saw some escalation over the weekend that seemed to damp down a little bit as Iran and the US decided they're going to continue talking in Doha this week. And that's your picture for this Monday morning. Let's get some individual movers now. Here's Chloe Melly.
Good morning, Bonnie. As we have been talking about, SK Hynix and Samsung are set to invest $880 billion to fuel this AI boom in South Korea. And we're seeing actually this read across in U.S. stocks who happen to be suppliers to SK Hynix and Samsung. So the likes of Lam Research, Applied Materials, Qualcomm, and a few other companies that we could not fit here on the board are in the green this morning on the back of this investment pledge from South Korea. Moving on to BioLife Solutions, a medical supplies manufacturer that is also up this morning after being set to attract takeover interest from a range of parties, including Repligen. And so we are seeing this sector more generally have a lot of consolidation, and BioLife Solutions might be really the next name there. And we're up about 4.6%. And finally, Bridgepoint in London is up after buying Kane Anderson Real Estate for $1.4 billion. This is the first push for that UK company into the US property market, and we are seeing investors react very positively to that. We're up more than 10% in London this morning.
All right, a nice move there. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up in this hour, ECB President Lagarde set to speak later today. Fed Chair Warsh also at Sintra this week. We'll discuss more with Ella Guda of BNY Investments Newton. But first, oil giving back some of its gains. This after the US and Iran have paused fighting before peace talks resume this week over the Strait of Hormuz and, of course, other issues. Joining us now from Dubai is Dana Crate. Dana, great to chat with you. Obviously, we saw the escalation over the weekend. Several weekends in a row, we've seen that now, but peace talks do seem to be resuming. What will be heaviest on the agenda? What are the most difficult and thorny issues that need to get sorted out?
Yes, good morning. Indeed, the U.S. and Iran will continue these technical talks this week. And as we saw from a report earlier, that it will be held in a few days. There are other reports saying it could be in Doha, Qatar, so here in the region. After this escalation that we saw over the weekend, where I think both sides just want to assert their positions and assert their power over Hormuz. Hormuz still is, of course, at the heart of what we saw this past weekend, and it will be at the heart of these discussions. Although Iran, I think, wants to focus on the unfrozen assets, wants those transfers of assets that are held in Qatar. We saw the Iranian President Masoud Pezeshkian saying earlier today that they agreed that $6 billion out of the $12 billion held in Qatar will be released to them. Didn't specify when, although I think we should wait for the American side and the Qataris to confirm whether this will be released. I think in these technical talks, of course, sanctions waivers, of course, the frozen assets, Iran definitely wants to pump some money into the economy to revive it a little bit after the war with the U.S. and Israel. And of course, again and again, it will be Hormuz. Hormuz is definitely the thorniest issue, would be on the agenda. And Iran and Oman today held a meeting, part of this joint committee, to see how they want to administer the strait. Still, these negotiations are ongoing between the two.
These weekend flare-ups, Dana, do we expect to see them continue? I mean, Hormuz traffic drops off every time this happens, of course, because vessels could be easily attacked, right? And then come Sunday evening, everyone says they're going to talk again and these flare-ups stop. But is it a permanent stoppage now or no?
I think we will see more of these skirmishes, right? But the ceasefire is still holding. I mean, the U.S. wants Iran to understand that they don't have a free hand over Hormuz or the region, that they can strike a container ship whenever they want to. We saw that the container ship was struck by Iran on Thursday, and then another one 2 days later, and the U.S. responded in both terms. I think what would be worrying is what the U.S. president said on Saturday after retaliating against Iran. And he was saying, you know, there might come a time where we cannot be reasonable anymore, and I have to finish the job militarily, or I have to militarily completely finish that job. So this is the worrying sign, although I think both sides want to hold on to this ceasefire. One, I don't think the U.S. would want to reimpose the blockade, or Iran wants that. The free flow of vessels into Hormuz has definitely, dropped down the price of oil, which is important for the U.S. president. And of course, it's important for Iran that it allows for its own oil to flow back again and sell them, especially now after the sanctions waiver. So I think we might still see these skirmishes just because, you know, Iran and the U.S. want to reassert themselves in this war, which is frozen now, and of course in the Strait of Hormuz, but that the ceasefire so far has held.
All right, Dana, thank you so much. That is Bloomberg's Dana Krish in Dubai. In Asia, South Korea announcing investments of $880 billion from companies including Samsung and SK Hynix into chips and data centers. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. Samsung and SK Hynix taking the lead here. Tom, what exactly are they planning to build and in what time frame?
They are taking the lead. They're taking the biggest chunk of that $880 billion investment, the two companies. Between them, planning to build two fabs or production facilities for chips, of course, each. So 4 in total over a 10-year period. The South Korean government also promising that they'll make sure that there's the land, the water, the energy to fund and support those facilities. So those on the fab side, on the production side, but they're also getting data centers, plans for those to be built, and robotics facilities. All of these within the context of a South Korea that is very much looking over its shoulder at the competition. Of course, both SK Hynix and Samsung lead when it comes to the market share they have in high bandwidth memory, but they also do NAND and DRAM memory chips as well. And we know that China has its own 5-year plan, close to $300 billion. That is part of the Chinese calculation. So very much framed in terms of the competitive challenge that South Korea faces itself in. And of course, in this environment where there is just massive demand, particularly for memory, but also for NAND and DRAM, particularly for high bandwidth memory, but also other parts of the memory space. And that is expected to continue in the years ahead. So it's trying to address that need whilst also making sure that South Korea itself remains at the front edge when it comes to this AI competition.
All right, Bloomberg's Tom McKenzie, co-host of Bloomberg Tech Europe. Thank you so much. Now to other top stories trending on the terminal this morning. British American Tobacco is cutting 9,000 jobs to reduce costs. That's about 1/5 of its global workforce. The maker of Dunhill and Lucky Strike has been struggling with falling demand for traditional cigarettes. Verizon and British Telecom BT Group are creating a joint venture for their international businesses. They will have a combined yearly revenue of around $4 billion. Verizon will pay BT an equalization payment of $625 million. If the deal is approved, both companies will have equal voting rights. China is expanding export curbs on Japan, adding 20 more organizations to its control list and another 20 to a monitor list. The move deepens tensions with Prime Minister Sanae Takaichi's government. The restrictions are an expansion of curbs introduced in February, this time targeting defense research groups and affiliates of Mitsubishi. Coming up, we'll drumbeat to Andy Burnham's speech scheduled for later today in his bid to become the UK's next Prime Minister. This is Bloomberg.
the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Andy Burnham is expected to give his first major speech today since confirming his plan to succeed Keir Starmer as UK Prime Minister. Excerpts released from the speech show Burnham pledging the biggest devolution of power in British history. He'll be giving local authorities more decision-making powers. Bloomberg's Lizzie Burden joins us now from London. How will this devolution work, Lizzie, and does he need permission to do this?
Well, good morning, Bonnie. And the speech expected to come from Manchester, just underscoring how important devolution is for Andy Burnham. Of course, he used to be the mayor of Greater Manchester. And you might ask, is he going to be so keen on devolution if you have other parties taking over, for example, that Greater Manchester morality that he has just left? In terms of how it's going to work, he wants re-industrialisation outside of London. That's the push he's going for. So Whitehall departments are going to be expected to gauge which areas under their remit can be transferred to regional governments. It's going to be a massive push that would hand capital budgets to the mayoralities. But yes, this question continues. Is he going to feel as passionately about devolution when he's in the centre of government?
Absolutely, and if he'll be voted in based on that kind of a platform, maybe that will be a popular platform. Who are we looking to see make a return? Any characters of old, Lizzie?
Well, look, this speech today is a massive moment for Andy Burnham, setting out his economic policy. Really, the market tuned into this, and because so far we've only heard snippets of what it might be from his time in Manchester and from people who we know to be advising him on economic policy, the likes of Andy Haldane, the former Bank of England chief economist, Jim O'Neill, former Goldman Sachs economist. But when it comes to who the Chancellor will be, we just don't know, and it's not even likely, according to sources, that it's even going to be announced in this speech. But names swirling around include Ed Miliband, the Energy Secretary. He has done a lot of work to help Burnham into this position. We know that he was putting pressure on Keir Starmer to set out a timetable to resign. But he's something of a scary figure to the markets, you might say, coming from that wing of the party. Other names floating around include Shabana Mahmood, the Home Secretary. She's thought to want to stay in her position, but a dark horse candidate could be Pat McFadden at Work and Pensions. He might be seen as more of a facilitator to Burnham's strategy, though nonetheless very competent when it comes to Whitehall, a Labour veteran in the party.
All right, Lizzie, we'll wait for the details after that speech. That is Bloomberg's Lizzie Burden. Thank you. Staying in Europe, central bank leaders gathering in Sintra, Portugal for the ECB's annual symposium. ECB President Christine Lagarde expecting to deliver opening remarks at 3 p.m. Eastern. Bloomberg Economics editor Zoe Schneeweiss joins us now. Zoe, what will be the main message out of this particular Sintra?
We're expecting Lagarde to be very clear about the ECB's worry about uncertainty. So we know the ECB became the first G7 central bank to hike They did that just this month. Now, the uncertainty message she wants to push is that they might hike again, but they currently are a little bit in the holding pattern. After that peace deal that we had, the ECB has said that there is no forceful reason, Lagarde has said there's no forceful reason to push on. The other thing that'll be exciting is that this week Kevin Walsh will be in Sintra. So this will be the Fed chief's first international appearance in front of an audience. This weekend already he was in Basel, but that was behind closed doors. So it'll be really interesting to see how Lagarde interacts with him. But tonight it'll be very much about where's the euro area at, where's inflation at, what's next for rates.
Exactly, and whether anyone in power thinks that a mistake was made potentially in ECB monetary policy decision making recently. As for Walsh, as you say, it's really only a second time in public speaking, so there'll be a lot of eyes on him. Will he talk about price stability in the United States, or will he focus more on AI and productivity? As we know, many central bankers recently have been talking about overinvestment and the risks that that might bring, and have mentioned the US, have called out the US specifically.
Yes, that'll be an interesting situation. That'll be on Wednesday. He's doing a joint panel with Lagarde herself and with the central bank chiefs of Canada and of the BOE. Now, the ECB and the Canadian central bank just have recently called out those worries about AI. It's a 1-hour panel. I'm sure what's called interest rates will be front and center, but AI can't be ignored right now, so we are anticipating there'll be questions and there'll be comments on that, on what AI means and also what AI means for financial stability.
Exactly. Zoe, thank you so much. That is Bloomberg economics editor Zoe Schneeweist. The European Union's Trade Commissioner and China's Commerce Minister slated to meet in Brussels this week, where the EU hopes to address a widening trade imbalance that reached about $410 billion last year. Let's get more with Bloomberg's Suzanne Lynch in Brussels. Suzanne, there's been an imbalance for a long, long time. What is empowering Brussels, or maybe forcing Brussels, to try to address it head on now?
I think there's a growing realisation that the European Union is facing a China problem when it comes to this ballooning trade deficit, and in particular how it's impacting some of those core industries in European manufacturing. Top of the list is the car industry. I mean, in the last few days, we've seen more headlines with big cuts coming from Volkswagen in particular. And the European car makers have been losing ground to China. And indeed, the other side of things is that dampening consumer demand in China has also hit the profitability of companies like BMW, for example. So what we've seen over the last few weeks, about 2 weeks ago here in Brussels, there was a meeting of EU leaders and there was a substantive discussion about China. And really our reporting is telling us that there is a hardening of stance towards China. There is a realisation that the EU needs to be tougher. Now, within that, there are divisions. You've got some countries like Spain, for example, who are welcoming Chinese investment, and then others who want to be more tough. So whether the EU will be able to speak with one voice remains to be seen.
Absolutely. Suzanne, thank you so much. Bloomberg's Brussels Bureau Chief, Suzanne Lynch. Coming up, we're going to take a look at your front page news. This is Bloomberg.
to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times with the latest on the aftermath of the Venezuela earthquakes, as volunteers use drills, hammers, anything they can find to look for more survivors. The U.S. is preparing to deploy more than 250 personnel, including urban search and rescue teams, and is mobilizing $150 million in humanitarian assistance. The death toll now approaching 1,500. Next up, the Financial Times is reporting the AI boom is fueling a record surge in deal-making in the U.S. power and utility industry. Companies are competing for capital to build energy infrastructure for data centers. According to Deloitte, M&A transactions in the sector are already more than 40% higher this year than in all of last year. And finally, the Wall Street Journal on the trillion-dollar borrowing binge, pushing the stock market to risky levels. According to FINRA, U.S. margin debt rose 54% to a record $1 trillion in May from a year ago. Meanwhile, high-risk leveraged ETFs are growing rapidly, as is trading in options tied to them. The Wall Street Journal points out the risks surfaced in South Korea last week. All right, let's take a look at your markets. As we head into the Monday session, it is, of course, a holiday-shortened week. We have futures pointed higher. Nothing much happening with the dollar index, and just a little bit being added on to oil. Those escalating tensions, though, are abating. Coming up, Richmond Fed President Tom Barkin warning on inflation. We'll discuss with Ella Good.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The US and Iran agreeing to halt attacks after days of escalation. Talks in Doha set for this week. South Korea prepares for massive AI investments led by Samsung and SK Hynix, planning to spend $880 billion. And US stocks looking to bounce following investors' rotation out of chip makers. The jobs report on deck later this week. So let's take a look at those futures then. In the green this Monday, a holiday shortened week, don't forget, just 4 days, and 2 of those days are in June in the first half. The other 2 are in the second half, so we already are getting into the second half of the year. We obviously saw some rotation, repositioning last week, and looks like maybe investors have done enough of that, or perhaps other areas are rallying. Mind you, the Russell 2000 didn't fare as badly in the run-up to today. It's still in the green, but perhaps not as much as the other indices. The Nasdaq was down 1%, don't forget, on Friday. We also have some concern over tech and communications. They had their second worst week last week, so we'll see if they bounce back. But breadth continuing to improve and volume also continuing to balloon. Let's take a look at yields. We're seeing a flat curve still. The back end, absolutely no movement. We're at 486.70. Front end, we're up just about a basis point and a half, about 410.86. The next catalyst for any movement there will be Kevin Warsh at Sintra. The following catalyst will be Thursday's jobs report. Oil as well did put on a few cents, even though we're still at much lower levels than we were all through the war. We're at 72 apiece when it comes to Brent and also WTI, different contracts trading there on the prompt month. Let's get to some individual movers now. For that, we'll go to Chloe Melly. Chloe.
Good morning, Bonnie. So SK Hynix and Samsung have pledged to spend $880 billion to fuel this AI boom, this AI rush in South Korea. And that will be really beneficial for some of those U.S. companies that are suppliers to those 2 South Korean firms. And so we are seeing Lam Research, Applied Materials in particular, and Qualcomm up in the green this morning on the back of that pledged investment. Moving on to Viridian, and the biotech company is also rallying this morning about 14% after saying it has secured FDA approval for its thyroid eye disease drug, which is a very rare and debilitating autoimmune condition. And so we're seeing that really drive the stock this morning. And finally, Bridgepoint here in London is also up, really rallying as well, up about 10%, 11% now, after buying the real estate arm of the investment firm Kane Anderson in a deal worth $1.4 billion. And this is the company's first push into the U.S. property market, and we are seeing investors react to that very positively this morning for Bridgepoint.
Right. Chloe Melly, thank you so much. That is Chloe Melly there in London. Bond managers piling into the belly of the Treasury curve. PIMCO, Natixis, Capital Group, all looking at the 5-year area as the sweet spot to ride out the early days of the Warsh era at the Fed. Joining us now is Ella Good, head of fixed income and co-head of real returns at BNY Investments Newton. Ella, what is your take on where investors should be waiting out the beginning of the Warsh era, given that we're not fully sure yet exactly how he's going to tackle price stability?
Good morning. Yes, indeed. I mean, it does feel like a new era, but all else equal, from our perspective, we have been running quite a significant underweight in terms of duration, most of that coming out of the US. And actually, as you rightly point out, most of that has been at the belly of the curve, so 5 to 10 year, in fact. But at this juncture, we have closed those underweight. So we have also been participating on the buying side in the 5-year part of the curve. But we would just be a bit cautious here in terms of turning overly optimistic yet. We would say actually the jury is still out. You know, the first step in terms of the first Porsche meeting that we got was substantially well received by markets, we would say. But going forward, all we've done with the Fed from our stance is we've met where the pricing in the markets has been. So we can elaborate further in terms of how expectations are on the inflation side and growth side. And I think that's what's going to matter really for the belly of the curve.
Yeah, absolutely. I just want to read to you something that the Richmond Fed President Tom Barkin has been saying in the last couple of days. In fact, at the Aspen Ideas Festival on Sunday afternoon, talking about inflation. It's hard to have confidence that you're headed back to 2% without any more influence from the Fed funds rate or the labour market or some other feature that creates disinflation the other way. Now, you say macro is benign at the moment, Ella, but if it is, wouldn't we be seeing inflation coming a little bit back towards 2%?
Well, we have been, I mean, we would say there's been an underperformance on the inflation target from the Fed for the last 5 years. I think Warsh, in fact, alluded to that in his meeting. So it's very difficult actually to get inflation back to that, you know, once you get to that 3%, to get it substantially to the lower side. So I completely agree with the comments you highlighted here, that you do need this other dynamics to play out. And look, we believe that ultimately we're in a structurally higher inflation environment and potentially higher rates environment. And so I think this is exactly why we say the jury is still out in terms of whether we're going to get the type of tightening policy that will get inflation significantly lower from here. So we're a little bit more on the cynical front, we would say.
Ella, many investors have come on and said they like Europe right now, and you also like Europe. And I'm curious as to why. First of all, we have a big cohort of investors that feel like maybe the ECB has made a mistake with monetary policy. We also have a lot of economies in Europe really suffering. I mean, just look at Germany trying to push back on China's influence on the car market, right? Cutting 100,000 jobs at Volkswagen and essentially just rearranging an entire industry.
Yes, I mean, look, I think the consensus is quite bearish Europe this year. And we would argue, actually, if you look at the outperformance of Europe relative to the US since last year. So we actually believe that's going to continue, and it's more structural in nature. The fiscal component, but also the capex and buildup needs to come for Europe too. So we think that's underpriced, relatively speaking. That's certainly on the equity space. And secondly, we have a relative, pessimistic view on that side of the world. And the additional, if you like, euro for the last 15 years has been going to US markets. So any sort of reversal of that capital flow, let's say over the next 5 years, we believe would probably favor more domestic markets. And I would probably extend that argument to the UK as well. So net on the margin, particularly when you take cue of the AI trade, which is obviously quite extended now. So any sort of repricing of that particular sector, we believe on a relative basis would favor Europe over the next couple of years.
Fascinating. You also talk about the theme of nationalist investing. You say it's a structural theme. What is nationalist investing?
Well, look, I mean, we are in an exciting time in the sense that, lots of capex demand, whether it's to build energy security, to build infrastructure, to build defense, you have to build AI. So we have demand on capital across the world, and supply of capital is the same as it's always been, right? So in that sense, that demand for capital means that the policy will tend to favor some of that domestication of that capital. I mean, for example, we've heard some of that here in the UK. There's more noise out of Europe. There's certainly more noise out of the US. So we are structurally speaking and strategically speaking in that type of environment. So you will get more domestication, I believe, at least in terms of capital flows to help build up this massive need for capex. And so I think we should see more of that going forward.
Ella, you say, you're looking for real return. Where do you find that in the bond market outside of, sovereign debt, let's say? Are there areas of corporate credit that look attractive to you in terms of what they might offer real yield-wise?
Yes, I mean, we have favored energy for a good part of the last 12 to 16 months, we would say, and it's been a similar theme in equity markets as well. I mean, regardless of the Middle East conflict, that was our stance previous to that. So those areas remain well protected. In this environment where we believe curves will stay steep, and still policy rates will be conducive to the cycle, we think banks are favored as well. So we have, earned more in that side. And then on the equity space, so maybe not in credit so much, but healthcare and industrials remain supported. Industrials in credit space remain supported as well. So those are areas where we have been leaning more. And of course, on the core bond side, inflation protection still is relatively well priced, we would argue. So these have been areas of interest from a capital allocation point of view.
Okay, Ella Good, thank you so much for joining us today. Ella Good of BNY Investments Newton. Now to other top stories trending on the terminal this morning. Verizon and British telecom company BT Group are creating a joint venture for their international businesses. They will have a combined yearly revenue of around $4 billion. Verizon will pay BT an equalization payment of $625 million. If the deal is approved, both companies will have equal voting rights. Bloomberg sources say Williams is in advanced talks to buy rival natural gas pipeline operator Momentum Midstream for about $5.5 billion. The deal will be one of the largest ever. President Vladimir Putin says Russia continues to face a fuel supply squeeze as the Kremlin weighs measures to stabilize the domestic market following refinery outages. Putin confirmed that a full ban on diesel exports is among measures under discussion. Coming up, Washington and Tehran set to resume truce talks this week. More on that. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. War escalating and then fading, at least for now. The US and Iran have halted their attacks on each other ahead of talks in Doha this week. A US official telling Bloomberg both sides will stand down and vessels can move freely through waterways. Bloomberg's Kasia Klimaszinska joins us from Washington. Kasia, yes, they potentially can, but if you were a ship owner, you might be a little hesitant, and we're seeing that in the numbers, right? The numbers have gone down slightly.
Yes, but at least the U.S. equity futures are taking it as good news. I see they are up a little bit this morning, and indeed overnight, Sunday for Monday, we didn't at least see any new military activity, and the two sides remained relatively quiet, with President Trump not really posting anything on Truth Social. So last we have is this report that both sides will stand down on a further military action, trying to respect the ceasefire and hoping that the talks that are scheduled for this week in capital of Qatar, that those talks will bring some progress. We know that the two sides will discuss the Strait of Hormuz, as Iran wants to keep control of this key waterway and perhaps charge tolls on or get payments from the passing ships in some way, whereas the U.S. wants this international waterway to just remain open. On the other hand, we did see some flows both ways, especially along the route designated by the U.S. and its allies. The talks this week are also supposed to focus on Iran's nuclear program, and I think that's where things can get very tricky. We know that the two sides don't agree on much in here. Luckily, there's a 60-day clock. We are less than 2 weeks into it, so there is still plenty of time remaining.
Yes, it's going to be a long process. Now, domestically, we also have some Supreme Court decisions, and there aren't too many days left, and there are some big ones that President Trump will be watching out for. Give us the rundown, Kasia.
A big week here in Washington, D.C. for the Supreme Court and for Trump. The justices will rule on two key issues for the White House and also for the markets. One of them will be about the Federal Reserve and whether Trump can fire one of the governors, Lisa Cook, over alleged mortgage fraud that she is denying. And so she is asking the court to let her stay on the job while she is defending herself. And if the justices take Trump's side, that really puts the independence of this key economic institution in question. We'll see whether then Trump takes further steps to perhaps fire some other members of the board who are not voting as he would like, and we know that he wants the central bank to lower interest rates. The other decision that the justices will have to make will be regarding the birthright citizenship. So Trump issued an order saying that not everyone who is born in the U.S. automatically becomes a citizen. That is only for those children who have at least one parent who is a citizen or has a green card. So we'll see how justices rule on this one. There is some track record here where the Supreme Court, which has a conservative majority, has been backing some of Trump's proposals that seek to limit immigration. So the first decisions can come as early as 10 a.m. here in Washington today.
All right, we'll be keeping an eye out. Kasia, thank you so much. Kasia Klimaszinska in Washington. For more on the latest out of Hormuz, let's bring in Bloomberg's Alaric Nightingale. So, Alaric, what is the situation? Are ships continuing to go through Hormuz, or do flare-ups like what happened at the weekend just stop everything in its tracks?
I think it's a bit of both. What we saw at the weekend has certainly not helped owners to feel more confident about going through, but within the ceasefire, there's now this kind of extra ceasefire that maybe will give some of them comfort. The owners that I've spoken to would say that they're at least as cautious as they were, if not more so. But it's a huge pool of ship ownership, and people have very different attitudes to risk. So it is always tricky to be very declarative about how much the shipping industry is kind of changing its attitudes. I mean, you have to also keep in mind that there's just this constant change of, little details of things happening. A couple of attacks in the last week, ceasefire. It goes on and on and on. So owners are just kind of, I think they've got their policies. individual events obviously don't help necessarily, but I think that they've really just got their set policies, and it takes a big deal for them to really sort of like change what those policies are.
And of course, they're talking to each other on a daily basis and talking to authorities in all sorts of countries, I'm sure, as well. Alaric, Iran says it held the first joint committee meeting, this Iran-Oman-Hormuz joint committee that's been set up. What are they going to decide, and will it be recognised?
That's a fantastic question. I mean, the big question is tolls. Will the shipping industry be charged to go through the Strait of Hormuz in a mandatory way or in a way that is ultimately mandatory? We've seen some talk that Oman might lean that way, but that's a very, very difficult and pressured thing for them to do. But equally, if they don't impose tolls, then everybody would go via the Omani route. There are basically two corridors now, one that goes by Iran, one that goes by Oman. So if everybody just started to go through the Oman route because it was free, it would massively undermine Iran's efforts to charge tolls. So that's going to be an important kind of question for everybody, and it's really the key sticking point as to what happens next in the Strait of Hormuz.
Alaric Nightingale, thank you so much. Turning to tech, South Korea amassing $880 billion in investments into chips and data centres, with Samsung and SK Hynix leading the effort. Joining us now is Bloomberg's Neil Campling. Neil, is this a repeat of the US playbook, and how will it play out?
Morning, Bonnie. In part, it's a repeat of the US playbook in terms of building out in the AI infrastructure side of things, but it's different also in that much of the investment is going to be on really supplying those memory chips and the AI chips, which actually will really benefit the US because of those supplies that have been restricted so far just because of so much demand. It might actually help pricing for the big US tech companies that have been struggling to secure supply at decent prices. So it should benefit in one sense for the US tech supply chain, I think, over the course of years. But it takes a long time to build out these manufacturing plants. Let's not forget that.
Sure, absolutely. The other story that caught my eye today, and I guess we should be expecting it, right? The Wall Street Journal reporting that China has now actually matched Anthropic when it comes to cybersecurity. How has China done that without access to NVIDIA chips? And should we expect this in other areas of AI now?
Yeah, it's in some respects it's quite alarming that given they haven't got the access to the leading edge chips, that China can apparently catch up so quickly on some of these cybersecurity side of things, which Anthropic managed to find flaws in coding that's taken researchers decades to find, and now China are claiming to have caught up in areas of this technology. So it's something that we're going to need to keep an eye on because there are certainly questions around where China's AI is relative to the US. And while it's probably quite important that actually we've heard at the weekend that the US have agreed to allow Anthropic's Mythos to allow companies again to use the toolset.
Yeah, exactly. Possibly after they learned of that development. Now, the Financial Times is also reporting that Google is capping Meta's use of Gemini AI. What's going on there, Neil?
So it appears again that there's just not enough compute power to allow Meta the access tools that they require. So this leads to that first question we're talking about with South Korea committing more. Then it's just yet more signs across the globe that we're just struggling to find enough compute power to power all of these AI models that really need to go ahead with these AI developments. So it's another interesting take. And the other side part of that, of course, is that better use of tokens, given the rise in token costs this year. So more developments to watch out for as the hyperscalers are also committing to huge amounts of AI capex spend, which is clearly needed for these compute power needs.
The story just keeps on developing. Neil, thank you so much. Bloomberg's Neil Campling there. Coming up, we're going to get you set up for your trading week. This is Bloomberg.
in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. The Centre Forum kicks off in Portugal. President Christine Lagarde of the ECB scheduled to speak at 1:30 Eastern today. Then we get U.S. manufacturing PMIs and ADP employment data on Wednesday, and it's all leading up to the critical jobs report Thursday this week, because, of course, Friday we're off. Let's take a look at your macro environment now as we head into the Monday session. Just 2 days left in not just the month, but also the quarter and the half, in fact. But traders will be happy to see that we're bouncing back today after the S&P 500 basically ended Friday unchanged. The Nasdaq, though, was down 1%, and there was so much volatility in Korea last week, and it appeared to be beginning to bleed over into the United States. Now, for what it's worth, we had Korea rallying massively once again yesterday, although I think we may have decoupled a little bit from that story back to old times, as it were. Bloomberg Dollar Index pretty much unchanged, and we do have a little bit of heat here in oil, not just New York crude, but also Brent crude putting on about 1%, 2%. But we're still at relatively low levels, just above $70 on WTI. This, of course, after we had a little bit of an escalation over the weekend, or more than a little bit of an escalation over the weekend between the US and Iran. And then we had the US saying that it had agreed to stop all hostilities and that peace talks would resume this week. Some headlines just coming out now of Tasnim saying that the venue for the talks with the US has not been confirmed. It was moved from Switzerland to Doha. That has not been confirmed, according to Tasnim. And also Iran saying no technical talks with the US are planned for this week. So the mystery continues.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend in the investment is real.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We've had an incredible run in a lot of these stocks.
Investors should be aware that things can change quickly.
If we have a change in narrative within the AI story, it can create exacerbated moves.
That frenzy is dying down around the AI trade in general.
There are going to be periods of digestion.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, stocks bouncing back. Equity futures pushing higher following a week full of tech losses as the White House and Iran are attempting to put an end to a series of strikes. Fed Chair Kevin Warsh is preparing for his debut outside of the US. Warsh, just a few days away.
Yeah, Chair Warsh is going to be presenting at the Sintra Forum in Portugal among a lot of ECB officials and other central bankers. And it comes as a key question faces the market. Is the market fading the idea of rate hikes as a result of what we've heard from Fed rhetoric? Or despite it? Is this essentially rejecting some of the rhetoric that we've heard from the Fed meeting? Or is this essentially saying, well, if you're going to be more hawkish, we're going to price out less inflation and fewer hikes in the long term? Either way, is he going to lean into what the market seems to be saying, which is you guys aren't going to be nearly as hawkish as we thought you were when the Fed met last week?
We have got quite a week ahead for you, including Kevin Warsh, the Fed chair. We've got tons of economic data as well. Coming up on Thursday, not Friday, it's payrolls Thursday. The median estimate in our survey is 113K. That's down from 172 in a previous month.
Absolutely. This is going to be a key report, and we're going to get that report after we hear from Kevin Warsh. So potentially, given the fact that the Fed has been focusing, especially him, on stability when it comes to inflation, how important is that jobs report going to be? Also, we might get a Supreme Court decision this week, either today or later this week, when it comes to what is going on with the Lisa Cook case at the Supreme Court. Could be a little bit awkward for Kevin Warsh and Sintra.
Wide range of views over at the Federal Reserve. Wide range of views on the Federal Reserve. Looking ahead to this from Kevin Warsh, Peter Chair of Academy, with a different take on things. Take a listen to this. Imagine it's easy if you try. That Warsh convinced Trump that sounding dovish right now would be a disaster. Imagine again, it's easy if you try that he convinced the president to let me sound hawkish on inflation.
In other words, not buying it and not necessarily seeing them come through with it, which is essentially what the market seems to be suggesting at this moment. There is a sense that the president is giving him a reprieve. If he needs a whipping post, he goes to Jerome Powell, who is still on the Fed, although maybe after the Lisa Cook decision, maybe he will step down. That is some of the speculation. Nonetheless, a real question here, questioning the motivations. Right now, we're pricing in just a little more than one rate hike for the rest of the year. That's down from more than two last week. So you get a sense of how the disinflation narrative seems to be triumphing over the reinflationary narrative. The jobs number is really going to be key in that, in particular, just how much wages have increased.
On the margin, at least, with a move from 4.20 down to 4.1% on a two-year yield. Twos this morning, up a single basis point. Check out crude as well. Brent and WTI nudging higher by about 1.3% this morning on Brent. WTI back in the 70s, up by 1.7%. Attempting, and I stress attempting, to put an end to a series of strikes between the US and Iran.
Yeah, we saw an exchange of attacks happening in the Strait of Hormuz. Now you have both Tehran and Washington saying basically, we have agreed to stop attacking each other, but you can see that Tehran at least was testing the ceasefire. And I think it's very interesting that there's supposed to be these expected talks in Doha this week, and an Iranian news agency just moments ago came out and said that they are not expecting or tracking any talks in Doha this week. So there's obviously a little bit of miscommunication, and the truce is holding, but again, ever so fragile.
Just about holding above 70 on WTI, $70.40. Coming up this hour, we'll catch up with Ajay Rajadaksha of Barclays as equities looks to snap a 5-day losing streak. Norman Rule of CSIS as the tug of war over the Strait of Hormuz intensifies. And Mummy Q of PSP Growth as South Korea announces plans for massive AI investments. We begin this hour with stocks pushing higher as the volatile tech trade finds a firmer footing. Ajay Rajadaksha of Barclays writing, there may come a point at which the AI infrastructure build-out overshoots demand. But that reckoning, if it comes, is a 2028 problem. Ajay joins us now for more. Ajay, welcome to the programme. Why is that a problem for 28, not 27, not 26?
Just because, John, and good morning, thank you for having me. Just because order books, everything we look at for the Microns, the SK Hynix, the Samsungs of the world are still full well into late 2027. So the difference with the 2000 episode, if you remember, is that the Nortels and the Lucents of the world, their clients were startup telcos, which basically depended on financing conditions, being good to continue buying chips. This is not that case. In this particular case, the semiconductor chip companies, their clients are the hyperscalers, the single biggest profit-generating machine in history. So I do have clarity. I mean, you saw the Micron earnings. They continue to blow the cover of the ball. I think we do have clarity. As nervous as people are, and you get nervous at one point on the AI trade every single year, apparently. But as nervous as people are, for this year, for the middle of next year, I have a fair bit of clarity. So if you overshoot demand with a lot more supply, it will probably be a 28 issue.
It does feel like, though, Ajay, things are shifting. I'm hearing more about how expensive the build-out is and far less about a return on investment. Do you acknowledge that we are seeing a shift in the broader narrative here?
Absolutely. But I would push back on that being a lasting thing simply by pointing out that this happens every year. You seem to have a shift when the DeepSeek model was released, remember, and stocks reacted. Then in May of last year, there was another shift where the MIT use case paper came out, where you had the Nobel Prize winner for that year coming out and saying, I don't think there's a lot of AI use cases. And then you come into the early part of this year where we suddenly all start worrying about SaaS, software as a service companies. And you can't have it both ways. You cannot make the argument that these companies should be taken to the woodshed because their business models are going to be completely upended by AI. And at the same time start to say, well, AI doesn't make a whole lot of sense. So I'm worried about the cost side. That is why I'm less unequivocally positive. But I still think the upside outweighs the downside.
Ajay, how concerned are you about a lot of U.S. companies shifting their use to Chinese open source models that are a lot cheaper, especially as the capacity just isn't there for the United States, let alone the cost that is really punitive?
I think from a macro standpoint, I'm not terribly concerned because I'm looking at the equity market and the economy holistically. So anything that drives down costs while continuing to increase usage, I would argue is not necessarily a net negative. But obviously, from a geopolitical standpoint, from a national standpoint, you are going to have concerns reflected in Washington, D.C. I don't know which way things go. I mean, you saw OpenAI start to drop its own prices, even as John pointed out, the cost of things is continuing to go up. There might come a question asked at some point whether we truly need 6, 7, 8 giant LLMs. It might be that the way that what is called the harnesses, the way that information is then fed back to you is what becomes the differentiating factor. But right now, I don't think that's not going to be the reason, Lisa, that you end up having the equity markets pull back 10, 15%, because look, a bunch of US companies are shifting to Chinese open source models. That's not a catalyst.
But it might reduce the valuations for the likes of OpenAI and even Anthropic, at least in the near term. It might question how much they can charge people. And we've seen that pushback from OpenAI and the IPO. And I just wonder how much that's a sign of what's to come, that the equity markets are sort of clamping down a little bit on their tolerance for some of these, pushing a lot of these companies just to rely much more on the debt market.
I would argue that it's a healthy thing. I want a fair amount of skepticism. I don't want everyone holding hands and singing Kumbaya and saying there's nothing to worry about, because that tends to keep, this effervescence in check. fundamentals I don't think have shifted. You mentioned Anthropic, right? Remember, Salesforce was an absolute corporate darling. Went from 0 to 30 billion in annual recurring revenue, the fastest any company has been, and it took 20 years. Anthropic went from a standing start to 40 billion in ARR in 3.5 years. We take it for granted. But the pace at which the revenue side is growing in some cases is also extraordinary. And as long as that path continues, I think that outweighs everything else that is being thrown. You know, this is the usual wall of worry that equities collectively are supposed to climb and what investors get paid for.
Ajay, when individuals come on the show, they say it's all about the earnings story. And you say that earnings story is no longer a tech story. Where are you seeing that broadening out for earnings?
Honestly, everywhere. Healthcare, for example, is seeing a lot more operating leverage. Life sciences, you are starting to see earnings pick up more than expected. The industrial side is starting to pick things up. There are a couple of areas of disappointment. Financials have been a bit of a disappointment, not in terms of earnings, but in terms of the multiple side. But the biggest winner, the biggest surprise has not been... Big tech has done, I'm going to lay out a few numbers if I may. So earnings are up 19% in the first quarter. Big tech is up 30%. Well, big tech does big tech things, so that's not a surprise. But the rest of tech is the biggest surprise. Earnings there are up over 50% year over year. And that, I think, is one of the things where things are starting to spread beyond just the hyperscalers, but also the rest of the economy. I mean, I don't want to do this, but honestly, I don't. But we had no choice but to up our earnings forecast for 2026. Yet again, it makes me more nervous. You know, it's easier to stick with the crowd. We think earnings for 26 over 25 go up 21%.
Wow. Can that continue if the Federal Reserve is forced to hike interest rates?
Yes, it can. And part of the reason for that is because the part of the economy, part of the rate curve that matters to the economy and to the markets is actually the longer part of the curve. So you'll notice after last week's interview, after last week's FOMC press conference, you know, after the markets took it hawkishly, at that point, what ended up happening was that even as the front end sold off, priced in 30 to 40 basis points of hikes for this year, the back end actually rallied. And that's the point on the curve that matters. That's number one. Number two is, I would argue that with capex intentions being this forthright for this far into the future, and the wealth effects still being so strong, it's not clear to me that 25, 50 basis points here or there does anything to knock the US economy off course. So I think the story continues.
Ajay, it's funny, just to wrap it up, listening to you saying, I don't want to do this. I don't want to raise my outlook for earnings. With that in mind, where is the deeper pool of skepticism right now in conversations you're having? Is it on the bearish side or on the bullish side?
It is on the bearish side, unequivocally. And, you know, we all have recency bias, John. So if you have a company that was valued at $100 billion a few years ago and it's suddenly $1 trillion company, you just worry that it's got to come down to earth. The problem is that this company that I have in mind, these semiconductor chip companies, their forward earnings multiples are at 6 and 7. So they are reflecting that skepticism. They are reflecting that bearishness. There is not an equities multiple bubble right now. If there is a bubble, there is an earnings bubble. But for the foreseeable, that is why I don't want to raise my earnings forecast. But for the foreseeable future, I don't see that popping, even if there is one. And I'm not convinced that there is one.
Ajay, it's good to see you. Looking forward to seeing you back in the studio soon here in New York. Enjoy London. Ajay Rajanaksha there of Barclays. Not the only one constructive on this market. Just hearing from HSBC, Mats Kettner and the team. We remain undeterred in our pro-risk bullish stance. Laurie Calvasina over at RBC overnight, raising her 12-month price target, Bramo, on the S&P 500. To 81.50.
Yeah, and it's all Ajay's point about earnings. We just also got from Jonathan Golub over at Seaport that the S&P earnings per share is expected to grow by 24% this year. That is versus a long-term trend of 0 to 8%. So they don't want to do it either. You can feel the reluctance. You can feel the sort of bear case is building. We heard that from JP Morgan last week. At the same time, the earnings tell the entire picture.
Equity futures this morning positive by 0.8% on the S&P 500. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The US and Iran agreeing to stop attacking each other before talks resume. Axios reporting talks are scheduled to resume tomorrow in Qatar. Tasnim, Iran's semi-official news organization, though, saying no technical talks are planned for this week. South Korea is arranging investments of at least $880 billion from companies including Samsung and SK Hynix into chips and data centers. The companies plan to build 2 chip-making plants each in the southwest to rapidly expand production capacity to meet increasing demand. Comcast shares rising in pre-market trading. The media giant planning to split its media and technology units into 2 independent, publicly traded companies, spinning off NBC Universal and Sky. Comcast is expecting the separation to be completed in about a year. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie a little bit later in the programme. Up next, a tenuous truce for Iran.
We hit them hard, and we're going to hit them again hard. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers.
You said that Iran violated the ceasefire. Yep. Will they face any consequences?
Well, you'll find out.
Up next, Norman Rule of CSIS, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Five days, no gains on the S&P 500, the longest run we've seen so far this year. In fact, going back to last summer, August 2025. Futures this morning bouncing back by, let's call it 0.7% on the S&P. On the Nasdaq, up by 1 full percentage point. Last week, big outperformance on the Russell and on the equal weight S&P. Small caps this morning underperform, up by 0.15%. The bulls are not giving it up. We've seen a series of price target upgrades in the last week, including from Laurie Calvasina of RBC just this morning, looking for something north of 8K now over the next 12 months.
And you are seeing the equal weight continue to lead that. What it shows you is that people are bullish despite themselves. They want to see the other side of it. And yet even Laurie Calvasina, who's come on with us and expressed the skepticism time and time again, says that ultimately the earnings are broadening out, they're delivering, and that's the reason why we saw the equal weight hit a new all-time high last week and why you're seeing this broadening out.
That's the equity picture. Let's get to the bond market story. T's, 10s and 30s. We've talked lots about how this bond market appeared to be breaking away from the crude market, the oil story, reconnecting in some ways over the past few days. Up a single basis point this morning, two's at about 4.1%. Won't make too much of this, but crude bouncing back too, up by 1 percentage point, just around 70 on WTI. Brent crude around 72.50.
Yeah, and this is something actually that Neil Kashkari talked about as well. He doesn't have faith that this is completely resolved. Nonetheless, when you take a look at the Deutsche Bank mid-year survey, it seems like most people, 75% of those surveyed, see this as diminishing into the background in terms of a story. So if oil prices remain here, even though they're higher than where they were at the beginning of the year, people are saying this won't be as much of an inflationary force and won't push the hands of the people meeting in Sintra this week.
Let's talk about crude. Under surveillance this morning, a tenuous truce with Iran.
We hit them hard, and we're going to hit them again hard. We'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers.
You said that Iran violated the ceasefire. Will they face any consequences?
You'll find out.
So here's the latest this morning. The US and Iran agreeing to stand down following multiple attacks over the weekend. The president warning Iran, quote, may no longer exist if Tehran continues to violate the already fragile ceasefire. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, diplomacy appears to be back on the table, at least for now. A senior U.S. official tells us that there are planned technical talks that could happen as soon as tomorrow in Qatar, after we saw planned talks over the weekend completely stalled over this worst flare-up in fighting since the Memorandum of Understanding was signed. But breaking at the top of this program, we heard from Iranian state media disputing that there are any technical talks scheduled for this week and adding that they won't happen until the, quote, necessary conditions are met, without elaborating further, though we know all the focus right now is on the Strait of Hormuz, because this recent bout in tensions appeared to flare up as more vessels started to transit through using that U.S.-backed corridor that hugs the coast of Oman instead of taking that route that gets closer to Iran, appearing to threaten Iran's grip over the strait. We heard the Iranian foreign minister over the weekend maintain that under the Memorandum of Understanding, Iran has the, quote, sole authority when it comes to reopening, but also managing the strait moving forward, something that we know the U.S. disputes. Now, the flare-up did cause a drop in observed transit through the strait this weekend, according to data analyzed by Bloomberg News, though traffic was still higher than for most of the U.S.-Iran war. Now, John, it's also probably worth pointing out here that amid this flare-up in tensions, we did see Iran target those countries in the region that are home to U.S. bases, including Kuwait and Bahrain, just as the U.S. Secretary of State Marco Rubio was wrapping up his tour to allies, trying to reassure them when it comes to the diplomatic progress.
Tyler, appreciate the update. More from Tyler in the next hour. Let's build on this. Norman Rule of CSIS writing the following. The U.S. is defending the principle of free navigation and the international shipping of multiple countries. At some point, it may ask why it alone must bear this burden against the rogue nation. Norman joins us now for more. Norm, sir, welcome back to the programme. What gives you reason, if at all, to believe that we're close to that point?
Well, good morning. Well, we're probably not close to that point yet, but we are at some point likely to reach that. The events over the weekend were quite instructive. The ceasefire held, but it also showed us that the IRGC has a strategy to make the straits commercially unworkable on a schedule of its choosing. The periodic attacks are not meant to be random provocation. They're a deliberate strategy to enforce strait control and to restore premiums for insurance at a higher rate and to test our resolve on a schedule, again, of its choosing. At the same time, Tehran is unlikely to close the strait because that would bring the world powers against it and deny it the benefits that it itself is receiving because of, in the end, of the blockade and the oil that it is exporting on its own. So for the United States, we're in the position of having to defend Kuwait, Bahrain, international shipping. But again, we are doing this alone.
Norm, what is going to be the response politically to the IRGC still maintaining this control over the Strait of Hormuz, given the fact that the U.S. did lift sanctions on Iranian crude, as well as preparing some potentially unfreezing of funds?
Well, I'm not sure it's a political response. It's an international matter of international law. It's something we won't accept, or we haven't accepted to date. And the Secretary of State, in his meeting with the Gulf Cooperation Council prior to these attacks, issued a statement where all of the Gulf Cooperation Council, to include Oman, rejected Iran's assertions in this regard. Now, ironically, Iran calls for freedom of navigation in the Strait of Hormuz, but their interpretation of freedom is freedom under Iran's rules, regulations, and controls. So this now becomes an issue of sovereign rights as Iran is declaring this, which will make this very difficult to reverse. At the same time, there is a Lebanon connection to this. These events followed the conclusion of an agreement between Israel and Lebanon, in which Iran and the Lebanese Hezbollah were cut out. And it may be likely that the conditions to which Iran is referring are some greater involvement in the Lebanese issue. We saw Parliament Speaker Ghalibaf reach out to Nabi Berri in Lebanon over the weekend. It's probably that sort of involvement, that sort of engagement that Iran is seeking to demonstrate its regional role as well.
But Norm, does it not look like the U.S. tactically is accepting Iran testing the ceasefire, given the fact that they have lifted these economic pressures on the regime?
Well, the United States has indeed allowed Iran to export oil, has indeed issued a license allowing Iran to obtain funds from that. So that is correct in order to open the strait as a whole. So you're correct in that regard. But the United States has also conducted multiple significant airstrikes on Iranian facilities over the weekend. Those were significant and quite damaging to Iran.
How can the U.S., Norm, justify removing all of the sanctions to some of its allies that have been pushing back about how quickly this is being done in light of the recent attacks, in light of the recent assertion of sovereignty over the strait by Iran?
Well, that is going to be a question that will be increasingly asked of the Trump administration. The challenge for the administration is it must demonstrate that the memorandum of understanding is narrow, it is reversible, it is going to produce a consequential process, not necessarily a product, because again, we're seeking very large policy changes, significant policy changes from Iran on its nuclear program, its missiles, its militia program. These are issues that multiple administrations have sought for decades, but the process has got to show that it's doing something significant. If that doesn't happen, then we can't just be seen as providing liquidity to Iran and, in essence, funding the regime's programs that it will use to dominate the region itself. Recall that the money that it is obtaining from sanctions relief will go in some small but significant way to the Quds Force to maintain proxy relations in the Gulf, which will threaten Gulf actors and perhaps even Red Sea shipping.
Norm, always good to catch up and get your framework for thinking about things. Thank you, sir. Norman Rule there of CSIS. Crude's near a 4-month low. And as Norm pointed out quite a few times, he used this word process. This is going to be a messy process and not a clean one-off event, reopening the strait. And it is a messy process, and we've seen that over the weekend.
Is this enough, though? This sort of uneven truce where they might be talking again, they might not be, they may agree to stop hitting each other. It's not going to go into a full-blown kind of kinetic conflict. Is that enough to keep prices where they are?
Brent crude 72, up by 0.6% this morning. Coming up next, we'll catch up with Mo McHugh of PSP Growth as South Korea looks to cement its lead in the AI race. Plus, Yahira has your morning movers. Comcast making a move this morning, up 24% in the pre-market.
just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Equities doing better. We're higher by 0.8% on the S&P 500, up 1 percentage point and change on the Nasdaq 100, and another upgrade to a price target on Wall Street, this time from Laurie Calvasina. RBC 8150 on the S&P over the next 12 months. As for year-end, price targets lifted at SocGen, JP Morgan, Barclays, Wells Fargo, all over the last 2 weeks alone. And if there is one common denominator here, connecting all of these calls, it always, nearly always, goes back to earnings.
Yeah, I think that Micron's 95% profit margin really solidified the feeling that some of these AI companies, you can sneer at them, you can say that they're not going to continue to carry their weight. Nonetheless, they are cash-generating machines, and we're reminded of that time and time again. The idea that we saw 26% EPS growth for the year that is forecast by Jonathan Golub over at Seaport gives you a sense of just how far above reality we are. Reality is 7 to 8%, 6 to 7 to 8% EPS growth in the year.
We have had truly a positive earnings shock in this country that has lifted this equity market almost across the board, particularly in the last week or so. Seeing the Russell start to outperform, seeing the equal weight start to outperform as well. We'll spend some time on that a little bit later. Let's turn to the bond market. 2s, 10s and 30s. Yield shaping up as follows. 2s around 4.1%, up a single basis point. We've got a week full of economic data. Payrolls on Thursday. We've got JOLTS tomorrow. The ADP and ISM on Wednesday. Chair Walsh in Portugal on Wednesday. That one is noteworthy. Surely we're going to get the effort to really start to try and understand where the chairman stands on where the data is right now, and not tell us what they're going to do, but just give us an idea of what the reaction function might be in the months to come.
I'm just guessing that saying that there are 5 task forces isn't going to fly in Sintra, Portugal, with all of the other central bankers from around the world. Do we get a sense of how he's viewing AI as a disinflationary or an inflationary force, and exactly what that time frame is? Do we have a sense of how he would like to shift around some of the inflation metrics? The fact that we're going to be getting ISM manufacturing and the prices paid the same day that we have him speaking will actually be a really interesting 1-2 punch that could color the view of the bond market.
Don't talk if you haven't got something to say. Seems to be Kevin Walsh's mantra. He's talking, he must have something to say. We'll look for that Wednesday morning as we count you down to the open about 3 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with Comcast. Shares are absolutely ripping this morning, up nearly 28% in the pre-market after it announced just this hour that it is splitting into 2 publicly traded companies. Comcast will keep its wireless and broadband business, while NBC Universal and Sky will spin off into a standalone media company. The thinking here is that each company can focus on navigating their industries, which are vastly changing at the moment. Turning to SK Hynix and Samsung, they have huge news out this morning about huge AI spending plans, and that is helping to lift their suppliers after the companies announced that they are spending $880 billion to build out AI chip centers and data centers, and that is helping to lift equipment makers like Lam Research and Applied Materials this morning, which provide the tools that make those advanced chips. And we end on SpaceX. Those shares also edging higher in the pre-market, up 2.4% after NASDAQ said that the stock will join the NASDAQ 100 next week on July 7th before the market opens. That means index funds and ETFs that track the benchmark will have to buy billions of dollars worth of shares, creating a big source of demand. John?
Such a fast turnaround, that is. Such a fast turnaround. Jahira, thank you. More from Jahira in the next hour. On our radar this morning, one of our top stories, South Korea's top memory chip makers lining up massive investments in infrastructure. Samsung, SK Hynix, among the companies pledging nearly $900 billion on new chip-making plants and capacity. Elsewhere, Chinese AI systems reportedly matching Anthropic's powerful Mythos model as the capability gap between the two countries narrows. The Wall Street Journal reporting China's new model locates security bugs on par with US models, but still lags in other tasks. And finally, the Bank for International Settlements warning of global financial threats, including an AI investment bust. The bank's annual report highlighting vulnerabilities tied to circular financing and credit risk capable of triggering a major correction.
And this has only escalated because signs of rising leverage just seem to be percolating out of every corner, not only stocks on borrow, but also levered ETFs that have invested in some of these names. A concern here of how this could undermine financial stability heading into Sintra. I'm curious about another aspect of this as well. We're talking about valuations undermining some of the security. What happens if the security itself undermines some of the financial system? And this is something Christine Lagarde has talked about. What if a Mythos or Fable 5 can identify some of these potential flaws in systems, allowing hackers to get into, say, the payment system globally? I mean, these are the concerns that people have that could also be potential financial threats.
This is why originally you had the White House put a pause on Mythos. Fable is still on pause. Potentially they're going to lift that export control this week. Also what the BIS talked about is policy actions. Policymakers need to step in to make sure that they make adjustments before it's too costly. You've talked a lot about if this White House was to say take an equity stake in an Anthropic or an OpenAI, it's because for those companies, do they want the U.S. government to be a part of their upside and growth or protect them from the downside? And when you start reading this BIS report, you think potentially these companies want the protection to the downside.
What's interesting, and one dimension that makes it a little bit more interesting for this week, it's not just the BIS that's saying this, it's Tiff Macklem of the Bank of Canada as well. And if you look at the panel that's coming up in Sintra, Portugal on Wednesday, it has Lagarde, it has Bailey, it has Walsh, and it also has Tiff Macklem of the Bank of Canada. So if you're moderating that panel and you're listening to this program, there might be some questions to connect his views to what's happening here in the US and maybe try and tease out what Kevin Walsh has got to say about it.
Yeah, or elevated valuations potentially posing an increasing financial risk. And should that be something in the dashboard of the Federal Reserve they might have to deal with? We talked about that with Neil Kashkari actually on Friday, and he just said American dynamism is a great thing and we want to see that, and he didn't want to diminish that. I understand that from a PR standpoint. I do think, though, increasingly people are wondering whether monetary policy is, for all intents and purposes, easy, at least for some of the hyperscaler financing, and whether it is enabling some of these high valuations.
Look at how much money is sloshing around right now. Look to South Korea, upping its play in the AI race, announcing massive investments in chips and data centers. Mo McHugh of PSP Growth writing, on one hand, it signals demand is real enough to justify the scale of investment. The cautious read is that the cost of serving AI just keeps going up, and so does the burden of proof. Mo McHugh joins us now for more. Mo, welcome to the programme. There's two arguments there. Which one would you put more weight on at the moment?
Good morning. I think the overall sentiment in AI is still positive today. But the big question, the elephant in the room, is AI capex is not only just massive, but the estimates keep moving up, and we don't know when it's going to stop. First, the bottleneck is on GPUs, and now you see with the recent pair of investments that bottleneck has shifted to memory, and now we're talking about power. So the one thing that is certain is the expenses keep going up, but on the demand side, we are seeing optimism and we're seeing enterprise adoption starting to come in, but the timeline for that is still stretched out. So the question in everyone's mind is eventually, if this is critical infrastructure that is going to pay off, that everyone's going to adopt, then it's worth it. Otherwise, your capex keeps expanding upwards, and investors are going to be impatient.
Well, have you noticed a shift in market sentiment over the past couple of weeks? Not the belief in AI and the promises, but the willingness to finance some of this, as evidenced by SpaceX's IPO, where the price did trade down and the bonds have lost value, as evidenced by OpenAI delaying their IPO potentially to mid-year next year.
Yeah, absolutely. I think the question for AI now has shifted from technology to financing, where the question of the day is not just on ROI, but let's assume demand does come, but who is going to finance it and for how long? And to your point, on the public market side, there was a time a few weeks back when we thought the public equity investors cannot wait to get their hands on the $4 trillion of new market cap across SpaceX, across Anthropic, across OpenAI. And although SpaceX, I think, is still trading above its IPO price, we're seeing that the demand is not bursting at all out of the seams in terms of everyone's just rushing to invest in that. And bondholders, I agree, bondholders are cautious that they're demanding higher prices. They're seeing on technology risk and years of negative cash flows that is uncommon in investment grade bonds before. So I do think you have that caution, and it's fragile, right? You have OpenAI delaying IPO news, and all of a sudden you send shares of the whole AI trade down. And today, with the SK Hynix news and Samsung news, you think demand is back up again and the finance markets are back up. So I think there's just a lot of fragileness in the market, but the overall sentiment, I think people are still pretty bullish.
As you do get some financing pushback, maybe there is still this bullishness underneath, but as you do get some financing pushback, how much does that advantage the Chinese AI players over, say, the U.S. ones? And I'm thinking of Anthropic and OpenAI, given the fact that some of those models are a lot cheaper. They are being adopted by U.S. companies that are constrained by both capacity and price here in the U.S. How much do you see this becoming a real trend and, frankly, the Chinese playbook?
I think the AI has already moved on from just technology to national security, national competitiveness. You see that with the SK Hynix news today, where Korea is starting to take its hold on the memory side, while the U.S. has NVIDIA and the hyperscalers. And I do think China has a lead today around the open source models, around offering the ability to run AI models more cheaply. So I think that is still shifting, and the story is still being written out right now. But every country, because now it's not just about technology, it's about national competitiveness, is trying to find its own edge in terms of where it can have a hold in the market in terms of its advantage and competitiveness.
Speaking of China, there was a report over the weekend Apple is pressing the White House for approval to get chips from a Chinese company that is actually blacklisted. Do you see potentially more pressure in the policy arena because of what is going on with the chip sector, the demand issue, but at the same time, to Lisa's point, the cybersecurity and national security issues at play?
Yeah, I think those are all intertwined. Again, AI has shifted now from technology to a national issue, and I think you will see this tug of war between the economic side of things and the national security side. I mean, a few weeks ago, we saw this conversation happening with NVIDIA, right? Should NVIDIA even be supplying GPUs at all to China? And I don't think we have an answer today, but I think that's going to be part of the conversation for the next few weeks and months to come.
There was another report about Google putting limits on Meta's use of Gemini AI models. Everyone is just trying to get compute. There's just not enough demand. At some point, when do you see this leveling out?
Well, we are building out the groundwork, right, of AI infrastructure. So I think the things that everyone's paying attention to is AI now going to become something durable? And I think you won't get to see that until the costs are really coming down. There's a lot of focus on costs in inference right now. And you have to believe that the enterprise adoption is going to come. And that is still waiting to be proven out.
Mame, it's always good to catch up. Looking forward to seeing you in the studio next time. Mame Q there of PSB Growth on this situation. This situation is getting a little bit messier. We need to build out capacity. That much is clear. We're capacity constrained across a number of dimensions. We've heard that repeatedly on this program, but it's getting more expensive to build out that capacity. And you're not seeing a commensurate increase in pricing power at Anthropic or OpenAI based on anecdotal evidence of the last few months. So that's going to be difficult to resolve that tension.
Yeah, they can't necessarily make up for lost revenue from lower pricing or not increases quickly enough by simply increasing capacity because the capacity isn't available, to your point. And so you start to wonder, do they start losing market share to some of the Chinese competitors? Do they start just lowering their valuations with their profit margins starting to come down? Or is there still enough critical mass for them to keep charging what they're charging? And are they advancing more quickly to be able to charge for the most extreme and frontier models?
We've done this a few times times it's happening again. The narrative is slowly shifting around this story. Equity futures this morning up by 0.8% on the S&P 500. With an update on stories worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Andy Burnham making his first speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. Burnham expected to announce plans to hand more decision-making powers to local authorities, overhaul procurement and tackle youth unemployment. Apple is pressing the White House for approval to purchase memory chips from blacklisted Chinese company CXMT. The Financial Times reporting Apple is seeking guarantees that the company will not be added to the US entity list, which would impose stiff licensing restrictions. In sports, England securing the top spot in their group at the World Cup after scoring 2 long-awaited goals against Panama. Lionel Messi scoring yet again for Argentina, who remain unbeaten so far. And Canada eliminating South Africa as the knockout stage gets underway, scoring the winning goal in stoppage time to break the draw. And that is your Bloomberg brief. John.
Bonnie, thank you. Appreciate the update. Up next on the programme, penciling in a rate hike.
In March, I had penciled in 1 rate cut by the end of the year. In June, I've changed that to 1 rate hike by the end of the year. It's a pencil, and so we're going to have to see how the data comes in.
Aditya Bharvev, Bank of America, is penciling in 3 this year. He joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
5 days, no gains, Monday through Friday last week. Let's see if we change that this Monday morning on a holiday-shortened trading week. Equity futures positive by 0.8% on the S&P. On the Nasdaq 100, we're higher by 1.2. In the bond market, looking ahead to a week full of economic data. Payrolls Thursday. I mentioned that a few times. Payrolls Thursday. We are closed on Friday, of course, to celebrate the birthday of this great country. Two-year yields right now, 4.1%. Yields higher by a single basis point. Under surveillance this morning, penciling in a rate hike.
It is our job to get inflation back down to 2%. It's been made much more challenging because there have been all of these, what we call supply shocks hitting the economy. In March, I had penciled in one rate cut by the end of the year. In June, I've changed that to one rate hike by the end of the year. It's a pencil, and so we're going to have to see how the data comes in.
So here's the latest this morning. Minneapolis Fed President Neil Kashkari signaling a potential rate hike this year as the central bank braces for a busy week of data. Aditya Bhavev, Bank of America, expecting 3 rate hikes in 26, writing, a July move is in play, that we think the Fed will want to see the summer labour data before hiking. Aditya joins us now for more. Aditya, good morning.
Good morning. Thanks for having me.
And those 3 hikes in pencil for you and the team?
They're in pencil. For sure. Yeah, okay. we don't know what, Kevin Warsh is really thinking. He likes to keep his cards close to his chest. So we'll see how it plays out. But from our perspective, it's a pretty simple exercise. It's the data, it's the reaction function. Where's the unemployment rate relative to a year ago? It's unchanged. Where's core PC inflation relative to a year ago? It's 60 basis points higher. And yet, the policy rate is 75 basis points lower. Even if some of that inflation pickup is because of one-offs, I think they're clearly offside. You don't need replay to see that. There's a problem here. So why not just take back the 75 basis points of rate hikes? Then you talk about the reaction function. We thought going into the June FOMC that this was a committee that was fundamentally dovish. They would find reasons to not hike rates. But then look at the SEP. It's not just that 9 folks are expecting hikes this year. It's that no one has the unemployment rate coming down in the full range of forecasts. So labor tightening is not a prerequisite for rate hikes, as we thought it might be. And then finally, Warsh, he did not take the opportunities he had, in our view, to be dovish, to push back against the case for rate hikes. He didn't talk about wage inflation, inflation expectations. So we put all that information together, and we're thinking, actually, if he wants to hike, this is his best chance. It's not his fault. He can blame it on the previous regime, and he can take the credit if there's disinflation down the line.
2 pillars for this, the data and the reaction function. Yep. Is it harder at the moment to understand one versus the other?
Well, the data is pretty clear from our perspective, and the data has been moving in that direction for a while. There's open questions around the reaction function, and folks have legitimate disagreements with us about that.
Part of the reason why people are disagreeing is because there's speculation that hawkish job owning is doing enough of the heavy lifting. Yeah. And we've seen actually a disinflationary bet kind of percolate into the market over the past couple of trading days, or just really on Friday. And how much do you view this as a market saying that they don't believe that this Fed truly is hawkish?
Well, hawkish job owning works to a degree, but ultimately, if it's just job owning, the veil will come off, and then markets will reprice that inflationary impulse, right? If they don't ultimately follow through and hike rates, either that or they're going to have to get lucky on the inflation data.
Are you expecting wage inflation to start picking up? Because that's a key ingredient for this Fed to not just see a lot of the inflation data of late as backward-looking and tied to what we've seen with Iran and the U.S.
Well, wages are the most backward-looking. That's the thing. Wage inflation lags price inflation, and price inflation itself is backward-looking relative to the other economic data. So I think they would be making a mistake if they were to wait for wage inflation to pick up. First, the labor market tightens, then wages pick up. So we're not expecting wage inflation to necessarily pick up in the next couple of months, but the risk here is the labor market starts tightening, and then they're way behind the curve.
What's forward-looking?
What's forward-looking? I think activity is relatively coincident, right? So labor data is more coincident. I mean, nothing can be forward-looking almost except sentiment, but sentiment has not been a good indicator of economic activity of late. So you can look at spending, for example. I'm going to plug our own data here. We have data almost in real time on credit and debit card spending by Bank of America customers, and that looks really good the last few weeks. We have data through the middle of June, and as gas prices come down, spending on other components has actually gone up, even though when gas prices went up, spending on other components didn't necessarily weaken.
Aditya, what are you expecting on Thursday when it comes to payrolls?
We're looking for a solid report, 120,000 private, 110,000 total. So another good month of non-farm payroll growth above where we think break-even is, which is why, going back to the conversation around the unemployment rate and wage inflation, the risk here is we can't keep printing these payroll numbers without the unemployment rate coming down. And if that starts coming down, then both your mandates are pointing in the same direction. So we think, even if you look at the data now, labor's balanced, inflation's showing upside risks. All you need to do is take back the hikes that you did last year. You were buying insurance against an event that didn't really play out.
Is Kevin Warsh's European excursion this week important for you?
I don't have a strong view on what he's going to say in Europe. It's a bit too early to talk about the task forces. It feels like
well, hopefully you get some names. Who's running
yet.
these things?
Right, so I don't think he's going to announce that at Sintra, but probably the message at Sintra will be quite similar to what we heard in June.
Do you see the task forces as an exercise to delay or to get things done?
It's possible. It's a theory that we've heard. The question is, can they hold off? I mean, he said that you're not going to get recommendations from the task forces until December, and then it'll be up to the FOMC as to whether it wants to take those recommendations. So can they hold off until December? And if there's an indication that they are holding off until December, then we'll have to rethink our views.
You're certainly holding off until after the summer, right?
We are, for now. But as we said, July, I think, is live.
At this point going forward, what would potentially make you rethink any rate hikes at all?
So a few things. The first one would be if the labor data over the summer are weak and the unemployment rate starts going up. Second, inflation. So if you get weak, not headline, we know headline's going to be negative in June. We knew that the oil path was going to cause headline to be up and then back down. Core. If core inflation is weak to the extent that the year-over-year rate starts coming down, that's something to look at. And then third, if you do get a big correction in the labor markets, it would have to be big to the extent that the Fed is worried about financial conditions. Right now, they're worried in the other direction that financial conditions are too easy, and I think they're right.
Aditya, it's good to see you. It's always good to catch up. Aditya Bhaver there of Bank of America, looking for 3 hikes in pencil later this year. Got quite a big week coming up. We've got JOLTS coming up tomorrow, week full of economic data on the jobs side of things. ADP coming up on Wednesday, payrolls on Thursday. The Fed Chair Kevin Warsh in Sintra, Portugal, this coming Wednesday morning.
Yeah, and AMH asked, how much do you care about it? I care a lot about his trip to Sintra, Portugal, because it is a destination known for its mystical, mist-shrouded hills, whimsical castles, and lush, exotic gardens. And it looks like it is straight out of a fairy tale. So for all of those in Sintra, Portugal, enjoy. It looks like a truly beautiful...
Are you doing a TK? Going onto the Wikipedia of Sintra?
I actually was going to Gemini. You know, I've upgraded.
Oh, right. OK.
It's not a bad first trip as Fed chair, is it?
Yeah, I was about to say, I care a lot about it. No, look, I think it's going to be really interesting to hear what he says. I always just find the backdrops for these.
Are you messaging management to see if you can go on that junket as well?
I've gone full tour for that junket as well.
That's where this is going.
You've got a list of my junkets?
That's where this is going. Coming up next, Alicia Levine of BNY Wealth, Neil Christiani of JP Morgan Private Bank, Steve Englander of Standard Chartered, and a whole lot more from New York City this morning. Good morning. The second hour of Bloomberg Surveillance up next.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
There are pockets of stress in the economy.
Inflation expectations have probably got a little bit ahead of itself.
Inflationary pressure is going to subside.
The Fed is going to be very cautious about tightening in this environment.
The Fed should be able to walk and chew gum at the same time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores, the price action, look like this. Equity futures, session highs, up by 0.9% on the S&P 500 after going 5 days without gains on the benchmark stateside. In the bond market, yields shaping up as follows, just about unchanged on the session so far at 4.1%. Heading into this week right here, a week full of economic data and an address we will hear from Kevin Walsh, the Fed chair, in Sintra, Portugal.
Yeah, how much will he really lean into some sort of reaction function that's similar to what the market interpreted a week and a half ago, which was that they are going to be more hawkish, they are going to potentially raise rates, or how much will he lean into the disinflation that's getting priced into the market? One kind of comforting feature of the rally that we're seeing this morning is that there seems to be at least some release valves in the Iran-U.S. tension, so it doesn't seem like we're going to get oil prices once again threatening the narrative. Also, you have this sort of domestic push to try to invest in technology that you're seeing from South Korea. You put these two things together, it's the bomb to really make everyone feel a whole lot better.
I think everyone's hoping to get a little bit more understanding of Kevin Walsh and how he's thinking about things as he takes on this new role. But Aditya Bave was saying he's not really expecting anything out of this Sintra speech. I'm actually also interested, besides the fact that we have the Supreme Court decision potentially on Lisa Cook, that can come today or later in the week, maybe when Kevin Walsh is set to speak. But also, how is he received? Remember, last year at Sintra, Jay Powell got this standing ovation, and everyone was clapping for him and lots of chatter about how he was standing up to the Trump administration. Well, this is Trump's pick, and it'll be interesting to think how he is with his colleagues and the other central bankers.
Mark Carney endorsed this guy. There's a number of establishment figures
but I still
that got
think it'll
behind
be
Kevin
interesting.
Walsh. It's not something I'm looking for. I've heard that view a few times. I don't think it's particularly out there. I just kind of disagree with it. He was endorsed by so many establishment figures over the last few months. He's worked at the Federal Reserve, the institution. It would be highly controversial if they did give him the cold shoulder at an event like this one.
What officials that have spoken from the Fed have said so far is that they actually feel like it was really collegial and good. And so far, he has had a similar tone. And honestly, he served at the Fed as a governor from 2006 to 2011. This is not somebody who is new to the institution. At the same time, it'll be interesting, do people lean into the task forces? Is Christine Lagarde going to have a task force? Brooch or scarf?
This market rallied through a war, rallied through an inflation spike, rallied through an increase in rate hike bets of the Federal Reserve. It rallied through all of that because earnings are so good right now. We have experienced a positive earnings shock in this country that was widely unexpected coming into the year. Look at the price targets we've seen in just the last week from SocGen, JP Morgan, Barclays, Wells Fargo the week previous, and Lori Cavacino of RBC already this morning.
Yeah, although something that Ajay Rajadaksha said I thought was really interesting. Earnings bubble, right? Are we seeing the peak in terms of earnings growth, particularly when it comes to the memory chips? We see the Korean memory manufacturers trying to build out more capacity. With respect to OpenAI and Anthropic, are we seeing the peak in how much they can charge in contrast to, say, the cheaper Chinese models? I mean, these are some interesting questions. Not to say that it's going to cause some sort of huge crash. Just these are the questions that people are speculating on when it comes to some of the rounds of fundraising.
What was so interesting about Ajay was the tone and tenor of his comments. I'm not surprised he's saying he needs to upgrade earnings. Remember the height of the war, he upgraded his S&P 500 target. But he says he doesn't want to do this. It felt like he was a little bit uncomfortable leaning into the fact that he has to upgrade earnings.
I asked him, where's the deeper pool of skepticism right now, on the bearish side or the bull side? And he said the bearish side. Tells you something. There's some information in that, some reluctance to really upgrade his outlook for earnings.
Try betting against this freight train. If you have, you've had your face ripped off. And that's what a lot of people in the market have watched. And they said, look, we can't fight against something that's real and that's coming and that, frankly, is getting adopted broadly across all of business.
You might have heard a few weeks ago, even Lisa's bullish now.
Okay, well, on the technology, I'm not. Okay, all right. But I'm not going to clarify. No one needs to know. I think that you can be bullish in the technology.
Bullish Lisa's fun.
I think it's interesting.
That sounds like a climb down.
It's not
bullish
a climb
on the
down.
tech and not the market.
I'm not looking at market valuations at like any particular time, but you can't reject what's currently going on. You just can't. I mean, I spent the whole weekend trying to figure out how to code different agents for myself. It's quite impressive.
All right.
They're interviewing me.
You're the reason why we don't have compute.
Sounds like a climb down.
Yeah.
Just on the margin. I'm bullish the tech, not the market.
I don't make a call.
Okay.
I'm observing.
It's fair. I don't make one either. Coming up this hour, we'll catch up with Alicia Levine of BNY Wealth, with stocks aiming to get back on track. Neil Christiani of JP Morgan on the first true test for USMCA. Steve Englander of Standard Chartered rolling out hikes for the remainder of the year. We begin this hour with stocks looking to bounce back from a week full of tech jitters. Alicia Levine of BNY Wealth writing, expect a summer of volatility, a midterm election year, AI backlash and IPO supply will produce a consolidating market. Alicia joins us now for more. Alicia, good morning.
Good morning.
Given all of those things, that long list, what's the road, the path to 8K?
So the path to 8K is the earnings, right? It's the earnings and the fact that it's not just focused on the AI beneficiaries, but it's actually broadening throughout the S&P. And that's what gets you to the 8,000. Also, you know, the multiples are really not that high. We're back to 21 times forward earnings in a market that's growing at 23 or 24 times on the earnings side. It's pretty extraordinary. And we're still looking for 17% growth for next year. So you're following two very strong years with a multiple that seems fine, but you're going to get volatility. There has to be consolidation here. I mean, some of those charts are parabolic with the memory names, that's the center of that. And it's going to pull some of the market down with it just because they are the leaders right now, right? It's not the Mag 7, the Lag 7, right? Maybe there's a buying opportunity there, frankly. But that's what's led the market higher. So you've got to, it's not just tech, it's not just memory, it's all over the industrial space. Healthcare is raising its head here as an interesting sector to look at. The charts look a lot better. But those are not large enough to get your index higher. So, you're going to have a rotation, but you're challenged probably on the index level for the next few months.
Outperformance on the equal weight, outperformance on small caps.
Right.
You alluded to it. Is it time to start thinking about the hyperscalers again, which have really lagged?
They've lagged, and they look terrible on the charts. But I think that you have to believe that the managements there are not going to let their businesses go quietly into that dark night, right? I mean, if you think about some of the other companies in the hyperscaler world where we thought that was the end of it, it's never going to happen, and then they revamped their businesses, and we have to believe that the managements there are going to do that. The headlines don't look great, charts look terrible, but given the massive outperformance on the hardware side, I think there's some room here for the hyperscalers. I mean, what's happened is the $800 billion that 5 companies are spending is funding the EPS of of 60 companies. So that's where the investor base has gone, pulling capital from the spenders into the recipients. And so the question you have to ask is, one, how long can this funding go on? And two, what's the reversion trade?
Are you expecting them to cut back on CapEx and actually push back on the pricing from some of these chip manufacturers?
So the market is telling them to do that. The market is saying you're not going to get the multiple if you keep on spending like this. Yet at the same time, the AI beneficiaries still move higher. So there's a bit of a schizophrenia here about what actually is the path to, sort of a peaceful place for the market. At some point, you're not growing CapEx 100% year over year, right? The growth rate is going to slow. Still positive, but a negative rate of change. That's where you're going to get the negative impact on the AI beneficiaries, and that's where you're going to start to get some movement out of the hyperscalers.
Where is the pushback the greatest when it comes to the financing of this? Is it just in the share price of the hyperscalers, or is it actually in the recent performance of the SpaceX debt and equity, as well as the potential delayed OpenAI IPO?
So I think it's really in the hyperscalers, because the question fundamentally is, can the spending justify the businesses that are going to come out of this in the next 3 to 4 years? And so that's really, you're seeing it in the equity market. And don't forget, the business models have changed. We used to talk about the hyperscalers as bond equivalents, right? Throwing off cash, stable businesses, very high margins, high free cash flow margins. We don't have that so much anymore, right? So you've got, 2 or 3 of them, actually selling debt, having to sell debt, not just equity, but debt. That's a very different business model. And that's what's happening on the equity price. It's just reflecting a different business model.
Well, to that point, BIS, and we talked about this in the last hour, the Bank of International Settlements is warning against these threats of this circular financing. It's not just equity, it's debt when it comes to the AI build-out. Does that give you caution?
What gives me caution is that I see correlations everywhere, right? So there's something of a concentrated correlation. Now, I'm a bull. We have an 8,000 price target on the S&P. But we have to be cognizant of the risks. And the risks are that you have more or less 20% of the S&P driving the earnings of the rest of the market, funded by 6 companies of the S&P. And you have a bond market, which is now reflecting AI as well, because the hyperscalers are funding themselves with debt to do this. Then if you think of emerging markets, think of the indices, right? South Korea, Taiwan, well, 50% of the EM index is now AI as well. And so when you put it all together in what we do, a diversified portfolio, you're starting to look at concentrated risk in AI across all your asset classes. And so as an asset allocator, that's what you really have to be focused on. Like, how do you hedge that risk?
How do you?
Okay, so we think, for infrastructure and real assets are a must in a higher inflationary world. It's not popular to say goodbye Europe, but Europe really is not the AI play. And other developed markets that are not, focused on AI. So you have to really think about, how does your EM exposure pair with your U.S. exposure if it's all being driven by the same factor, which is AI investment and AI, beneficiary. I mean, that's the issue. That's the big issue for all of us who do asset allocation and think about building out portfolios that can withstand this.
It's a crazy distinction. Over the weekend, just going through the numbers, the amount of money being spent on CapEx in this country from a handful of companies on AI. Then you look to South Korea in the headlines from Samsung and SK Hynix, looking at $800 billion, something like that in investment over the next however many years. And then, I don't mean to be flippant about this, you've got Europe arguing about aircon over the weekend.
Right.
That's the situation we're in right now. That's the great divide.
Maybe that's your diversifier if you want to get away from AI.
It's kind of shocking.
It is shocking. And there has been a huge push to say, what is your AI story? If you take a look at the top big 15 AI providers, there is only one, Mistral, from Europe, and it is down really low. It is like in the 13, 14, 15 position. And you have U.S. and Chinese companies taking the lead. This is increasingly a domestic competition types of story. And you're seeing that sovereign story come from South Korea in bold relief this morning.
Just piling into energy-hungry technology in China, Europe, South Korea and elsewhere. And Europe is just somewhere else. Just somewhere else.
They've got good food, and I hear that.
Fantastic food. Yeah, I love Europe. You know
honestly,
that.
Yeah, but I think
the policy debate is just like on another planet right now.
Right now, it's been taken to space by SpaceX, maybe, to Mars.
European soccer fans, though, or football fans in America, are discovering air condition, and they think it's like the greatest invention ever.
They're discovering abundance. They're discovering abundance across a number of dimensions. That's the major difference of the experience in America versus Europe right now.
There was a great story about Dutch tourists going to the suburbs in places near Kansas City and experiencing a Costco, experiencing a Walmart, experiencing a strip mall, experiencing the gas stations. They were impressed by the wealth, the abundance, they were not impressed by the abundance of food or the quality of it, which I think is interesting. It goes back to what we were saying earlier.
Quality is a separate debate, you know. I choose Italy every time. You know why, Alicia, it's good to see you. Going to stay with us. We won't talk about that. Alicia Levine of BNY Wealth. Up next on the programme, we'll have more on the technology trade and, of course, the latest in the Middle East. We'll also get you an update on stories elsewhere this morning. With your Bloomberg Brief, we'll catch up with Vonnie Quinn. Hey, Vonnie.
Hey, John. Chinese AI systems matching the performance of Anthropic's Mythos model in some scenarios. The Wall Street Journal reporting a new model by China's Zhipu, released this month, can match Mythos when it comes to finding security bugs. House Speaker Mike Johnson says he'll send the bipartisan housing bill to President Donald Trump to sign today. The president abruptly cancelled a signing ceremony for the bill last week to pressure the Senate to pass a nationwide voter ID law that he's been pushing for months. Former Disney CEO Bob Iger and Thrive Capital founder Joshua Kushner may be getting into the sports business. The two hiring investment bankers for a possible bid for the NBA expansion team in Las Vegas. The bid would be for a majority investment in the team. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, governing AI.
We've been talking to the government. We're very respectful of their recommendations. They're worried about counterintelligence risk. We're doing the best we can to open up Mythos to new cyber defenders.
Up next, we'll catch up with Bloomberg's Tyler Kendall and have more from Alicia Levine of BNY Wealth. From New York City this morning, good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Equity futures positive here, just off session highs. We're higher by 0.8% on the S&P 500. On the Nasdaq 100 this morning, higher by 1 full percentage point. The Russell small caps outperformance last week alongside the equal weight S&P. The Russell this morning underperforms just a touch. We're positive by 0.3%. Let's talk about tech. Under surveillance this morning, governing AI.
The reason that we're giving Mythos to defenders before we give it to attackers is to patch all the bugs. We're doing the best we can to open up Mythos to new cyber defenders. We've been talking to the government. We're very respectful of their recommendations. They're worried about counterintelligence risk.
So here's the latest this morning. The Trump administration granting Anthropic approval to restore some access to Mythos 5, the country's top AI firms, responding as the White House continues to put limits on some of their top-tier models. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, this eases a clash that erupted about 2 weeks ago after we saw the Trump administration take really the unprecedented step to bar foreign access to Anthropic's most advanced models. In a statement over the weekend, Anthropic says that the company received notice from the U.S. government that Mythos 5 can be redeployed to a, quote, small group of cyber defenders and infrastructure providers. A person familiar with the matter tells Bloomberg News the company is in talks about access to Fable 5 as well, and the goal is to have both available for general use again. Now, it's unclear what steps Anthropic took in order to satisfy the U.S. government's safety concerns, though the U.S. Commerce Secretary Howard Lutnick said that significant progress was made. Now, this does mark a thawing in relations between Anthropic and the U.S. government, but tensions, of course, still remain, considering that this dovetails with what has become a bitter, months-long feud between the two when it comes to the military use over Anthropic's AI tools. And John, Washington's relationship with this company is having ripple effects across the industry. In fact, we saw on Friday OpenAI move to limit the release of one of its new models under pressure from the Trump administration. Both companies, Anthropic and OpenAI, are now urging this Trump administration to codify some sort of process when it comes to reviewing and the release of new AI models.
Tyler Kendall with the latest in Washington. Tyler, thank you. Introduce China. Step up China. One of the most read stories over the weekend from the Wall Street Journal. China has matched Anthropic in cyber security.
There are a couple of ways to read this. On one hand, people are saying that because the U.S. restricted Mythos and Fable, people are saying, well, why don't we just go to someone who won't restrict it, which is the Chinese open models, and there is less potential policy risk from an internal procedure process. Imagine if you had some sort of AI tool deployed and then you had to withdraw it suddenly because it was banned by the government. So some people are saying it's something of an own goal, and other people are saying, well, the Chinese technology isn't there enough, but it's good enough to effectuate some sort of proliferation. These are the two sides of a story that people are looking at and saying it's a national security concern and it's a business concern about who's going to shift over to China.
China is certainly narrowing the gap, which is why other people are coming out and saying this administration needs to do more in terms of export controls, in terms of chips and other materials China needs to create models like this that are up against Mythos and Fable 5.
Well, geopolitics one point, price the other. And price is an important part of this conversation as well with regards to China.
Yeah, there are people, including Microsoft, that are heading to Chinese models because they're cheaper. And if the Chinese models can do what the U.S. ones can for the most part, even if they're not the most cutting edge, why wouldn't companies go over there if there's a price issue? And isn't this kind of the Chinese model? You can say that they deduced some of these models, whatever you want to say, but it's to reproduce it, make it as cheap as possible, and proliferate throughout the world, even if it isn't quite as good as the latest models.
Alicia Levine of BNY Wealth still with us. Alicia, just to build on this conversation, is there some signal in the reaction to price over the last few months?
Yeah, I mean, I think that's what you're seeing also. I mean, if you think about the original AI beneficiaries here, they haven't gone anywhere, right, in terms of stock price, because there's a sense that the top of the S-curve is here, right, that you have the ramp period and you're here. And if you have the Chinese model available, but the interesting thing is it gets back to the bigger question of, well, the reason we're pressing on this is because we don't want the Chinese to get ahead. So it turns out that conversation is actually the right one. That is the right one to have, and that is why we have to push so hard. It's a conundrum here. I mean, the government, I would hope, has the right expertise to know what it is to limit or not limit, but I think the threat from the Chinese models is very real.
How different is it to invest in artificial intelligence at a time where it's domestic priority, it's national security, it's something where you're seeing nations around the world trying to double down and finance themselves?
Like sovereign AI.
Yes.
So I think there'll be insatiable demand for this. It clearly has defense implications. We know that. I think we've seen that in the most recent hot wars here, both in the Middle East and in Europe. And that is going to keep the demand going. I think there's a sense of it's a smorgasbord and you have to take it all right now until you know which models are the right one. I think as it relates to what we've just been watching, there's a sense of a back and forth. Some of the companies have actually been more open about trying to limit it than others. Some think that's a political way of doing things, trying to be the one that's trusted, because if they keep on saying you have to limit us, well, you must be trustworthy. I'm not sure that's actually the case.
That said, the more this is sovereign AI, the more the spending really is coming from the governments, right? I'm not sure exactly where the financing is going to be behind SK Hynix and Samsung and their potentially 4 or 5 fabs. At the same time, some of it's going to come from backstops that are sovereign. At what point does this make you really concerned about the bond market? Because we are spending so much money, and it seems to be insatiable, and it seems like governments around the world see it as an existential risk not to. That how can't you expect there's just to be a flooding the zone kind of moment?
So this issue of national spending on AI piggybacks on the global debt issue, right? So you have bond yields higher everywhere because we haven't actually gotten out of that COVID moment where every government spent a lot to support economies and never really got inflation back down to under 2% anywhere. I mean, every developed economy, inflation's close to 3%. And that's because we're just letting it ride. And this is the problem. The problem is that this spending issue is coming on top of all the excesses that we had during COVID that really have never been taken care of. Very hard to spend anywhere and then to take it back in the form of austerity. I mean, this government tried to do it in early 2025, and you saw how long that lasted. It lasted 6 weeks. So you're building spending. And so when we're talking about like correlated risk, yes, the corporate bond market, the equity market, U.S., emerging markets, sovereigns, it's starting to feel a lot around the same. Now, that doesn't mean something bad's going to happen. It just means that there is a sense that there's a moment in time that you have to invest in this because you can't be left behind. And if you can't be left behind, you have to spend.
It also shows, and you noted, that oil prices are not the determining factor of where yields are trading.
No, the most fascinating thing is when the MOU was signed, oil dropped 12%. And the 2-year went much higher, right? Went higher by 20 basis points. So that's the most fascinating thing. What's telling you is that oil prices can drop. Yes, the headline inflation is going to drop, as you had in the previous conversation before I came on set. But the inflation now is likely embedded in core, and maybe not from oil prices, but from the spending on AI and the chip sector that's going into all the consumer goods. So now you've got a core inflation problem, which you didn't have when the war started. And so that's why the hikes you're still being priced in by the bond market. I don't think you get more than one hike this year, in the sense that because it's a Kevin Warsh Fed, it's not a Powell Fed. He said he's going to break with tradition. I think he could hike once and be done. Like in previous Feds, it was a cycle, at least two, either cutting or hiking. You could probably get one, but it is helping the long end very good. But the front end's telling you there's a hike this year.
Alicia, it's always good to catch up. Thanks for being here. Alicia Levine there of BNY Wealth. The president active this morning out on social media just moments ago. Gas prices are coming down fast. Report any abuses at the retail level.
So basically, once again, going after the actual gas stations if you see that prices are elevated for what he thinks it should be. Also, the president out with another Truth Social post about WTI crude at $69 and heading down. This is less than it was prior to the start of the denuclearization of Iran. So I guess the president in this other truth is claiming that Iran has been denuclearized, which isn't true because they're about to have conversations, technical conversations about this point.
Energy's moving. The relief starts upstream, and then it takes a while to address the scarcity in product further downstream. It's a process. It doesn't happen overnight.
It's Joe at Sunoco. Why aren't you doing it on the stop over there?
Right.
Lower the prices, Joe.
Yes, just not how it works, right? Up next, Neil Christiani of JP Morgan on the first true test for USMCA.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From New York City, welcome back to the program. 5 days, no gains on the S&P 500. There's a reason I keep saying that and not a 5-day losing streak, because on Friday we were lower by 0.05%, Thursday down by 0.01%, Wednesday down by 0.1%. 3 of those 5 have been really, really muted losses.
Yeah, buy the dip, 0.01% loss. Buy it, get on in there. Look, this has been a range-bound market amid a huge churn under the surface, and that I think is the real story, and you've been pointing to it. The idea that you have seen some souring on some of the tech names, or at least volatility, even as you see a chugging forward of the equal weight and of this broader base rally that people are seeing as still having legs.
So here's the bounce on the large caps this morning, up by 0.8 on the S&P, on the Nasdaq 100 higher by 1.15, going into a week full of economic data, including payrolls this coming Thursday. You'll hear from the Fed chair as well, Kevin Walsh, speaking in Sintra, Portugal. That's Wednesday morning. In the bond market at the moment, 2s, 10s and 30s shaping up as follows. 2s, yields just about unchanged at 4.1%. 10s around 440 at 437. There has been a reset lower in this curve. 2s away from 420, 10s away from 450, 30s away from 5%.
Last week, 2-year yields dropped by 8 basis points. This came after the Fed's meeting, where they evidently took a hawkish tone. So go figure. This is a market that is saying, we hear you, Fed, and we don't believe you. We're going to look at the oil story, and we're going to look at what potentially could come down the pike with disinflation and a potential peak in the inflation characteristics.
Let's look at the oil story. It's a bounce this morning, up by 0.8%. But speaking of resets, a massive reset lower from triple digits not so long ago to 72 on Brent and 69 on WTI. And the president is noting that, and he'd like to see retail prices come down even faster.
Yeah, so in this latest truth, he's not actually going after the name brand oil companies. He's saying it's tell the retailer that you're buying your local station that, you know, prices should be down. To your point, Jonathan, and experts will tell you there is a lag when it comes to oil prices to gasoline prices.
There will be a conversation, according to the president, with Iran, saying this morning, which contradicts to some extent what we heard from Iran, that Iran has requested a meeting. It will take place tomorrow in Doha. That crossing just seconds ago from the President of the United States.
So we were expecting going into this week to have technical talks about the memorandum of understanding, the 60 days that this memorandum of understanding has given in terms of having these talks about a more lasting peace agreement. But then, of course, just before 6 a.m. this morning, when we came on air, local media reports in Tehran were saying there were no discussions. Well, the president says they are, and that likely means that a Jared Kushner or Steve Witkoff is making their way to Doha.
It's difficult to keep up, which is why so many people have been ignoring this now for a number of weeks. And even more reason to ignore it with crude back down to the 60s on WTI.
There is a signal here, which is that President Trump wants the talks to continue, and that reluctantly, on some level, Iran is coming to the table in some capacity. The idea is that people are seeing this sort of messy middle as being the status quo for a while, and that's enough to keep prices where they are and then to move it on.
You mentioned earlier the Deutsche Bank survey. 75% believe that the Iran conflict will now largely fade, occasional volatility. 13% say completely fade. Wall Street has completely moved on.
Is that a forecast or a hopecast? Something of one or the other, I think.
I think that was a good question.
Right.
You know, honestly, it's a hope cast. I think a lot of people are just hoping this fades into the background.
That hope started a long time ago. 2 hours away from the opening bell. Let's get to your single name story this morning. Your morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start on some breakup news with Comcast shares soaring more than 23% in the pre-market after it announced this morning that it will split into 2 publicly traded companies. Comcast will keep its wireless and broadband business, while NBC Universal and Sky will spin off into a different media company. The thinking is that each company can focus on navigating their respective industries, very different, that are very much changing at this time. Meanwhile, we are seeing NVIDIA and Palantir gaining this morning, already up on some positive tech sentiment, but got this news in just the last hour that the companies are expanding their partnership to help U.S. government agencies run NVIDIA's open source Nemotron AI models on Palantir's platforms. It comes as the U.S. puts a greater emphasis on securing the most advanced, the best AI models, but of course, as it continues to run into issues with Anthropic. And we end on SpaceX. It is edging higher this morning, up more than 2% in the pre-market after NASDAQ confirmed that it will join the NASDAQ 100 next week before the market opens on July 7th. That means index funds and ETFs that track the benchmark will likely be buying billions of dollars worth of this stock. The question is whether that will get SpaceX out of its rut since it's a blockbuster IPO. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, the US and Iran standing down after a weekend of military strikes. The president saying a meeting with Iran will take place tomorrow in Doha. Semi-official media in Iran saying no talks are scheduled. As we're having this conversation, this crossed from a Bloomberg subscriber to me just moments ago. Make it end. Elsewhere, the Supreme Court set to rule on President Trump's push to fire Fed Governor Lisa Cook. Justices will decide if Cook's temporary removal stands while Cook fights for her job. A decision is expected before the court's term ends tomorrow. And finally, South Korea's top memory chip makers pushing to get ahead in the AI race. Samsung and SK Hynix among companies pledging to spend nearly $900 billion on chips and data centers with plans to rapidly expand production to meet demand.
Yeah, right now I'm looking at about $900 billion. The envisioned collective investment represents about 5% of South Korea's total GDP in 2024. So this is a massive investment. And really what I'm looking at going forward is just how much we end up seeing these domestic initiatives come from the government. Right? Like, I don't have a clear sense when I was reading this, did you, of who's financing this or whether this was SK Hynix and Samsung going to the broader market and saying, hey, guys, can you spare a couple $100 billion?
It sounds like it's one of these joint cooperations between the government and some of these companies, given the fact that it's also announced by the president, which also we are seeing similarly take place. Of course, this is age-old story in China, but also mimicking as well in the United States as they are having these discussions as well with AI companies and the stake, of course, in Intel.
A bit of a fight also about why we're in this position and we don't have this capacity, a back and forth. Not naming any names, but maybe some of these companies, the likes of Micron, blaming the likes of Apple as to why they didn't build the capacity when prices were rock bottom because these companies wouldn't pay up for what they needed to go and spend the money at the time.
Yeah, I mean, there's going to be a lot of allegations on either side. Either way, South Korea is saying, you guys can take that squabble somewhere else while we build out our capacities so that we can meet whatever demand is possible so no one can upend us. And we will have the backing of the government to do that.
Let's return to trade. Let's talk about this. Haven't talked about this in quite a while. USMCA facing its first test since being signed by the president in his first term.
The USMCA is the largest, fairest, most balanced and modern trade agreement ever achieved.
I would rather not have the agreement, but I may sign it. We do better as a country if we don't have an agreement.
The US, Mexico and Canada set to blow past the July 1st deadline to renew their trade deal. Noor Cristiani, the head of Latin America investment strategy at JP Morgan Private Bank, writing, the base case is an extension with modifications, but the tail risks are asymmetric and underappreciated by markets. Noor joins us now for more. Noor, good morning. Good to see you.
Thank you, John.
So refresher if we can. So it was NAFTA, became USMCA under the president's first term, and now he wants to redo the thing that he came up with in the first term.
The best agreement in the world, the way that
Makes sense of all of that for us, please.
Yes. So when NAFTA was turned into USMCA, a set of guidelines were put in place for periodic reviews. We're coming to that first periodic review. I think it's next Wednesday or Thursday, July 1st. And what it calls for is if there's no agreement between the three parties, it goes to another annual review and another annual review and another annual review until the agreement expires in 2036. If there is an agreement, the whole USMCA can get extended up until, I believe, 2040 or 2036.
Another 16 years.
Yes, exactly. So right now we're basically faced upon this check-in. I would call it more as a check-in between the three parties. Do we all agree with the same terms that were negotiated upon 6 years ago? Or do we need to tweak something? Or do we need to really change things and bring this review into a whole renegotiation? That's where we stand.
What are you expecting?
The reality is that what we are anticipating is very little modifications, and that this review will basically kick the can down the road for another annual review. There's very little insight right now that we're having any sort of agreement between the three parties, which means that July 1st will come. We're going to have the three countries sitting together saying we didn't reach an agreement. And this will take us down into 2027 review and then 2028 review if maybe.
Briefly, what does every country want changed?
There's different things. For US and Canada, for example, a lot of it has to do with energy. Between Mexico and the US, there's a lot of concerns around transshipment, especially as Mexico brings on exports or imports from other countries, particularly China, assembles in a different fashion, stamps on the label made in Mexico and then sends to the US. That's a big thing. And the other one that is very important is all the reforms that have been taking place in Mexico in the last couple of years have challenged to some extent the rule of law or investor certainty precautions that were included in the original USMCA.
Individuals, business, C-suites definitely want clarity. I was with the president in Wisconsin when he was addressing farmers. They want clarity, desperately want clarity on an issue like this, given corn goes to Mexico and the likes of agriculture up to Canada. How do you see this playing out in terms of level of clarity, in terms of, is it going to be like Liberation Day where we get whipsawed every day by headlines with USMCA? Or is this going to be one of those stories that just kind of fades into the background?
I think it's going to fade into the background when it comes to markets, but it's not necessarily going to fade into the background if you're a farmer exporting to Mexico or if you're an auto producer in Mexico sending auto parts or cars to the US. That's definitely not going to be the case. What has happened so far and what has happened for the last couple of years is that a lot of the investments that were planned out to happen are being pulled back, are being paused. And the risk of that happening is that right now we're running, and you guys know these really well, we have been running in an economy that's CapEx driven for basically 2 years. CapEx that is very much dependent on all the AI boom. Well, that AI boom is also partly dependent as well on what happens with exports and imports. Mexico became the largest exporter of advanced technology products to the U.S. in 2025, and very few people know that. So, yes, maybe it's not going to be overnight. It's not going to be from one day to the next. But at some point, if there is more uncertainty playing out in terms of how easily can you bring in Mexican exports, this could even impact the CapEx boom that we're seeing in the States.
Where in markets is this risk mispriced? Not necessarily on July 1st, but over the next couple of weeks and months.
Industrials, mainly auto, aerospace. That's where we're seeing the biggest risks. Those are the sectors that are the most reliant and dependent on the agreement to continue.
Is that a Mexico-Canada problem or a US problem as well?
It is a US problem as well. Trade with both Canada and Mexico represent 5% of the US GDP. It's not little.
No, I appreciate it. I would say I'm looking forward to talking about this, but I'm not looking forward to talking about this because this could go on for weeks and weeks and weeks.
Well, when it comes to some of these policies, it seems like the never-ending story that never has a conclusive or satisfying finish. This is a concern, though, and to Anne-Marie's point, I think it's a really good one. The lack of certainty around this, it gives a real pause to people who are trying to plan, especially given supply chain resilience and the concern about the lack thereof recently.
When did this flip? When did this change? When did the president become unhappy with the deal he came up with?
I think when he stepped back into the Oval Office for round 2. It was the best deal until he can get an even better deal. I also think, to Noor's point, things have shifted. We are bringing in more imports from Mexico. That's the nearshoring effect from trying to de-risk supply chains from China. Maybe the president thinks he can get better deals when it comes to USMCA. But that lack of clarity is going to be a problem for a lot of individuals, especially farmers.
Noor Christiani of JP Morgan Private Bank. Noor, thank you once again. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. President Donald Trump saying Iran has requested a meeting Trump posting on Truth Social the two will meet in Doha tomorrow. The announcement coming just 90 minutes after Tasnim, Iran's semi-official news agency, said no talks were scheduled for this week. France recording about 1,000 heat-related deaths this week. The French National Public Health Agency saying 85% of the deaths reported since Wednesday were people aged 65 or older. The government earmarking $114 million in emergency spending to buy air conditioners, fans and other equipment for hospitals. Lionel Messi making World Cup history again, becoming the first player to score in 7 consecutive tournaments. Messi recording his 19th World Cup goal in Argentina's 3-1 victory over Jordan on Saturday. His record now is 123 international goals in 202 appearances. And that is your Bloomberg Brief. John.
Ridiculous record. Fonnie, thank you. Just records been broken all over the place at this World Cup. Up next on the programme, plotting out a rate hike.
Core inflation is moving sideways or ticking up now. That's concerning. Going forward, might we have to raise rates from here? It is certainly possible. That's why I penciled in 1 dot. But we need to see how some of these other dynamics play out.
Up next, Steve Englander of Stand Chart.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Here's your bounce back this morning on the S&P, high by 0.9%. On the Nasdaq this morning, large cap tech making a comeback, up by 1.2%. On the S&P last week, first weekly loss since the start of the month. On the month, down by about 3% on the quarter. A few more days of that left on the quarter, higher still by close to 13% on the S&P 500. It would make it the biggest quarterly gain we've seen going back to 2020. Switch on the board and get to the bond market. 2s, 10s and 30s. We'll talk about rates in just a moment. Yields unchanged on 2s at 4.1%. Crude basically unchanged this morning as well. WTI and Brent just getting notification from the president that there should be a conversation between the US and Iran tomorrow in Doha. Brent at 72, WTI at 69. You know how this goes. Strikes over the weekend and then talks as you start the week.
Yep, and so the truce, the memorandum of understanding of 60 days is hanging on somewhat by a thread. We did see an uptick in vessels. Now that's tempered just a little bit, even though it continuously does move. The president says the talks are on, which is different from what we heard from the Iranians very early this morning, which said they did not request this meeting and there are no technical talks. We'll have to see what happens in Doha tomorrow.
Crude, 72.41, and Bramo wants absolutely no part of this conversation. Just like so many of you at home want absolutely no part of this conversation.
Nope, not at all.
The cynic in you believes that maybe the back and forth is lined up with market hours on the weekend, strikes, and then we start the week.
I mean, is that a question?
Right.
I mean, yes, and also the idea that, like, keep the heat on, but not too much, and perfectly calibrate, and ultimately this is the reason why people are moving on.
It's Monday. The market's open, so there must be talks tomorrow morning. And the surveillance this morning plotting out a rate hike.
The U.S. economy has proven to be much more resilient over the past year than I had expected. Inflation is still too high. Core inflation is moving sideways or ticking up now. That's concerning. Going forward, might we have to raise rates from here? It is certainly possible. That's why I penciled in one dot. But we need to see how some of these other dynamics play out.
So here's the latest this morning. Investors bracing for a slew of economic data due out this week as the Minneapolis Fed President Neil Kashkari warned rate hikes might be necessary to get inflation under control. Steve Englander of Stanchart expecting the central bank to remain steady, writing Fed Chair Kevin Warsh will hold the line on tightening if imbalances are not growing quickly, and Fed hawks will not ease until disinflation progress is clearly visible. Steve joins us now for more. Steve, good morning.
Hey, good morning.
Is that view becoming increasingly contrarian, that they can hold the line through the rest of the year?
Well, you know, we've had that view for a while from late last year. And at the beginning of the year, we were the most hawkish on the market.
We were price setting cuts.
Yes. And now we're among the most dovish. I think the key issue is that whatever imbalance there is, it's not growing very fast. So it's like your doctor telling you, yeah, the disease will kill you, but it might be in 50 years. I mean, there's nothing to do right now. And I think that that's the stance that they're going to take until they just see which way it breaks.
So you're at no change, but some people have seen a change in the data and a shift in the reaction function. Why would you push back against both?
Well, because you might be wrong. You know, it's one thing to say, OK, let's do some insurance hikes. And we've written that Bernanke and Yellen probably would do some insurance hikes. But if you do those, you have to be ready to take them back, right, if it turns out that they're a mistake, because you're doing it in anticipation of something. You know, from what Warsh has said, he's more the steady hand type. He'd prefer to wait and see that there's a need to sort of take policy in one direction or the other. The other part, I'd say, is that unit labor cost, which no matter how hawkish you are at the Fed, is like super duper, super core inflation. It's the basis of domestic value added inflation. Is really low. It's well below 2%, and it doesn't matter whether you take it over a year, 3 years, 4 years, it's well below 2%. So the risk you're taking is that core inflation goes from maybe 3 to 3.25, 3.5. You're not taking a risk that it goes to 5.5.
Are we being too cute about this? I mean, at a certain point, they said they need to get inflation down to 2%. They've missed it for more than 5 years. Inflation's too high. People hate inflation. This is their one mandate. They're not talking about the employment market. Are we being too cute saying, well, but maybe they're not being that hawkish? Maybe they're just going to sit on their hands? Well,
look, I think the productivity story is real. And, you see it in the numbers. The productivity has picked up. And it started picking up well before we all had AI on our phones. So it's a broader technological thing. I mean, you began to see evidence in 2023, 2024. That's a big factor in keeping a lid on inflation. So there's a case to be made that, yes, the numbers don't look right, but patience may bail us out.
Bail us out, not necessarily at 2%, but maybe at 2.5% or 2.9%, right? I mean, essentially, at what point do you expect Kevin Warsh to shift away from the 2% goal in some sort of strict fashion, which potentially he could hint at with the potential drivers of inflation in that task force that someone might be leading on that particular issue?
Well, it's hard to see that there'd be a good reason. 2% is arbitrary. 1.5% is a nice number. 2.5% is a nice number. But if you have 2%, you have to explain why 2.5 has suddenly become better. And I think that that's going to be a hard explanation to give. I think the case, and they used to talk about this opportunistic disinflation, that you don't hammer the economy, but you sort of, hope that you get a break. Don't let inflation go up. But if you get a productivity shock or a downward shock to prices, you take advantage of it and use that to ease your way to the target. It's not crazy to want to say, look, we should do an insurance hike. But as I said, you have to be willing to take it back if it turns out to be wrong.
You keep using that phrase, insurance hike, but we had insurance cuts. And some people think we're just going to take them back. But this is not an insurance hike. It's taking back the insurance we already took out on the labour market.
I guess, but the labour market isn't booming. I mean, it's okay. I mean, there's no sign that any of the imbalances in the economy, either on inflation or activity, are big or growing fast. So what's the case for not waiting?
Well, Steve, do you think that they've been given more time because of the fact that we've seen oil prices come down?
I think that's part of it because, our latest version of, what we call core inflation takes out airfares, for example. The higher energy spills over into core through one way or another. So, again, if there's no emergency, it's worth waiting, we think, to see how things play out.
What's the FX call, Steve?
We're dollar positive. We became dollar positive on the back of the productivity theme last October.
So you get a Fed that surprises dovishly relative to expectations, but a dollar that's still positive.
It's capital flows. That if we get the productivity growth that we think we're going to get, if AI turns out to be as big a driver, although it's not all AI, U.S. has some advantages. Labor market flexibility, a capital market that can take funds. The capital will flow in. And as we've seen over the last couple of weeks, real interest rates coming up on the back of this is a very strong driver of the dollar. So we don't think it's the cyclical part that at the end of the day is going to drive the dollar higher. We think it's the structural part.
Interesting. Steve, it's good to see you. Thank you, buddy. Steve Englander there of Standard Chartered with the case to keep rates on hold through the remainder of the year ahead.
And a lot of people believe that to be the case, at least based on equity valuations, because some people say it might not matter. Other people say it just isn't going to happen, which is the reason why things have been priced this way. This is going to be a really interesting debate. It's just going to be quite fascinating to see whether, Kevin Warsh leans in, leans out, whether he goes for a hike.
The problem also, too, with how they view inflation is they really do need to hit their 2% target.
You see what's going on here?
Yes, I do.
Don't take this seriously. You see what's going on here? Bramo, you should have started this last week.
I know.
Then you would have had the chance to go.
She wants a pastis.
I missed it.
Trying to beat the drum about how important Central Portugal is, right?
Let me look up flights for you. You can take an overnight tonight, I'm sure.
You're trying to send me away?
Make it happen,
I'm doing
Bramo.
you a favor.
We'll take the show. Coming up tomorrow.
Fabulous.
We'll be in Central Portugal.
I think that would be great.
Coming up next, we'll catch up with Jim Caron of Morgan Stanley, Amanda Liner of Goldman Sachs, Mike Dada of Roth Capital, Manish Kabra of SocGen. The third hour of Bloomberg Surveillance. Up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We've had an incredible run in a lot of these stocks.
Investors should be aware that things can change quickly.
If we have a change in narrative within the AI story, it can create exacerbated moves.
That frenzy is dying down around the AI trade in general.
There are going to be periods of digestion.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Anne-Marie already booking flights into Portugal.
Yep.
Landing tomorrow morning. Leaves this evening.
We have 2 options.
There you go, 2 options.
We can fly either at 8 p.m. or 10 p.m. and it's a direct flight.
Okay.
Make it in time for a pastis.
Nice.
And then we can do the show.
Sounds like Bramo's already booked.
Yeah, well, I mean,
ready to go.
She was my travel agent. Thank you.
You're welcome.
Equity futures this morning positive by 0.8% on the S&P, up by 1 percentage point on the Nasdaq 100 this morning. In the bond market, 2s, 10s, 30s, yields look like this, just about unchanged. 2s around 4.1%. If you are just joining us, this is why we're talking about Portugal. Coming up later this week, Central Portugal, Fed Chair Kevin Walsh speaking Wednesday morning on a panel following, let's say, some very vague comments at the last news conference of the Federal Reserve.
A lot of uncertainty, certainly, around the reaction function by the Federal Reserve, based on the fact that he really didn't give any and said that there are task forces for this. Nonetheless, as you pointed out earlier, John, he said he wasn't going to speak unless there was something to say. So, ostensibly, there will be something to say on Wednesday. What I'm watching is the divergence between the U.S. and Europe when it comes to oil prices and just how much of a reprieve you really are getting from oil prices having come down. The speculation is that it will be more of a reprieve for the United States, arguably, even than Europe, which still is working through some of the ramifications. So look at the divergence between Christine Lagarde and Kevin Walsh.
Europe's still struggling, plus they have much higher taxes, so they're not going to feel it at the pump the same way the United States is. The president, though, is still taking issue, clearly in his Truth Social post this morning, about how some of these retailers aren't bringing prices down fast enough. But the fact of the matter is the energy is moving. According to the president, which is very different from what we heard from the Iranians earlier this morning, the talks will happen this week, and they're taking place tomorrow in Doha.
Kevin Walsh is in a very different seat, to your point. He's overseeing an economy right now going through a capex boom, experiencing a positive earnings shock, something we haven't seen together for a long time. And in many ways, some people might say that gives them the luxury of focusing on one side of the mandate. They can just look at inflation right now. And that's why things have changed to this Federal Reserve. Last year, at the end of last year, at the end of the year before that, this anxiety around the labour market. And they started to look through above target inflation. It feels like that's flipped in the last few months.
Which is why you hear so many people talking about taking back insurance cuts. Those insurance cuts were made, 75 basis points of cuts, because of the labor market that appeared to be souring. Now that it's firmed up and you can have a bigger focus on inflation, do you just color it, characterize it like that, and potentially even just do one or two and say, look, we're resetting the stage, we're just taking back what we gave?
Lots of data this week as well. Jobs tomorrow. ADP on Wednesday alongside ISM. Thursday, of course, payrolls and jobless claims. Coming up this hour, we'll catch up with Jim Caron of Morgan Stanley with the equity rally looking to get back on track. Amanda Lynham of Goldman Sachs on navigating disruptions in software. And Manish Kabra of SocGen raising his year-end price target on the S&P 500. Another one. We begin this hour with stocks bouncing back as the tech trade looks for stability. Jim Caron of Morgan Stanley writing, we're positive on the AI build-out, but recognise it will come in phases and will be volatile. We are adding AI winners as a key active view. Jim joins us now for more. Jim, welcome to the programme. I want to start a few steps back if we can before we get to the news of the moment. Your framework for where we are in this market. A new regime, shaking off the shackles of the post-GFC regime, what that means for nominal growth, what that means for the way we think about this Federal Reserve and how we look at this market.
Yeah, so really what we believe that we're in is a period of higher nominal growth, which means that you're likely to have higher interest rates, but that doesn't necessarily mean it means it derails growth. So look, we had some GDP revisions that came in last week. Nominal growth right now has been revised up to 6.1% year over year. That's a pretty healthy number. What that number does is it drives earnings. This is one of the reasons why we're seeing earnings so strong in the U.S. right now, and it's keeping the equity markets, relatively high. But it also does have the specter of higher inflation. So then the question becomes, does higher nominal growth, does that necessarily mean that you're also going to have persistently high inflation? It probably means that inflation will be above target for a period of time, but it's not to the point where I think it continues to accelerate, much higher and it becomes destructive. So overall, I think what we're in is a positive, much more of a positive equity market versus a bond market. Bonds are going to have to struggle with this above target inflation regime, and central banks and the Fed in particular potentially hiking rates this year, although we don't think that they will, but potentially. This is something that's going to be a headwind to bonds, but it's a tailwind for equities because it boosts earnings.
So where in equities? So Jim, let's spend some time on that. So to your point, we had a scarcity of growth coming out of GFC. It pushed us into fixed income, supported by very dovish central banks with very dovish reaction functions, and it pushed us to seek out growth in equity. Growth equities really outperformed. What performs on the equity side of things with all of that in mind?
So there's a very blurry line between growth and value these days because many of the companies that we thought were growth companies have now become value companies because of what they've done over the past couple of years. The way that we want to think about this is we believe that there's a very large technological revolution that's going on. We all talk about AI and higher productivity, but the reality is that many companies can participate in this. So the way that we think about this, it's going to be the adopters of technology, the people who are spending on CapEx, but also creating operating leverage within their own companies to generate higher earnings. So is that a growth company? Is that a value company? I think it's a little bit of both. So when I think about this overall, what it really tells me is that there's likely to be a broadening of the market, and there are going to be sectors like, for example, healthcare, which I think is extraordinarily inefficient, which can be a very big beneficiary of many of these technological innovations, and is also very well valued. The consumer sector, one of the things that we think about is the consumer, how everybody has been very worried about the consumer because of higher oil and gasoline prices. Well, maybe that's coming down now. The initial conditions in the markets were strong. Jobs data is still reasonably strong. And I think that's also a very undervalued segment of the market going forward. So I'm going to start to think about how the technological innovations start to compound broadly across the markets. And I don't want to get pinned down into growth versus value, because I think it's really a stock picker's market. But you need to find the early adopters who are leveraging the technology to create the operating leverage.
Jim, I hear so much about leverage. This build out is going to require so so much borrowing. At a certain point, are you really trying to stay away from the fixed income side of things, or at least underweighting it more significantly as a result of the build out hinging on more leverage and, frankly, inflation being sustained at an elevated level?
Yeah, so it's a great question, right? So, and it gives me the opportunity to clarify. So we are underweight duration in fixed income because we do believe that we are in an environment where inflation is going to stay above target and it's going to be hard for rates to come down materially. However, a lot of the leverage that's being created, a lot of the debt issuance that's being created are from some of these very large technology companies that have very strong balance sheets. So just because debt is coming into the market, we have to look at the quality of that debt. The debt quality is actually pretty high. That's one of the reasons why the credit indices, whether it's IG or even high yield, it's why those spreads are so tight. It's because the quality of the paper that's coming into the market is actually really high. So when you look at the balance sheets of some of these large technology companies that are coming to market in very large size, what you're going to find is that their debt levels relative to their earnings and to their cash flow streams it's relatively modest. I know the numbers are big, but these are big companies. So I'm not worried about the debt markets. In fact, what I'd like to do is have a little bit more credit exposure versus interest rate exposure. I think the duration exposure in portfolios is the tricky part, but so far the higher quality credit aspects of the markets are actually, reasonably strong. And I expect there to be a relatively low default rate cycle in this environment as well. Again, nominal growth is going to boost earnings and cash flows, and that allows you to pay back your debt as well as have earnings for equity shareholders.
You've mentioned something a couple times, Jim, about you don't think the Fed is going to cut rates or hike rates rather this year. You think that they're probably going to remain on hold, and you're underweight duration, which seems to be the opposite trade right now of the market, which is pricing in at least one rate hike and potentially a bid into duration, possibly as a result of a more hawkish turn in the Federal Reserve. Why do you think this Fed isn't going to hike rates, given the rhetoric and given some of the shift in commentary?
So I think the shift in commentary is somewhat misunderstood. And you were talking about it earlier. People are talking about an insurance hike. Clearly, whenever you see gasoline prices, energy prices, some of the recent inflation prints that we've had spike the way that they did, as a central banker, you're going to say, well, I have to be cautious about these things. But the reality is that oil prices have come down a lot right now. We're not seeing the inflation pressures seep into the core levels. What measure of inflation is Warsh really looking at? He always talks about some type of a trimmed mean. And if you look at the PCE Dallas Fed trim mean numbers, they're around 2.4, 2.5%. I think a lot of the numbers that have gotten people worried are actually going to start to fade away in the second half of the year with energy prices coming down. I think the market is strong, and just because you have a strong labor market, let's say the unemployment rate goes from 4.3 to say 4.1, that doesn't necessarily mean that you're going to have higher persistent inflation above 3%. You could still get back down to 2.8%, or somewhere in there, which I think is comfortable enough for the Fed to not have to hike rates and hurt the economy, while I do believe that we do have higher productivity, while inflation, I think, is still relatively in check.
Jim, though, if you were to change your thinking on this, what would it take? Would you have to see more of that inflation creep into core?
Exactly right. If inflation starts to creep into the core measures of inflation, of the readings, and this starts to become persistent, then it's a different ballgame. And at that point, I'd start to get very, very nervous that the hand of the Fed will be forced to start to hike rates. But we're not really seeing that major shift into core. I think it's too early to go through a major rate hiking cycle at this point in order to address that.
Hey, Jim, it's good to see you. It always is. Thank you, sir. Jim Caron there of Morgan Stanley breaking down his thoughts just at the end there on this Federal Reserve. Conviction. Conviction's pretty low, isn't it? When you speak to Aditya Bhave over at Bank of America, talking about the 3 hikes they've penciled in for the year ahead, rather like Neil Kashkari, it's in pencil and subject to change through the summer based on the economic data we get and the clarity we may or may not get from the Fed chair.
Yeah, with a big eraser, and you can erase that. This isn't really guidance that you can really get any clarity around, given the fact that this Federal Reserve hasn't given us a sense of the reaction function, and we don't have a sense of which data they're watching. Aditya talking about everything backward looking. Okay, well then, how do you look forward? And that ultimately is going to be decided by a task force.
We're hoping to get some of that, at least some of that, before the Task force conclude whatever they're looking at. Some of that on Wednesday morning in Sintra, Portugal. Equity futures near session highs up 0.9% on the S&P. With an update on stories worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Comcast shares surging in the pre-market. The company planning to split its media and technology units into two independent, publicly traded companies. Comcast is expecting the separation to be completed in about a year. Anthropic winning U.S. approval to restore some global access to its Mythos 5 AI model. According to a letter seen by Bloomberg, Commerce Secretary Howard Lutnick wrote, Anthropic has worked with the U.S. government to address risks associated with the covered models. The Supreme Court will announce its decision on President Donald Trump's firing of Federal Reserve Governor Lisa Cook before the court wraps up its current term tomorrow. The court will decide if the president has the authority to fire Cook or was targeted over alleged mortgage fraud predating her term. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, the Morning Calls, plus Amanda Lynham of Goldman Sachs as private credit firms face risk from software. The conversation just around the corner, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The path to 8K is the earnings, but you're going to get volatility. There has to be consolidation here. I mean, some of those charts are parabolic with the memory names. It's going to pull some of the market down with it just because they are the leaders right now, right? It's not the Mag 7, the Lag 7. You're going to have a rotation, but you're challenged probably on the index level for the next few months.
That was Alicia Levine of BNY Wealth. Let's talk about the Lag 7. Let's talk about four of them. This month, Microsoft down 17%, Meta down 13%, Apple down 9%, Nvidia down 9%. Those big names had a struggle through the month of June.
This is the market saying we don't like how much you're accelerating your CapEx plans without a commensurate increase in your revenues, and saying, look, your business model has changed. This is what Alicia Levine was saying. Ultimately, how much does pushback result in them curbing their deployment of capital, curbing their CapEx ambitions versus, okay, you want to take our shares down? Go for it. Watch what we do in 6 months.
Let's get to the scores right now. Equity futures up. Session highs up by 0.9% on the S&P, and the Nasdaq 100 higher by 1.2% on the Russell. Fantastic week last week for the Russell, and the equal weight this morning, just a bit of underperformance. We're higher by 0.5%. Let's get you some morning calls. First up, Mizuho boosting its price target on Qualcomm, saying headwinds in its consumer business will be offset by data center revenue. Your second call from Cantor raising its price target on Texas Instruments, saying the AI infrastructure build-out is a durable and generational semiconductor cycle. And your third and final call from Raymond James, initiating coverage on AppLovin with a strong buy rating, 640 price target, saying the software maker is expanding into sustained growth from its e-commerce advertising. That stock is higher by almost 3% in the pre-market. Let's focus on software and turn to private credit. Liquidity concerns at the forefront as unease grows over the outsized role of software in portfolios. Some on Wall Street are pushing back.
We suddenly all start worrying about SaaS, software as a service companies, and you can't have it both ways. You cannot make the argument that these companies should be taken to the woodshed because their business models are going to be completely upended by AI. And at the same time start to say, well, AI doesn't make a whole lot of sense. I still think the upside outweighs the downside.
Amanda Lynham of Goldman Sachs weighing in, writing the following: we see scope for private credit to deploy its sizable amount of dry powder in response to potential dislocations. Amanda joins us now for more. Amanda, good morning. Good to see you.
Thank you for having me.
How much disruption have we seen in this space?
We haven't seen much so far. It's really been confined to a sentiment overhang as opposed to real disruption. Actually, we've seen some early indications of refinancing activity, which is an encouraging sign given the 2028 maturity walls are pretty steep. I feel like we have these episodic periods where we care more about maturity walls and less, and they're back into focus, which is a new development over the past few years. But I think two key points really stood out to us from our recent work on this. One, there's an investor perception that recoveries in this space would be really low in the event of a default. And actually, we looked at 30 software defaults from 2016 and found that recoveries are not that much worse than the broader market. So I think that's notable. And then second, we've emphasized the point that our equity colleagues have really been underscoring, which is that not all software is created equal. And so while we do expect some dispersion within this space, we do not expect broad-based disruption. But of course, the refinancing axis is key. The point you raised on private credit is also meaningful because that is, I think, a way to put a floor under potential dislocation.
We often see these major maturity walls. They come and go. They get refinanced. We moved on.
Yeah.
How big is this one? Just describe it for our audience.
I think this one is more sizable. I mean, it's nearly $100 billion over the next year and change, which is meaningful. I think what's different though is that, and that's for software specifically. I think what's different is historically there was a lot of focus on the maturity walls in the context of the Fed rate hiking cycle of the past few years. This feels a little bit different in that it's sector specific, and there's a bit of price discovery on a topic where I think there's still a wide range of debate as to how disruptive AI might be on these legacy business models. So it was a little easier to analyze maturity walls in the years past because it was really just a function of the macro, and we were figuring out would the capital markets remain open. Here, we're trying to understand what is a paradigm shift with the AI technology, and I think that's been a little bit different for our investor base.
You might not have seen that much of a dislocation yet in terms of pricing. There is a question, though, about how much credit investors' attitudes have shifted in the form of demands for greater protections, demands for greater lines, potentially secured assets to tie to some of their loans. How much have you seen a change in terms of the covenants, in terms of the pricing for credit investors as a result of some of these concerns?
We've definitely seen that at the leveraged part of the credit universe, but I would say it's actually not confined to that universe. What we've seen is a little bit more of pricing differential, even in the high end of the IG rating spectrum for some of the hyperscalers and the tech issuance that's come to market. So it's absolutely a trend where I think the capital markets in general are quite receptive, but to your point, Lisa, investors are demanding additional protections. That could be amortization, that could be some additional equity contribution from private equity sponsors, that could be higher spreads. So that combination is really, I think, something that will stay with us for a while.
Do you expect an increasing number of companies to get left out of that, to sort of be deemed disruptible and potentially failures? Sorry, not to be harsh, but essentially, do you expect more defaults going forward as you see sort of the yellow pages of our time?
disappear.
So our view is that in the leveraged loan market, we've probably passed the peak in defaults for this cycle, because keep in mind, in November of 2024, that default rate reached close to 8%. So it would be a high bar for us to get back there. To your point, just like in any sector, there for sure are folks that are more disrupted from this technology. I think the area where we would be most concerned are companies that are already low rated in the loan market or in private credit. They're towards the bottom end of the size spectrum, and also have a combination already of weak free cash flow and high leverage. That sort of financial mix entering a period of potential disruption just leaves them on the back foot. So for sure, you can see that already reflected. Moody's actually put out a piece that a large portion of their software universe is already rated B-, which is kind of at the cusp of CCC. So a lot of this is reflected in the price. I think the key risk for us is that we just need capital markets to remain open and discerning. And that's fine for corporate credit. The period of time where they become dislocated is the environment where we would expect private credit to step in and deploy some of its capital, even though it already has exposure in some strategies. But there's nothing wrong with the capital markets being differentiating.
All of this has been concentrated on the sentiment overhang on software exposure. What other industries do you think also potentially could be hit with this kind of sentiment?
Sure. I would say your point is exactly right, Anne-Marie, that software is kind of the headline grabber, but we've also made the point that if you look under the surface of, say, healthcare, financial services, certain business services, they also do probably have a decent software exposure within those sectors, even though they're categorized as something else at the headline level, just because of the way that the businesses are. I think right now the focus seems to be on the potential disruption in software. If I had to expand it to other sectors, I would lean more towards beneficiaries. We actually published something overnight that commented how healthcare, for example, could actually be a beneficiary of AI in terms of drug discovery and regulatory filings. I think the key takeaway, though, is it's not yet driving spread performance in the credit sectors, but what we've said is that will probably cause us to have an upside bias to our supply forecast, because for all of the talk about supply from tech issuers, it's actually not limited to that sector. We're seeing a range of companies talk about AI investment, and we think at a minimum that will be needed to fund by some at least incremental budget.
Well, let's get to the incremental yield we might need to get that supply away.
Yeah.
Any sign of that pushback developing now?
Right now, with the 30-year and the 10-year, hovering at the high end of the historical range, we're seeing all-in yields for long-end IG at 5.75%. It's off the peak. It's still good enough in our own view to actually catalyze some of this yield-based demand. I think really what you need to see is at the sector level some incremental spread added to some of these deals. Now, we're seeing these kind of episodic periods of indigestion in the credit market. We're going to have a bit of a reprieve because we're in earnings blackout, so companies don't issue around the time of their quarter end and their earnings. So I feel like the market will pull back and tighten a little bit. But I think we should brace for periods and windows of heavy supply, especially subject to the whims of the market and sentiment, that there should be some more price discovery. And again, the point is this is a multi-year issuance cycle, not a small one.
And just a little bit of pushback to SpaceX in the last week, just a little bit.
Yeah, you saw hundreds of millions of dollars of market valuation taken off those particular bonds in the initial days of trading. I love how credit markets sound like a weather report. Periods of heavy downpour, heavy issuance, but they should subside into clear sailing and profit building.
There's a phrase in a British weather forecast I never hear anywhere else, and that's sunny spells.
I love this phrase.
It's my favourite line.
Yeah.
Sunny spells. You might see some sunny spells.
Yeah, you might see some profit expansion spells while you have a deluge in the supply.
Amanda, it's good to see you. Thanks for being here. Thank you. Amanda Lynham there of Goldman Sachs. Up next on the programme, Mike Dada of Roth Capital on why the Fed can afford to be patient from New York City. You're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The opening bell about 60 minutes away. Futures positive in this session. Highs up 0.9% on the S&P. On the Nasdaq up by 1.2. On the Russell this morning, higher by 0.4. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing Comcast shares rallying this morning, up 23% after the company announced that it is splitting into two publicly traded companies. Comcast will keep its broadband and wireless business, while NBC Universal and Sky will spin off into a separate media and entertainment company. The thinking is that each company can better navigate its respective industries that are changing very rapidly. Meanwhile, we are seeing more deal news, but this time on the space front. Rocket Lab and Iridium shares are soaring in the pre-market after Rocket Lab announced it is buying the satellite operator in an $8 billion deal. And it's not usual that you see both the acquirer and the seller rallying on the news, but investors appear to like what this does for Rocket Lab, expanding it beyond just the company that launches rockets and also following a similar playbook that's made SpaceX so successful. And we are seeing Microsoft, Amazon, and Meta on track for a second straight session of gains after a brutal June sell-off that's seen investors rotate away from these companies that have big AI spending plans. All three are down double digits as investors have rotated into the likes of Micron and other memory names, but we'll see if this rebound has legs. John?
A turnaround for some of those names this morning. Yahira, thank you. Appreciate it. Looking ahead to a week full of economic data and a key address from Fed Chair Kevin Walsh making his debut alongside global central bankers in Sintra, Portugal. Mike McKee has a preview for us. Good morning, Mike.
Good morning, John. Well, first week of the month is always the biggest for data, and then you take away a day out of that week and you got to squish everything in. So it is a big week. Not much going on today, except we do have that Supreme Court decision about Lisa Cook and whether the Fed president can fire Fed officials. Still hanging over us. Could come today, could come Wednesday, but likely it will come this week. Then on Tuesday, jolts and confidence. Gas prices are down. Is confidence going to rise a little bit? We've seen it go down quite a bit. On Wednesday is that Warsh meeting, Warsh event that you talked about, plus ADP and ISM manufacturing. Jobs is the focus. And Thursday we get that jobs report along with claims and ISM services. We'll be looking at prices as well for ISM manufacturing and ISM services. And in the jobs report, a lot of people want to see whether average hourly earnings move up at all. Now, about that Sintra meeting, the sort of European Central Bank version of Jackson Hole, it may or may not be a big deal. You'll see a lot on it, but it's about shaping Europe's future. And that panel that Kevin Warsh is speaking on also has Christine Lagarde, Andrew Bailey, and Tiff Macklem from the banks, the ECB, the Bank of England, and Bank of Canada. So we may not get a lot of guidance from Kevin Warsh on that. But with all the data and whatever we do get from Sintra, We'll all be looking on Thursday evening when the markets close in the United States to see whether the Fed is going to be raising rates or lowering rates according to market perceptions. You can see right there. Basically, we are looking at 30 basis points of increase by the end of the year. We'll see if that changes at all. And then we get Friday off, of course, because it is July 4th in the United States. And John, I heard this week, I did not know this, that the British don't pay a whole lot of attention to July 4th in the United States. They don't even teach a whole lot about it in schools. It's much more things like Waterloo and the Napoleonic Wars are much more important because you're a slightly older country.
I don't remember it coming up in the curriculum, Mike. You're absolutely right. But as a guest in this great country, it's something I still mark and celebrate. So I'm looking forward to the long weekend. Thank you, sir. Michael McKee there, looking ahead to a week ahead full of economic data and Chairman Powell. Just on Lisa Cook, I think this is interesting. Do we find out that Governor Powell leaves either way? Because either Lisa Cook gets to stay and there's no reason for him to stay, or you can fire Lisa Cook and you can fire him too.
Well, that's one way to look at it, Jonathan.
I was joking about the last piece of it, but please.
I was thinking potentially, if the Supreme Court makes a decision on something, does that, in Jay Powell's mind, even if he doesn't agree maybe personally, and I'm not saying this, doesn't agree with the decision, it's wrapped up. Can he now exit?
To be very clear about what the decision is, it's not necessarily whether he can fire her, it's whether he can remove her from her seat while the lower court deliberates on exactly whether there was cause to fire her. And that ultimately is going to potentially give the president more leverage. Does Governor Powell want to continue this fight forward in some sort of prolonged way? Is this sort of what he's waiting for? Is he kind of enjoying it? Maybe he's heading up a task force. These are all questions people want to know.
Possibly, I doubt it, but possibly. Look, this is why we're in this position, why we don't really know what Kevin Warsh stands for right now, because he has to defend central bank independence and carry on this effort from former chair, now Governor Powell, because of the pressure that was put on the institution by the White House.
I would argue that Chair Warsh reclaimed the Fed independence mantle pretty clearly during that Fed meeting by coming out with a more hawkish tone, and that definitely gave people faith that he was going to be independent, added to which the president really pulling back and not necessarily saying anything negative about him, saying, whatever, do whatever you want to do. Does it get sort of undone by this decision by the Supreme Court on its final days of these 7 last decisions? And ultimately, how much will that be a market-moving event?
What's the reaction to the Peter Cheer take? And if you're just tuning in, I mentioned this earlier, I'll share it with you again. Peter Cheer over at Academy wrote this, something a little original about what's happening over at the Federal Reserve. Imagine, it's easy if you tried, that Warsh convinced Trump that sounding dovish right now would be a disaster. Imagine again, it's easy if you tried, that he convinced the president to let me sound hawkish on inflation, that my hawkish message will control the long end of the yield curve. It did. That we will convince every reporter and Wall Street analyst to believe we're going to hike and fight inflation.
That's arguably what some people are saying is going to happen. And Peter Scheer thinks that there's still going to be a cut this year as a result of hawkish showboating working. I would argue it isn't Kevin Warsh convincing the president. It is Kevin Warsh convincing Scott Bessent as they have these discussions. And Scott has really come out, Treasury Secretary Bessent has come out and talked about how, you know what, this is what has to be done. And right now we need to lean into this.
And
mandate.
Kevin Warsh convincing the markets. That's really who's going to be the one that pushes him and tests him and also tests the president. Even if this was true, and say it's a wink, wink, you know, this is what we're saying, but we're not actually going to do it. The president can't help himself. He's still going to go out there and say, like he did the other day, I think he said something like lower interest rates solve everything.
Let's get to the Mike Dowder take over at Roth Capital. He writes the following. The Fed can be patient. The best thing Warsh can do is preserve the nominal stability enjoyed over the last 3 years. Mike joins us now for more. Mike, good morning and good to see you. They can be patient. Do you think they will be patient?
Thanks for having me on, John. I think they are going to be patient. New York Fed President Williams gave a very important speech, or really it was just prepared comments that were released last Thursday. And this was essentially his take, and the market did react to it. We did get some reduction in the pricing for forward rate hikes after that paper. And essentially what he argued is, despite the fact that inflation's above target, there's no denying that, the labor market, you're not really seeing any signs of overheating there. And his expectation was you've got a resilient economy and that inflation will come down back down to target over time. I think the most important argument in favor of the Williams view is that the bond market is not really looking for these recent really high inflation settings to be sustained. Bond market inflation expectations actually have been coming down. As Lisa mentioned, Warsh really kind of came out of the gate pretty hawkish, focused on price stability, slimmed down the Fed statement, pulled the forward guidance. So bond market inflation expectations are actually on the low end of the range now, 220 basis points at the 10-year horizon. That would be consistent with a 2% PCE deflator over time. So the Fed's highly credible in the eyes of the market, and that is critical given everything you guys have been talking about this morning.
Mike, forgive me, it's a little bit circular, but is it credible because people believe they're going to hike?
Yeah, I think given that what's priced into markets, right? I mean, these markets are changing every day and they're forward-looking. So right now, if you look at the expected path of the Fed policy rate, it's expected to move up, but not dramatically, right? 30 basis points or so over the course of the next 12 months. And the question is that, consistent or inconsistent with nominal stability, price stability over time? And the bond market is telling me that that would be consistent. And if anything, they might even be able to be a bit more patient than that.
What data, Mike, do you think is going to have the biggest ramifications for the Fed? Is it going to be labor market data that comes out on Thursday? Is it going to be the next CPI prints? How much is there going to be some sort of predictable reaction function coming from this FOMC?
Yeah, great question. I think it's going to come down to the labor market, not just the tone and tenor of payrolls, but what happens to the unemployment rate. It's been dead flat, as Williams mentioned, over a bit more than a year now. What if we get into a situation where the unemployment rate actually starts to fall? And, then I think you're going to have an interesting set of debates that starts to take place on the Fed. That would tend to reinforce expectations of rate hikes. Yet if expected inflation continues to be low or even falls further, that kind of cuts the other way. So I think the Fed's going to be patient in interpreting what's happening to the labor market. But that really will be the key going forward. If you do get into an environment where the labor market is heating up, then I do think that the consensus probably hardens pretty considerably for starting to tighten monetary policy.
Mike, how closely are you watching the Supreme Court today for a ruling on Lisa Cook? How much does that matter for an economic call?
Yeah, I think it really does matter. I mean, we don't want the Fed's independence jeopardized in any way. And the good news here, and we'll see, how this decision comes out. The good news is the Fed still has quite a bit of credibility in the eyes of the market. Should not be taken for granted. And it's pretty impressive considering all of the tampering that's been going on. And so I think anyone that cares about monetary policy and is focused on markets is watching this pretty closely.
Not to get too much into the politics, though, but to Jonathan's earlier point, if we get this Supreme Court decision, are you expecting Governor Powell to leave fairly shortly?
I don't have a call on how long Governor Powell stays. It's certainly up to him. Considering everything he said coming into this and his decision to stay on, I think he'll probably be there for a while yet.
Mike, you've seen the warning coming from the Bank of International Settlements. Tiff Macklem of the Bank of Canada has said something similar. Macklem will be sitting on the panel alongside Chairman Warsh later on this week in Sintra, Portugal, warning that a lot of concentrated risk is building up around AI, the capex, the build out, and that could be a market macro financial risk. Mike, do you share that concern?
Well, the way that I look at it is, and we kind of where we started with the preservation of nominal stability. Markets are going to sort all of this out. We have a lot of investors that are quite concerned about how big this capital spending boom is. $1 trillion potentially over the next year. What is the ROI on that? And so markets are going to have to sort this out. But does that mean that we're going to have some kind of financial event that totally upends the economy? And I think that's quite a different question. If the Fed does well at preserving nominal stability, then you could have big moves in certain sectors and it doesn't undermine the business cycle. So that's really the key point. So I'm not really seeing the big buildup of systemic risk. What I see is a backdrop of exceptional, incredible nominal stability. And we've had 3 years where nominal spending growth has averaged 5.4%. And yes, inflation's very high now as we've gone through these recent supply shocks with tariffs last year and energy this year. But as that settles down, I think we can look forward to a reorientation of nominal spending with stronger real figures and lower inflation numbers. And that's quite good. And as long as we have that nominal stability, then issues that happen in one sector or another are not going to undermine the entire business cycle.
Mike, good to see you. Thanks for catching up with us.
Great
Michael
to see
Dada
you.
of Roth Capital. Somewhere in Europe, it looks like, right?
Or,
Sintra?
fake Sintra.
Fake Sintra.
Well, I mean, I don't think that was a real background,
brand.
but maybe he's there. Maybe that was actually real
Longing
time.
for a European vacation, just seeing that beautiful scene.
I think that
Mike Dada
he was
of
too.
Roth.
You can leave tonight.
Clearly he is too, right, yeah. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn's with us with more. Hey, Vonnie.
Hey, John. President Donald Trump saying Iran has requested a meeting. Trump posting on Truth Social the two will meet in Doha tomorrow. The announcement coming just 90 minutes after Tasnim, Iran's semi-official news agency, said no talks were scheduled for this week. South Korea is orchestrating investments of at least $880 billion from companies including Samsung and SK Hynix Inc. into chips and data centers. The companies plan to build 2 chip-making plants apiece in the southwest to rapidly expand production capacity to meet increasing demand. Supergirl debuting at number 2 in the weekend box office behind Toy Story 5. Comscore reporting the latest superhero film from Warner Brothers DC Studios division, bringing in an estimated $38 million in North American ticket sales and cost $170 million to make. That's your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Manish Kabra of SocGen, raising his S&P 500 year-end target to 8K. That conversation up next.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
What we're in is much more of a positive equity market versus a bond market. Bonds are going to have to struggle with this above target inflation regime, and central banks and the Fed in particular potentially hiking rates. This is something that's going to be a headwind to bonds, but it's a tailwind for equities because it boosts earnings.
That was Jim Caron of Morgan Stanley weighing in on this equity market. This equity market bounced back this morning by 0.8% on the S&P. On the Nasdaq, higher by 1 full percentage point. On the Russell, up by 0.4. Just holding on to these gains ahead of the cash open, 42 minutes away. Going into the trading week, this is the week ahead for you. Tomorrow, JOLTS data, consumer confidence. Wednesday, ISM, ADP, plus this guy right here, Kevin Walsh, the chairman of the Federal Reserve, on Wednesday morning. Then it's payrolls Thursday. Bramo, that's a stacked week ahead.
Yeah, payrolls Thursday really going to be real key to understand just how much heat there is coming from the labor market, especially if we get any sense of what the reaction function is from Fed Chair Warsh. He is going to be at his first international meeting. It will be interesting to see what message he has after a rather, oblique one a couple of weeks ago.
Vague, to be fair, right? Vague by design in many ways, and we're all looking for more detail in a few days' time. We've seen a ton of price targets get kicked higher in the last few weeks. Wells Fargo, Barclays, JP Morgan, we've seen it from RBC just this morning. Manish Kabra of SocGen is one of those, boosting his year-end S&P target to 8K from 7,300, saying the upside risks include higher AI monetization and an easier Federal Reserve. The downside risks include a Fed-induced slowdown, curbing the capex cycle. Manish joins us now for more. Manish, welcome to the program. That's quite a stunning upgrade from your price target. You're not alone, of course, Manish. Where did that come from?
Yeah, I think the first one is, is earnings for sure. When I say earnings, the earnings, in my expectation, it's running 1 year ahead. So I had $333 on the EPS for S&P for 2027. I have that now for 2026. So I think earnings is for sure like the biggest story. But as in what I would flag is, as an AI is the earnings driver, Fed is the multiple driver, and the questions have evolved. So as in one for sure has to take a view on the Fed at this point.
What's your view on the Fed at this point, Manish?
As in the view on Fed is as in twofold. One, if you watch inflation and inflation-related inputs, it's the most polluted index as of this point. So, you watch the supply side shocks that are there, the tariffs, the energy shock, the fertilizers, the food. And then once you add up all of those things, I don't think it's very, very, very easy at all to predict inflation. So I think for that reason, our call is, Fed will not do anything, almost for next 12 months and rather wait for signals. The other point, which is, can Fed go ahead of the curve? And I think this is where the big debate for equity happens. How do you define Fed has gone ahead of the curve? For that, you need real yields going towards 4% kind of territory. So as in this is what needed in 70s and 80s, when central banks were more inflation focused, real yields were near 4%, not near 2%.
What's the range of outcomes, Manish, if the Fed hikes or doesn't hike? In other words, you see 8,000 with the Fed remaining on hold. What happens if the Fed hikes once or twice, as so many people seem to expect this year?
As a net, I would say 1 or 2 hikes for sure. It would matter. It would matter for anything which is rate sensitive, the short duration sensitivity, the housing market. Of course, as in all of those things will have pressure. But broadly, if I again try to see, will this be enormous to get? When we call this whole tech AI capex, ultimately it's very traditional physical economic capex, as half of the capex goes into the real economy. And then you see a lot of signs. You see South Koreans announcing they have to spend more. And accordingly, small cap industrial seeing 30% earnings growth. I think the operational leverage is what gets underappreciated when capex happens in the real economy or physical economy. So, as in for sure, short-term negative if Fed does hike, but is it like big top for S&P 500? As in that's not something I'm expecting it to be.
On the flip side, how much do you expect pushback on pricing? I mean, some of the margins, you're talking about the earnings expansion and how it really has been from some of the tech names, in particular from some of the semis that have been able to charge whatever they want, and the hyperscalers have been on the hook to pay it. At what point do you see hyperscalers pushing back on both CapEx plans more broadly as well as potentially on those prices?
Yeah, I think this is a fantastic question. So first I would flag, let's just look at the whole tech sector as a big group. And when you see tech sector as a big group, it has given 9x returns in 10 years. So, very obvious, everyone has a lot of questions whenever you have seen something like 9x returns in 10 years. As in my whole take is, if you watch the whole sector, operating cash flow at all-time highs at 1.2 trillion, free cash flow, believe it or not, is at all-time highs. As in, of course, the message is you follow the cash flow, and following the cash flow, you end up, buying a lot of semis, you end up buying, avoiding the hyperscalers. So I think the pushback, if I have to see where my take is, and my whole outlook is called bullish, not blind, and the whole take on that is, if I see the second derivative of growth slow down, that's first half next year. And when do I see free cash flow inflection from hyperscaler? That's second half next year. So there's a lot of tension, rotation, reversals, all of that is there next year. The only risk I would say for that is, if hyperscalers, of course, get together and they decide, hang on, we need to get the pricing power back, and to get the pricing power back, they have to form a cartel. And the way to do that in a capitalistic economy, I think that's really tough.
Manish, we got the sense from Barclays that it was almost uncomfortable to have to do this again, to have to upgrade. Do you feel that way?
Not as much for the reason, when I'm watching, different things that I mentioned, small cap, especially small caps where, expectations were extremely low to start with, and suddenly you have 20% earnings growth. For small caps, S&P, 600 industrial, 30% earnings growth. When you add up those things, that gives you confidence on the operational leverage.
Manish, if you had to make a bet right now into year-end, and forgive me for putting you on the spot, would you take the equal weight S&P or the market cap weighted S&P into year-end?
So I have liked equal weighted S&P for 18 months now, and I still like it. I think that's your big position, because what does equal weight S&P offers? The biggest weight is industrials. Second biggest weight is financials. So, if you're buying America first, which is what I see from White House, I like equal weighted S&P.
Interesting. Manish, appreciate your time, sir. As always, thank you. Manish Kabra there of SocGen, out of London this morning, looking for 8K on the S&P. That's up from 7,300. Basically had to pull forward. You heard him there. Had to pull forward a pretty bullish forecast on earnings to 26 from 27.
What I'm fascinated by is that everyone who seems to have upgraded their expectations says we're not blind. We do see problems, but they're 2027, 2028 problems. So right now you have to look at the numbers and respect them and lean in. And that's essentially the bull case, and that's what we see coming to fruition.
Absolutely. Just pretty much have to lever up now, go all in, and just kind of worry about it in 2028. It's a kick the can down the road situation, but they're actually seeing the earnings improvement, and we're hearing it across the board.
We've seen it from bank after bank after bank after bank over the last few months, haven't we? Manish saying bullish, not blind on the S&P 500. He's not alone. We've heard the same thing from other banks as well. And they're scrambling to keep up with what has been a shocking, stunning, positive earnings surprise over the last quarter.
Micron just hammers it home. Everyone was saying they can't get better than this. And guess what? They did. And that 80, what was it?
Margins, 85%
margins. Absolutely stunning.
Coming up tomorrow, another bull. John Stolfus of Oppenheimer alongside Wei Li of BlackRock, Bob Michael of JP Morgan, Kevin Gordon of Charles Schwab, and a whole lot more. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Got a rally to start your holiday shortened week. Isn't that nice? Just 30 minutes ago into the start of cash trading. I'm Danny Berger. Bloomberg Open Interest starts right now. Coming up, tech bounces back as South Korea's AI spending push gives chip stocks a boost. Comcast shares soar on a plan to spin off NBC Universal and Sky into a new media company. Plus, the U.S. and Iran agreed to halt attacks after days of escalation. Talks in Doha are set for tomorrow. And by the way, news of those talks coming just hours before the opening trade. So nice for the fighting to only happen when markets are closed. Chip stocks, they're trying to rebound after Friday's big sell-off in the Philadelphia Semiconductor Index. It dropped 5%. We had 5 straight days of selling last week, despite Micron trying to come to the rescue. There's also news of South Korea planning an $800 billion investment from SK Hynix and Samsung to maintain its standing as an AI hub. So NVIDIA and SanDisk are up, Micron slightly weaker. Let's head on over to the desk, though, because joining us this morning to talk all things tech and the narrative of the moment is Mandeep Singh, our Bloomberg Intelligence head of global tech. Mandeep, good morning. Thanks for joining. It does feel like the narrative has somewhat shifted, at least last week. Some Mag 7 is now in a correction. Chip stocks, even with Micron, didn't get enough big of enough rally. To you, has something changed in recent weeks?
No, I think sometimes, things take a breather. And in this case, Micron probably had results that surprised some people in terms of the upside. And I look at it this way, Micron talked about signing supply chain agreements with some of their big hyperscalers. SK Hynix and Samsung are the other 2 big players. There are people who are asking, why aren't the hyperscalers signing agreements with them? And, the news sort of makes sense that for SK Hynix and Samsung to expand capacity, they are getting the government backing that's saying, okay, we expect you to invest up to $800 billion with the assurance that if this market were to change in terms of the dynamics, and these guys have been burned before, then you have the backing of the government in terms of capacity expansion. So all in all, everyone wants to lock in capacity and pricing without really having to pay up prices, which was the case this time around with Micron.
I mean, does the timing align okay? The fact we're getting these huge outlays of just how much these companies are spending at the same time that a conversation is happening right now for corporates. Maybe don't spend as much, maybe use open source modeling, curtail some of the costs. Is there a timing mismatch in all of that to have this type of spending while that conversation's ongoing?
Well, given a lot of the companies anticipated this, especially the model providers and the companies in the supply chain, it's surprising that they didn't expand capacity up until this point. And now we are looking for workarounds, with open source models. And even with open source models, by the way, you still need memory, HBM. So it's hard to find, how you fix that given the constraints we are in, especially on the memory side. So from that perspective, you want to know when will that new capacity come online. And even with these big numbers, nothing new will come online before second half of 2027 or 2028. So we will be in this mode for a while, given the demand far outstrip supply.
How are you just thinking about government involvement? Obviously, South Korea pushing for their local market to be a winner, and at the same time, reports that Anthropic has reached some sort of agreement with the White House to unleash their highest level of model that they had, that the dispute was over. Just how big of a hand is the government playing in all this going forward?
I mean, it's huge. I think every sovereign wants to develop their own AI. That has been a priority for pretty much every big sovereign out there. And in this case, the South Koreans are actually investing their own money, which we have all seen how much TSMC has benefited from Taiwan's involvement in terms of building, the fabs that they have done over the years. So from that perspective, it's not surprising for me to see, the sovereign involvement here.
Mandeep, great to see you this morning. Thank you for joining on this Monday. Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. In deal news this morning, Comcast has announced plans to spin off NBC Universal and Sky. It will be a new media unit and separating it from its telecom business. Let's discuss with Bloomberg's Kelsey Griffiths. Kelsey, this isn't the first deal in recent times that Comcast has done, spinning off the Versant unit. What has been the thinking behind spinning off NBC Universal and Sky this time?
Well, I was just listening to the investor call as Mike Cavanaugh and the Comcast executive suite gave us some updates on why they're doing this. And they've said, look, we have multiple businesses that are really just focused on different priorities. For a while, scale seems like the best option. Now that we've seen the media businesses and the broadband business get more competitive, it seems like it makes more sense to split those companies off and focus on them each doing what they do well individually.
Does some aspect of this also just have to do with the value of these media business? I mean, Versant has declined about 21% since it was spun off. I mean, might NBC Universal and Sky meet a similar fate, Kelsey?
Now, that's something that I think we're continuing to look at. Overall, Comcast has definitely been sort of struggling with their share price, especially over the last year. If you look at the broadband business, which is kind of my area of expertise, they've also been trying to look at how they can stem some of these customer losses. And yes, they are just deciding that a different structure makes sense here for the financial good of the business.
It does seem to be in just the telecoms, a variety of deals. I mean, there's Verizon this morning with BT. What was that about, Kelsey?
Now, Verizon, maybe somewhat similarly, is looking to do what they do in the U.S. really well, and then to partner with BT on these international businesses. Verizon doesn't have the consumer wireless business internationally that we think of them having here in the U.S. So they're really looking for that partner to help them keep some of their private networks, some of their cybersecurity businesses, and some of these other things that they sell to enterprises going across the globe.
Kelsey, thank you very much for that. That's Bloomberg's Kelsey Griffiths. Let's turn to oil now, with Brent crude hovering below $73 a barrel after President Trump said that Iran has requested a meeting. In a Truth Social post, he said the meeting will take place in Doha tomorrow. Joining us now from Washington is Bloomberg correspondent Tyler Kendall, who covers the White House for us. Tyler, I mean, again, over the weekend, it seems to be a pattern. Over the weekend, escalation, and then before trading starts, de-escalation.
Right, Danny. I mean, at this point, it really does feel like repetition, though we're tracking now that there will be these planned talks later this week after we were supposed to see negotiations in Switzerland over the weekend, but they stalled because of what became the worst flare-up in fighting since this memorandum of understanding was signed. Now, President Trump says that Iran requested this meeting. We should caution that we haven't heard from the Iranian side quite yet. In fact, Iranian state media this morning disputed that there are any plans for talks this week. But still, it appears evident that the two sides are trying to work out some differences when it comes, of course, to the Strait of Hormuz, because this flare-up in fighting really seemed to be tied to vessels starting to transit through, including through a corridor backed by the U.S. that hugs the coast of Oman. And apparently, that's not the route that Iran wants to see. Instead, they want ships to transit closer to their own coastline. Now, we'll have to see where this goes from here. We heard from Iran's foreign minister just yesterday saying that Iran maintains full control over the strait and has the sole authority, in his words, when it comes to managing the strait, something that the U.S. disputes would be in any sort of deal. Even with the flare-up intention, Danny, we did still see vessels transiting through. There was a drop in observed transit, according to data analyzed by Bloomberg News, but still those traffic levels remained much higher than they were amid the height of the conflict.
Well, Tyler, what does it mean for the talks in Doha? I've seen them described as technical talks. Does that mean what we might get out of them is somewhat minimal?
So technical talks, Danny, are really focused actually at the export level. This is where they're trying to implement exactly how enforcement mechanisms would go into place, how timelines would really be implemented. This is where we get actually more into the nitty-gritty of the details on kind of the broad strokes that the leadership level was trying to work out here. But it becomes very evident that the Strait of Hormuz is going to be dominating these conversations. Keep in mind, this is, of course, supposed to be the second phase of the negotiations. The first phase is that the Strait of Hormuz is supposed to be reopened without any issues or impediments to these ships transiting through. And this dialogue for this 60 days is supposed to be focused on those potential curbs to Iran's nuclear program. But amid what has been trials and tribulations with the waterway, it is very evident that they need to work out some other mechanisms here. Danny, as you well know, both sides said that they were going to establish a line of communication. It was dubbed the Hormuz hotline. It appears that that isn't yet quite in place. So perhaps some of the mechanics of how that communication is actually going to work could be a feature of those discussions if they happen later this week.
Tyler, thank you very much. That's Bloomberg's Tyler Kendall in Washington. A quick check on markets this morning, 20 minutes ago until the start of your cash equity trade. And we rebound this morning. We buy the dip in tech, Mag 7 having entered a correction, now down 12% from its peak after 5 straight days of losses for the S&P 500. That's the first time we've had 5 consecutive days that we were down since August of last year. 10-year yields, those are a little changed as Brent crude does move higher. We're just hearing from Tyler Kendall there with it seems talks are ongoing and maybe we've agreed the Iran and U.S. to stop firing at each other at $72 a barrel and 55 cents. Let's get a look at some of the individual name movers on our radar this morning. With that is Isabel Lee. Isabel.
Hi, Danny. Let's take a look at Rocket Lab. The company is buying satellite communications from Iridium in an $8 billion deal. So the combination will help Rocket Lab's goal of becoming a vertically integrated space company. Up next, we're looking at Charter Communications. You can see here the shares are popping higher by 25%. So the company is soaring on the back of Comcast's planned spinoff, as well as Bloomberg's report that Charter is in talks with SpaceX for a potential mobile phone offering. So that's a nice pop right there. And lastly, Microsoft also green, up by almost 2%. They're heading for the worst months since the dot-com era as investors felt really a lot of concerns and nervousness about how software giants will fit into the AI world. It has really erased more than $570 billion in market value in June, but today's looking like a good day, but maybe that's just today. Back to you, Danny.
Yeah, it might just be today, considering they're down, I think, 20% from their high. Isabel, thank you very much. We'll catch up with you later. But first, coming up on the show, New York Stock Exchange owner ICE is adding new futures contracts tied to events as Wall Street leans into prediction markets and tries to hedge a changing Fed and changing geopolitics. That's coming up next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with a debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Let's get you some high interest stories. A look at what's making headlines around the world. With that is Isabel Lee. Isabel.
Hi, Danny. We're looking at a strong aftershock rattling Venezuela today as rescue crews continued searching for survivors after last week's deadly twin earthquakes. The 4.6 magnitude tremor sent residents fleeing to the streets of Caracas. Officials say at least 1,450 people have died, thousands remain missing, and more than 2,600 rescuers from around the world are on the ground. And Google co-founder Sergey Brin took a steep hit on New York's real estate, selling his stake in a rent-stabilized apartment fund for just 6 cents on the dollar. The investment soured as rising costs, rent caps, and mounting legal troubles hammered landlords across the city. And Millennium Management is launching an AI lab to speed adoption of cutting-edge artificial intelligence across the $89 billion hedge fund. The lab will test new AI tools, partner with AI companies, and recruit top talent as Wall Street races to use AI to improve research and investing. Danny, back to you.
Isabel, thank you very much for that. Elsewhere, NYSE owner ICE is adding new futures contracts for traders later this summer. They will be tied to global monetary policy decisions and U.S. natural gas storage, as ICE tests institutional interest in event contracts. Joining me now is Wall Street chief correspondent Sri Natarajan. Sri, how much of this is, maybe you want to hedge the central bank decision or just ICE trying to get into prediction markets?
Well, a bit of both, right? You have seen the massive growing popularity of these prediction markets, of these binary contracts, the yes or no events. Now you're taking that core appeal of prediction markets, those betting markets, and repackaging it for Wall Street, making it regulated, making it centrally cleared, and giving investors a pure play hedge, a way to deal with the big events that shape financial markets. That is, critically, when you think about it, the big central bank decisions. And we're talking about the Federal Reserve, the Bank of England, the European Central Bank. And also when you have the EIA gas storage number, ICE is saying we'll also give you an opportunity to do that. Up until now, if you had to hedge these events, you had to look for proxy instruments, which were good, have been popular, have been used, especially if you think about the CME complex. Now, this from ICE is a direct challenge to that. They're saying, ignore the proxy instruments. Let's make this a direct pure play action. It's a yes or no event, and this could be a way to draw big institutional investor money. And just to strip it back a little bit, if you think about the growth of prediction markets as the appeal being in, say, sports investing or betting on sport events, The real money, however, might be in the financial events, in the institutional investors being drawn to these products, and that is what ICE seems to be going for.
Do we have any idea of how many institutions were already using some of the poly market bets? Because it makes sense. You could know what some big event is going to be, but you don't necessarily know the market reaction, so it's hard to find that clean proxy. So has this already been widely used among institutions? Is this just trying to grab market share, maybe not from other futures markets, but from poly market?
I think it'll be fair to say that institutional investors have been curious, but not really active, because they don't see the liquidity, especially for economic event-based contracts. Yes, there's a lot of interest in sports events and some of the other political events where you've seen big volumes on platforms like Polymarket and Kalshi, but not necessarily for economic events, not in the kind of liquidity that would draw the biggest players. But you could so easily see when a product like this is rolled out, it could draw in the big market makers. People like Citadel Securities and others would want to jump into a market like this because it is an extension of the kind of services they offer to investors anyway. They would like to sit in the middle of these markets.
Yeah, and for what it's worth, I mean, someone like an AQR has talked about being interested in trading poly markets, so maybe, to your point, this is an easier way to do it. You did, though, mention it's particularly interesting. We were talking about this in the break, that ICE is doing this because they have an investment in poly market, right?
Right. It's a two-pronged strategy. They made a massive investment, nearly $2 billion in poly market, betting on the growth of that platform, which, mind you, is facing a lot of regulatory challenges. It's not even available in the US, but it is focused on a retail crypto native audience. And on the other hand, this is for a pure onshore Wall Street, centrally cleared, regulated audience. So ICE is playing both sides of this and is betting that if either one takes off, it's a big win for them. If both of them take off, it's a home run.
What an interesting story. Thank you for bringing this to us, Sri. Really appreciate it. That's Bloomberg Sri Natarajan. Coming up, hedge funds are dumping certain tech stocks at the fastest pace in a decade. Lazard's Eric Van Nostrand weighs in next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Hedge funds are trimming exposure to some areas in tech. Net selling of IT and communication stocks jumped last week by the most in over 10 years. That, according to Goldman Sachs' Prime Desk. More broadly, global stocks saw the largest net selling in 3 months, with both short and long sales driving the move. Joining us now is Lazard Chief Investment Officer Eric Van Nostrand. Eric, great to see you. Thanks for joining.
Good to see you.
It does feel like something has changed in tech. Mag 7 has been chronically underloved in the past few months, down more than 10% from their peak. Microsoft, Meta, those are in a correction. Has something changed for you in the way you're looking at some of the big tech players?
Yeah, I think what we saw last week, Danny, was the first real pause that the market has taken on some of the AI enthusiasm in upwards of a year. We saw a few important developments in AI space kind of coincidentally come together last week. We saw the market really reckon with the bottleneck that's happening in memory for data centers and for model development, at the same time that we saw a lot of headlines about some of the big AI spenders, companies like Microsoft, starting to shift toward cheaper models, starting to shift to maybe a token minting type philosophy as opposed to the token maxing of the first half. And I think all of that gave a bit of a pause to the narrative in a way that I think we'll see more of over the course of the year.
The narrative is also interesting because it's not just the equity and what they're building, but it's also just how this stuff gets financed. And obviously, Lazard as a whole has been at really a critical juncture of that. You've had so many companies come to market. SK Hynix wants to list in the U.S. You had SpaceX, but then you have OpenAI delaying their IPO. SpaceX bonds are now trading at a discount. Is financing going to come under stress too, at least when it comes to public equity and credit?
I think that's certainly what the markets are reckoning with right now. What we're seeing is it's a very new kind of, not just technology, but it's a very new kind of market feedback that investors are struggling to figure out how to deal with. Most financial market watchers, most people in my cohort spent their whole adulthoods worried about aggregate demand. Like, our government's going to stimulate enough to get out of this recessionary hole? Are consumers and businesses going to spend or invest enough? Most of the uncertainty today is different. It's about supply. Is the productivity shock from AI going to be as real as some of the optimists think or not? And what we saw last week was a little bit of a pinprick in that enthusiasm. Now, at Lazard, we still expect the technology to be radically transformative. It's transforming the way we work day to day, as I know it is for everyone across the industry. But I do think there's a tension between the really enthusiastic multiples and valuations in some of these asset prices now.
Is it just a timing issue then of, like, are you getting a return on investment for these AI companies soon enough to allow an equity market to reward them?
I think markets get confidence from using historical data to make forecasts. And in AI space, we don't have that historical data.
True.
So the pricing that economists and traders have to put into their models for how much money these frontier model producers are going to make over the coming years, it has to be necessarily based much more on speculation and intuition and creativity than in conventional industries. That leads to more uncertainty, and when you get a little piece of bad news, that leads to a bigger negative reaction.
Your CEO, who I spoke to, has been really great on this, that, like, there have historically been technological disruptions, but this is the quickest and fastest one we've gotten. So how do you handle that? How do you think about where to invest for the long term if we don't know what things will look like in 5 years' time?
Well, in my view, Lazard's an active management shop. Our business model is predicated on our ability to understand the world a little bit better than our competitors, see what's coming around the corner in terms of how these companies are going to develop. And for that kind of a business model, I think this is the perfect it's the perfect canvas for us to really think bold and creatively about how these companies are going to operate. So we're thinking about the financing angle. Who is it that's extending credit to these producers, and where are the places that are going to benefit from the technology that aren't the super headline sexy names that are producing the expensive models today? Because as we're seeing with some of these open source Chinese models, there's less confidence that the same models are going to continue to dominate the landscape. The model layer might be less important than we all think.
It's so interesting to look at, like, the most latest release of one of those Chinese open source models, basically, like, hitting a lot of the same metrics as the best from here. Eric, you're going to stick with us. We have more to discuss, and the opening bell coming up, and a quick check on markets ahead of that. We are looking at a rally after 5 consecutive days of losses, the first time that that's happened so far this year. On the other side of this break, your opening bell.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Just moments away from the start of your cash trade, you're watching Bloomberg Open Interest with me, Danny Berger. Matt Miller is off. It's a market that is trying to find its footing. We are buying the dip, and what a dip it was yesterday. 5 consecutive days of selling. Interesting to see things like small caps and equal weight outperform as tech drags us down, but rebounding in tech this morning, kind of the opposite of what we saw last week. The Nasdaq up nearly 1% as the S&P is up 0.7%. Some interesting bell ringers down at the New York Stock Exchange. We see Del Monte. They are the produce company, and they are merging together their fresh business and their packaged business. The CEO at the front of the podium, and we will be speaking to him in the next hour, so we wish him a safe travel as he goes from the New York Stock Exchange down here to Bloomberg's offices. Over here, I'm guessing this is a flight hanger and not the Nasdaq. We will see the Nasdaq in a moment. There you go. It is Honeywell Aerospace. Some more deal news there. They have just spun off from Honeywell. I talked to the CEO about this. They have been very busy spinning off non-core assets, and the CEO of Honeywell Aerospace will be joining The Close. So some exciting bell ringers. Let's look at some of the individual names this morning. Because we were buying the dip in NVIDIA, that stops. We're still down 0.1%. And look at Micron, down nearly 2% despite the entirety of the Nasdaq bouncing back. Again, this real angst over the AI trade does not seem to be going anywhere. We're just talking about Eric with that. And then also looking at Comcast this morning, that's up nearly 11%. It has announced plans to split its media and telecom business next year. So NBC Universal and Sky will be pushed to the side, and Comcast remains. Again, that's up almost 10%. Let's head back over the desk. Still with us is Lazard Chief Investment Strategist Eric Van Nostrand. Eric, so we were just talking about, again, the wobbles in the tech trade. But the other thing that seems to kind of have lost its punch is something that was dominating, and it's headline risk, specifically around Iran and what the price of oil is doing. It seems like it's confined to the weekends at that moment, but I just wonder if we are at $70 a barrel for oil, if just the headline risk doesn't matter as much anymore.
Yeah, look, I think the Trump administration and the general policymaking community around the Iran war has done a pretty good job convincing markets that there's nothing much to see here on the supply shock front. And I just think that's out of touch with the economic reality. I think even as we see the tensions ease meaningfully, and I'm as encouraged as everyone by each round of apparent truce or ceasefire, but it seems like we've been through a lot of them now. Yeah. This is still unequivocally the biggest supply shock of our adult life.
Why aren't oil prices showing that then? Why is there still this disconnect?
I think markets tend to move on short-term psychology. And I think the positive vibes around the traffic in the Strait of Hormuz looking a lot better than it did last week compared to the weeks before has a lot of people speculatively positioning for cheaper oil. I think what they're generally overlooking is that price of crude oil in the Gulf is not the same thing as the price of retail gasoline in Ohio. And what's happened over the past couple months is inventories of gas have been drawn down substantially over the past couple months to keep retail gas prices in the United States and in Europe and in other developed economies from skyrocketing further. Now we're operating in a world with lower inventories, so less cushion for oil producers to manage. So every incremental piece of bad news in the Gulf is going to have a bigger downside impact on those prices.
So even if we were to reach some sort of truce and you get shipping moving through the Strait of Hormuz, and I'm assuming here that it moves through not at 100%, but slowly inches our way back up, what is the timeline then, or a catalyst that creates the paper markets, forces the paper markets rather to reflect the physical markets?
Yeah, and look, I think that would be good, to be clear, and it would help moderate the oil price outlook from where it stands from here. But what you're likely to see in the near term is narratives around producers and gasoline retailers in the United States who are inventory constrained, even as that traffic through the Strait starts to slowly climb up, because they used up all their cushion. They used up an awful lot of their cushion, insulating consumers from the past couple months. And if you were to double on top of that, another pause like we saw 2-3 days ago in the market's confidence in the peacemaking process, then that's going to be a worse outcome for markets than the last round of tension, because now there aren't any inventories to add some cushion.
Well, markets have started to back off the most extreme rate hikes that were priced in. And in large part, it's because of this. We're going to hear from Chair Kevin Warsh this week from Sintra, who's probably going to do his best to say nothing, given how the Fed decision went last time around. What are you expecting, and what are you looking out for?
Well, obviously, it makes sense that the market should be looking for fewer hikes than they did a couple weeks ago, given how much we've seen the oil price come down. But my basic point here is that we are not out of the woods for inflation-related supply tensions in the oil market. And I still think we're going to see a conversation both about domestic oil prices, but also about monetary policy and interest rates in the United States that veers in the direction of tighter rates to combat an inflationary problem that we're not through yet. I think the Fed will talk about looking through this as a supply shock rather than a demand shock, to go back to my earlier point.
Sure.
But I still think there's a little too much optimism in markets right now that we're just out of the woods on inflation in a way that's disconnected from the economic reality.
What should be pricing that in? Is this a bond market story, or do you think equities, again, we sold off yesterday, but having nothing to do with inflation, do you think equities are a problem where they are right now, too?
I think bond markets are actually a little closer to the mark in terms of the historically high levels of long-term interest rates that we've seen on U.S. Treasury debt and other global sovereign bonds. I do think are reflecting some expectation of more geopolitical disruption and persistently higher inflation globally. But at the same time, I think equities, in large part because of our first conversation on AI optimism, are starting to look through some of the inflationary risks at their peril.
I just wonder, again, going back to Sintra, because we are used to more than 15 years of deciding how we should react to macroeconomic data based on what the Fed is telling us. We really use them as a guide. That's disappearing. Is there a risk that the market still tries to do that it overinterpolates something that Kevin Warsh says, or it takes a piece of data and runs with it because it assumes something that is no longer assumption? Just like kind of how new of a world are we living in and trying to get a market reaction from different macro data?
Yeah, it's a great question because it goes right to the point I started with about demand and supply. The Fed, I love watching the Fed as much as anyone. I grew up a Fed watcher.
Really,
I still am. They're a lot of fun. But they are not the be-all and end-all of everything. Their mission is demand management, price stability, and full employment, and both of that involves tweaking aggregate demand. The big themes we've been talking about today are mostly about changing supply shocks that the Fed doesn't really have the toolkit to engage with. I think Chairman Warsh knows that. I think he's made that clear in a lot of his public remarks coming into the job. So we should expect monetary policy to explain less of the variance in market outcomes than we're used to from the past couple decades.
Hey, Eric, just lastly, and just to end it on the AI point, because we've been talking about how dominant of a force it is in equity markets. I wonder, as these hyperscalers turn more to bond markets, does that present an issue when you're putting together a cross-asset portfolio, that all of a sudden, corporate bond markets are starting to look more tech concentrated, and perhaps there are sort of less of ballast or less offsets to each other as they once were?
It's the right question, and it does reflect, I think, the changing nature of the way these hyperscalers are financing themselves. But I tend to bristle a little bit when I see some headlines that sound like, oh, we should panic because because an AI firm is going into debt.
Sure.
All great American companies have a certain amount of debt financing. It's a very healthy way to organize one's capital stack. So that by itself isn't a negative signal to me. What is a negative signal to me are the very deep existential questions about whether these expensive American frontier models are going to be the main suppliers of reasoning as a commodity when China can put out these cheap open source models.
Does that mean when these stocks IPO, OpenAI, Anthropic, at already very lofty multiples, that they're maybe not as attractive right now to actually own?
Well, look, I think, they're at lofty multiples because no one else who's ever IPO'd has had the kind of investor confidence in their cash flow paths, right? And to be very clear, I share the confidence that these are going to be transformative entities. But, when you're trading at 100x sales, there's a lot of daylight between that, between optimism and that kind of multiple, right? And it is more uncertain than the cash flow paths of historical IPOs. And that does lead to some downside risk.
All right, Eric, we're going to have to leave it there. It's so great to get you on. Please come join again soon. That is Eric Van Nostrum of Lazard. And let's get a check on your equity market about 9 minutes into your trading day. And we are moving higher, pretty even breadth to the upside and downside. Leading us higher is a rebound in the Mag 7. So you have Amazon at the top of the pile in terms of how many points it's contributing to the S&P 500, adding 7.6 points. The S&P itself is up about 51 points. A really good prime day. We're going to talk about that in a bit, but it might not just be that. Again, it looks like just mass buying in the Mag 7s that have been beat up and are down more than 10% from their peak. So Alphabet, Microsoft, Broadcom, NVIDIA, Meta, Apple, all those names having a good day. Interesting to see chip stocks, another very not so good day. Micron down 3.5%, as is Intel, SanDisk. On news, maybe not on the news, but maybe related to the news, that SK Hynix and Samsung are going to spend something like $800 billion over the next few years building out some of their capacity. Verizon announcing a deal with BT, but also having results. They're falling alongside AT&T and some healthcare companies not doing well either. Healthcare has been outperforming the S&P 500 by the greatest degree since 2020. So when you look at the individual sectors, again, communications, that's at the top of the pile because that's where a lot of those Mag 7s live, up 2.4%, followed by consumer discretion and infotech at the bottom of the screen, materials, real estate, and utilities. So some bond proxies having a not great day. Coming up, Comcast soars on plans to split into two companies. It creates a whole new media firm. That's coming up next. You're watching Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Ten minutes into your trading day, and we are moving higher. Even though Micron is down, the Philadelphia Semiconductor Index is fighting for gains. The Nasdaq outperforms as the Mag 7 dip buyers come in with some force, and the S&P up 0.8% after 5 consecutive days of losses. Let's get you some top calls. Here's Bloomberg's Isabel Lee with some of the Southside action this morning. Isabel.
Hi, Danny. First up, we're looking at Citizens. They're starting Six Flags coverage with a market outperform rating, saying that the theme park operator is poised for a turnaround. The firm sees the new CEO unlocking value across the portfolio, dividing attendance growth, and strengthening the balance sheet. Next up, Philips Securities. They're cutting sales force, saying growth is slowing despite its early AI lead. So the firm says AI revenue will probably be too small to lift overall sales for several years. And finally, we're looking at Seaport Global Securities. They're upgrading Warner Brothers Discovery's, calling it a buying opportunity as a deal closure risk around Paramount Skydance eases and as regulatory approval moves quickly. Those are your top calls. Danny?
Isabel, thank you very much. Let's stay in the world of media deals, and Comcast is splitting up to create a new media firm next year. It will separate its NBC Universal and Sky Group segments into their own company, separating it from the telecom business. Bloomberg's Leanna Baker joins us and covers M&A for Bloomberg. This feels like an effort, a years-long effort that Comcast has been going under. Of course, they've already spun out some other their media businesses. Did this always seem like the plan for them, to just get telecoms to stand alone?
It was definitely something we've been chasing for a long time. We couldn't quite catch the announcement. No one broke this big news that they're splitting. But it really is years in the making. This is the trend right now for media companies. It's not just Comcast. Before Warner Brothers sold to Paramount, they were going to do a split. And it just feels like every few years companies decide to spin off to grow, get slimmer to grow. And it's something we're seeing across all industries, not just media. Although it is interesting, we're seeing all these media deals this week when Sun Valley kicks off next week. So I wonder what we're going to be talking about then.
They're going to have run out of deals.
Right.
And I know your team's going to be there, so I'm excited to hear what does come from it. But is part of this just that these media assets are just unloved? You want to spin them off, not have them under your roof? I mean, Versant, thank you.
So
Versant's down like 21% since they've spun off from Comcast.
I think people are still trying to understand that stock, but they obviously have assets that we know, like Sci-Fi and the Golf Channel, and they're trying to build out the company through some acquisitions. And I think that's something that Brian Roberts, who's going to be the chairman of both Comcast and NBC Universal, has said today on the conference call. He wants these companies to keep growing. So it's not just about slimming them down. It's about directing them towards growth in a slimmer way, losing that conglomerate discount. But something we see in M&A is that every few years you go from scale to slimming down. So maybe in a few years they could get together again. And I saw there was even some chatter, could NBC Universal merge with Versant? So you never know, how the trends are in consolidation.
Well, in terms of getting bigger, not necessarily getting bigger, I guess just partnering up. Your team has also been on the story about Verizon and BT, the UK telecom provider. What sort of arrangement are they reaching together?
The exact same themes as this Comcast split. These assets were unloved. Verizon's new CEO, Dan Schulman, who came from PayPal, he's been clear that they want to make divestitures. They want to slim down things that aren't growing as fast. And British Telecom has also for years been trying to deal with their international business. They had been approaching different competitors. So this is a way to sort of do a bespoke deal. You combine these in a 50-50 JV. That's really hard to do in M&A. Verizon's going to have a payment to British Telecom, and it's supposed to create this bigger international company focused on business customers. And it's a way for these companies to get this off their balance sheet and create a new entity.
Just finally, Leanna, I know that there has been a little bit of discussion, some chatter about SpaceX and Charter with a partnership, a mobile phone partnership, again, in the world of telcos. What might that look like?
It kind of got lost in the SpaceX IPO, this whole Starlink business, and we're waiting to see how we're going to get cell phone service, from SpaceX. So I think this Charter tie-up, which is not an M&A deal, it seems to be a partnership about telephone service, that could be driving Charter's stock today. There was also another satellite deal. Iridium got acquired by Rocket Lab today. So there's a lot of interest in this convergence between spectrum, mobile phones. But as you know, we don't get our cell phone service yet from satellite, maybe when you're on a plane. So this is all very futuristic, and it's something to watch whether cable companies could maybe team up for this next stage of growth.
Just on a very broad macro kind of deal lens, because I thought about this because SpaceX does their cursor deal with stock, and I remember Ryan Gould was on the Deal Show talking. I think it was a Qualcomm deal, maybe that was all stock too.
Yeah, we broke that modular.
Exactly. So with all of these, it just feels like a lot of these deals are being based on all stock deals, and I just wonder if you continue to see some market selling, especially around tech names. Do you anticipate that to slow the pace? How much of the deal activity we're seeing is just because markets are at an all-time high and companies can afford to do this?
One of the reasons there's going to be this rush of IPOs is that once you have currency, you could do more deals. And even through these spin-offs now, all these companies have the currency and stock to do deals. So it's something we're watching. But you'll still see cash deals. You'll still see private equity deals or cash and stock deals. Remember those?
Yeah, those old things. Leanna, thank you so much for joining. Looking forward to seeing you again on Wednesday. I hope I will, because every Wednesday, Leanna and the news team joins me on Bloomberg Deals. That's at 12 p.m. New York time. Coming up on the show, the American consumer is still spending, at least on Amazon. We're going to break down what this year's Prime Day says about the retail outlook. That's coming up just after this break right here on Open Interest.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
You're watching Bloomberg Open Interest. Let's get a check on your equity market this morning, about 20 minutes into your trading day. And we have a rebound on our hands after 5 consecutive days of selling last week. The first time that's happened all year. It's being led by the NASDAQ, but this is, I don't know, maybe some of this is also just quarter-end rebalancing, and that's some of the weird Z's that we're seeing. The Russell 2000 had been outperforming for much of the past quarter. That starts to ebb. We're down 0.3%. Equal weights also had a pretty good month. Bloomberg dollar spot, little change. Brent crude, that's up by 1%, but we're still below $73 a barrel. So perhaps we can ignore some of the Iran headlines, just given that. Of course we can't. They're very important, but maybe having less of an impact on this overall market. NVIDIA, that has a good day, as does SpaceX, up 2%. Chip stocks still getting hurt. I believe the Philadelphia Semiconductor Index as a whole is up, but the stewards of the chip trade, Micron and SanDisk, are both down 4%, 5%. We learned that in South Korea, SK Hynix and Samsung have some pretty big spending plans over the next couple years, hundreds of billions of dollars. Apple's doing all right, up 0.3% after the whole brouhaha last week about them raising prices because of these companies, because of how expensive memory is. And Amazon leading market gains, up 4%. So Mag 7 is rebounding, but additionally for Amazon, to help it out this morning, online spending reaching $26.4 billion during their Prime Day. Again, it's just another sign that consumers remain resilient despite lingering economic uncertainty. For more, Bloomberg Intelligence senior retail analyst Poonam Goyal joins us now. Poonam, can you just break down the numbers from us? What did we see from Amazon's Prime Day?
Sure. So Amazon's Prime Day last week, June 23rd to June 26th, sales were up $26.4 billion. That was what online sales were throughout Amazon Prime Day, and that's up 9.3% from last year. So encouraging numbers out on Prime Day shopping on those 4 days. That said, consumers did pull forward spend. So, some of that increase came from everyday essentials, came from back to school spending, and also came from just people looking for values. So they had a list going into Prime Day. They knew what they wanted to buy, and they took advantage of the deals that came about, whether it was from Amazon or from Walmart or from any other company that offered deals last week.
So is that a good sign for these companies or for the overall consumer? In other words, if you're spending on deals, is that maybe not a bad sign for retail as a whole because consumers want a deal right now?
Yeah, so it's a mixed message because it's great that consumers are spending, right? That's a good sign. But the fact that consumers are focusing on deal spending is showing that there is some pressure on the consumer, especially the low-end consumer, where they are strapped for cash, where they are bargain hunting more. So it kind of tells us that the value message is quite clear from the consumers, that they are shopping when there are deals, when there are discounts. So absent deals, are they going to pull that plug? Unlikely, especially if they're a low-end consumer.
Does that mean that some of the discretionary spending, Poonam, has pulled back in favor of some of these everyday essentials?
It absolutely has. Once again, you have to tier it across the different consumer buckets. At the low end, yes, discretionary spending has pulled back. At the high end, it hasn't. The high-end luxury consumer is still spending, and they're spending like, there has really been no impact on their wallets.
Do you expect that to change at any point, considering that income growth is still there, but it hasn't necessarily kept up with what we're seeing in inflation?
I think over the next 3 to 6 months, as we look into the back half, particularly for the two major spending events, back to school and holiday, consumers will be more deal shopping. But I do think that unless there is a major change in employment levels, which is the number one catalyst that we look at to kind of gauge if consumer spending will tick down, we think the consumers will spend, but just will be more mindful. Once again, outside of deal-driven events, we think spending could be slowing.
Poonam, thank you so much for joining us. As Poonam Goyal of Bloomberg Intelligence. Coming up in the next hour, we're going to catch up with Monetta's Ethan Devitt, sharing emerging trends in the AI trade that seem to be unseating the Mag 7. And we'll speak with Del Monte CEO about the agriculture business and ventures into canned goods. All of that is coming up in hour 2 of Bloomberg Open Interest.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Sherry Preston. The Supreme Court today has rejected a push by President Trump to throw out a jury's finding that he sexually abused the writer E. Jean Carroll at a New York City department store in the mid-90s and later defamed her. The ruling means that President Trump stands and he will have to repay her that $5 million. The Supreme Court's getting ready to wrap up its session for the summer. Several major decisions expected to be handed down either today or tomorrow. Among them, President Trump's attempt to get rid of birthright citizenship. Former NFL running back Chris Johnson diagnosed with ALS. He is no longer able to even hold a cup or speak, even though he can communicate through a speech-generating device triggered by his eye movements. He talked to ABC's Michael Strahan as part of an exclusive interview.
I know you, Chris, from just the incredible athlete that you are. How do you process it?
Honestly, I don't know if you ever fully process it. At first, you're in shock. Then you realize you have two choices. You can give up or you can fight. I chose to fight.
Hundreds of aftershocks making rescue efforts even more difficult for those in Venezuela. ABC's James Longman was in Caracas when a strong one could be felt.
When the aftershock hit, everyone just went running down this street to get away. We're being moved away from here because obviously we're still surrounded by tall buildings. Now, over this weekend, 33 people were miraculously found inside the rubble. That is spreading a sense of hope in Venezuela that other people could be found. But right now, there are still 47,000 names on missing lists.
It was a deadly weekend for firefighters in the West.
3 firefighters were killed, 2 others hurt, battling a fire at the Utah-Colorado border. Officials say they were trapped by the fire with no escape. First responders honoring them with the procession in Grand Junction, Colorado.
That's ABC's Melissa Adon. The Dow is up 327 points this hour. You're listening to ABC News. It's happened again. A person has been attacked by an alligator in Florida. ABC's Jim Ryan says it's the third such incident in a week.
A 31-year-old woman who was swimming in the Aconlacatchee River in Seminole County was dragged under by an alligator Sunday. She was taken to a hospital where she died of her injuries. A day earlier, a child was bitten at a fish camp in Marion County. And a week ago, a snorkeler was injured in an alligator attack in the Rainbow River near Florida's Gulf Coast.
New figures show about 3 million fewer people had Affordable Care Act health insurance plans in February of this year compared to February of last year, possibly because of the high costs now that federal subsidies have been taken away. It's back to court today for Luigi Mangione, who is charged with the killing of United Healthcare CEO Brian Thompson. There was talk of a plea deal for him, but ABC's Phil Tate outside the courthouse says not much has been discussed about that recently.
Luigi Mangione will step back inside of a Lower Manhattan courtroom. But this comes after sources say that prosecutors had put a plea deal on the table and that there have been discussions between prosecutors and defense attorneys for Luigi Mangione. It's unclear how far these conversations even went towards even coming to an agreement, but we know at some point those conversations went silent.
NBC Universal is splitting with Comcast, part of a deal that will turn the media companies into two separate entities. Funeral services today for legendary music exec Clive Davis, who launched the careers of Whitney Houston, Alicia Keys, and others. Sherry Preston, ABC News.
This is Bloomberg Intelligence
with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines
and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence
with Scarlett Fu and Paul Sweeney
on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, streaming live at Bloomberg.com as well. We got stocks moving higher here this morning. We'll get to that in just a moment. Coming up, we're going to check in with Wendy Benjaminson, Bloomberg News senior editor. She's down there in D.C. We've got the latest on the U.S., Iran, and what's going on in the Middle East. Mandeep Singh, global head of tech research for Bloomberg Intelligence, is going to join us here. The South Koreans, they're serious about this AI thing. Samsung SK to spend $880 billion to drive Korea's AI lead. That's some serious cash there. Lauren Cassidy, partner and portfolio manager at Founder ETFs, will get her thoughts on the markets. And Gautam Mukunda, he's a lecturer at the Yale School of Management and a Bloomberg opinion contributor. We'll get his thoughts on what he sees going on out there in the world. Sam Fazeli, Bloomberg Intelligence, he runs all of our pharmaceutical healthcare research. We'll get the latest on what's going on in global healthcare. So a lot coming up in the next couple of hours. It is Scarlett Fu, Paul Sweeney live here. Let's go right now. Kick it all off with John Tucker, Bloomberg Business Flash. John.
All right, guys. Good to see you again. Happy Monday. Let's just start with this headline. The Supreme Court says mail-in ballots can arrive after Election Day. So you can interpret this as something of a setback, defeat for the Trump administration. The Dow Jones Industrial Average right now, a record among the most active. Of course, shares of Comcast. We've been telling you about this all morning long, and Bailey's going to break it down a little further. But, of course, they're planning to spin off the media assets. And the move could also pave the way for M&A across both connectivity and media businesses. The most active, among the most active, and also the best performing stock in the S&P 500 right now, Charter Communications. Charter and SpaceX have been in talks about a consumer mobile phone offering. And there's some word Charter maybe affected by this Comcast deal. So who knows? That's the word on the street. That's actually the word from Paul.
Yeah, there you
go. Cameron Dawson, meantime, of New Edge Wealth, firmly focused on the semiconductor stocks.
And they actually account for 55% of the total return of this market. So a big question is if that semiconductor big run, big rally can continue to push this overall market higher just because the pace of that return has been so robust.
Right now, the Philadelphia Semiconductor Index is down 1.5%. The Dow Jones Industrial Average up 241 points, up 0.5%, 52,120. Again, that's an intraday record. S&P 500, 29 points higher. That's 73.83. And the NASDAQ Composite Index up 174 points. Brent, the active contract, the international benchmark, 72.68 a barrel. So that's up right now, 1%. And the latest national survey from AAA shows the average for a price of unleaded has now fallen to $3.86 a gallon.
How about in New Jersey? You're part of New Jersey.
Actually, I didn't go to. I feel like a trader. I went to the Quick Check this morning. It was 385-ish.
Yep, right there.
Still higher than what it was before the war.
Oh, absolutely. It was 280, 290 something.
Yeah, we're getting there.
Way back when. Anyway.
But crude oil has made the complete round trip.
Yes, it takes a little while for the distillates to catch up, is what they've been telling us.
And we have refineries all over the place in New Jersey.
Yes,
exactly.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Good to see you again, guys.
Good to see you, too. Welcome back.
Where were you last week? You were away. No,
I was at the Jersey Shore.
There you go.
On the beach.
You're doing, that's what we do.
That's what I do.
All right, very good, John Tucker. Good to have you back. It is Scarlet Fu. Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Stocks hires. John Tucker's been reporting. Let's take a look at some of the stocks on the move here today. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, I want to talk about the stock of the day, Comcast, ticker CMCSA. Right now up just more than 8.5%. Biggest gain since late April. That does come after news that the company is planning a tax-free spinoff of NBC Universal and Sky, separating into two entities, with Comcast focusing on technology and platforms, NBCU focusing on media and entertainment. Just want to call out a comment from Mike Cavanaugh, who will be the CEO at NBCU, on the call, basically asked, why would you do this deal? And he says, previously believed that scale and diversification benefits warranted operating these businesses as one company. Quote, we've now simply changed our mind about that. We've now concluded the future of success for each of these businesses will depend on focus, speed, and strategic flexibility that the separation will unlock. Paul, love when these stocks, merge together, break up, a little bit of this, a little bit of that.
You know who wins?
The bankers and the lawyers. Lawyers get fees too.
That's right, the lawyers.
Goldman Sachs and PJT advising Comcast here. I think it's just simply, I think they're right. They're in two challenged businesses, but the connectivity business, which is their cable TV and the broadband business, that's really declining in terms of the cable TV cord cutting. And then on the broadband business, which is a good business, it's just really competitive. Let's take those two businesses, kind of leave them alone. And let's spin out the stuff that the theme parks, we really like that. And some of the cable networks and the streaming businesses, and give them a shot to grow. So from that perspective, it makes sense. And I was just reading the Moffett-Nathanson research, and he just said, hey, remember back when they did this deal, they bought these NBC Universal assets at trough cash flows and trough multiples back there coming out of the great financial crisis. And so it's been a good financial gain for them, but logic, that doesn't make sense.
Not so long ago, Comcast tried but didn't end up buying Warner Brothers Discovery. So this is quite the U-turn.
Yeah. The joke on Wall Street among media bankers, give Brian Roberts 5 years. He's ready to write a ticket. So there you go. What do you got? What else you got?
Yeah, the opposite. We've got a bit of a merger Monday. Rocket Lab, ticker RKLB, in a deal to acquire Iridium Communications, ticker IRDM, at an $8 billion valuation. The big thing to know is Rocket Lab, a key competitor with SpaceX in terms of getting things into space, and Iridium has long been seen as a satellite competitor to SpaceX in terms of satellite connectivity, potentially direct to cell. So this is a move kind of on the heels of the SpaceX IPO. Rocket Lab trying to beef up its operations and expanding those offerings, unlike Comcast, kind of streamlining those operations. So Rocket Lab's right now up almost 8%, and Iridium up close to 20%, trading around kind of that implied deal valuation of $54 a share. Again, cash and stock transaction. We normally don't see deal stocks rallying after a deal like this, but you got to keep in mind these are space stocks that have been beaten down the last few weeks.
All right. Last stock that you're watching.
Yeah. Applied Materials, ticker AMAT. Why? I don't know. Semiconductor stocks down 2%. This is the best performer in the SOX, so up 4%, bucking a big pullback that we saw really in the last, call it 20, 30 minutes across semiconductors. We did see a number of analysts, including Cantor Fitzgerald, raising price targets for Applied Materials, kind of bullish outlook on AI infrastructure. This is another company, again, surprise, surprise, viewed as benefiting from the AI build-out, semiconductor cycle, both durable and extended. Just wanted to call that out because, again, Philadelphia Semiconductor Index, the SOX, down more than 2% right now, but AMAT up more than 4%.
All right, good stuff. Thank you so much. Bailey Lipschultz, he is one of our senior equities reporters here at Bloomberg News. And for more conversations like this, be sure to subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market. That is available to you on Apple Podcasts, Spotify, or anywhere you listen. John Tucker talked about how gas prices are still about $1 higher than where they were before the war began, but crude oil prices have made the complete round trip and are back to where they were before the war started. And in large part, it's because the U.S. and Iran over the weekend have agreed. Well, after a weekend of some skirmishes, they've now agreed to stop mutual attacks. And so oil is trading at a near 4-month low. Let's bring in Wendy Benjaminson, our senior editor based in Washington, D.C., for more on this. Wendy, President Trump says that talks will resume tomorrow in Doha after both sides agreed to halt mutual attacks. Is this confirmed by Iran, or is this the president trying to manifest a meeting?
Well, could be a little of both, although Iran hasn't confirmed that they are coming to the meeting, but they also haven't done what they do when the president really is making stuff up, that they're not saying that there aren't talks, and they're not saying they're not coming. They've just been quiet on this front. And so we've expected, what we heard all weekend was that that the technical talks would resume this week. Now, remember, these are the technical talks that are mostly about really scientific details about their nuclear program and uranium and to what level it can be enriched and all that. But we also saw some reporting over the weekend that the talks, having moved from Switzerland to Doha starting tomorrow, according to Trump, will be much more about managing the Strait of Hormuz and dealing with this immediate problem that caused the near return to war last week, when a ship got fired on by Iran and then the U.S. retaliated and back and forth like that. So the talks this week might be just about managing the Strait of Hormuz.
Wendy, we had a guest on earlier today on surveillance who painted a scenario where this situation with Iran could be a status quo for months, well past the end of the year, where we just get ceasefires after ceasefires. What's the feeling, the people you talk to, about what an end game could be here?
Well, that's the trouble with these Middle Eastern wars that the Trump administration was so desperate not to get into, is the end game is really unclear, because you're absolutely right, and that guest was absolutely right, that the ceasefire, shoot at each other, ceasefire, talk, this pattern could go on forever. And as long as there isn't sustained battlefield action, the president can campaign and say that the war is not going on. But remember, we are now at a position, the global economy, I should say, is at a position less than it was before the U.S. and Israel started bombing in late February. And that is that the Strait of Hormuz is not free and open. And in fact, Iran and Oman are already having talks about the tolls that they want to charge, or at least that Iran wants to charge, on transiting the strait, which the U.S. says is unacceptable. And, so the strait is not open. Iran still has, highly enriched uranium. And, when Hezbollah and Israel are still at each other. So, the trouble is not only how does this end, when does this end, but what did the U.S. and Israel accomplish?
Wendy, before we let you go, quick question on the state of traffic through the Strait of Hormuz. It's clear that Iran plans to be involved, but we're not sure whether that means there are tolls or there are some kind of fees, or whether ships are even moving through clearly. What's the latest?
Good question. And it's a question that a lot of shipping companies are asking too, and insurance companies and the countries that receive Iranian oil. It seems to change every day. One day we hear that 60, 70 ships got through, some with U.S. naval escorts, some without. And then we hear that a ship gets fired on and disabled, or that the U.S. Navy stops a ship. And so it's still very confusing, even while one ship was hit with Iranian missiles over the weekend or late last week, there were other ships getting through. Apparently, it depends on where on the strait you cross, either close to Oman or close to Iran, and they are setting up lanes. So it's really chaotic and for companies, and not only on the shipping, but also on the lifting of sanctions. Right now, everyone who has to deal with the Persian Gulf is just in a wait-and-see mode and very confused, I'm afraid.
Good stuff. Wendy, thank you so much. Wendy Benjaminson is our senior editor for news in our Washington, D.C. bureau on the latest with U.S. and Iran.
Say that that's different, and because it's not the Fed, but what this does is this really expands presidential power. It means that the president has the authority to fire people at the top of what, like 20 agencies or so. And what they've done here is they've done away with Humphrey's executor, which was a decision which is standing for about 70, 80 years, I think, about the ability of presidents to fire people, which was that there was no ability for them to fire people at the head of agencies. And they've been cutting back on that bit by bit by bit, and now they appear to have gotten rid of it since I haven't read the opinion yet, obviously, since they're allowing the Slaughter to be fired. And one more thing, too, if you notice this week, what's happening, and last week, what's been happening is that they're releasing opinions at the same time that have to do with a similar issue. And what I think is happening, too, is it used to be that all the big decisions were loaded to the very end, the last day. But now we're seeing big decisions this week and last week. And I think the chief is trying to mix it up so we don't have a day on the last day of the opinion. And there were 6 to 3 decisions, and they were all in these big cases. So I think that's what's happening here.
So let me just make sure I understand. The Supreme Court ruled that Lisa Cook, a Federal Reserve governor, can stay in her job for now.
What's for now mean?
That's a good question, but it's while litigation continues, right?
Right. So, because they've had no litigation at all. He just said, hello. I want to say
she's
your
getting
friend
her
is
due process, in other words.
I assume that we have to see what the president does now. Are they going to go forward with this? Are they going to bother to go forward with this and have it litigated? Probably. And she's got one of the best Supreme Court litigators around, the former Solicitor General Paul Clement, who is just really, his record at the Supreme Court is phenomenal. And I think he is the one who has argued the most cases at the court. And you can see the deference the justices pay to him when he's arguing. So, I mean, that will go on. Her litigation will go on to, to stop this. But, by the time, who knows, by the time it gets done, Trump could be out of office. I mean, the way these things drag on.
So the president's efforts to push her out of the central bank's board, that is not going forward. That failed.
Yeah.
And you were saying that his ability to oust other government agency leaders has been expanded.
Right. This is all part of the theory called the unitary executive theory. I don't know if you've heard about it, but it's like that people who believe that the power of the executive branch should be in the president. So all these agencies are executive branch agencies. So the president should have the ability to fire the people who are in charge of the executive branch agencies. But I mean,
the Fed is different.
The Fed is different. But I mean, so with the normal president or the prior presidents, you wouldn't worry about what was going to happen because there wouldn't be a wholesale, you're fired.
Mm-hmm.
But, this opens the door, and people have been worried about them doing away with that Humphreys executor opinion. And
so the risk there is that these agencies perhaps lose some of their independence.
Yes, yeah, because, if the president doesn't like what you're doing, you're fired, But I mean, in reality, he is controlling. He has put most people in those agency heads, right? Talking about the FCC and things like that. So I don't know that we'll see anything happening right away, but it's a huge win. And this court, as you know, has been expanding presidential power over and over again. I mean, you had those decisions where, nothing the president does in office, in his duties, can he be prosecuted for. So, I mean, this court just believes in presidential power, and one has to wonder when the next president comes in, if they're not Republican, whether they'll start cutting back on presidential power. I mean,
I think it's worth noting here that stocks fell to session lows, or maybe not fall. They paired their gains and were at session lows right around the time that this opinion was published. They've since come back a little bit, and we're looking at modest gains in the S&P, Dow, and NASDAQ. The Russell 2000 is lower by 1.1%. So among the headlines that we got is the Supreme Court letting Lisa Cook, a Federal Reserve governor, stay in her job. This is a case that really tested the central bank's independence from the White House. So this is a defeat for the president's efforts to oust her over these mortgage fraud allegations. At the same time, we also heard that the Supreme Court has basically said that the mail-in ballots can arrive after Election Day. That's another defeat for the president. And certainly this is relevant given that we're at a midterm election year. On the other hand, and June, this is where it gets a little complicated. The other government agencies are not seen as independent. Really, because the president can let go of whoever he wants to.
Yeah, and I'm trying to pull up the opinion just to see what they're, how they parsed out these two cases. But I'm not getting it. I guess I have to refresh.
June, how about this ballot case? Just give us your thoughts on that.
That was a surprise, actually, the ballot case, because that's about Mississippi has a law, as do more than 20 other states, that as long as the ballot is postmarked by Election Day, it can come in 5 days, up to 5 days after, and it'll still be counted. So the Republicans were against this, obviously. President Trump is against this and any kind of mail-in ballots. And during the oral arguments, a lot of the conservatives seemed to be in favor of it, although the Chief Justice and Justice Barrett were wondering, well, would this affect, what about states that have all mail-in ballots? If we say that, so the argument is, in the Constitution, it says Election Day is this day, so you shouldn't be extending it any further. Well, if you can't extend it further, then can you go, can you also say, well, they can come in ahead of time? So I think that was part of the reasoning, and Justice Barrett wrote the opinion. But so that's a huge surprise, and it was 5-4, and so the most conservative in the no column. And so that's big because that could have affected the elections, the midterms coming up in so many states, more than 20. So that's actually a big decision, and it is a surprise.
Okay, very good. June, thank you so much. Appreciate it. June Grasso is a legal analyst for Bloomberg News. We'll let her go back and do that lawyer thing, like actually read the decisions.
I know we put her in an unfair position because she was working without the text.
I just want the AI Cliff Notes.
Thanks a lot. I'll be leaving.
One pager. June, thanks so much. We appreciate that as always. Let's go to Elliot Stein, litigation analyst for Bloomberg Intelligence. Elliot, I want to go to the Lisa Cook case. For me, for now, what does for now mean? That she can stay in her job for now?
Yeah, exactly. Well, this whole appeal was based on a preliminary ruling by the trial court earlier in the case, saying that she could stay in her position while the rest of the case would continue. And so that's really the issue that the Supreme Court was looking at. And they said, yes, she can stay in her position. But the real important part of the ruling is that they said the for-cause removal restriction requires that she have some sort of notice and opportunity to be heard, which the president and the administration did not offer her. So that's sort of the crux of the ruling.
Okay, so her litigation can continue, or the White House's litigation can continue as well. Who hears out this case?
So this will go back to the lower courts, and I should preface this by saying I haven't read the full decision. I read the brief summary. You referenced, you want AI, but the Supreme Court sort of gives you a brief summary at the beginning of the opinion, which I skimmed. But I think the way it's going to proceed is that it will be sent back down to the trial court for them to issue a final ruling. But the administration, presumably, if they want, will have to offer her some sort of notice and opportunity to be heard if they want to be able to continue to try to fire her. Otherwise, the trial court is going to rule in her favor.
So to the extent the administration wanted to extend litigation, what it's been known to do in the past, what's a timeline for a case like this? Because I'm wondering, does she have to worry about, is this something that could drag on for years, in which case the Trump administration will, end, or how does that play out?
Yeah, I mean, it's a little unclear exactly how it's going to proceed. Presumably, if the Trump administration continues to want to remove her from the Fed based on these accusations of mortgage fraud, they'll have to have some sort of proceeding, not a full trial, but some sort of administrative proceeding where she can present her defenses. If the administration doesn't want to do that, the case is essentially over. The trial court will rule in her favor and say there was no notice and opportunity to be heard, pursuant to what the Supreme Court said this morning.
Okay, so is the Supreme Court's role in Lisa Cook done?
For now. It could always come back later, because I don't know if we have real resolution on substantively what cause requires, right? We sort of know now procedurally what it requires. I'm not sure the Supreme Court, I haven't read the full opinion again, I'm not sure they got into the actual definition of what for cause requires substantively.
Okay. What does this say about how the Supreme Court views the Federal Reserve versus other government agencies?
Yeah, this is a very good point, because the other opinion, one of the other opinions that they issued, but simultaneously with the Cook decision, was the Rebecca Slaughter opinion. She was an FTC commissioner. As you recall, President Trump fired multiple commissioners from independent agencies who were appointed by Democrats for the most part. She challenged that, as did many other commissioners, and the Supreme Court early on sort of hinted that the president would be able to fire these other commissioners of independent agencies, but the Federal Reserve is different, and we saw that very clearly today, because the Supreme Court said that the president could indeed fire Rebecca Slaughter and other independent commissioners. I haven't read that opinion either, but presumably they overruled the Humphreys executor decision from 90 years ago, which established that the for-cause removal restriction was constitutional for independent agencies. I suspect now they're going to say it's unconstitutional.
Well, if I'm in the Trump White House, I feel like today was a win. I think that Slaughter case is huge.
The Slaughter case is a big deal. It's absolutely a big deal.
It's going to reshape.
Yeah, but that's not just a win for Trump. That's a win for the executive branch, because the next president who comes in can fire any commissioner of an independent agency appointed by a Republican that they don't like.
So a better way to phrase that, it's a win for the executive branch.
Yeah, and he's going to be very upset about the Lisa Cook decision. And also he, in an earlier order, it sounded like he lost his cert petition on the
mail-in ballots
case. And on the mail-in ballots case.
And the Jean Carroll case.
Right, exactly.
There's a lot going on.
So net, he's probably going to be angry this afternoon.
But for the executive branch, though, I'm not sure. I mean, so now the question for a lot of just scholars, constitutional scholars, is, aren't these agencies, their ability to be independent, isn't that a good thing? And I guess that's the debate, Rod.
So you have to balance that on the one hand versus this theory called the unitary executive theory, that the president should be able to hire and fire anyone he wants in the executive branch, and that he oversees the entire executive branch. And if you have these independent commissioners that the president can't fire, you almost have this fourth branch of government. That's the counter argument.
Interesting. Okay.
We have some comments from Senator Elizabeth Warren of Massachusetts. She is commenting on the Lisa Cook Supreme Court decision, says we'll keep fighting back against attacks on the Fed. She also talks about Bill Pulte and how he can't be trusted, should be removed, but that's separate from, again, her comments on Lisa Cook and how, according to Senator Warren, she or her party will keep fighting back against these attacks on the Federal Reserve. What are the White House's options now? How does it move forward with Lisa Cook specifically?
Well, I think if they want to continue to go after her for these accusations of mortgage fraud, they can, but they'll have to have some sort of proceeding where she's allowed to present her defenses. I think that's basically it. It's unclear exactly what that looks like. The Supreme Court, in the brief summary that I was able to read before coming on, said it doesn't have to be a full-blown trial, but they have to give her some opportunity to be heard and present her defenses.
And just to put some context on Senator Warren's comments about Bill Pulte was the one who brought up the fact that Lisa Cook perhaps had these misrepresented her mortgage application, right? Because he's the head of the FHFA, and he brought it to the president's attention, and that kind of got everything started, Paul, with this allegation of mortgage fraud.
So if I'm an agency head appointed by anybody other than Donald Trump, am I nervous about my job today?
Probably, but I think he's already fired most of the ones he wants to fire. I mean, I'm serious. Look at the CFTC. You have one. You have the chairman, and that's it. No other commissioners. And so, you know, the effect of that is you're probably not going to change the votes because you're always going to. It was always tradition that the chair would resign and let the incoming president appoint someone from his own party. Okay. But you're not going to have dissenting voices now to push back on the majority in these agencies, and I think that's really the big effect.
How much of this is a surprise? What surprises you about this string of decisions?
Nothing. This was exactly as we anticipated, that Humphrey's executor would be overruled, the president would be able to fire commissioners of independent agencies under the unitary executive theory, but the Supreme Court gave us hints as far back as last year that the Federal Reserve is different. Just based on it said that it has a unique structure, a unique history. It's it's sort of this quasi-private entity because it has a mix of being a government entity and also private sector members or at least private sector members who vote in some of the regional bank presidents. So it didn't come as a surprise. We thought the Fed would be treated differently.
Mail-in ballot, was that a surprise?
That's a little bit of a surprise. I don't follow that case. It doesn't have a business impact.
Fair.
But yes, I would say it's a little bit of a surprise, and I think June probably touched on that earlier.
All right, good. Elliot Stein, great stuff as always. Elliot Stein, Bloomberg Intelligence litigation analyst. See, that law school paid off.
Totally.
I mean, he started strong at Stanford, and then he took a wrong turn going to law school. I mean, I don't know.
He did that all without the benefit of reading the full text. So thank you, Elliot, for doing that.
Exactly. All right, Elliot, thanks so much. Right now, let's get a little bit of a reset on these markets. We go to John Tucker and a Bloomberg Business Flash.
Yeah, Scarlett pointed out, as soon as it came down, stocks turned mixed. They paired some of the earlier gains. So the ruling from the Supreme Court, hands off the Fed and Lisa Cook. It's going to be interesting to see, though, if this now gives Jerome Powell the reason to say,
oh, good point.
You know what? It's safe for me to finally leave the Fed now.
But,
so
you know,
I think
it's the
that
for now part
it.
that might give everyone pause, right? Because we don't know how that plays out.
I don't know.
Charter Communications right now among the best performing stocks in the S&P 500. Comcast, not far behind those shares, 8% higher. They're going to split the media and technology businesses, spinning off NBC Universal and Sky into a separately publicly traded company. Now, NBC Universal is going to hold the theme park division, Universal Film, and the TV studios, NBC and Telemundo networks, Peacock and Bravo. Sky, with the remaining Comcast, going to hold the company's broadband, wireless, and cable TV businesses. Again, shares of Comcast right now, 8% higher. We have new numbers on how Amazon, Walmart, Target, and others performed during last week's online summer promotions. Adobe says online spending across all U.S. retailers hit $26.4 billion during Amazon's Prime Day sale. Again, the S&P 500, 48 points higher. The Dow is at a record of 413 points at 52,288, and the NASDAQ Composite Index up 249 points. That is now a rise of 1%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Hi, very good. John Tucker, thank you so much. We appreciate it. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Busy day coming out of the Supreme Court. A lot of cases that are watched closely by this White House. Tyler Kendall joins us here. She is outside of the Supreme Court. She's a Bloomberg News Washington correspondent. Tyler, what's the feeling, do you think, what do you think the takeaway will be from this president, from this administration about this busy day of Supreme Court rulings?
Well, by and large, Paul, the administration got a win when it comes to the Trump v. Slaughter case, essentially expanding the president's authority to remove independent heads of independent agencies. Rebecca Slaughter was the last Democratic commissioner on the Federal Trade Commission. So that is considered to be a win for the Trump administration. Not necessarily a surprising decision. The justices had been a little bit wary of the idea that the president wouldn't be able to remove officials that are accountable to the executive branch. But the Lisa Cook decision means that she can stay in her job, at least for now, which means that that legal fight does continue. The justices did not weigh in on whether or not they believed that the Trump administration's accusations rise to the level that Lisa Cook should be fired, which means this is still a stay tuned situation. But by and large, that part of the decisions today does mark at least partially a setback for this White House.
So when it comes to Lisa Cook, I guess a lot of people are wondering what that means for Jay Powell, because the former Fed chair had said that he would stay on the Federal Reserve Board until legal issues are resolved. And maybe Lisa Cook was one of them, but I guess the Fed renovation and the DOJ's action against the Fed and Jay Powell specifically is still out there, isn't it?
Yeah, and it could come back up. There were a few different threads that we were watching in this case, Scarlett. One is the idea of equities, basically that the justices were looking into what the broad range impacts would be when it comes to the Federal Reserve and what would happen to the U.S. economy if a governor was removed. And I bring that up because we heard this be one of the main arguments from one of the conservative justices, Brett Kavanaugh. His line of questioning back when this case was heard in January very much focused on this. I'm trying to find the quote. At the time, he said that if Lisa Cook was removed, it would, quote, weaken, if not shatter, the independence of the Fed. And today, the decision was 5-4, and that included Brett Kavanaugh siding with the liberal justices on this court in favor of Lisa Cook being able to keep her job for now. So that's probably a thread that would make its way through if a case against Powell ultimately came up. And the second is the idea that Lisa Cook wasn't given essentially due process in responding to the allegations against her before she was fired. You remember when all of this was happening and essentially she was fired via a tweet from President Trump without much chance to respond to the allegations that were posted on social media. So there are a lot of different factors in this case, but by and large it is taken to mean that the Supreme Court bolstered the independence of the central bank.
Tyler, we also had a ruling on the Supreme Court earlier today, left intact a jury's finding that Donald Trump sexually abused and defamed the writer E. Jean Carroll, putting her in line to collect a $5 million award from the president. What has the president commented on this particular case?
So we haven't heard from him yet today, and the justices didn't really provide much of an explanation for this decision. But this probably isn't going to be something that President Trump is too happy with. This does deal essentially a final blow to President Trump's efforts to end one of the most significant legal cases against him. It was another one that we were tracking closely, but it wasn't heard in the standard term of the Supreme Court. So it came out earlier this morning instead of with this ruling. Instead, we just got this Supreme Court decision, which means that President Trump is going to have to pay that $5 million judgment.
And he would have to pay personally, or would this be the responsibility of the White House, the government, essentially? Do we have any sense of that?
I'm actually not sure, Scarlett. I'm going to have to get back to you on that one. But I believe the president was appealing an even larger judgment here, $83.3 million plus interest. Let me go back and find out exactly how much money the president would be on the hook for.
Thank you for checking on that. All in all, Tyler, what do you expect in terms of the president's giving some kind of response? How does he usually respond to these kinds of decisions? Will it be on Truth Social? Do we expect him to hold a news conference, for instance? What will you be looking for?
I would expect that we'll probably get a post out on Truth Social. Today, President Trump actually doesn't have any public events on his schedule. That doesn't mean that some of the closed-door events couldn't open up. He does have a few different policy meetings that we're tracking closely today. But this case was one where President Trump was heavily involved in. We're also waiting likely later this week to get a decision on the other really consequential case that we're watching for, which is birthright citizenship. And I was actually here at the court back in April when President Trump came here, too. He very clearly wanted to make his opinion known when it comes to the justices trying to figure out the legality of his executive order that deals with ending automatic birthright citizenship. I would expect him to be very vocal when we get that decision, likely later this week. We could maybe see it early next week if the Supreme Court adds a date in early July, but we're really expecting that to be later this week, so it could potentially be two blows to the Trump administration's agenda when it comes to the Lisa Cook case and what appears to be a wariness around the Trump administration's argument related to birthright citizenship.
Oh, thank you for spinning it forward for us, Tyler. Tyler Kendall's our chief Washington correspondent. Of course, giving us the latest with regards to the Supreme Court letting Lisa Cook, a Federal Reserve governor, stay in her job for now, but we are still awaiting a decision, as Tyler reminds us, of the birthright citizenship, which we know the president is very invested in because he had attended the opening arguments for that case. So it's something to watch for, perhaps as early as later this week. All right, let's get back to markets for a moment here, because we've seen the stock market make a kind of a comeback here. Yeah. It was already higher. It had parts of its gains, but now we have the S&P now up 0.7%, the NASDAQ up by 1% at the moment. And, you know, we're all keeping a very close eye on SpaceX after a volatile first couple of days of trading, right? It soared and then it fell. Now it's kind of just treading water at about $153 a share. Lauren Cassidy joins us now. She's a CIO for the Founders 100 ETF. She's a partner and portfolio manager at Founder ETFs. And Lauren, the Founders 100 ETF sounds like it's an ETF that's tied to companies with strong founders. Tell us more about what this ETF aims to do.
Yes, so Founders 100 ETF, ticker FFF, invests in the 100 of the 200 largest founder-led companies within the U.S. Equity markets. So Bain Research shows that founders outperform non-founders in the S&P by 3x over 25 years, and by 2x over just the subsequent 10 years. We analyzed over 11,000 companies for 27 years quarterly, and found a similar result. That's the Founders Index published on Bloomberg.
So talk to us like the biggest founders stock of all time, like a SpaceX type of thing there. Because I think when Elon walked through the door to his IPO meetings, if you're buying this stock, you're buying it largely on Elon, because you're not buying it on any other valuation metric, arguably. So there seems to be the case in point for a founder and value assigned to a founder.
Exactly. So we bought SpaceX day one, nice. A 1% position, $150 a share. That's something the passive indexes couldn't do. Elon, to your point, is the ultimate founder. He has vision. He has grit. He is an unstoppable force, working on so many of his businesses for the long-term vision of going to Mars. So very exciting. But you know, we're grounded in fundamentals still, so we looked at the business and made judgments about where the business what they can achieve over the next 3 and 5 and 10 years.
Right, because this is an actively managed fund. You're not just blindly buying companies that have founders behind them that play a key role. When I look at your allocations, tech is, by and large, the heaviest weighted group here. Software makes up about a third of the ETF. Internet media companies, about 9%. Semiconductors, 9%. Tech hardware, 7%. I mean, this is a tech-heavy ETF, isn't it?
Yes, tech is 54% of our current holdings. That's where you end up finding more of the founders in the economy, but we do own 10 of the 11 GIC sectors and across 35 industries in surprising areas, including waste management, staples, all different areas.
So talk to us about Elon in particular, because one of the challenges, I think it's for certain investors' frustrations, is I can't keep the guy's attention. The dude's all over the place, and he's doging here, he's rockets here, he's boring there. How do you think about that with Elon in particular? Because he does have so many sizable interests and investments kind of out there in general.
Yes. So if a founder steps away, we sell.
Okay.
So, Doge could have been reason for us to step away from the stock. And as you could see, the company didn't perform all that well. During the time he was gone, Tesla especially really started to struggle. But once he came back to the helm, he was able to orchestrate his vision once again. He has an elite team of employees who otherwise, if they weren't working with Elon, would be probably in business for themselves with all their wonderful ideas. So they can move faster and make mistakes and pivot and bring all of that together.
How do you feel about
in a unique way?
How do you feel about a founder having an offspring take over? How does that work?
Oh, good question.
Because I'm thinking of, for example, Comcast today. It's Brian Roberts took over from his father Ralph, but there's no more Robertses out there.
Yes, I think it's very tough to be the child of a founder and inherit the business. Those are always big shoes to fill. Our research shows that once the founder leaves, the business doesn't tend to perform the same way. And so it has to be an original founder for us to own the company in FFF.
Are there any surprising companies that are led by a founder, but you decided after doing your research not to include in your fund?
Yes, and there are some. So one example is Carvana. We could have owned that one, but we looked at the valuation metrics and we just weren't comfortable. And so that happened to be one that fell out of the top 200. So we just own half of those. We look for the fundamental strength across the balance sheet, income statement, cash flow, and valuation.
All right, good stuff. Thank you so much. Really appreciate your joining us today. Lauren Cassidy, CIO for the Founders 100 ETF. The ticker there is FFF, joining us here in studio. Really, really appreciate it. And by the way, we do cover ETFs every week on Bloomberg Television. ETF IQ airs every Monday, 12 p.m. to 1 p.m. With Katie Greifeld, Eric Balchunas, and myself. All right, let's get back to the headline of this hour, which is that the Supreme Court has thwarted President Trump's bid to oust Lisa Cook from the Federal Reserve. She is a Federal Reserve governor, so she can stay in her job for now. And those are kind of the key words right there, for now. And we're going to get into what all this means and what this means in terms of what the Fed looks like in, now that the Supreme Court has made this ruling. Gautam Mukunda is lecturer at the Yale School of Management and a Bloomberg opinion contributor. He writes regularly on issues of management, the intersection of policy and business. Gautam, your initial thoughts on this headline, the ruling from the Supreme Court that it has allowed Lisa Cook to stay in her job for now, and it has pretty much signaled that the Federal Reserve is different than other government agencies.
Yeah, it's not a surprising ruling because the court has already signaled that it thinks of the Federal Reserve as different. I think the striking thing about it is the extent to which the court has basically just abandoned jurisprudence and is saying, we like the Federal Reserve, we think it's really important, so we're going to treat it as a special case, whereas every other government agency, and they also announced today, right, that this was another one of the rulings today, that the president does have the power to fire FTC commissioners. Every other government agency gets treated like a pawn of the president, but somehow, for mystical reasons we will not really specify, the Federal Reserve is special. Okay, I guess it is.
We were informed by, a couple of our guests' legal backgrounds that there's some theory out there that says, hey, the universal kind of thing, I'm not sure what it's called, but basically says the president should be able to do all this stuff. It's his or her administration, and so the president should be able to appoint who they want in these agencies.
Yeah.
And
so the theory is the unitary executive. That's what they're referring to. It's the idea that every single person in the executive branch is kind of like the fingers of the hand of the president. the unitary executive theory is something that was invented quite recently, really in the 1970s. If you'd taken it to one of the founders, they would have just been baffled. But just to demonstrate how it breaks down so completely, inspectors general, the people whose job it is to identify fraud and tell us that the president or his appointees is stealing from the American public, are also members of the executive branch. So if the unitary executive theory was true, then it would be a power of the president to order inspector generals to cover up for his own crimes. If that makes sense to you, then you believe in the unitary executive.
Wow. Okay. I had to think about that one for a little bit, but that is saying something. So this idea that the Federal Reserve is different, can the Trump administration do anything else in its quest to remake the Fed, or is this something where they kind of just have to call it an L and step back? How are you thinking this through?
Well, the ruling is a for now ruling, right? So what they're presumably going to do is then continue on with the litigation against Lisa Cook in the hope of either winning a conviction or just, draining her resources and her resolve to such an extent that she steps down. I don't think either of those will work because the charges against her are on their face quite absurd, and she doesn't seem like the sort of person who's going to back down in the face of this kind of an assault. But this story is not over. We just ended one chapter.
President Trump is out with a tweet just now.
Of course.
As I'm sure you're not surprised, but basically touting the Slaughter case as a all caps big win here, and really saying this is, presidents have been trying to do this since the 1930s. Again, trying to put this into context, it seems like a win for not just Donald Trump, but for the executive branch. But again, and maybe it's a real loss for independence. It's tough. I'm not sure how you weigh those two things.
That's right. So it is clearly the Supreme Court and Chief Justice Roberts in particular, and has a long history of just saying that he wants to concentrate power in the hands of the executive branch and in the hands of the court. And we should note, right, it's not just the executive branch; it's the court, because the court has arrogated it to itself the ability to say that we can at any time make up rules that say that, hey, the executive branch doesn't have this power. But okay, so they've done that. They've contracted these powers into the court, and to the executive branch. That is a big win. But there are two sets of questions here. One is, are these powers that this court is going to allocate to all presidents, or is it just going to be presidents that it seems to like? And I don't think we know the answer to that yet. And second is, a different president who had a much more ambitious view of what they wanted to do in policy. And I can tell you the Democrats are already talking about how they can use the powers that the court has given the executive when they take office, is going to use these in a very, very different ways that I suspect Chief Justice Roberts is not going to like.
Gotham, talking about power, you wrote in a column recently that really got my attention, and it was about how AI company CEOs are wielding a lot of power. They certainly wield a lot of political influence. And you talk about how power and wealth are very different. Just walk us through what you saw with the G7 summit and how power is increasingly being concentrated in these AI companies who are treated by heads of states as peers.
Yeah, it was really striking when you looked at the G7, right? You saw Sam Altman there having bilateral meetings with the heads of state of the seven the seven of the most powerful nations in the world, the seven industrialized democracies. And you sort of look at that and go, well, that's pretty striking, right? Like, I can't think of another example of that in the modern history of the heads of companies and startups, sitting around and taking press conferences and sitting in chairs and doing photo ops with the president of France. That's really remarkable. And there's two things we should think about here, right? So one is these AI companies, they're very, very ambitious, right? They are spending tens to hundreds of billions of dollars. They themselves tell us on an ability this is their story, right? To create AGI, artificial general intelligence. If you believe that they can do that, the person who controls the company that creates the first one of those will be one of the most powerful people in human history. So they're not hiding that they want power and they want to be among the rulers of the world. And second problem is we have seen what happens when companies do this before, when companies become so powerful that they are peers or even superiors to most of the governments on earth. The example I used in my column is the British East India Company, the company that was chartered by the British to trade with India and ended up ruling India with an iron fist for almost a century. The outcome is really, really bad, and it's bad for everyone. It's bad for the people who were. It was bad for the people of India, but it was bad for British democracy. That almost a quarter of Parliament was either on salary for the British East India Company or holding stock in the British East India Company. I kind of think that probably made them a little bit more reluctant to regulate the British East India Company, and it's not something we want to replicate here.
Well, we also have another phenomenon just over the last couple of years of the U.S. government making direct investments in some of these technology companies. That it all ties together, it seems like.
Yeah, there's been a collapse of the boundaries between, the government and private sector in ways that it's sort of deeply ironic that the people who talk the most about sort of the virtues of the free market are, sort of doing these sorts of things in ways that I would not have, Barack Obama was never going to go and buy 10% of Intel. That was just never going to happen. So it is a genuinely sort of remarkable set of choices by everybody involved here. And that blurring, when it happens, right, it doesn't just give the government more ability to influence companies. It makes it easier for companies to make the case that they're going to do more to influence the government. Where now you have A16Z as the biggest, sort of the biggest political spender of any corporation. You had the crypto industry putting so much money in the 2024 elections that it probably had a decisive effect in the Ohio Senate race. These things matter. And for all of it, if you're sort of there's a lot of hostility to corporate power, things like that. Look, I work for Bloomberg. I'm not hostile to companies. I love companies. But what I would say is, right, that this is bad for companies, right? It is really, really bad for companies. You may think that you are in the favored handful who are getting favors from the government and who are being benefited by the government and getting favorable trade deals or favorable government contracts. That's fine. You can have that for a few years. But the wheel will turn.
Yep, absolutely.
And then you're going to really regret this set of choices.
Gautam, thank you so much for joining us. Really appreciate it. Expansive discussion there. Gautam Mukunda, he's a lecturer of management practice at the Yale School of Management. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments. We've got some green on the screen here. It's been a wild trading session this morning in response to some of these Supreme Court rulings. S&P is up 50 points. That's about 0.75%. The Nasdaq's up about 310 points. That's 1.2%. 10-year Treasury yields are pretty steady here, 4.37%. WTI crude oil is up $1.25, $70.50. This is Bloomberg. Good morning.
This is Bloomberg Intelligence
with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines
and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence
with Scarlett Fu and Paul Sweeney
on Bloomberg Radio, Bloomberg Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence. Paul Sweeney, Scarlett Fu, and John Tucker here with you. We are streaming live on YouTube. We have markets recovering. The S&P 500 higher for the first time in 6 days after a 5-day slide in which it lost 2% for the longest losing streak since August of 2025. So we're going to dig into all of that. We're going to check in with Mike McGlone on oil prices. They're holding near 4-month lows. They're slightly higher today, but this is after Iran and the U.S. agreed to stop mutual attacks on one another. And we need to check in with our Tyler Kendall, our Bloomberg Washington correspondent, who's got the rundown on all the Supreme Court decisions, some favorable for the president, some not so favorable. We'll dig into all of that. Winnie Caesar is global head of strategy at Credit Sites. She will join us to give us her outlook on the markets, both credit and the rates market. And Nathan Dean, our senior policy analyst for Bloomberg Intelligence. We'll talk about what's next with the housing bill that has not been signed yet by the president, despite it being a bipartisan effort, and of course, what's next when it comes to policy with the Federal Reserve. All that coming up, but first, let's go over to John Tucker for our Bloomberg Business Flash.
All right, just to recap the essence of the ruling for the Supreme Court, the president can't fire Fed officials arbitrarily. So bottom line, they're independent. He can't have his way when it comes to interest rate policy. I think that's the reading right now. This is the final stretch of what is set to be the best quarter for the S&P 500. What about 6 years? And the Dow Jones Industrial Average right at a record high right now, intraday. The Bloomberg Mag 7 Index right now up 2.5%. Most active shares of Comcast up over 8%. Bailey's going to break that down in just a second. They're doing another spin-off. And in this case, Rocket Labs up over 8%. They are the acquirer, agreeing to buy Iridium Communications, getting a foothold in this business of providing satellite service to smartphones and other equipment. Meantime, Alicia Levine at BNY Wealth sees a short-term pullback for stocks overall.
You're going to get volatility. There has to be consolidation here. I mean, some of those charts are parabolic with the memory names, that's the center of that. And it's going to pull some of the market down with it just because they are the leaders right now.
Again, the Dow Jones Industrial Average up 263 points, 52,144 right now. S&P 500, 48 points higher, 7402 on the index. And the Nasdaq Composite Index up 300 points, up 1.2%. Uber starting today, tightening the driver background checks and applying these new standards retroactively to existing workers. So they're expanding the scope of criminal convictions that will disqualify a driver.
I feel like this should have been in place years ago.
I know the first thing I say to my Uber driver when I get in the car is, "Where'd you do time, sport?" I mean, come on. Anyway, we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
Better late than never, Paul.
Convicted? Never convicted. Name that movie? Okay.
Not that I know of.
Convicted, never convicted.
I don't remember.
Stripes. Okay. Coming out of the Bloomberg newsroom here, tomorrow will be the last day of SCOTUS opinions. 4 cases are still outstanding. Birthright citizenship, 2 transgender athlete cases, and the campaign finance case. So that'll be there. So.
Right, and we know that the birthright citizenship case is of great importance to the president. He showed up at the opening arguments, and this is something that no sitting president has ever done before. So when that comes out, and it's possible that maybe the Supreme Court will push it to next month, we will, of course, bring it to you. In the meantime, let's check in with our Bailey Lipschultz for a check on some market movers. And I know that John kind of stole your thunder and said you were going to talk about Comcast. Do you want to start there? You want to start somewhere else?
Let's start with Comcast. Why not? Comcast shares right now up about 8%, ticker CMCSA. Again, as JT mentioned, planning another spinoff. I want to call out a Bloomberg News headline saying Comcast plans another spinoff, marking end of cable media empire. I just want to say, maybe they'll get back together. Who are we to write off that this is the final move? Interestingly, just looking through some of the analyst notes, analysts over at New Street basically saying this is the only way to unlock value, move precursor to allowing Comcast to focus on its own mergers and acquisitions, both in the cable and media sector. Again, to catch back up on everything that's going on, Comcast spinning off NBC Universal and Sky, as Paul had mentioned about an hour ago. Kind of the writing was on the wall to a certain extent, try to create 2 businesses that can kind of own their own area, or at least try to.
You know, I was just in a group chat with some of my former Wall Street buddies, and we're like, hey, all the bankers that were on the deal to put it together, they're not around. But then I said, no, Paul Taubman is still there, and he's advising on this one. So he was at Morgan Stanley back in the day there. So the next generation of bankers and lawyers getting paid by the Roberts family. All right, what else you got for us?
Yeah, I want to look at telecom stocks, focusing on Verizon, ticker VZ, right now down more than 7.5%. That's the biggest intraday drop since last March. Also call out weakness, T-Mobile, TMUS down more than 6%, and AT&T, ticker simply T, down more than 6%. This comes after kind of a flurry of headlines, but I want to focus on the Bloomberg News report that SpaceX and Charter Communications held executive level talks about partnering on a consumer mobile phone offering.
Oh, interesting.
That would compete with them. This goes back to kind of a big part of the pitch from Elon Musk and the team over at SpaceX that in the future, maybe we will all be using some form of SpaceX satellite direct-to-phone operation. The big thing, Bloomberg Intelligence, John Butler kind of calling out, and some of these others basically saying SpaceX has key constraints. The current technology not able to really work in densely populated areas. You have suburban traffic being competing for that, and also the fact that when you're in a building like our lovely tower, you're not actually kind of in line of the sky. So SpaceX really is something that's kind of been able to dominate. I don't know. I talk to people who own boats and go fishing and using that to have direct access.
You're right about that, because I have T-Mobile and there are places where I don't have any coverage, any reception, and I am able to use satellite, but even that can be really difficult to figure out how to get that reception, because it's hard to find.
I'll identify a dead zone that's been there since the beginning of wireless cellular telephone service. That is between Short Hills, New Jersey and Summit, New Jersey on the train. You lose it. It's the dead spot. I'm like, there's gajillion billionaires living there. They can't put up a tower in somebody's backyard.
I just want to say that when I was in Japan, you don't lose reception from station to station. Here in New York, I get on the train, I'm just like in a black hole. You get stuck between stops on the F train, you could be dead. Anyway.
Try Metro North, which should be able to get reception and doesn't half the time, so, because we're outside.
Somebody do something.
All right, exactly. Somebody do something. Do we have one more here?
Yeah, one more. DLAC, ticker DK, right now up about 8%. That's trading at the highest level since September 2018. TD upgrading the shares alongside PBF Energy, saying that there's a strong refining outlook. Small refineries exemptions from the U.S. EPA, which according to the analysts over at TD, could provide up to $18 per share in upside and help drive free cash flow growth. Just also calling out that we are seeing some of those refining stocks really rallying. A Bloomberg Intelligence basket up more than 5% on the day.
All right, good stuff, Bailey. Really appreciate it. Bailey Lipschultz with our equity movers. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we give you 5-minute audio reports on the biggest winners and losers in the stock market. That is available on Apple Podcasts, Spotify, or anywhere you listen. All right, let's get to oil prices, because what's really intriguing me is this idea that crude oil prices have really made the round trip. Brent and WTI are slightly higher this morning, but they're pretty much around 4-month lows, similar to where they were before the Iran war started. Gasoline prices have not quite made the round trip yet. Let's check in with Mike McGlone. He's our senior commodity strategist for Bloomberg Intelligence. Mike, the latest out of Iran and the Middle East is that both sides have agreed to halt mutual attacks. Is that necessary for crude oil prices to kind of stay at these current levels? Or if there's going to be, skirmishes once again, because we've gone through a couple of weekends like this, will that reignite oil prices?
Well, I think the round trip word used, Scarlett, is much appropriate. I don't think we've ended the bottom end of that round trip. So something really bad has to happen straight for crude oil to maybe get near or stay above 80. I think that's what most traders are looking at, is level. They want to reset those shorts. And both entities in the Strait have vested interest in it staying open now. I mean, Iran's getting a good deal, can sell crude oil in an open market finally. That wheel's going global. So the normal scales for crude oil to get back to where it was before, but with fuel this time, because we just added a lot of supply in the Western Hemisphere from all those prices going up. That was hovering around $55 a barrel. So my base case for second half of the year is we're going to press below that and potentially towards 40 on one key premise. If the stock market drops down a little bit and stays down a little bit, that's usually how crude oil makes bottoms. Your stock market has to go down.
So is there going to be, I don't know if you talk to your trader buddies, some kind of Strait of Hormuz kind of premium baked into global oil, or is this are we just going to go right back to supply and demand?
Well, we've already gone back to it, Paul, but we've accelerated the supply and decreased the demand, and we've accelerated the process of the redundancy of OPEC and the price maker status shifting to the Western Hemisphere. So let's look at drill will before this war started. First, we had U.S., Canada. Now we have Venezuela, Iran, UAE, potentially Iraq. The whole world's going that way, and it's also looking forward to a potential, drawdown in what's happening in the economy. So to me, this is a normal cycle, but it's not just crude oil. It happened in corn, soybeans, and wheat, Bitcoin, and natural gas. All those markets are heading lower. And the key theme is what makes them go up in the second half of the year. But what does Mr. Trump need for midterms? Lower inflation. Crude oil is going to lead the way. I fully expect he's going to get it heading towards below 50, and stocks go lower, like I said, closer to 40.
Yeah, you've been remarkably consistent about that call, Mike, since the beginning. Let's get your take on gold prices, because you said commodities are going down. Gold is no exception, holding at about 4,035, but still a far cry from where it was before the Iran war, which was basically at about 5,200 or so. What is the outlook for gold right now?
I think, Scarlett, it's shifting to a bear market on the back of Bitcoin, and it has to look forward to the Fed vigilance. We've reached a plateau of inflation increasing and stock on the back of the stock market, and it really hurting people in elections. So what does Mr. Trump need? He needs low inflation. Gold's a big part of that. The key theme about gold is that opportunity we got in Q1 might have been the best-selling opportunity in this, a couple decades, and now we're heading towards a more normal cycle. I think it's going to be stuck in a range for years. Good supports around 3,400. Good resistance is around its 200-day moving average around 4,400. But if history's a guide, gold will be stuck in a range, maybe for the next 20 years, like crude oil was for the last 20 years.
All right, great stuff. And you've got the experience to say that, make those kinds of statements. Mike McGlone, he's a commodity strategist, been doing this commodities things for decades. He's at Bloomberg Intelligence down there in Miami. Let's head back down to Washington, D.C. Our very own Tyler Kendall is there. She's the Washington correspondent covering the White House and all that good stuff. Tyler, we did get a tweet from President Trump where he is highlighting, and what we thought he would highlight, which is the slaughter case, which says the executive branch, the president, can fire pretty much any agency head he or she sees fit. And that seems to be what the White House is focusing on right now.
Yeah, Paul, exactly. President Trump focusing in on this case, Trump v. Slaughter, where the administration came out successful, that essentially the president does have the authority to remove independent heads from independent agencies because the justices sided with the administration's argument here that perhaps there should be a little bit more of a connect between these agencies' heads, considering that they do report to the executive branch. The president saying in part that this is one of the most important rulings ever given in respect to presidential powers. And he is right. This is considered to be an absolutely monumental case. But notably, and as you alluded to, we didn't hear him talk about that other key case that we were watching today when it comes to Fed Governor Lisa Cook. Though Paul and Scarlett, we did get a notice from her, Lisa Cook, as well as her lawyers, releasing a statement where she praises this decision and said in part, quote, that the Supreme Court's decision to leave the lower court's order in place, which means that she can keep her job for now, recognizes the, quote, Federal Reserve's independence is absolutely essential to fulfilling the congressional mandate of price stability and maximum employment.
Okay, so there's a lot going on today because the Supreme Court was very busy today. There was also a ruling, Tyler, on mail-in ballots. The Supreme Court saying mail votes can arrive after Election Day. This is a defeat for the Trump administration, isn't it?
Yes, this is, we saw Democrats challenging this Mississippi law. There is a caveat here. It's that mail-in ballots can still be counted as long as they are postmarked by Election Day and they arrive within 5 days. So essentially a grace period here. Importantly, we did see two of the conservative justices move over and side with the liberals on this court, essentially maintaining what has been longstanding precedent that many of these states have, that you are allowed a little bit of a grace window as long as you got your ballot actually into the mailbox by date. This comes amid what had been some victories for the Trump administration regarding election laws, regarding congressional district maps. President Trump doesn't seem too happy with that decision, but it is by and large considered to be a victory for the Democratic Party amid the counterweight here, which is that decision that expands President Trump's power when it comes to being able to fire some of these heads of these independent agencies.
Tyler, as it relates to the Federal Reserve Governor Lisa Cook, that case, has the administration or the president said whether it will pursue the legal suit against her or just drop it?
So importantly, Paul, in this case, we did not hear from the justices ruling on whether or not there is what's known as sufficient cause to remove a Fed governor from their position. We know this is that very high legal bar. Cause typically is meant to mean that they conducted malfeasance or a neglect of duties related to the law. So that part means that we didn't really get a sense of whether or not the justices felt that the allegations against Cook actually rise to the level of removal. So we very likely are going to see this case play out in lower court. But we did hear from the justices very clearly that they did not feel that the Trump administration gave Lisa Cook enough time to essentially defend herself against these allegations. You'll recall they were posted on social media, and then her firing was also posted on social media, and they had been pushing back that she wasn't given due process. But importantly, what might give us some insight into how they may feel about the removal of a Fed governor is that we do know that the justices considered what is known to be the equities of the case, essentially the larger ranging impacts. How would this impact the economy? And I bring that up because in part we heard from Chief Justice John Roberts, who along with Brett Kavanaugh, another conservative justice on the court, they sided with the liberals in this case. And he said in part, quote, that monetary policy should not be subject to political interference. That makes pretty clear where they stand on this matter.
All right, Tyler, great reporting. We really appreciate it. Tyler Kendall, she is Washington correspondent, Bloomberg News down there in D.C.
You know what this means? It does mean that for Kevin Warsh, the new Fed chair, he cannot be removed without there being a big legal issue. So if he, and he sounded fairly hawkish at the last Fed meeting, if he decides, leading a committee, of course, that cutting rates is not the right path, and holding rates or maybe raising rates is, the Fed officials, including the Fed chair, can't be fired for that. So they would have to be fired for cause. All right, so more to come on that. Of course, we are keeping an eye on markets right now. The S&P 500 up 0.6%. The NASDAQ doing even better, up 1.1%. Oil prices modestly higher this morning, trading at around 70.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/